August inflation data from China, the GIFT Nifty is also indicating a positive start for our own markets. The US President Donald Trump says that India and the US are continuing trade negotiations, adds that he will be speaking to Prime Minister Modi in the coming weeks, but also asks the European Union to hit China and India with tariffs of up to 100% for purchasing Russian oil. Crude prices settle higher after the Israeli military said that it has carried out an attack on the Hamas leadership in the Qatari capital of Doha. Gold prices have also hit record highs on hopes of outsized Fed rate cuts. Apple announces the launch of the iPhone 17 and the iPhone 17 Pro, apart from a game-changer, slimmer iPhone Air and a new variant of the AirPods that feature live translation. Prices in India for the iPhone begin from 82,900 rupees and go up to as high as 2,30,000 rupees. Nepal plunges into political uncertainty with Prime Minister KP Oli resigning after violent protests over corruption and a social media ban that has left 22 people dead, including the former Prime Minister's wife. Nepal's army takes control of Kathmandu airport. India has appealed for calm. And amidst all of this, we are back with a fresh new edition of Power Breakfast. Wish you all a good morning. Coming to you live from the Mumbai News Centre, I am Hormis Fatakia. Let's first take a look at how the Asian markets have started off. And it is a positive start, continuing from where the week has been. And it's been a good week for the Asian equities as well, with outperformance coming from Japan and South Korea. But today, the Hang Seng has put its hand up among the list of outperformers, 0.7% higher. The Taiwanese index too trading with gains of well over 1%. The Nikkei, after the outsized gains yesterday, it cooled off from hitting record highs, almost now 500 points off the record high levels of plus 44,000 that it had hit earlier in yesterday's session. Still a 0.25% higher there, a 0.25% higher for the Shanghai indices as well. But it is the South Korean Kospi that has been an outperformer through and through in 2025 among the Asian indices, continues to do so, 1.5% higher on the Kospi as well, heading towards record high levels. So a positive screen for the Asian indices. Pull up the GIFT Nifty as well. Started off on a slightly subdued note, but it has now built on to those gains, and the implied open is now suggesting a 50-point uptick for our own markets, and that is likely to mean that we will open above the mark of 24,900, but it remains to be seen. Now, we're coming on the back of a 5-day winning streak as well, so whether the gains sustain at higher levels near that all-important mark of 25,000, that remains to be seen. Some flashes on your screen as well. The US federal judge has blocked Donald Trump from firing the US Fed Governor Lisa Cook. Remember, Donald Trump had asked for Lisa Cook to be fired over the allegations of mortgage fraud, and this latest verdict that has come in from the federal judge blocking Donald Trump's decision to fire the Federal Reserve Governor who was appointed during the tenure of former President Joe Biden. But to set you up for today's trading session for our own markets, our research team is here with how the trade setup looks like, stocks that are likely to be in the news, and of course we'll get you updates from the F&O side of things as well. Firstly, Vamakshi is here to tell us what we need to watch out for going into today's trading session. Vamakshi, good morning.
Well, good morning, Hormas. Let's first recap what actually happened in the markets yesterday. The markets, closed in the green. They ended at a 2-week high. Now, Nifty gained almost 95 points, and a similar gain was mirrored by the Sensex. Now, IT stocks actually led the chart this time around, with Infosys up almost 5%, Wipro, Tech Mahindra, with some other stocks that did extremely well in the trading session yesterday. Pharma and FMCG, which were, underperforming last week, have managed to post modest gains, in yesterday's trading session. However, no support still coming in from the Nifty Bank. Now, the advanced decline ratio was marginally in favor of the declines. It was almost 1:1, and the broader markets, they continued to underperform. Now, the handover that came in from the US markets is actually quite positive. All three indices ended in the green and notched new closing highs. the GIFT Nifty is also mirroring that. A 50-point uptick is what we're expecting. But, today's trading session will be important to watch out how the market reacts to comments that came in from President Trump. Now, in a post on Truth Social, he said that India and US continue to trade, continue their trade negotiations. He looks forward to speaking with PM Narendra Modi and sees no difficulty in coming to a successful conclusion. But at the same time, he is urging the EU to impose 100% tariffs on India and US. So again, we'll have to wait for what exactly pans out. Now, as far as economic cues are concerned, take a look at the US PPI number today. This inflation number is extremely important. US crude oil inventories will also be something we'll be watching out for. Keystone Realtors will also be in focus. They will be considering fundraising through debentures. And the primary market, which has been buzzing off late, we see 3 new IPOs hitting the market. Urban Company being one of them, 1900 crores is the total issue size. Shringar House of Mangal Sutra as well as Dev Accelerator are some of the other IPOs opening today.
Some interesting IPOs, of course, hitting the markets, but the implied open still suggesting a 50-point uptick. Over to Upasna now, who will list out the stocks that you need to keep an eye out for. Upasna, good morning.
Morning. First up, let me start with Bajaj Auto. The company has indicated that it will pass on the full GST benefit to the customers with effect from September 22nd. Hence, it has announced a price cut of nearly up to 22,000 on 20,000 on two-wheelers and up to 24,000 on three-wheeler range. Next up is Eicher Motors. Royal Enfield has also announced GST benefits to the customers with a reduction of up to 22,000 on the entire 350cc range. Next up is Sun Pharma. The US FDA has classified Sun Pharma's Halol facility as an OAI, that is official action indicated. Halol facilities under the import alert and shipments to US is refused. Next up is Thermax. It invests up to 115 crore in the renewable energy arm in First Energy Private Limited. Next up is Samvardhana Motherson. The company completes the acquisition of remaining 25% stake in the 2 Turkish subsidiaries. Now, Vikram Solar is the next one on our radar as the company has reported its Q1 FY26 numbers. It's overall been a strong set of numbers with a revenue uptick of 80% on a one-year basis, and margins have also expanded from 17.7 to 21.4%. Company also guides for a strong FY26 growth with a 4x capacity expansion. Next up is Sterling and Wilson. It has received LOA for an EPC package of 300 megawatt AC in Rajasthan worth nearly 415 crore. Now, according to sources on Kotak Mahindra Bank, Sumitomo Mitsui Banking Corp is likely to sell up to 1.6% stake in the company via block deal. Hence, this stock will also remain on our radar today. And lastly, according to sources on Blue Jet, OFS is launched to raise up to 400 crores and promoter Akshay Arora is likely to sell. And coming to Apex Food and Avanti Feeds, India's seafood export to get major boost from EU and approves 102 new Indian fishery establishments for exports to EU. Hence, these 2 stocks will also be on our focus today.
Upasna, thank you for that update. Lastly, Mangalam joins in with cues from the F&O space. Mangalam, good morning. Heading towards that elusive 25,000 mark on the Nifty, but what's the F&O data indicating today?
Yep, we are heading towards that 25,000 mark. That is exactly what the GIFT Nifty is indicating. It will be very interesting to see, how 2 sectors pan out, the IT space and the Nifty Bank. Why do I say that? Because it was the Nifty IT that, powered the index ahead. The Nifty actually saw a fairly decent expiry. We had about, 95 points in terms of gains that came by. The only fly in the ointment was the mid-cap end of things. We had, advanced declines more in favor of decliners than the advances. There were both inflows from DIIs and FIIs in the cash market, but that was on account of a couple of large trades. What was interesting is after a lot of selling, we saw the FIIs buy in index futures by a smidge. 280 crores is what they bought. They added about 1,800 long contracts. But remember, over the last 3 trading sessions, they've been increasing their long exposure marginally. From 7.4%, it's increased to 8% and now 8.7%. FII shorts still near record highs. So any sense of sustained move above 25,000 would lead to a massive short covering rally is what the expectation is. Yesterday, the Nifty closed above the 100-day moving average. Today, it opens above the 50-day moving average. The level we'll watch out for the Nifty Bank will be the 20-day moving average, which is about 500 points from where it is right now. Call writers are, expecting some sort of resistance come by immediately at the 25,000 mark. If that isn't the case to be, then we'll have around 25,100, which would see some supply. But if the market holds above these levels, there is a lot of fuel for short covering. At the lower level, supports have moved higher, closer to 24,800 is where the support is. Trent is the only stock which I'm keeping an eye out on today because yesterday saw unusual selling and a lot of short positions being added there.
Mangalam, thank you for that update. More flashes on your screen with the Prime Minister Narendra Modi now responding to Donald Trump's tweet saying that India and the US are now close friends and natural partners, and he too has expressed confidence that these trade negotiations will pave the way for unlocking the limitless potential of the India-US partnership, and the teams are working to conclude these discussions at the earliest. And he's also mentioned that he too looks forward to speaking with President Trump and work together to secure a brighter and more prosperous future for both the citizens of the US and the citizens of India as well. So the Prime Minister responding to Donald Trump's post on Truth Social earlier this morning, where he spoke about the fact that he's looking forward to speaking with his good friend Prime Minister Modi, and that he sees no doubt or no hesitation that these trade negotiations will soon be concluded. And the Prime Minister there responding to Donald Trump's post on his social media handle on X. And that is the progress on these India-US trade negotiations. And there are a lot of other flashes as well, with sources also saying that these talks are now being fast-tracked, is what our sources are picking up. Parikshit just reported about this. But take a short break. On the other side, we get you all the latest updates on these trade talks on Trump Watch. Stay tuned. We'll be right back. Welcome back. Now, US President Donald Trump wrote on his Truth Social earlier in the morning that India and the US are continuing negotiations to address the trade barriers between the two countries, marking the second such remark he has made over the last few days with regards to his ties with India. He also added that he looks forward to speaking to his good friend Prime Minister Narendra Modi in the upcoming weeks, and that there would be no difficulty in arriving at a successful conclusion for both the nations. Now, on the flip side, CNBC International has confirmed that US President Trump told European officials that he is willing to impose sweeping new tariffs on India and China, and asked the European Union to hit China and India with tariffs of up to 100% to push Russian President Vladimir Putin to the negotiating table with regards to the war in Ukraine. But the US will only make such a gesture if the European nations do so as well. Now, the other potential measures to bring Putin to the negotiating table include further sanctions on Russia's shadow fleet of oil tankers, as well as restrictions on its banks, financial sectors, and major oil companies. Now, sources have said that India and the US officials are likely to have an exchange of trade delegations soon. Parikshit is joining in with more details on this. Parikshit, tell us, what are your sources telling you on this?
Well, sources are telling us that President Trump's statements are very positive, and they indicate that trade talks will now be back on track. There is the mood, there is the confidence and sentiment to restart trade negotiations, fast-track them, and conclude an early trade deal. Commerce Minister Piyush Goyal has said that he is still hopeful of having a bilateral trade agreement by November or the end of this year. And now these statements by the President, by Prime Minister Modi, indicate that things are on the right course as far as the trade negotiations go. We learned from highly informed sources that there is going to be an exchange of trade delegations, that is, a visit of the USTR team either to India or an Indian negotiating team led by Rajesh Agrawal, who's the Special Secretary in the Commerce Department, to visit the United States. The details are being worked out, but an in-person meeting, or what you call a sixth round of trade negotiations, is likely to be held within the next few weeks and this month itself, that is in the month of September. It's an important development. It shows an intent to resolve outstanding trade barriers. So let's see how things go. Things are moving ahead incrementally. Last week, we had seen President Trump making that positive statement in the White House while addressing a reporter's question. Now he's put out a post on Truth Social. So clearly, back-channel diplomacy is at work. Officials at the two sides have been engaged to take things to this level.
Parikshit, thank you for that very important update. Meanwhile, Commerce Minister Piyush Goyal says that more than 60% of the chapters of the India-EU FTA have been finalized. Speaking on the sidelines of an Indian Steel Association event, Goyal also said that he is hopeful that the FTA will be concluded substantially by the time the European Union Trade and Agricultural Commissioners come to India later this week. Listen in.
Almost 60-65% of the chapters also are now completed and finalized. By the time my counterpart, Mr. Maros Sherkovich, the EU Trade Commissioner, and Mr. Christoph, the EU Agriculture Commissioner, come to India, I think we'll be quite set to try and conclude the agreement substantially.
Meanwhile, in an exclusive interview with moneycontrol.com, IT Minister Ashwini Vaishnav talks about the headwinds amidst the Trump tariff issues. Listen in.
You look at the entire world today, there is huge turmoil, there is turbulence, policy decisions are changing overnight, and the process which used to be followed in a multilateral, in a discussion, those kind of processes are today not very visible. So under such circumstances, the stability that India offers, that's huge. That's what is attracting a lot of investors to our shores.
Now, in the US markets, it was a positive session on Wall Street yesterday as well. The Dow Jones climbing over to close to 200 points. The S&P 500 now also inching towards its 22nd record high of 2025. The Nasdaq gaining another 80 points, ending at a record high for the tech-heavy index. CNBC's Mackenzie Sigalos gets us a wrap of all the action on Wall Street.
Markets were up across the major indexes Tuesday as investors tried to shake off concerns about the labor market. The Dow climbing 196, the S&P 500 higher 17, and the tech-heavy Nasdaq up 81. A new preliminary report from the Labor Department found that the U.S. job market was much weaker in 2024 and earlier this year than originally reported. The annual revisions to payrolls data from the year prior through March 2025 showed a drop of 911,000 from the initial estimates. That's at the high end of Wall Street expectations. In a statement, the White House said Tuesday's revisions were proof of the need for new leadership at the Bureau of Labor Statistics, which prepares the government's monthly jobs data. Private markets firm Carlyle announced a new partnership Tuesday with Formula One's Red Bull racing team. As part of the agreement, which was announced on Tuesday, Carlyle's branding will be added to the Red Bull racing car, driver uniforms, and pit land walls. The partnership will ramp up Carlyle's exposure to high net worth individuals as it seeks to grow its wealth business. That's what's happening here in the U.S. Back to you in Mumbai.
Mackenzie, thank you for that update. Now, the U.S. payrolls growth through March has been revised sharply lower. The U.S. economy likely created over 9 lakh fewer jobs than previously estimated, which suggests that the job growth was already stalling before the Trump tariffs came into effect. Here's what experts have to say on the health of the U.S. economy and its jobs market.
Goldman Sachs Economics view the 3 Fed cuts from now to the end of the year, another 2 cuts in the first half of next year. So that's a tailwind for some of the companies, in particular with high magnitude of floating rate debt, therefore lowering their interest expense. Your question about whether that would be a headwind for some of the economic growth, yes, that would certainly be a story there, which is why the observations about the industrial or the, if you will, tech capex is so important, Sarah. For that to persist is a source of demand for both revenues for these companies and for earnings.
Take a short break. Cues from the commodities market on the other side. Stay tuned. Welcome back. Now, Apple hosted its awe-dropping event where it unveiled the latest lineup of devices. The spotlight was on the new iPhone 17 series, which featured the biggest design update in years, along with performance and camera improvements. CNBC's Steve Kovac has more on this.
Apple went back to basics at its annual iPhone event on Tuesday. Forget about AI. Apple is focusing on hardware again, launching a new iPhone design for the first time in 5 years. That would be the iPhone Air, which Apple says is its thinnest iPhone model yet, and still just as powerful as its Pro phones. We'll see if that model is enticing enough, though, to bring the iPhone business back to steady growth. Beyond the iPhone Air, the other 3 models were what you would expect, modest updates over last year's models. The iPhone 17 comes with a better camera, smoother screen resolution, and better battery life. And the 2 Pro models have a redesigned camera system and improved performance. As for pricing, the Pro got a $100 increase, while the other models stayed the same price as last year. And the iPhone Air will start at $999, which is the same price Pro phones used to cost. Those price increases will help offset Apple's tariff costs while improving margins and sales growth. Beyond the iPhone, we have some wearables as well. The new AirPods Pro 3 now feature heart rate tracking and use artificial intelligence for real-time translation. And the Apple Watch Series 11 can connect to 5G networks and alert you if it detects high blood pressure. With pre-orders starting this week and sales starting next week, we now look for our first reads on demand for Apple's latest slate of products. Apple Intelligence didn't turn out to be the boost the iPhone business needed last year, but perhaps going back to basics with enticing new hardware will do the trick this time.
Steve Kovac, thank you for that update. Manisha Gupta now joins in with all the commodity news. Manisha, good morning. What's on your radar today?
Well, gold never ceases to make a headline, really, and we've seen an all-time high yet again for the prices, $3,675 an ounce right now. So it has been another $40 of a gain overnight when it comes to gold there. Well, the labor data has been weak, and the markets now seem to be pricing in 3 rate cuts in 2025, and that clearly has been supportive. What we also have seen overnight is the jump in crude oil prices. Israel's attack on Hamas leadership in Qatar led the crude prices gaining by 2%. And then there have been various statements as well. U.S. President asking Europe to impose tariffs on buyers of Russian oil. Trump actually is urging European Union to impose 100% tariffs on China and India, and that is something that the markets will keep an eye on as we move ahead in the day. Apart from that, we are also looking at EIA suggesting that the global inventories are rising, the U.S. inventories are on the higher side, and the OPEC Plus also hiking output would ensure there are enough and more supplies to cater to any supply disruption in case that we see from Russia for the near term.
Manisha, thank you for that update from the commodities market. Both Brent and WTI trading with gains of close to 1%. Now, veteran BJP leader C.P. Radhakrishnan, who also served as the governor of Maharashtra and Jharkhand, is the next vice president of India. A member of the RSS, Radhakrishnan started his political career with the Jan Sangh. His victory against opposition's B. Sudarshan Reddy was a foregone conclusion since the NDA had the required numbers in parliament. And with that, we come to an end of this extremely action-packed edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazar Morning Call on the other side to set you up for the day's trade and to carry out all these developments forward as well.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazar Morning Call. We are coming to you live from the CNBC TV 18 Motorcycle studios. I think there'll be slightly broader smiles, indications of a bit of a thaw between leaders of both the US and India as well. I'm Prashant with me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, good morning, folks. Yeah, well, at least, they're going to start talking trade again, India and US, from the looks of it. Though you have the other issues, the geopolitical issues around Ukraine, and we don't know how that's going to play out, the secondary sanctions and all that talk. So a lot of moving parts, but at least there's some forward progress.
Well, that's right. You can't second guess what Trump's going to do next, but at least the commentary that's come through is at least we're getting on the table, and hopefully we come up with something. I think that's the positive.
There's a clear mark. There's a clear de-escalation in tone, tenor. It was a rant against India, etc. It's not that. And this started almost about 6-7 days back. The first time we highlighted it, that it's non-confrontational in that sense. And I think now, of course, it's overtures, clear overtures that, well, we want to work with you, etc. So let's just take it from the top in terms of where things are at. So President Trump once again expressed his confidence. So this was a soundbite earlier. This is a post now. So he's expressed confidence in India-US talks, and he's eyeing a successful outcome. Actually, let's put the tweet up, the post up actually on this is Truth Social, not Twitter or X as it's now called. And this is what it says. I'm pleased to announce that India and the US are continuing negotiations to address the trade barriers between two countries. You can nitpick, right, and saying, well, it's about trade barriers. He's still looking for concessions from India on lowering those trade barriers. But, well, take the message. I look forward to speaking with my very good friend, Prime Minister Modi, in the coming weeks. I feel certain that there will be no difficulty to a successful completion for both our great countries. So that's President Trump. Now you have Prime Minister Modi, who's once again, it's actually the same kind of thing what we saw over the weekend, actually. Prime Minister Modi reciprocating warmly. India and US are close friends and natural partners. And if we can quickly put that tweet up as well. And this is just, I think, not even 20 minutes old, this post from Prime Minister Modi saying India and US are close friends and natural partners. And I think that's the most important line, which many have made, that they are natural partners. So this does not make any sense. I'm confident that our trade negotiations will pave the way for unlocking the limitless potential of the India-US partnership. Our teams are working to conclude these discussions at the earliest. I'm also looking forward to speaking with President Trump. We will work together to secure a brighter, more prosperous future for both our people. So that is, of course, going out from Prime Minister Modi here. And I think there's no other way to put it, but this is clear de-escalation in tone, tenor, and this is coming in right from the top. This is not, second tier, third tier officials or ministers sort of talking. This is President Trump, who essentially started this entire thing, now walking down a little bit, and of course Prime Minister Modi graciously meeting him as on the de-escalatory ladder in that sense. Can we say for sure that, well, this is going to be resolved soon? As we've said, no one can tell. I didn't think that actually these additional 25% tariffs will take note once they did take effect. The view broadly, at least I felt it'll get resolved one way or the other, sooner than later. Those are both the posts, one after the other, side by side on your screen, just for context. So this is clear de-escalation. It's positive for markets, and I think that's something to take note of. There is one more story, and this is being carried by CNBC. It's been carried by other publications like the Financial Times, etc. as well. Trump asking the European Union to levy tariffs of up to 100% on imports from China and India, what EU imports from China and India, to put pressure for both these countries not to buy Russian oil and to kind of put pressure on Russia to stop the war in Ukraine. So many are pointing to this and saying, well, there is this and that. And while that is true, I would still say that the main message, of course, is what President Trump is saying, clearly, very, very unambiguously. And of course, the response from Prime Minister Modi as well is very clear. I would go with that. This, of course, at the margin, it's possible this is true and this is happening on a sidetrack as well. But I think the message is that India and US are natural partners. All right, let's just quickly run you through a couple of other things. The US Supreme Court is going to hear the Trump tariff case in November. That was, of course, what came out a couple of hours back, and this is crucial for markets. But we've also said this, that even if the Supreme Court were to say that all these tariffs are illegal, the tariffs as a strategy are not going to go away. They're very central to this administration's roadmap, and they will find other ways. They will use other sections, maybe more cumbersome to apply, sections like 301, 308. We've spoken with experts in this area. They're more cumbersome, but it can be done. But I think this is interesting and important as a sort of point in time as well. Now, overnight, S&P was up a little bit. The dollar index saw a bit of a lift. The US 10-year yield about 4 basis points higher. You had the BLS annual revisions, which further cemented expectations of a rate cut. After hours, Oracle, the last I saw, 25% higher, really bumper forecast as far as their cloud business is concerned. So that's the setup. I think the big one, of course, is not the overnight cues, but what's come through from President Trump. Now, the Nifty yesterday closed above the 40-day exponential moving average. And I think, if anything, what we've seen in terms of the overture from both leaders gives a bit more momentum as far as this rally is concerned, which has been building legs. It's been slow burn, but it's been building. And I think a huge amount of shots in the system, especially in terms of FIIs and index futures. And I mean, they were the second largest overall short contracts ever. I mean, I think some of that covering will start in specific sectors, which we'll address a little bit from now. So Nifty needs to close above 25,000, which is the falling trend line for the upside to build. Support remains the same, 24,522, which is the recent low. The Nifty Bank closed flat yesterday and there was a marginal gain, but largely flattish. Support here is the swing low of 53,561, but I think you should look up now. And here the resistance is the 20-day moving average, which has moved from yesterday a little bit, 54,733, and the 40-day exponential moving average, which is 55,130. Well, the GIFT Nifty should give you a sense, reacting to, these overtures, 75 points higher on the GIFT Nifty as we begin this session. The F&O stats with Nigel is standing back. Nigel, over to you.
Well, that's right. Overnight, you did see the geopolitical issues did creep up yet again. But this comments coming in from both Trump and Mr. Modi, they indicate that maybe, in fact, at least the US as well as India moving towards some kind of resolution, which is positive. And that's the main factor that the markets have been fixated on. So that's positive. What else is positive? Last few trading sessions, you look at it, institutions have been net buyers, and you like that. So that's, a good data point that's come in there. What about in yesterday's trading session? Not too much movement, both on the long as well as on the short side. But the short positioning continues at around 91%. And we pointed this out, that the last few trading sessions, the FIs were adding shorts. Short positioning is up by closer on 10%, holding closer on 1.9 lakh contracts on the short side. But they're not getting follow through. Now, today we're likely to see another 100-point gap up. So that's what's going to make those FI shorts a little bit nervous. Positioning on the, on the index should come up for you. FI is net short, clients net long. Now, those short positions will be getting a little bit nervous because follow-through hasn't been got on the downside. And now the comments that are coming in on the India-US front, well, that's indicating movement towards some kind of resolution. Move to the options data then. The 24,900 call, 25,000 call, both of them did see good amount of open interest build up, close to around 45 lakh shares. And, on both those two strikes, the kind of open interest build up told you that some of these call writers believe that that 25,000 mark is going to get protected. Now they'll be getting a little bit skittish because the markets are suddenly finding their way higher. On the downside, though, the 24,900 put, well, that did see a good amount of open interest build up with the premium at around 130 rupees. So looking at the options data, looking at the technical levels, a couple of levels comes up for you. For today, you'll want to get past this high, the September 4th high. That's the high that we saw last week itself. So that's going to be the important mark. Resistance comes in the vicinity of around 25,000 odd. If we can get past that, I'll tell you what, we're bracing for a big short covering bounce. Reference point just for the day on the downside, going by the options data and where the technical levels are, is at around the 20 DMA. The Nifty Bank, that needs to find its form because you can't have the largest, the largest participant on the Nifty itself, largest weightage, not participate. So this 20 DMA becomes important on the upside. However, at around this 53,000 mark, we have seen some kind of buying. So that's the important mark that we're looking at. Since India as well as US are moving towards a trade deal, the stocks that got hit when Trump was talking about putting tariffs from 25 to around 50% or thereabouts, those stocks today will see a bit of a relief rally because the commentary is in the positive direction. And there is hope that we'll see some kind of development on that front. So a positive rub-off. That's why I'll keep an eye out on both these two stocks. They've got hit very, very badly in the last month or so. Wellspun Living, Gokuldas and other exporters as well will be in focus. But, Surbhi, as last week we said, the indications were, maybe the feelers are that, in fact, we're getting to some kind of a truce between the two. It looks like that's playing out.
Well, it's definitely good news. There is good news coming in. And, several good points. You've got that FII cash market buy number, 2,000 crores of cash market buying, and we've not seen that in many, 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 many sessions, plus the short covering that Nigel spoke of, and obviously this, sort of de-escalation of sorts. Just bear in mind that the only outlier situation is what's happening with Ukraine, because there have been reports about some jets scrambling in Poland, NATO allies getting together. because of some missiles that were fired towards Ukraine. But that's on the side. Otherwise, it's been good going. And Asian markets this morning, should tell you, in addition, are all a bright shade of green. So there's no problem from Asia either. We've got inflation numbers out of China, and disinflation in China is only deepening. So that's just an additional data point to keep in mind. But let's get back to the big story. US President Donald Trump wrote on his Truth Social handle that India and the US are continuing negotiations to address the trade barriers between the two countries, marking the second such remark he has made over the last few days with regards to ties with India. He also added that he looks forward to speaking to his good friend, Prime Minister Narendra Modi, in the upcoming weeks, that there would be no difficulty in arriving at a successful conclusion for both nations. And Prime Minister Modi has also reciprocated very quickly and quite warmly, saying that India and US are close friends and natural partners. In fact, the Prime Minister also referencing that he will be speaking to President Trump in the coming days. Let's in fact get to our colleague Parikshit, because he's been picking up from sources that India and US, the key trade officials, they are likely to have had an exchange of trade delegations soon. Basically, there's going to be the trade talks and the delegations start meeting each other again. Parikshit, hi, morning. Thanks for joining us early in the morning. But this is big. I mean, this is the first real, very solid sign of a thaw. Something's changed, and it seems to have changed in favor of the relationship.
Clearly, things are changing and changing very fast. We saw some very positive commentary from Donald Trump at the Oval Office, where he said that India and US will be able to resolve their differences. Narendra Modi is a great prime minister, and there are always moments in the relationship. The prime minister also reciprocated that gesture almost immediately. This only goes to show that officials on both sides have been working behind the scenes to put the relationship back on track. And every week we are seeing an improvement. Sources now tell us that the president's statement and the prime minister's statement now indicates that the trade talks are now back on track. They will take place, and officials from both sides will try and fast-track negotiations to arrive at an early conclusion and resolve all outstanding trade issues. Now, what does this really mean? Earlier, we had seen the 6th round of trade negotiations being postponed, and now that round could possibly take place this month itself. We're learning that discussions are on between the two sides to have an exchange of trade delegations, which means that either an Indian government delegation could visit the United States this month, or a USTR or US Trade Representative delegation could visit India for negotiations, and these would be in-person negotiations. We've not had in-person negotiations for the past few weeks after the 6th round was postponed. However, almost daily on a regular basis, there was contact between Commerce Ministry and USTR officials, MEA and State Department officials, and also officials between the Indian government and the White House. Those communications channels had never closed. That's what sources indicate to us. But for the moment, this is a very clear indicator that there is a very strong intent. And this is what President Trump and Prime Minister Modi's statement today indicates, a very strong intent to resolve the outstanding trade issues and barriers and arrive at an early trade deal, possibly by the end of this year. And we now look forward to a confirmed date on the formal in-person negotiations, but we've been told by highly placed sources that this could take place this month itself.
Sure, absolutely, Parikshit. And even the other, aspect of it, the talk of secondary sanctions on Russia, or Russia's trading partners, India and China, he's lobbed that ball in the EU's court, as we know. So in some sense, even that is something which is not very sort of retaliatory in nature. Thank you so much for joining in with the perspective, and we'll watch out for developments on this front. Thanks for joining in. Neeraj Seth, founder and CIO at 3R Investment Managers, and Arvind Sanger, managing partner at Geosphere Capital Management, is joining us to talk about some of these fast-moving developments and where that leaves India in the Indian market. Gentlemen, thank you so much for joining in. Arvind, so it's sounding really good, because we've just heard so much rhetoric over the past 2 to 3 months that this de-escalation coming right from the top is good. I think the market's taking note. We've seen some sign of cash market buying, some short covering in specific parts of the market. How would you look at the positioning here in India, given the change at the political level?
Well, it certainly is quite encouraging that President Trump is saying good things. I'm still a little nervous that there's many a slip between the cup and the lip, and hopefully that's not going to happen again, because India has been close a few times, and it hasn't happened. But I think enough tension has built up, and now it's time to de-escalate. And if President Trump is recognizing that. It's clear that Prime Minister Modi has been ready to take the step once President Trump climbs down from his, somewhat hawkish stance on India that he's had for the last couple of months. So I think that it's optimistic. It is obviously clear that FIIs have been avoiding the Indian market, and clearly you could see his inflows into the market. So I think there is room for a relief rally. But I come back to the question of what is going on with the Indian economy. Obviously, we had great GDP numbers in the June quarter, but we'll have to wait and watch some of the more important real-time data, whether it's in auto sales or it's in electricity demand or other measures showing that the Indian economy is starting to reaccelerate. And between the GST cuts and a US deal, maybe that acts as a shot in the arm for the economy to find its mojo again.
Right. Arvind and Neeraj, thanks very much. Good morning. Neeraj, how would you look at this from a foreign investor point of view? There was Mark Mobius who was broadly, I don't think he was putting this as the point in time when FI flows will turn, but as a broad indication, which Arvind also said, FIs have been avoiding India, they've been selling. And once this US-India thing gets okay and back on track, maybe it's a bit of an indication more than anything else, and maybe that will play out as well. What's your sense, Neeraj?
Overall positive. I do think we are at a turning point here. As Arvind said, you still have to be mindful about how it develops and how it gets resolved. But to your point, there has been some level of selling from the FIIs over the last few months. And I do think you will see actually a pause in selling, some reversal from a flows perspective. I would highlight one additional point. You've seen some level of outsourcing of putting pressure on India and China more from the perspective of trying to resolve the Russia-Ukraine. Now, President Trump has put it on EU. And I think this is not something markets are fully focused on. Given the slow but clear pressure building up, I think there's a possibility that in the coming months, you get some form or shape of resolution of the Russia-Ukraine situation, which again, when you think from India's perspective, whether it's geopolitical aspects or the security and the price of oil is going to be a positive. And I think there's a downside getting built in at this point for the potential for the crude oil going into the year and then next year. But the markets are not pricing in it at this point, given obviously you still have a lot of geopolitical issues. So I think the combination of flows and the backdrop that potentially will improve in the coming months, I think it makes me positive right now where we are.
Arvind, you're intimately familiar with what's happening in IT services. And that's one area where there are large shots in the system. And of course, additionally, there's been this fear-mongering about maybe services will be touched and taxed, although it seems completely unfounded. That should also, at least from a tactical perspective, get a bit of a lift, that space?
Yeah, I think there was a bit of a fear and a risk that does the US go after H-1B visas and try to disadvantage Indian IT outsourcing. And clearly, this should remove that overhang. And so absolutely in the short term, if that overhang has been part of the concern in the IT space, that overhang should go away. The longer term challenges remain, but I think the stocks maybe have had this short-term concern added to the long-term overhang, and the short-term concern should definitely recede.
All right. Hi, good morning, gentlemen. Good to see you all in. Arvind, do you think if a deal actually comes about, India could actually outperform after underperforming drastically for the last year or so? I look at MSCI Emerging Market Index. That's up in double digits, more than 10%. India is down. MSCI India is down more than 10%. Could we get back to a market perform or even outperform in the next 12 to 18 months?
Well, I would come back to 2 points. One is that removing the trade tensions and the trade barriers that have crept up will certainly be helpful for part of the market, which would be the export-dependent economies. But I think the bigger question, which is why India has outperformed, not just in the last month or two when these tariffs have come, but longer term, has nothing to do with tariffs, but has to do with India's own somewhat disappointing growth numbers. And hopefully between the GST reforms announced by Prime Minister Modi and these tariff clouds clearing up, it gives a shot in the arm to the economy. And if that happens, yes, there's clearly a catch-up trade that can happen in the market. But we need to see the follow-through in the economy. And I think the 1-2 punch of these two things should hopefully help deliver that.
All right, let's hope, in fact, domestic economy as well gets its act together. In fact, there have been measures on ground, both fiscal as well as on the monetary side. Neeraj, the last time we chatted, you were saying focus on these domestic themes. Domestic consumption is something that you liked, as well as financials. That's got the much needed boost, right? In the next 10 days or so, we'll reset to the new GST numbers. How are you positioned right now? And what are the themes you like when you look at consumption? If you could break it down a little bit.
So I would actually split it in three parts. The equity side, in terms of how you're thinking about it, I still stick to the sectors in terms of consumer financials. I'm still somewhat skeptical on if you see a rally in the IT services, because there are more structural themes in terms of the headwinds building up there. So I still think overall, the question, can India, from an equity market perspective, see a relief rally and also have potentially a catch-up? I think there is certainly a case for that, but the growth story will prevail post the initial relief rally. The second part, we didn't touch on this earlier, INR has actually underperformed the rest of the regional and the global peers when you think about the currency. And the interesting crosses you can look at, so Indian rupee is weaker by 3%, almost 3% this year, when the dollar has depreciated 10 against the majors. And I think there can be a little bit of a currency reversal here. Like INR has also outperformed Indo-Asian rupiah, which is going through obviously a different set of political issues. So I think there's a currency angle here, specifically from a foreign portfolio manager's perspective. And lastly, the RBI stance. I still think there will be room potentially down the road for RBI to cut, even though they had moved to neutral, but that will come with a pause.
Yeah, no, absolutely. Neeraj, good points there. Arvind, always great chatting with you. Thank you very much, gentlemen, for joining us here on the program. Let me just quickly run our viewers through what's lined up next here over the next 2 hours or so. So we've got 8:35, the management of JK Lakshmi Cement joining us. We talk about the impact of GST cut. 9 o'clock, we'll be joined by Vishal Manchanda. Systematics Group as the US FTA puts Sun Pharma's Halol plant under import alert. 9:20, Vetri Subramaniam of UTI AMC is a market master of the day. 9:35, Abhiraj Singh Bhal of Urban Company on their 1,900 crore IPO as it opens today. Anil Gupta of KEI Industries speaking with us at 9:45 to talk about implications of the GST cut on their sector and the company. And it's the economy with Lata. She speaks with Chandresh Jain of BNP Paribas on the falling rupee and rising yields. Stay tuned.
Time to take a quick break. We've got a lot of stock-specific action to track for you in our special Top 10 segment. For the time being, I'll run you through the list. Eicher, Vikram Solar, HEG, Sterling Wilson Renewable. You have Avanti Foods as well as Apex Frozen Foods. They'll all be reacting to positive news flow, while Sun Pharma, Kotak Mahindra Bank and Blue Jet will be reacting to negative news flow, while we're expecting neutral reaction on Vodafone Idea. Take that break, come back, we get into further detail on all of these names.
Welcome back. So it's actually a good morning as far as global cues are concerned. The rally continuing on Wall Street and Asian markets looking good as well, despite the fact that the inflation data out of China is not very inspiring, deeper disinflation in China. But the markets are absolutely fine. And we have that backdrop of, better comments from Mr. Donald Trump on the India-US relationship. So that all of that put together is telling you that it's going to be a nice big gap up, perhaps against 75 odd points. So let's see if the bulls can trot on. Well, we have plenty of interesting stocks in focus as well. So let's get to our list of top 10 stocks to watch. Guys, good morning to all of you. Starting first with Ekta today. Ekta, some troublesome news for Sun Pharma. This halol issue simply not resolving, it seems.
Well, you know what? Actually, for halol, it is a status quo because it's been under import alert since 2022. It was re-inspected in June of this year from 2nd to 13 June 2025. And at that point in time, the street had pretty much made up its mind that the observations were not difficult enough that it could possibly be a status quo for Sun Pharma when it comes to the halol facility. And rightly so, the site has been now classified as official action indicated, and the FTA has found that the facility is not fully compliant with current good manufacturing practices, and hence it remains under import alert since December of 2022. Remember that with an import alert, there are only limited exceptions allowed in terms of production of certain drugs from that particular facility. Now, compliance with the US FTA and CGMP standards are required before shipments can resume. So it's pretty much a status quo for the halol facility. You could probably see the stock in the red, but the street has made up its mind that maybe halol is not going to be the key facility that Sun Pharma is going to be supplying the US from, and hence the street to a certain extent has also moved on from it.
Okay, all right, Ekta, thank you very much for that. We're going to focus on Vodafone Idea next. Ashmit has got details here. Ashmit, morning.
Well, the AGR issue is once again before the Supreme Court. We given to understand that Vodafone Idea has filed a fresh petition in the Supreme Court. They're questioning the additional AGR burden that was slapped on them. Again, that's a fine distinction that needs to be drawn, a fine line here. There were additional AGR dues that were slapped on telecom companies like Vodafone Idea, above and beyond the AGR burden that we're already familiar with. This additional burden was about 5,600 crore rupees on Vodafone Idea. That's being questioned, that's being challenged. Vodafone Idea is arguing in its petition that there has been instances of double counting of arithmetic errors, that there's a need for quashing this entire additional AGR demand altogether. But that's where things get interesting. The language that has been used in this petition provides not only for questioning and challenging this additional burden, Vodafone Idea is also seeking a reassessment of all the AGR dues up to the period of 2016-17, and thereby raising the question if they're seeking again that age-old demand of Vodafone Idea for recomputation of the entire AGR burden. Bear in mind, speaking of AGR, 2019 is when the Supreme Court had upheld the AGR demand. Since then, the Supreme Court has rejected a modification petition, a review petition, a curative petition, and more recently a fresh petition of Vodafone Idea asking for relief. So the Supreme Court has given clarity in the past. All eyes now on Vodafone Idea and its counsels for seeking any further relief from the Apex Court.
We'll keep an eye on that. Well, let's focus on Kotak Mahindra Bank. Nimesh had briefly mentioned, I think, in D Street Chatter, and yesterday even Yatin had joined in to tell us about that large trade. Nimesh, large trade is what we're looking forward to. Tell us more.
Absolutely. So I expect a big block in Kotak Mahindra Bank. Sumitomo Corporation is going to sell entire 1.65% stake via block deal. The floor price indicates a 4% discount, but my sense is the deal will get executed in the block window. Some large FIs and some domestic mutual funds are anchor investors. So if it executes in the block window, you will see a bit of a short covering rally. So as I said, if the deal gets executed in the block window, expect a green in Kotak Mahindra Bank. It's a clean out trade from Sumitomo Corporation.
Okay, all right. Thanks a lot for that, Nimesh. Let's go across to Sudarshan. He's tracking Eicher Motors. Hey, Sud, morning.
Morning, Nigel. So, if you're a fan of Royal Enfield, or say in many parts of the country, which is known by Bullet, now company has announced that it will be passing on the entire GST benefits that would be effective September 22, and the price cut would be up to rupees 22,000. So the models Bullet Classic, Hunter and Meteor which form nearly 87% of its domestic volumes, will go for price cut. And the range is from rupees 17,000 to up to 22,000. And company is saying that GST decision will, for motorcycles under 350cc, it will make it more accessible for the consumer. So now the stock has been one of the major performers, and being the one of the major beneficiaries of GST decision, we might see continued up move.
Okay, all right, got it. Sudarshan, thanks very much. So Eicher Motors is going to be on our radar. Vivek is joining in. Recently listed company Vikram Solar came out with numbers. There's also, I think, Blue Jet Healthcare on Vivek's radar. Tell us more.
Well, that's right. Good morning. Vikram Solar recently listed in line with what solar module manufacturers have done in Q1. Very strong set of numbers. Revenues high by almost 80% on a year-on-year base. Off a slightly lower base. EBITDA high by 117%, so more than doubling, 242 crore. EBITDA margins very strong, over 21%. Profitability high by almost 6 times on a year-on-year basis. The order book quite strong compared to when the IPO was announced, so at 10.96 gigawatt. Along with that, the company has also received 3 orders between Q1 and Q2. Now, coming to Blue Jet Healthcare, in order to meet the SEBI's minimum public shareholding norms, the promoter has launched an OFS. They are looking to dilute stake. So the OFS they've launched, the primary or the base size of this particular OFS is close to 400 crore. The upsize option is for another 400 crore. The selling shareholder is the promoter Akshay Arora. Floor price is at 675 rupees a share, implying a discount of a little over 7.5%. Equity dilution at base size is 3.4%. If the upsize option is exercised, it's another 3.4%. So expect a mild red as far as Blue Jet Healthcare is concerned today.
Okay, all right, Vivek, thank you very much for that. Sterling and Wilson and HEG are the next two. We're going to focus on Vinny's here with details. Vinny, morning.
Hi, good morning. So we're keeping an eye out on HEG on the back of a couple of news flows. One, the company's associate arm, that is Bhilwara Energy, has acquired 49% stake in Statkraft's Malana Power Company. So post this acquisition, Bhilwara Energy will actually become the sole owner of that Malana Power Company. Other than that, Bhilwara Energy has approved allotment of 1.7 crore equity shares to Singularity, and this is going to be at a price of around 142 rupees per share. So total investment by Singularity in the company would be around 250 crores. And post this, the investor shareholding will increase to 9.6 from 9.6% to 17.51% in Bhilwara Energy. Also, Singularity, just to alert that Singularity AMC was founded in 2015 by Yash Kela as well as Madhu Kela. So green is expected here. Sterling and Wilson also we are expecting green, as they've secured an order of around 415 crores, and this is for a solar power project, so keep an eye on this one.
Okay, all right. Thanks a lot for that, Vinny. Well, let's do a quick recap of all the top stocks that we're tracking for you, the ones with positive news flow: Eicher, Vikram Solar, HEG, Sterling and Wilson Renewable, Avanti Feeds, and Apex Frozen Fruit. Stocks with negative news flow: Sun Pharma, Kotak Mahindra Bank, and Blue Jet. The one that we're expecting a neutral reaction is Vodafone Idea. That's about all the stocks we're looking at. But let's go to Manisha, as always, who's here to tell us about the commodity space. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, 3 things that I want to talk about. One is gold, where we have seen an overnight all-time high yet again coming for the prices. And with that, we are at around $3,675 an ounce for the gold prices. We are up by nearly 40% for this year alone when it comes to gold prices. The second thing is about crude, where we've seen Israel and Hamas escalation yet again in Doha, and that has taken the crude oil prices up by 2%. It also has to do with the U.S. President's statements urging European Union to put tariffs, or secondary tariffs rather, on the Russian oil buyers, almost suggesting 100% on China and India. That is what has led to some premium coming for prices. And the third commodity on my radar is aluminum, because that seems to be outperforming in the near term all across the base metal prices, whether it is about China output or the concerns that we are seeing in mines in Africa, or the point that you're looking at tariff concerns leading to Canadian aluminum now trying to find newer markets. All of that has been quite supportive. So almost at $2,600 a ton for aluminum, with various agency reports suggesting that 3,000 perhaps is the target that you could see in the next 6 to 12 months for aluminum.
Okay, all right, got it. Thanks very much for that, Manisha. We'll quickly move on to Sudarshan. He's been looking at all the brokerage notes of the morning. So let's see if he's found anything really interesting. So tell us.
So UBS has initiated coverage on pipe companies, but it's an opposite call. It has a buy call on Astral and sell call on Supreme Industries. For Astral, target price is 1,800, and for Supreme Industries, target price is 3,500. So it's expecting volume recovery in H2 of FY26, and it's going to be led by government spending, real estate completion, and rising agricultural income. And overall, for this sector, it's expecting high single-digit volume sales growth in FY27. On the pricing front, it's saying that PVC prices are near bottom and it may rebound, and market is underestimating PVC price upside and margin gains. It has a buy on Astral due to margin upside with backward integration, and sell on Supreme Industries due to high capex, ROCE concerns, and challenges that company has been facing in other businesses. Nomura has come out with a note on Cummins. It has a buy call and target price is 4,500. It says cost efficiencies are being ingrained in growth ethos, and it has raised FY27-28 EBITDA estimates by 2%, and now it's estimating 18% profit CAGR over FY25-28 with ROE of 33%. Expects BESS to further bolster values proposition of companies' growth, and also expecting demand to improve further going forward.
Okay, all right. So thank you very much for that. Well, Indian seafood exporters, and there are a bunch of shrimp exporters who are listed on the market, may get a bit of a boost with regards to exports to EU. Ria is here with a quick update. Ria, take it away.
Well, yes, India's seafood exporters are expected to get a major boost since the EU has approved 102 new Indian fishery establishments for exports to the European Union. Now, this move is expected to add around 16% additional Indian export establishments in terms of trade volume. And the Commerce Ministry also expects an immediate rise of over 20% in trade volume as a result of this move. Now, remember that India's marine exports to the European Union are valued at $1.1 billion as of FY24, and marine products have also been recently impacted by the 50% tariff rate that the US has imposed on India. The US is the largest export market for marine products from India, followed by the European Union. Now, in terms of exposure to the European Union for some of these listed players, the first one is Avanti Feeds. 17.4% of the shrimp feed revenue in FY25 for the company came from Europe, and the company is already working on expanding their presence in non-US markets, including the European Union. For Apex Frozen Foods, around 39% of the revenue contribution for FY25 came from the European Union, up from 26% in the last financial year. And they've also said that they've seen robust demand from the EU in FY25, and they continue to strengthen their presence in this market further. Some other listed players that also supply to the European Union include Coastal Corporation, Waterbase, as well as IFB Agro. So these companies may see some benefit arising from this new move.
Absolutely. So keep an eye out on this one, and Ria, others will be, of course, we'll be trying to reach out to these companies and put them on the air and ask them, what this would really mean. But the numbers as being indicated, very, very large. We'll take a break. We're back. We connect with the management of JK Lakshmi Cement as GST and cement stands reduced to 18%. What's the impact on volumes? Coming up.
Welcome back. You're tuned in to Bazar Morning Call. Well, the first corporate on our radar today is Lakshmi Cement. We're joined by Arun Shukla, the President and Director at the company. Good morning, Mr. Shukla. Thanks a lot for joining in. Well, coming to you in just a bit. For the time being, just telling our viewers, 3 big points is what we're focusing on. Point number 1, expectations from the GST changes. Point number 2, the demand scenario in the seasonally weak quarter, and how does he see things move ahead? And point number 3, expansion plans. I believe some Lakshmi officials have been visiting various plants. We'll try to confirm that as well. First point though, the GST cut. Mr. Shukla, this was a demand that the entire cement industry was asking for, and that's finally going to be real by the 22nd of September. Now tell us, what is your estimates? The last time around you joined in, you were telling us that you're expecting industry to grow by around 6 to around 7%, and Lakshmi Cement will do even better. Now you've got this booster shot. Do you think that you want to tinker with that a little bit? Are you a little bit more confident on industry growth as well as your own company's growth?
Yeah, good morning, Nigel. Thank you so much. And yeah, GST has been one of our GST rate cut, one of our demand for so long. And thanks to Government of India for acceding to our demand. And yes, definitely it is a positive move by the government and good for the cement industry. As far as demand goes, as I said last time also, cement is not that price elastic, yeah, to a great extent, right? So yes, definitely mid to long term, I definitely see that there is going to be some, positive movement towards, affordable housing, infrastructure, and even overall demand situation for sure. And cement industry is going to be benefited out of it. So my earlier demand of earlier growth projection was for about 6 to 7%. I think since I think for Q1 and even Q2 also, this month is not so good demand-wise. I still believe that industry is going to grow at a rate of about 7% around. So I still maintain that because, yeah.
And you will outgrow it, right?
And I outgrow it, yeah.
All right. So we should be working with the number of high single digits to double digits for Lakshmi Cement.
Yeah.
Got it. The other point I want to ask you is, since there is this run-up toward the GST rationalization, in the near term, demand would have been very subdued or must be absolutely hit. Is that correct?
Yeah, demand is really subdued, yeah. Because of rains also.
Rains as well. Seasonally weak quarter.
Intense rain across, yeah.
Got it. What about premium products, as a percentage of your mix? I think you're in the early 20%. Now, one school of thought is, as you said, demand is inelastic for cement. But those that were using, a particular type of cement, maybe they'll want to upgrade themselves. So instead of saving out, and putting that excess, the surplus money in their own pockets, they would say, let me consume a better quality cement. Do you see the premium sales go up?
I think you are right, Nigel. I think it's going to go up a little bit. Our plan is to go to 30% at least in the coming maybe a year time. Right now, we are hovering around, around 25% of our trade sales. So definitely, I think affordability of premium cement will go up, and hence this will increase our volume.
Okay. Now the fear, states will get lower GST, SGST, because from around 14%, that will come down to 9%. That could potentially put a risk on some of the incentives that the state had promised you all. Could you tell us what is the rough incentive that Lakshmi Cement gets? And do you see this as a bit of a risk? I believe that capital subsidy that was promised by state governments, that will go through. But with regard to SGST, that could come down. Your take?
In our case, Nigel, we are not on SGST incentive anywhere, right?
Okay.
In Rajasthan at Udaipur, which we have expanded recently around last year, right? There we have opted for capital incentive, right? So we are not going to be impacted out of that.
So you don't see that capital incentive getting impacted on any way. And good to hear that, SGST for at least your company, that's not a risk.
Absolutely. We are not going to be impacted out of this, yeah.
Got it. Now, what about coal? Domestic coal could potentially become cheaper because, GST has gone up to 18%, but the cess has been removed of 400 rupees per ton. How much of your mix is domestic coal?
Domestic coal is very little, Nigel, in our case, because we use domestic coal only in our eastern operations. Rest of the places we import from outside, right? So it's not going to be of too much beneficial for us because our, share of domestic coal is not that great.
Okay, got it. So we have clarified on a lot of issues with regard to the GST rationalization. But Mr. Shukla, I've got my ear to the ground. And, there is this talk of inorganic growth. I haven't really heard of JK Lakshmi Cement be very, very aggressive on the inorganic front. Maybe at one point of time, Sanghi Industries, there was that market was speculating that maybe JK Lakshmi and the JK group itself, maybe JK Cement as well, was looking at. But in the last few days, there is this talk that, y'all are potentially looking at Andhra Cement or a Deccan Cement. The last time around, we briefly chatted about Deccan Cement. Andhra Cement, is there some interest? Have you looked at that asset?
As I said last time, I repeat once again, our focus is on organic growth. And we are just focused on delivering 30 million ton by 2030. All our plans are in place and hopefully we'll exceed 30 million ton by 2030. So as of now, on our table, we are just focused on organic growth.
But what about Andhra Cement, sir? Have you had a look at that asset? It has limestone reserves. Sagar Cement is the owner there. Not looked at it at all. No interest at all.
As I said before, we keep on evaluating based on the strategic fit which we have and also the value of the asset which we can really look at. So we keep on evaluating, but as of today, there is nothing on the table which we are evaluating.
Appreciate you joining in, sir. Thanks a lot. We're taking your word for it. I believe there is some interest that's coming about for Andhra Cement. At least there are visits. We'll have to see whether or not there's a deal. But thanks a lot for joining in.
Thank you so much.
All right.
Well, let's welcome in Deven Choksi, who's with us at DR Choksi FinServ. Deven, good to have you with us here. Thanks very much for joining us. Just first thoughts on this, the India-US overture, and where does this, there will be some short covering. Where will this show up in the maximum way, in your opinion, if you want to talk about stocks or sectors, Deven?
Good morning, Prashant. Well, I think the market has shown a distinct amount of resilience to the negative news which have emerged in past few weeks, particularly after the tariff-related dictate which came from US's side. Today, the situation is slightly turning favorable. Both the Commerce Minister as well as President of America, both of them are giving statements saying that the situations of working favorably on the arriving at the tariff conclusions, etc. Should that be the case, in my viewpoint, I think the market would cheer up. I think this particular month or a quarter, whatever we call it as, I think the second quarter of the financial year, I think the market should be making reasonable amount of, stable bottom, as I would call it as. Wherever that level it is, I think the market would be forming that level. And that is the level at which I'm seeing the buying interest emerging. One of the most important point out here, the market is attracting a lot of new papers. And at this point of time, there is an appetite to buy some of the new papers as far as the new companies are concerned in the market. So in my viewpoint, given the kind of positive fund flow, given the kind of positive news flow expected rather, I think the things should be working out better as far as the market is concerned. We remain cautiously optimistic about various companies within the respective sectors where the growth is above normal. And that's where probably our focus remains as far as this financial year is concerned.
Okay, all right. Hi, Deven. Good morning. Good to see you, Ben. We heard the management of JK Lakshmi Cement. What's your view out there? I still believe a couple of small assets are going to get, consolidated in the next 3 to around 6 months in this fiscal. How do you approach this space?
Yeah, Nigel, good morning. Well, I think the 5-year scenario for the cement, given around 7-8% kind of a growth in the sector, I believe that cement demand could touch somewhere around 670-75 million metric tons across the country, given the kind of projects that we are executing. And those companies which have created larger size capacities, both due to the organic level of activities as well as acquiring some of the companies like Adani Group has been doing it. In my viewpoint, I think the larger capacity companies are the ones which are likely to be beneficiary of this particular size that is getting created at the current level. JK Lakshmi Cement also, has been very vocal about 30 million capacity that they want to achieve from 18 million in next 5 years' time. So certainly, I think they are also moving in the direction, creating the size. I believe the larger the size and larger the footprint that one is creating in the local markets would be the way to look at these companies. Both the construction sector, infrastructure side, as well as housing side, both of them are attracting reasonably good size of demand for the cement companies in general, as I see it. So distinctly positive, but selectively for the larger companies where the capacity advantage comes to their balance sheets.
Got it. All right. By the way, the large trade has taken place. Now we'll have to see whether or not there's a bit of a short covering bounce that takes place, because there were shorts in the system on Kotak Mahindra Bank, and this deal has taken place in the pre-open window. So those shorts will be getting a little bit nervous in today's trade. They've been talking about the trade deal. I wanted to ask about the textile companies, namely Welspun India, Gokuldas. Both of them got slammed. Now it appears, both the leaders are Prime Minister Mr. Narendra Modi and Trump. They're going to be getting onto the table and hopefully coming up with a deal. Going by the way these stocks have corrected, do you think it's time to gradually start getting in? Because sooner or later, there will be a more rational deal on the table. Your take?
Absolutely, Nigel. I think whatever negative had to be there, I think it has already come in. Maybe I think some working-wise this September-ended quarter might have some negative working impact, I think, as far as these textile companies are concerned. But that would be the last one as I see it, I think, because as we rightly observing, if both the leaders are concluding the deal, probably I think the normalcy would get restored. And in the third quarter onwards, I think you should be seeing better times for companies. Market would definitely pick up the tailwind if this announcement comes in. In my report, I think the downside is probably limited in this sector. Maybe select companies, I think, could be the beneficiary in this particular sector.
Devin, hi. Morning. On a side note, we're talking about all the secondary market. But the primary market is always very interesting, right? And today, again, there's a new issue opening. It just tells you about how India is consuming differently. Now, I'm talking about, of course, Urban Company. We'll talk to the management soon enough. One more platform company will be part of the listed universe. Did you take a look at it? I mean, only I think less than 500 crores is going in the company. It's largely an OFS. But did the business look interesting? The valuations, does it make sense?
Yes, good morning. Well, I believe that from the business model perspective, yes, I think it is a business model which is a requirement for Indian middle class in particular, who require the services of whatever the 9 services that they have built in their portfolio. They require those services. And in my viewpoint, I think they have been reasonable in arriving at, I think, the pricing for the services. Given the kind of balance sheet and P&L that one has seen right now, I believe that I think they have started showing the signs of sustaining the profitability, though it is only 1 year since which I think they have come into profit. And that to the international operations, they have still not come into profit. They are actually bleeding. But considering the fact that I think there is a focus to build the profitability as management is committing, I believe that I think that things could look relatively better from here. Question definitely will be on valuation. How do you sustain valuation? Unless you see a sharper jump in the profit, which probably I think could come either way of reducing the loss from international operations, or maybe I think some organic growth which they are promising to grow in current year and thereafter. So we'll have to wait and see. We have a subscribe rating on the stock, of course, but at the same time, we believe that I think if the market scales up too high, then probably I think valuation will become very expensive for the stock.
All right, Devin, we'll leave it there. Thank you very much for joining us. Subscribe on Urban Company. The management, by the way, comes up a little later here on the program, and we'll quiz them. We'll take a break. We're back with some technical trading ideas. Sudarshan and Mitesh joining us on the other side. Okay, welcome back. Let's just look at what the market is doing on the GIFT Nifty. Maybe this higher was strongly higher in the morning when we looked at it. We've been talking about short covering. Where will short covering show up? It will show up where there is maximum short positions. And that's essentially what we want to cover with Sud, who's standing by to run us through the data. Sud, what's positioning looking like and where?
So first, talking about FIs remained heavily on the short side, and yesterday, but good party yesterday, after like several sessions, we have seen that FIs turned net buyers both in the cash market and in the derivative market. So as far as Nifty's levels are concerned, 24,820 around, support would be there, and resistance will come only after 25,000 Nifty crosses. Now talking about the stocks that might see a short covering. So RT stocks yesterday saw a short covering, and it might continue even today. So two stocks that I have selected, and those two stocks are just above 50-day moving average, and those are Emphasis and KPIT Technologies. From the auto pack, keeping on Bharat Forge, day before yesterday, we saw a huge buying interest coming in Bharat Forge, but yesterday again, stock was down more than 2%. Now, with the fresh news coming, fresh comment coming from US President as well as Indian Prime Minister, we might see buying in Bharat Forge. And from chemical names, keeping on both the companies, PI Industries as well as SRF, but most importantly, SRF, because it's one of the major chemical exporters to the US.
Okay, all right. So, keep an eye out on these names as we open up for short covering. We take a break. We are back with the pre-opening rates, with technical ideas, and of course, we focus on the pharmaceutical space with the analyst as well. Stay tuned.
Well, we've got good cues coming in from multiple fronts this morning. And in any case, yesterday, the bulls managed to prevail. So can they build on the momentum? That's the question. So therefore, how should you approach trade? Sudarshan Sukhani and Mitesh Thakkar are joining in. Gentlemen, good morning. Great to have you on. So the bulls look like they want to stir back to life. Let's talk about the index first, Mitesh. So what, long trades, then levels to keep in mind? When do you go long if you get the 70-point gap up? Then how do you navigate it?
Good morning, sir. So, we have avoided trading the index, believing that it will be ranged. And while, you've been mentioning that trading on the long side is more profitable because we might head towards the upper end of the range. On the index, we still don't have a clear sign of a possible breakout. So, the gap up opening should be good for people who are carrying long stock positions as well as, who want to trade long. But on the index, if I was to talk of levels, the first level on the upside for the Nifty will come in around 25,000 and then 25,150, 200 zone. So I think you might see the index head towards those levels, partly led by IT and other stocks. But people who are trading on the index with a long position. I think around 25,000, try to take some profits, trail your stop losses, and around 25, 150, 200, try to book full profits.
Okay, all right, got it. We've got the first pre-opening rates. It's looking even better than the implied open. Implied open was suggesting about 70, 75 points higher. First glance, Nifty wants to hit a century. So let's see how this plays out. So Darshan, morning to you as well. And I remember it was a couple of days back, maybe it was late last week, when you said that one should be shorting the rallies. But has that texture changed now? What's your index advice, Nifty, Bank Nifty?
That was 10 days ago. And since then,
I thought last week.
We should be buying every day. So the context has completely changed. Throughout this week and last week, late last week, the idea was once we crossed 24,600, we should be buying every dip with a stop at 24,400. Now that continues. Even now, the view is that you should be looking to go long on a minor intraday dip or a sideways range. The only change is that move your stop from 24,400 to 24,600. I don't have a target because markets will do what they want. And they've been inching up rather than running up. That's fine. The trend is up and we should be long.
Got that, gentlemen. Morning. Mitesh, what are your trades?
On the stock side, Prashant, I have all buy calls today. The first one is a buy on SBI cards. It's done a good base building at lower levels, now reversing after a correction. Buy here with a stop, of 805. Look for targets of around 855, 860 on the upside. Colgate, which had a very good run post that GST announcement, has given a pullback in the last few days. Now gives you a good entry point. So keep a stop below 2375. Look for targets of around 2450. Buy on IDFC First Bank, which has been a buy earlier as well. Now can be bought afresh with a stop at 7230 for a target of 76.5. And the final buy call is Adani Ports. I recommend buying here with a stop at 1360 for targets of 1420.
Okay, got it. Sudarshan, what about you? What are your picks?
Well, again, it's an all buy list. T-Target is a buy with stop under 868. LIC is a buy with a stop under 856. IRCTC is a buying opportunity with a stop under 699. And AB Capital is a buy with a stop under 283. The idea is to focus on mid-caps because we are going long in the Nifty anyway.
Okay, all right, gentlemen, thanks very much, both of you, for running us through those trades. In about 6-7 minutes, we'll come back to you for some more ideas. I think the pre-open is settling down now, and maybe we can look at it. 100 points, 24,966. Pharma in focus. There is news with regards to Sun's Halol facility, but there is a bigger news flow with regards to India, US. Vishal Manchanda, pharma analyst at Systematics Group, is with us. Vishal, good to have you with us here. I'm going to start with the bigger stuff. At the margin, there's always been this fear overhang of sectoral tariffs. But the point is we got more than, tariffs imposition in India was higher than anybody expected. And now we seem to be walking back. Does that take away some of these sectoral tariff fears as well?
So pharma so far remains exempt, but the Section 232 investigations are ongoing and we might see some announcements on the tariff front, maybe a month or 2 months later from now. So as we have discussed this earlier, I think tariffs from an India perspective, it is difficult for Indian companies to absorb the tariffs, and so they'll need to pass this. And whether or not so the question is whether there will be other companies who can supply generics cheaper than what India supplies to the US. So my sense is we don't have any other cheaper options than India. Even if tariffs being higher in India versus other countries, I would still say India has a significant edge on manufacturing generics at a lower cost. So my sense is I'm not worried about the tariffs, but they'll have some interim transient impact on the industry. But Indian companies should be able to sail through those.
Sure, and absolutely. When if things indeed start to thaw out, maybe that unease also vanishes. By the way, I should just point out, since we're talking tariffs, and we're obviously discussing pharma, look at what's happening to the other sectors. In the pre-open, stocks like Gokuldas, Indocount, all of them are surging 4, 5, 6%. And then the shrimp exporters, keep an eye out on them as well because of the developments with the EU, more exports to the EU. So those are your, basically some of these export pockets are doing very well in the pre-open. Vishal, good to have you on. So, that's on the general tariff front. Specifically on Sun Pharma, there's fresh development. I think now there's a official action indicated status on their Halol plant. What does that mean? Because anyway, this plant was under an import alert. So is it at all an additional negative? I'm not sure if anything was going out to the US in any case. And overall, what's your call on the stock?
Yeah. So I think expectations were low. So people were not expecting the import alert to be lifted. And so not incrementally negative, but had this been, say, import alert getting lifted, this would have been certainly a big positive because Sun Pharma has lost significant amount of revenues in US generics because of the Halol import alert over the last 2-3 years. So had this been lifted, we could have we could have seen growth in their US generic business, which has been lackluster over the last 3-4 years. So I think neutral from Sun Pharma point of view, as there were no expectations. Overall, my call on Sun is a buy. So I think the risk reward is better in Sun versus other large cap generic companies. Largely, what I'm expecting is over the next 4 to 5 years, Sun revenue should grow high single digit to mid-teens, depending on how their various launches on the specialty front shape up the next 3 to 4 years.
Absolutely. So, okay. So, Sun Pharma, I mean, not sort of gunning for it in a big way, but let's get your top picks then. Now, either a company where you think they have great US, scale-up potential, a great pipeline, or maybe a more India-focused company. Just give us your topics.
So Sun and Cipla are the larger names we prefer in the space, largely because of their lower exposure to US generics. So like Sun probably has got 10 to 15% of their sales exposed to US generics. Cipla has got about 30% of their sales exposed to US generics. But one good thing about Cipla is they have a lot of manufacturing of their generic products being done in the US. So from a kind of hypothetically, they're less prone to any tariff risk. While we believe that tariffs are not going to impact the sector on a medium to long term basis, but still it's safer to be in Cipla and Sun. And again, Cipla has got a pipeline that we think should play out in the US in the next 2 years, next 1 to 2 years, meaningfully well. That's broadly on my topics.
All right, Vishal, thank you very much for that. A really good conversation. Appreciate you joining us with that perspective. We'll address some of these individual stories in a bit, but maybe we just look at how stocks are settled. I think the pre-open is finished, and as we always do, if we have for the news-related and otherwise stocks to come up, we should look at how they're opening. Maybe start with names like Gokul Das. Okay, shrimp
these
first.
guys are really surging.
Avanti's up 8. Shrimps are flying. Apex Frozen is up 11%. Look at something like a Waterbase. Look at King's Infra. By the way, there are about 10 of these listed seafood exporters. Very small names as well. So we're not going down there. But at least 4 or 5 of these, as we pointed out, they're sharply higher. And it is meaningful. I mean, this is not with regards to US. This is with regards to market opening up in a big way to EU. And Ria will join us in just a bit from now. Gokul Das is the other one, which was in a way, it fell from 1,200, almost 1,200 to the 600 handle, and started moving on. Moved on Monday in a very sharp way. Yesterday was flat, is back up about 4.5% today as well. So 786, almost 800 handle back here. A lot of pain for people who've been sort of holding on. Was seen as the big beneficiary of perhaps a US deal, lower tariffs, etc. And other sort of textile makers as well. There'll be Wellspun, Arvind, and a bunch of other names, which Himmat Sinka, for example, on Monday was up sharply. And all these companies should come up as well. Sud pointed out names, chemical names. SRF is something he pointed out. And maybe, but that was from a positioning point of view, also exports to US. And SRF is up about 0.5% or so. So, a bunch of names. And as I said, we will address, this entire shrimp bit because it's new in that sense with regards to EU and the export market there in a bit. But let's just quickly run you through the trades with Sudarshan and Mitesh, the 9-10 trades. It's 9-11. So, Sudarshan, what do you have?
I have Titagarh. Consider buying Titagarh with a stop under 868.
Mitesh, what about you?
We'll go with a buy on SBI cards for targets of around 860.
All right. Thanks a lot for that, gentlemen. Well, and in our morning chat, we had highlighted, right, that Welspun India, Gokuldas, they could see a bit of a relief rally. And that's the way it's playing out. And also just one more stock that we're looking at, Oracle. Overnight, the parent saw a big rally. So a sentiment rub-off is what we're seeing out here. And that's why Oracle, the Indian listed company as well, is up close to around 5%. And besides that, Industars, there's a Kotak note. From sell, they have upgraded the stock to buy. That's Industars. So that one as well is up on large volumes in pre-open, up 2.5%. Ria joins in to revise the Indian seafood exporters. Why they're running along. Ria?
Well, yes, India's seafood exports are expected to get a major boost since the European Union has approved 102 new fishery establishments for export to the EU. Now, this move is expected to add around 16% additional Indian export establishments in terms of trade volumes. And the Commerce Ministry has also said that they are anticipating an immediate increase of over 20% in trade volumes as a result of this move. Now, India's marine exports to the European Union were valued at around $1.1 billion in FY24. And remember that marine exports have recently been impacted by the 50% US tariff rate that has been imposed on India, US being the largest export market for marine products from India, with the EU following it. Now, in terms of exposure to the European Union for listed players, the first one is Avanti Feeds. Around 17.4% of the shrimp feed revenue in FY25 came from Europe, and the company has said that they are already working on expanding their presence in non-US markets, including the European Union. For Apex Frozen Foods, around 39% of the total revenue for FY25 has come from the European Union. This is up from around 26% in the previous financial year. And they've also seen a robust demand from the EU in FY25, and they've said that they continue to strengthen their presence in the market going forward. Some other listed players that also supply to the European Union include Coastal Corporation, Waterbase, as well as IFB Agro.
Okay, all right. So all of these stocks up and about, some of them already supplying to the EU, with potential to boost those numbers perhaps. Ria, thank you very much for that.
Survi, the numbers are so stark. Billion goes to 20 billion because of this. That's the number. 1 to 20, 20x EU, right?
Because of getting that authorization and higher exports. And that's showing up in stock prices, doing very well. Remember, these stocks got beaten down also quite badly when the first round of the tariff news came through, because they're large exporters even to the US. So there's a rally going on. Let's quickly move on. Nigel was just talking about Indus Towers and that note. And we have Nimesh with more details, the standout brokerage of the day. Nimesh.
Well, Surbi, that's right. So standard is on Indus Tower, a double upgrade from Kotak Institutional Equities to a buy from sell, and they've raised the target price in Indus Tower to 400 from 365 earlier. Now, Kotak believes that the concerns around delay in the dividend payout as well as the capital allocation with the African foray are actually overdone. They expect a gradual uptrend in the tenancy, which would drive a 8% EBITDA and a 10% EPS CAGR over FY27 to FY28. Again, their base case is a 3+1 market structure, and they expect Indus to start dividend payout in this year itself. On a valuation, the stock is sitting at close to 6.5 times EV/EBITDA and a 7.5% dividend yield, which is attractive to, according to the Kotak note, and hence a double upgrade to a buy from sell, and they've raised a target price in Indus Tower to 400 rupees.
All right, Indus is basically the other one to keep an eye out on. First rates coming up in a couple of seconds. We'll get down to individual names. What do we have? First rates. So 120 on the Nifty, 400 on the Sensex. So this is now nicely building up. So 24,973. Yesterday we closed near 24,900. Today we are close to 25,000. Closer to 25,000. Nifty Bank is absolutely flat. Or is it slightly higher? Oh, slightly higher, 0.4%. So 54. So in line with what the Nifty is doing, unlike the last few sessions where it's underperformed. Nifty. The mid-cap index is up 0.75%, and I think you've got the small-cap index, which is opening up with gains of about 0.8% as well. So that's the overall picture. It's a green-looking screen, and I suspect the heat map on the Nifty will show you that everything is up in the green, except Sun. That's one of the names we discussed with an analyst right before markets open. Otherwise, it's all green with a nice triple-digit gain to boot this morning. 24,966. Survi.
The entire green screen with just one speck of red, as if, making it that one Shubh red sign. But anyway, let's talk about the gainers. So Kotak Mahindra Bank, after those block trades, is straight away up 1.3, 1.4%. Adani Ports is the other early mover, over 1% higher. There's Jio Financials, which is adding on some, weight. L&T is contributing as well with a gain of 1%. And some of the IT names, by the way, They're still running from yesterday. So TCS, Infosys, between 0.5% to 1% on IT names. HCL Tech is up, for instance, closer to 1%. Wipro is also higher. So IT is still running. Some financials are trying to pick up. Axis Bank, for instance, is up 0.5%. I mentioned Geo Financial, Kotak as well. So IT is running. Financials are trying to keep pace. Bank Nifty is up 0.5%, remember. SBI, for instance, also 0.5% higher. And today, FMCG is also not falling. So that's the good news for the index. Trent, HUL, a couple of consumer stocks, Nestle, all of them up 0.5%. You don't have drags today, and that's the good news for the market. Even auto names, after yesterday's profit-taking, names like Tata Motors have bounced on the positive side. Reliance is up about 0.25%. So today, Nigel, it's all batsmen nicely chipping in, and it's a good-looking century there.
Oh, well, that's right. And hopefully at the end of the evening as well, the Indian batsmen get their act together when we kickstart our campaign later today. That for later. For the time being, focusing on stocks that are moving around. Textiles, we had highlighted these stocks. You have a big relief rally that's taking place because India and US continuing their negotiations to address those trade barriers. The street likes it. Gokuldas Exports up 8.5%. Welspun, not Corp. Corp anyway benefits because they have their plant in the United States. Welspun India is the one that we're talking about. That as well has seen a big correction. That's up close to on 7%, as is the case with Indocount. Vikram Solar, the Q1 margins coming in around 21.5%, compares with around 17.5%. 400 basis points expansion out there, while you have the revenue that's up close to around 80%. The street likes that, so that's why you have Vikram Solar that's up and about. And Vikran Engineering, let's get some of these stocks. Vikram Solar, Vikran Engineering, that's a newly listed company. That as well is moving up on rather large volumes, so good on that. Two stocks that were seen a big run in this month itself have come in for profit taking. Precision camshafts, that's the play with regard to retrofitting. So that's a kind of an EV play. That has run up 30% in this week itself. For the month, it's up 40%. But today, falling on large volumes, down 6.5%. As is the case with Jacket, that's JTEKT. That as well is down close to around 5%. Some profit taking being seen out there. And you have Eicher Energy, another stock that's seen a big run. Well, that one as well has come in for some profit taking. It's a good start. The positive is we've made a higher high, even the high that we recently saw of 24,982. That briefly got taken out. So good start to trade.
No, absolutely. A great start, and market breadth is pretty positive. And I hope market breadth also stays like this. I mean, last 2 days, day before yesterday, we actually, there was more down than up. Yesterday also was very mixed by the time we ended. Nothing large, but let's hope in the broader space as well, some of this action stays. Can we have all these shrimp stocks are flying, and they're all up big time, 10 to 14, 15%, and we'll try and get the companies on to get a better sense of. The EU thing is this is replacing exports, potentially lost exports to the US, or this is opening up. I mean, the size of the industry becomes much bigger for these companies. That's a big question, and if that is true, then we're talking very large numbers and meaningful for these companies just in terms of the size, scale of opportunity which opens up. So we'll have to get a better sense and dig a little deeper into this one. But Ria, of course, has been running us through the basic stuff. All right, well, Vetri Subramanian is with us, Managing Director and CEO Designate at UTI AMC. Vetri, good to have you with us here. So this 50%, I guess, without putting numbers, how much was that responsible for us to do a few things here on the GST, etc.? But it's good we did it in terms of lowering taxation on a range of products. And now on the external front as well, there seems to be a bit of de-escalation, some light at the end of the tunnel in that sense. How does it set us up in a good way, decent way? Earnings growth, of course, has to pick up, and that's the big one. But there's a bunch of things together which have to come together, right?
Sure. Thanks, Prashant. I just step back for a moment to say, I think India has put itself in a good macroeconomic situation in terms of the way we've managed monetary policy, the way we've managed fiscal policy. We know that the economy was not, firing all cylinders late in 2024, but we've been able to use the strong macroeconomic platform to cut rates quite significantly. We were able to cut the income tax rate in the budget, which means we were putting more money into the wallets of people. And now we're effectively increasing their spending power by cutting GST. None of this would have been possible if you hadn't managed your macroeconomic situation in a prudent manner. Now, talking about the tariffs, I do think that eventually it is transactional, it is not structural. So yes, there will be some impact on the economy, some impact on earnings, but really we're discussing quarters. We're not really discussing something which is very long term. At least that's the base case with which we've been thinking about it. So yeah, we were never too worked up about the tariff issue, and it's good to see that the government is doing whatever it can at the margins to be supportive. And yes, dil mange more, so we'd always be happy to see the government doing a lot more, particularly in terms of ease of doing business. I think that remains, to my mind, the big ask.
Well, that's always going to be welcome, Vetri. Morning. Thank you so much for joining in, and congratulations to you, by the way, on the change and the elevation. But dil mange more is absolutely fine. But till now, what the dil has received, what can that translate into?
Just one thing. Sorry, apologies.
Yeah. Sorry.
President Trump. So President Trump posted in the morning, right?
Yeah.
The tweet. Prime Minister Modi responded.
Reciprocated.
Yes. President Trump has posted Prime Minister Modi's tweet. He's picked up Prime Minister Modi's tweet and posted that on Truth Social.
Saying what?
He just posted it on Truth
reposted
Social.
it.
On
Okay,
Truth
on
Social.
Truth Social.
So I think it's interesting. It's basically, overture, reciprocation, affirmation.
Something, now we won't know behind the scenes. That's why diplomacy is so interesting. But something is completely clicked in the last 10 odd days. Whatever it is, it's good. It's good for both the countries, for the relationship, and definitely for the market. We'll actually put up those posts in just a bit again, the ones that Prashant is referring to. Prime Minister Modi responding to President Trump, and now President Trump basically posting that tweet, which was originally on X. So, okay, that was the first tweet that came in late last night. Now let's move to Prime Minister Modi's response, which was on X, on a different platform. This was on Truth Social. Prime Minister Modi acknowledged what President Trump said. There we go. And now what has happened is that Prime Minister Modi's tweet, or the X post, has been put on Truth Social for all of Donald Trump's followers. So this is good.
A lot of social media activity.
Also, and they track every single thing. Who's meeting whom, who's taking pictures where, who's shaking hands with whom. So yeah, very, very active gentlemen out there. Okay. Well, in this environment, Vetri, to come back to my question, right? So this is really good from a sentiment point of view. This is what the market wanted, and it seems to be happening. We've had enough on the local front as well. Now, how does all of this translate into better earnings growth? Because at the end of the day, that's a key reason why markets have been subdued and why FIIs have been staying away. So how much better can the rest of this year be compared to earlier estimates?
Yeah. First of all, Surabhi, I always thought there was too much financial chatter on the platform called X. Now I'm surprised to see that even foreign policy is being played out in real time.
Don't say social media.
This is the world we live in. We've got to deal with that. Coming back to your point on earnings, right? I think one of the things we've got to keep in mind is that all the prudence that I talked about in terms of the way we are managing the economy also means that actually in terms of nominal growth, when you in fact look at the data for the quarter gone by in June, nominal GDP growth was barely at about 8.5%. Then you look at the Nifty 500 group of companies, revenue growth for that universe is just about 6%. And profit growth is again just about 6.5% for that entire universe of companies. And if you look at the number of companies who are able to grow their revenues, let's say about 10%, that number is stuck at about 40%. Actually, that's the number for earnings. So just about 44% of companies out of the 500 able to grow earnings at greater than 10%. Now, I think that is a little bit of a challenge, because when you start with starting valuations that you have in India, there are only two equity markets in the world, Surabhi, which are expensive. One is the US, the second is India. And there's much we can talk about why these are, two of the best placed economies in the world. But for investors, the challenge is that these are the two richly valued markets. And in the case of India, if you've now got earnings growth tracking in single digit, then, investors do worry about the fact that, it's a big ocean out there in terms of economies. There are other countries where arguably you could look at turnarounds, you could look at cheaper starting valuations, and maybe some upside on growth. So I think what's been missing in India is really that trend in terms of upside surprises. And finally, FY27 earnings growth estimates in India are already at 17%. So, the bar has already been set high. And I'm a bit skeptical about the fact that in an economy where nominal growth is running at 9%, can the corporate sector actually churn out 17% earnings growth in FY27? I think that's a very high bar.
That's an important point, Vetri, that you made. So FY27, and we've been doing this for the last couple of years, right? We start with very high estimates and we keep downgrading through the year. But for FY26 specifically, we again started the year with 12, 13%, in some cases 14, then it came down to about 10% after Q1. You don't expect a double-digit growth this year, despite all the GST cuts, income tax, RBI, all of that?
I doubt it. I'm not sure that will automatically convert. Look, the earnings expectation is about 8 to 9% growth for the current year. I'm not sure there's too much upside surprise to that. Remember that what's happening over here is that you are effectively leaving more money in the wallets of people in both, whether it's the income tax cut or it's the GST cut. And then it's a function of how those people will use it. But let's talk about numbers. The net impact of the GST cut is 48,000 crores. That's the number the government has told you. Now, how much can that actually multiply into your corporate earnings, right? 48,000 crores is a small number in an economy which is $4 trillion. That's just, 0.3% or so of GDP. So there is a limit to which there will be some multiplier, but it cannot be as large as what we are saying. And we need to see what people choose to do with that money, all of which will eventually help the productive economy. But does it necessarily translate into a huge earnings surprise? My simple answer would be no. And that's because look at the construct of the market in terms of the different sectors that drive earnings. Some of these consumption-related sectors are much smaller. So it'll have some buoyancy impact, but we know that there are other aspects of the economy in the current year which are challenged.
Okay, all right. Hi, Vedri. Good to see you. When I recall we had chatted earlier this year, and you said the RBI has done a bit of a pivot, and now the focus is on growth. How much more headroom do you see for the RBI with regard to rate cuts? Do you believe that we could see another rate cut? Because the RBI, they've turned pro-growth, which is very, very encouraging. However, the credit growth is yet to pick up. So are you optimistic that the credit growth in the system is set for better times in the second half of this year?
So I think you're bang on there, Nigel. The point that I would make is, yes, maybe RBI will have the headroom to do one more rate cut. But to my mind, from a growth perspective, that is not the most critical element anymore. From a growth perspective, what you said is absolutely true. We need to continue to see interbank liquidity being easy, and we need to see a pickup in terms of credit growth. Once again, in a nominal economic environment of 8.5% credit growth, you're barely getting 9% credit growth. I am optimistic that given what RBI has done, not only in terms of making interbank liquidity easy, but also remember they've rolled back some of the harsh steps that they had taken in terms of raising risk weights on many forms of lending, and also, pulling back on some of the interventions that they had done, which were targeted at specific, financial companies and banks. So I think the cumulative impact of that sets you up for stronger credit growth. But it's that stronger credit growth that we need to see. The multiplier could be 1.3, 1.5x nominal GDP growth. It's that acceleration which will eventually cause a power up in earnings. And I also think it's retail lending which holds the key. I don't expect corporate lending to pick up in a hurry.
Just a bunch of other names, right? These are single stocks. Pull up NetWeb. My God, I mean, the April low, when market sold off on those Liberation Day tariffs, the April low I just looked was on NetWeb was $1,200. It's $3,200 now. And it's a company where I don't think there is any institutional coverage or anything of that sort. And now it's regularly featuring within the top 5 volume traded names on the NSE. So that is NetWeb for you. MobiKwik continues to gain quickly. So it's up another 4% this morning. So 321 here. Bharat Forge has been a bit of an underperformer, but Monday was a super day for Bharat Forge. Was up 7%. Yesterday was quieter. Today it's back up about 4% once again. Prime Focus has finally gotten off the circuit. 3 days on a trot, 10, 10, 10. And today it's taking it a little easy, 1% higher on Prime Focus at 193 on it right now. Sula was up 10% yesterday. I'm not sure there was any news flow. I don't think there was. 3.6, again, a completely bombed out name here, which is looking very well. right now. So, I mean, just a bunch of things to highlight at this point in time. Vetri, from your perspective and some of these newer, you've got to look for where there is growth. Globally, it's in this AI infrastructure, cloud, etc. There was a newspaper article yesterday, front page, saying that OpenAI is talking to lots of companies in India. Some of them are listed for cloud capacity, data center capacity, etc. I'm not sure how much of what I mentioned with some of these stocks is related to that. But have you looked at that theme? Any ways to play it? Vetri, I don't know if you heard the question. Go on.
I heard that. So I think, you will eventually find that a lot of our classic IT services companies will get involved in implementing, AI solutions for companies. I think many of them have been preparing this for a long time. But of course, the concern on IT companies has also been about the fact that, will their core existing business get hurt by the fact that customers can use AI to actually reduce the outsourcing burden. So these are two conflicting, sort of trajectories that we'll have to keep in mind. But, time and again, and I've been looking at the IT sector in terms of its growth going back all the way to, the mid-90s, 30 years ago. And what we've seen is that every time there is a new wave in information technology, the IT companies have managed to go one level upstream to become the business and solution providers to large enterprises. So I do think with a little bit of a time lag, once you're done with the big investment boom, which is happening in the data centers and, the people working in the core part, once it comes to business solutions, these are the companies which have the domains, and I think they will play a role. Within that, there are a few smaller companies which are arguably better placed, but I think, it's still very early days to be able to say that one or two of these companies have significantly differentiated themselves. But at these starting valuations for IT, I would tend to be more optimistic rather than pessimistic.
By the way, so as I was saying that no institutional coverage on NetWeb, I got corrected almost in real time. Somebody sent me a report, a viewer. So in real, that was fast.
The stock has definitely caught investors' imagination and fancy. As seen as a play beyond the obvious, not IT services, but
1,200 to 3,200, right? And this is from April lows.
And this is telling you the market is so thirsty for any AI-related play, right? Anything when it
supercharged.
When it comes to large language models or AI or any of the new technology. Vetri, before we let you go, finally, I'm coming back to that rather somber note that you gave us, that beyond all the pomp and show of the reforms, don't expect earnings to pick up in a big hurry. So in that context, and what do you do in a market like this? I mean, you've always liked financials, for instance. IT has its own set of woes. FMCG, etc. I don't know if there is a durable pop or pickup. But autos, maybe? I mean, autos, the cut is obviously a little more structural in nature, right? In general, this is not a one-time. Now the cost of small cars and bikes gets cheaper. Could that be a durable play? But what else do you do in this market if you're not going to get very easy overall index level growth?
So I think the focus at this point has got to be in terms of, where you're getting the best balance of valuations and where you're getting the best sort of potential delta improvement in earnings. And that's the way to go about it. I wish there was some way to continuously sort of rotate between excitement on a daily basis, but that's not the thought process with which we are working in the portfolios. These are sort of attuned to what we think will be longer term growth rates and outcomes for them based on current valuations. So we are not trying to, dramatically change our portfolio allocations. The good news that's come through will help some of our portfolio stocks, and some of the adverse stuff that's happening across the world will hurt some of them. But we are happy to run with a diversified portfolio. But I think the key that one will have to navigate in the next few years is more about sustainable earnings. The last 5 years have been about a dramatic rise in valuations combined with earnings growth. I think we are in an environment where the stock level earnings outcomes will play a much larger role in terms of outcomes. So stock picking and earnings, growth by individual companies will most probably be far more important than just trying to play themes and sectors and rotate out of them.
Okay. All right, Vetri, on that optimistic and pragmatic note, we'll wind it up for today. Thanks so much for joining in. You have a great day, and we look forward to the next call again soon. Okay, from all the secondary market action, it's time to turn our eyes on the primary market. But before we do that, by the way, in the secondary market, IT's fired up again. So yesterday's run after Infosys, it's not entirely done. Look at Wipro, look at HCL Tech, look at TCS, all leadership stocks on the Nifty. These are the top 3 names that I've just taken. And then banks are anyway doing pretty okay. So you have the twin engines fired up today. So good news for the Nifty. Banks and IT both doing well. Very quickly, now let's turn our attention to Urban Company. Now, as a business, I suppose most of us have, had a touch and feel, had an experience. But to really understand what this company is all about in terms of its financials, its business model, and the asking valuations in the IPO, let's go across to Manglam. Manglam.
Product, rather service that everyone knows about, at least in the top cities of the country. They are formalizing an otherwise informal service economy. The issue opens today. They're raising about 1,900 crores. That's the issue size, of which 854 crores have been raised via the anchor investors already, which include the likes of Nomura, Aditya Birla Sun Life, ICICI Pru, Helios, SBI Life, etc. And it's a 1,900 crore issue, of which the offer for sale is 1,400 crores. The fresh issue is about 472 crores, which will be invested right back into the business of the company. The earlier investors are actually the ones who are selling. None of the promoters are offering any shares in the OFS. The price band between 98 to 103. At the higher end, it values the company closer to 14,800 crores as the market cap. If you look at their revenues, they've compounded over 30% over the last few years. So 600 crores has turned into around 1,150 crores in the last 3 years or so. And on an adjusted basis, the EBITDA has turned profitable for the first time in FY25 at 12 crores. And they've reported a profit of 240 crores in FY25. But remember, this is on account of a non-cash change that they've done in their deferred tax assets. So the biggest opportunity for them. They're currently present in 47 cities, and they have the potential to expand all the way up to 200 cities by FY30. And the market that they're in is largely unorganized, so that shift is extremely crucial. But apart from the services business, what they're also looking at is the hardware business. So they've, entered water purifier, locks, etc. under the native brand. So that is another revenue vertical for them. And the international business, where they're growing right now, accounts for 10% of their overall services or overall business. Let's see whether that can scale up further or not. As of, annually, they do about 5 to 6 million users. So users increasing is something that we'll be watching out for as well. The question, for all of this, how much are you paying? If you assume a revenue CAGR, which continues over the next few years at 35%, and the EBITDA margins, adjusted EBITDA margins crosses 3%, then you are looking at the company being offered at 7 times sales, 4.5 times EBITDA, and 60 times FY27 profit. So obviously not particularly cheap, but the growth runway is fairly long.
Yeah, but that's the thing with these platform businesses, right? They rarely come cheap because of the promise of long-term growth. But Manglam, thank you very much for that. That really sets us up nicely for our next conversation. Abhiraj Singh Bahal, Chairperson, MD and CEO of Urban Company is with us. Abhiraj, great to have you in, and yours is a business that a lot of people would be looking forward to, in terms of in the public listed markets as well. So let's start right there. The last couple of years, you've been growing your top line at over 30%, in some years 35%. Now, for how long can you continue at such run rates? Because the runway for growth is so long. And the point that Manglam made on the profit, you did show up a profit in the previous year, but that was because of the technical factor, like he mentioned, the deferred tax, assets entry. When do you genuinely, business-wise, when do you see complete profitability?
Thank you very much for inviting me. If I talk about Urban Company's financials in the last few financial years, we have improved our revenue from operations, which was about 437.5 crores in FY22 to about 1,144.5 crores in FY25. And if you look at that 707 crores of incremental revenue that we've added to the top line, we've seen a translation of about 385 crores of that moving to the adjusted EBITDA. Adjusted EBITDA moving from negative 373 crores in FY22 to positive 12, and more than 500 crores getting translated to the profit before tax, which was negative 514 crores in FY22 and is now about 28.6 crores in FY25. We don't look at the deferred tax asset, you're right, that would give an unfair picture to the investors. So I would say, broadly speaking, the company has turned a corner and is sort of at a break-even stage. We've grown well in the last few financial years, but we believe that the opportunity ahead of us is tremendous. Less than 1% of the home services sector in India is organized and online. Most of that share would be attributable to urban company. But we really see the opportunity for us to organize this industry, to bring in standards, quality control, reliability, and take a significant chunk of this industry online over the next 10, 20 years.
So would it be fair to say, Abhiraj, that you can keep growing at over 30% for, say, the next 3 to 5 years?
I think it would be difficult for me to give specific guidance on growth numbers. But what I can say is that we are a company which is working hard to innovate on our customer offerings, to innovate on the promise that we offer to service professionals of higher earnings and social security. And it is very much our ambition to continue to grow at the same clip that we have been growing for the last few years.
Abhiraj, good morning. Prashant here. Good to see you, and good to finally, I think we'll to talk about urban company in the listed universe. I just want to say that you guys came out with an advertisement a couple of months ago, 2 months ago, talking about. I think it was very nice, nicely done, and that talked about this worker who migrated from Bihar to a big city and came to service the AC. I mean, really talked about dignity of labor, and I think it touched a chord with many that I know. So kudos. The other bit, of course, is I think in terms of what we broadly describe as gig workers, urban companies also rated higher amongst employees, etc., in terms of lesser complaints and job satisfaction, etc. So continue on that path. So just a quick sense on how you see your business progressing from here, Abhiraj. You said less than 1% of this, what you do, is organized. I mean, everything else is unorganized right now. So the mission or your job is to organize this and provide a sort of quality of service at a certain price level, etc. Right? That's how one should think about this. So you're not competing with the local. I mean, of course, you're competing as well, but you're trying to organize more and more of these. Would this basically lead to lower and lower price? Would this necessarily mean lower pricing as we go along, as you continue on this journey, Abhiraj?
Prashant, firstly, absolute pleasure to interact with you. I've been following you for many years.
Thank you.
You're right. I think what we see our role as is organizing this industry, helping customers avail a standardized, high-quality experience at home, and also empowering service professionals who join the platform with the promise of better earnings. Typically, our service professionals make anywhere between 30 to 50% higher than what they would make in the offline world right off the bat. They also have clear career progression. They undergo skill-based training and they get certified. They have access to a life, accidental, and health insurance cover. So, it's a way for them to formalize and become part of the formal mainstream economy of India. And to that extent, I think the 99% that remains unorganized and fragmented and local, more than competition, we see them as future partners in this journey for us. And the onus is on us to work hard and create livelihood opportunities for them, which are attractive, and give them the opportunity to upskill and move up in their career and deliver those superlative experiences for consumers. As far as pricing is concerned, with densification of our network, we are able to utilize service professionals better. Service professionals spend less time traveling between jobs or waiting for jobs and more time at home delivering orders. And consequently, the entire systemic cost to serve comes down, which results in two things: A, higher earnings for service professionals, and B, lower pricing for end consumers. And we've seen this play out in some of our high-density micro markets in the top cities. So that will definitely be our goal.
Just one quick question, one more quick question, Abhiraj. Are you in most categories where you want to be, or there as well, I mean, you will continue to expand offerings?
I think there are several categories that we have not yet entered, and we would like to expand our offering into it. I think we started with, on-demand home services, which are used maybe once a month or once in 2 months, services like beauty, plumbing, carpentry, deep cleaning, appliance repair, etc. We've recently entered into more high-frequency use cases with InstaHelp, where we offer a trained, high-quality house help worker at your doorstep in a matter of 30 minutes or less. This is currently being rolled out as we speak. It's very nascent, only a few months old. And there are multiple use cases in the future around InstaHelp that we will also look to offer. Fundamentally, if you think about it, Prashant, any service that can be delivered in the four walls of your home, where a trained service professional can come and deliver that service, we see that as our playing field. And it's very much our long-term ambition to offer all of those services through our platform.
I can tell you this, Abhiraj, that InstaHelp has been noticed by your existing customers already, even before, big marketing blitzkrieg taking place. But yeah, that's the innovation, looking at all kinds of services, as Abhiraj pointed out.
Well, Abhiraj, good to speak to you. This is Nigel on this side. I've used your services, amazing. Great to see the way you'll have scaled up the business. And I'm sure the shareholders that are looking to be part of the entity will be hoping for a very, very good experience. So that's all on you. That said, a couple of questions then. Native, that scaled up very, very well in the last few years. Brilliant scale up is what you've seen. But, obviously you'll have a bigger plan out here. How large can it become? And by when do you see, at what revenue level do you believe that it turns profitable?
Nigel, thanks for that question. So, Native was launched a couple of years back by us.
Yes.
We offer two products there, smart water purifiers and smart electronic door locks. We believe both these products have very strong synergy with our platform and our service ecosystem. It's growing very well. Margins have been improving. It's loss-making today, but margins have been improving. Entire last year, it had a negative 33.5% EBITDA margin as a percentage of net revenue. In the first quarter, that came down to about 15-16% negative EBITDA margin. We believe operating leverage will play out here as well. And as we continue to scale, Native will eventually become profitable and can over time become very profitable. Two advantages we have in Native vis-a-vis any traditional player is, one, a meaningful percentage of the sales comes from our own platform. And in some sense, that's all sort of free for us. We don't have to pay a retailer any commissions or channel margins there. And two, we all leverage our existing service network, which is already built out for water purifier servicing and repair, to cater to our customers in Native. I think those are two structural advantages that we have. We want to position Native as a full stack brand, just like our full stack platform, where we own the consumer journey end to end, from sales on our platform all the way to after sales service.
Okay.
Over time, builder. Think of it as a connected ecosystem in your of devices.
All right. Abhiraj, final question from my end before I let you go. In the pre-IPO space, people appreciate a good idea. They like scalability. Once the company is listed, all eyes are on profitability. So is that going to be one of the top draws that you're looking at?
I would say it's very important for us to continue to grow well and make sure that that growth happens at the back of profitability. Particularly for our core services business in India, which is already profitable at about 10% EBITDA margin last year. We would like to continue to compound it and show margin expansion. I think some of our new bets, like Native and InstaHelp, will still require investments. And again, the goal there will be to build those out in a capital efficient fashion. We have very much eyes long-term on not just growth, but also profitable growth and delivering profitability. I firmly believe that eventually companies will be measured on PAT and cash flows to that extent. Even all the other metrics like EBITDA or adjusted EBITDA are just three measures to show investors the pathway to those eventual cash flows and PAT.
Abhiraj, compliments to you. You're speaking a language that the listed public market really understands. And we've traveled such a distance from the time the first platform companies hit the street. I think what you're saying is going to go very well down with people who understand and what they need to see in the P&L. Quick final question on the margin profile and what you're looking to build. Because on one hand, there is the native business, which keeps scaling up. Right now, it's 10% of your India revenue. You are also in international markets like, I think, UAE and Singapore. So not sure if you're able to charge higher for services there. And then you look at simultaneously expanding in local Indian markets, tier 2, maybe tier 3. So as you combine all of this, will it be dilutive? Will expansion into India be margin dilutive? Will it be offset by your international operations? Just trying to understand, how you'll drive the margin and what would be an aspirational, sustainable margin band for you.
So we look at really 4 segments of business, 3 which we have already reported in our RHP. India Consumer Services, Native, and International. Most likely, starting the first earnings call, we will add a 4th, which is InstaHelp. And across these 4 business segments, what we will hold ourselves accountable to is clearly communicating to investors where we are in the journey. How is the top line progressing? How are the contribution margins and EBITDA margins progressing? And if segments are currently loss-making, what is the pathway for them to become profitable? How much time will it take and how much capital will it take before they turn profitable? India Consumer Services is already profitable. There, I think we have to continue to grow it with further profitability, whether we enter into newer cities or newer categories. That margin expansion has to play out there. As far as Native, International, and InstaHelp is concerned, I think in those segments, we will clearly call out where they are today and what the path will be towards profitability.
That's in the first quarter call, right?
That is good.
Yes. We look forward to it, and of course, look forward to speaking with you as well. Good luck with the issue. I'm sure you'll do well. Thanks very much, Abhiraj, for joining us here on CNBC TV 18. Thanks indeed. All right, well, we'll take a quick commercial break here and we'll come right back. Markets, of course, are looking pretty solid. 120 odd points, 24,990 is where the index finds itself at. We come back with the management of KEI Industries. We'll talk about what the impact of the GST rationalization is on the KEI's business and, of course, what it does to the sector. Stay tuned.
Welcome back. Well, let's get to our next discussion, that of KEI Industries. Mr. Anil Gupta, the CMD of the company, joins us on the show. Hi, Mr. Gupta. Good morning. Good to see you in. Good to see you nice and safe. I believe you were traveling, but you're back, and that's good news. Thanks a lot for joining in, sir. Just to tell our viewers that we are going to be focusing on 3 big points: the lateral impact of GST rate cuts, cables as well as wires industry, the dynamics, the growth drivers, and any kind of tinkering with regard to the FY26 guidance. What about the export outlook? Well, to answer all of those queries, we're joined by Mr. Gupta. Hi, Mr. Gupta. Good to see you in. Well, this entire GST rationalization, will it give rise to some kind of consumption boost according to you? Do you foresee any kind of lateral impact of the GST rationalization on housing wire demand due to higher savings? Do you think so?
Thank you very much, NBC, for inviting. GST rationalization will definitely have impact on improvement in the wires market, especially the home wires market in the long run, as it will have more cash in the hands of the people to spend on the houses. However, on the wires, there is no reduction in GST, but there are a lot of items of consumption where GST has been reduced, which relates to the home consumption, and that will help boosting the consumption and the wire market because of the cash availability. So far as cable market is concerned, I don't think it will have any impact on the cable market. However, I think that the demand boosters are different. That is the capital expenditure by the government and the private sector, and also the export potential which we have from India.
So, Mr. Gupta, hi, morning. Could you give us a sense of the bump to volumes that this could see? I mean, would you hazard to put a number, a ballpark?
It is too early to say any ballpark number, because I said that the impact will be only on the house wire market, not on the cables. However, I think it may impact the market size or demand by 5 to 10% because of the higher availability of spending power with the people.
I see. So it's not directly because of, I mean, at the end of the day, people buy when they need it, right? I mean, it's not. It's like a, you know, it's not a discretionary item in that sense. If you need it, you need it. 5% higher, 5% lower does not matter. But you're saying because of more money left in the hands of consumers, overall demand may see a 5 to 10% boost.
I agree. As it is, we are seeing a growing demand for houses in India, because in India, people are everyone wants to have their own house. So definitely this market will keep growing. However, competitive intensity will remain there because of a lot of players in this market.
Okay, all right. Mr. Gupta, you know, quarter one saw a bit of tepid growth for most sectors, but for your sector, cables and wire industry, it outperformed. You know, because you had strong growth, higher focus on exports as well, and that's what helped the industry. If you could give us a brief idea, how has quarter two been so far?
See, quarter two is going as per the projections, and I think our space, this wire and cable market space, is still strong because of the capital expenditure and infrastructure boost in the country. And I think I'm very optimistic about the whole year and even the years ahead about this space. A lot of demand is generated from solar power developers and associated investments like battery energy storage and other kind of energy projects or data centers. So this space should perform better.
So demand is as strong, is what you're saying?
Yes, I'm just saying strong. It should, it should remain strong.
Okay, all right. And, before we let you go, do you want to revise your guidance for, how FY26 is shaping up? Is it on track? Can you do a little bit better? And tell us, give us three numbers basically: exports, revenue growth, as well as margin outlook.
See, I have already projected an overall revenue growth of 18 to 20% and revenue, the EBITDA margins of around 10.5 to 11%. I will remain on that. However, our effort will always be to improve the margins and improve the revenues. But I can't give better guidance on this at this moment.
Okay, all right, Mr. Gupta, we'll leave it there. Quick conversation today. Are you still in Nepal, sir? Are you back?
Yes, sir. No, I'm still in Nepal because yesterday all the flights were cancelled.
Okay, all okay? I mean, obviously we've been seeing visuals and reports, disturbing reports out of there, but I hope you're safe and sound. Your family, if they're with you, is safe and sound.
No, I'm absolutely fine and safe and sound. Thank you.
Well, that's good to hear, Mr. Gupta.
Look forward to seeing you back here in the city soon, Mr. Gupta. We'll leave it there. Thank you very much for joining us. Good speaking with you. here on CNBC TV 18. Well, let's just focus on the next bit of conversation. Are India-US ties heading for a bit of a reset? That's the question. Both leaders of India and US have tweeted at each other. President Trump first, followed by Prime Minister Modi, and then President Trump posting Prime Minister Modi on his social media platform, Truth Social. Ajay Dua is former Union Secretary, Commerce and Industry. Arpita Mukherjee is professor at Indian Council for Research on International Economic Relations. Mr. Dua and Ms. Mukherjee, thank you very much both for joining us here. Ms. Dua, if I can ask you this, how would you see this? This is certainly de-escalation, right? Both sides from the escalatory ladder, so to speak, now climbing down a little bit, step by step. How would you read it?
Very positively. I think we should forget what President Trump was trying to achieve in his endeavors to bring about peace between Ukraine and Russia, of which we had become a collateral damage, particularly because we didn't have the leverage which probably China and the European Union had vis-a-vis President Trump. So to that extent, that he realizes even now that there is no point going after India and putting penalties on India for having traded with Russia, and at a time when China, European Union, and the US itself was beneficiary of India's of crude oil of Russia. So I'm very delighted to see this. Let's forget what he did and tried. Let's look forward. The US is an important trading partner for us and an important strategic partner. And I look at the relationship in that context.
Okay, no, absolutely. Ms. Mukherjee, your first thoughts, and we, the stock market types, are prone to jump to conclusions, right? And well, a deal soon, round the corner, how fast can it be? Are those right questions to ask? And is there any way to know at this point? There are various times. Yesterday we had somebody who said, and we were asking this, before all this happened, when do we see some sort of a deal? And the gentleman said, certainly before March, before we here in India get into the election season. So we'd certainly like to conclude it. This seems, of course, all of this now makes it much closer. What would you say?
See, basically, one thing is for sure that there is a movement in the right direction. When you look at businesses on both sides, they want a deal. Of course, India wants a fair deal, like whether we will be getting a 0 for 0 or we settle for a 0 for 15% tariff. And probably now our exporters would be happy to settle, to give in, if India gives in a 0 for a 15% tariff. You have to also see the deal comes at a time when the GST has also been reduced for many, items, and India is, so there is a domestic demand boost. At the same time, there is a trade negotiation. Now, this entire negotiation is very strategic. Now, nobody is looking at the economic interest. Like if you look at Trump, he is also not looking at the economic interest and the repercussions. And because he is just focusing on tariffs and linking tariffs to multiple other things. I think with the US also moving into a festive season, and India and Brazil moving into a festive season, and inflation rising in the US, he will gradually turn around and bring down the tariffs. And therefore, this trade agreement will be a step in the right direction.
Sure.
Coming to the core context of the trade agreement. See, now they are relaunching the trade agreement. Relaunching the trade agreement and signing the trade agreement is totally two different ball game altogether, because we also have our domestic sensitivities. But I think the 50% tariff has kind of diluted our domestic sensitivities to a lot extent, and maybe industry will be more acceptable to an FTA.
Sure.
The other part is India is also looking at European Union. Even after the FTA, European Union put a hefty tax on Google. So, it also gives brilliant ideas on, negotiating on different aspects that can happen.
No, absolutely. And by the way, I must point out here that there's a statement from the chief economic advisor. I suppose he must have been asked this question perhaps at an event, or he must be speaking at an event, and he said that India is not part of any initiative looking for an alternative currency to the US dollar. So the speak from both sides is very, very positive. Maybe it's just a reiteration, but the fact is it's been put out there in public domain, and the statements are obviously made very, very carefully. Mr. Dua, sir, so to get back to the point, the thing is till now, tariffs were not part of a trade negotiation, which can still happen. They'd become part of political brinksmanship. But now, at least if we go back to the point on trade, how do you think can the logjam be broken? Because the thing is, in most of the deals that the US has done with the rest of the world, the US hasn't given an inch. You know, it's been almost 100%. But here we go back to the sticky points: agriculture, dairy, GM crops. Do you think most of this can be resolved?
I think so. There is nothing, if the two sides are determined to come to an agreement, that things cannot be resolved. I'm a firm believer in that, and an optimist, probably an optimistic view. But I'd like to see the intention of the US to arrive at an arrangement with India by starting off with the lifting of the 25% penalty for having traded or continuing to trade with Russia in crude oil. That, I think, India should make it very clear to the United States that while we are talking about the bilateral trade agreement, and we do know that there is a 25% export duty on Indian products to the US, that is the kind of a minimum we expect the United States to do. I repeat myself, lifting of the 25% penalty on our original 25% should be imperative, and we sit down to resolve one dispute, one point of resolution, conflict, or the red lines which we or the US has, one by one. And we know that there is a 25% duty on our products. So everything which we do has to be well within that 25% outer limit.
Point taken, sir. Absolutely. And this has been the ask of the Indian side already in the past couple of weeks, that the additional 25% needs to be, revoked for real negotiations to start on trade. Very quickly, sir, one additional point. I mean, in the last few weeks, we've also seen what's the overtures with China, right? The SCO summit. Now, how do you think India will ensure it? It's a very delicate balancing act, because there's been a lot of talk about boosting trade ties with China. And now we have to go back to, obviously, negotiations and fixing things with the US. Do you think this is going to be easier said than done?
Not really. I think China has, I must say, to China's credit, at the SCO and in the bilaterals with Prime Minister Modi, they have talked of a multipolar world. They're not talking of there being only one center of power in the world. That was what everybody looks at as the US, or there being a bipolar center in which China comes in. They've talked of the world consisting of several poles, of which India could probably be one, Russia and Brazil, or whatever we say. The question is, we want to increase our trade with China, undoubtedly, but we also do not want our trade with the US to suffer. After all, the US is our biggest trading partner today, with over $130 billion of trade, of which 86 billion was exports alone. China is the other way around. We import from China far more than our exports, and we have a $100 billion deficit with China. So the question is, we are dealing with two different things. It does not, to any extent, conflict. And I think the US itself wants to have a trading partnership with China. So why should anyone be objecting to our trade with China and the trade with the US building up simultaneously?
Oh, you're absolutely right, sir. Both of you, thank you very much. Very interesting conversation, and of course, possibilities, right? That's what we all look forward to. Appreciate it very much. We'll take a quick commercial break here. Manisha on the other side, Commodities in Focus. Stay tuned. Welcome back. Let's shift focus to the commodity space. Manisha is here with the one commodity that she's tracking. Manisha, good morning.
Thank you for that, Prashant. I'm looking at the crude oil prices because there's no letting down in gold and silver, but the crude oil prices also have been very, very volatile. We're looking at prices extending gains after that 2% gain overnight to nearly a percentage point higher in the Asian markets right now. This comes in as a knee-jerk reaction after that Israel attack on Hamas leadership in Qatar, while one-off is what they're saying, but we have seen concerns coming back in that part of the world as well. Apart from that, it really has been about the US president asking Europe now to impose tariffs on the buyers of Russian oil. The president has urged European Union to put nearly 100% of tariffs on the major oil buyers of Russian crude like India and China. And that really seems to be bringing all of those concerns on fore here. And then apart from that, OPEC Plus have increased production yet again for the month of October, but this time it has been a modest 137,000 barrels per day, unlike 400,000 and 500,000 that they have been doing since the month of April. So lower output from OPEC Plus also has been in some sense supporting the crude oil prices there. We also do understand that nearly 17% of Russia's refining capacity is shut as of now, and this is because of the Ukrainian drone attacks that we saw all over in the month of August. They haven't restarted yet, and that could be a bit of a concern too. And then it has been about the macros as well. The weak USA data that we have seen, the weakness in US dollar index, ahead of that most important US Fed meeting in the next week is something that everybody is keeping a focus on. What also is keeping the crude oil prices in check, the reason that you haven't seen $70 a barrel go on the higher side is the EIA report, which says that the global inventories have continued to rise in last 3 quarters in the global markets there. EIA also says that the OPEC Plus hike in output also is keeping excess supply available in the international markets there. If you look at the crude oil inventories, this is going to be the 3rd straight week that we are looking at a rise in US crude inventories. Having said that, remember, the US summer driving season also has come to an end, so you could be looking at maintenances going through forward there. Saudi Arabia, most importantly, has lowered its official price for crude for Asia for the October delivery. So that tells you that there are higher supplies, demand can be a concern, and Saudi Arabia bringing down crude prices is what is keeping the prices in check there. If you look at the crude prices, then we are down by 2% in the last 1 month, and it's down 12% for this current year. And the markets do believe that there's no gaining here unless you see supply disruptions. Most banks and brokerages have lower crude oil price forecasts by the end of this year.
All right. Manisha, thank you very much for that. We'll take a quick commercial break here. It's our special segment. It's the economy, Lata in conversation with Chandresh Jain of BNP Paribas and Ranudip Roy of RV Capital on the falling rupee, rising yield. Stay tuned. Coming up.
Welcome to It's the Economy.
While India has been worrying about tariffs and the rupee, the global bond market is actually seeing some very unusual, unnoticed moves. Yields on the Japanese government bonds, JGBs, on UK treasuries, on French bonds are all trading at 25-year highs. All these countries, of course, are also reeling under record fiscal deficits, as is the United States, of course, where again, not the 10-year, but the 30-year bond yield is still at multi-decade highs. On the other hand, investors, including central banks, are rushing to gold, showing less confidence in fiat currencies. To discuss some of these issues, I have with me two experts, Chandresh Jain, FX and rate strategist at BNP Paribas, and Ranodeb Roy, co-founder and CIO of RV Capital. Gentlemen, good morning and thank you very much for sparing time in what are busy trading hours. Well, Chandresh, for starters, large banks like yours, do you all worry about these long-term bonds, or since they are 30-year, I mean, you all don't worry much about it?
No, it's definitely worrisome. I think globally, bond yields are going higher, as you mentioned about it. And a lot of investors are investors as well. They hold these kind of long and maturity bonds. And therefore, they are actually making losses on that portfolio. And even as a bank, when you're trading with these kind of investor base, when you face these kind of losses, their trading volume comes down as well. But overall, we are still okay, holding up quite well right now. But definitely, it's a worrisome sign for global economy.
Okay. What about you, Ronnie? You know, the bonds in question, okay, I can understand UK and French bonds perhaps are not, held as much as JGBs are. And of course, the longer tenor US treasuries. Is there some kind of a, crisis that we are sitting on? We have seen Japan and the yen sometimes throw a big spanner in the works. Are we on something big?
Yeah, I think like the saying in the Pied Piper of Hamelin, the piper needs to be paid someday. So we've had multi-decades, and obviously Japan was the most egregious example of classic macro recklessness, if I may call it, simply because we had an unprecedented regime during Abenomics of QE, where the central bank bought as much of the long end bonds to support as close to a zero interest rate economy to kind of get the economy out of its funk. So of course, now that they have stopped doing that, the long end bonds in Japan and many of the other economies as well needs to find its own level. When I started trading in the 90s, one of the most important term in deciding what the bond yield is going to be was something called the term premium. And the term premium was an obvious manifestation of the fact that 10 and 30-year bonds should yield higher than the 2-year or 5-year bond. Because obviously the future is slightly more uncertain. Potentially, there could be a probability of higher inflation in the future, as well as deterioration of credit spreads in the future. And that allowed bondholders to charge a higher premium on the long end.
But
during
are they
the
losing
years
patience?
of QE and post-GFC, many of that term premium basically disappeared, part of it due to central bank buying of the long end. And that is now reversing post the inflationary burst we've had since 2021.
Okay. No, I'm more worried about, whether the yen or something can, destabilize the entire financial markets for some time. Chandresh, you think that fear exists because Japan's inflation is simply not climbing down? Is there a rate hike possibility? There is political instability as well. Is that something we should be worrying about?
Yes, definitely. I think market is quite worried. There are a couple of factors going in Japan market. One is BOJ is definitely behind the curve in terms of rate hikes. So inflation is heading higher and central bank is behind. And therefore, market is adding term premium into the curve. Secondly, if you think about it, BOJ has been a big buyer of JGB bonds. But in the last 1.5 years, they have reduced the bond buying. That means the other market participants have to buy more bonds in the same market. And then you have the lifer community and the pension funds in Japan who used to be very big buyers of 30-year, 50-year bonds in Japan, they are already sitting on losses. And therefore, the demand from them has substantially reduced in the long end side. So you have this dynamics where central bank is behind, your supply side is increasing, your two big buyers, which is central bank and the lifers, they all are not buying right now. So clearly, it's a sign that we should be heading towards even more steeper curves, and we are expecting on that line itself.
Oh, Ronnie, I know both of you are more financial asset managers or traders, but this rush to gold, is it just a central bank thing, or is there a fear that there will be again quantitative easing to cover the deficits, and therefore people are just running away from fiat currencies?
That's exactly it. I think the first part of your question about the yield curve is a corollary. Gold is a corollary to that, that question, essentially. When you don't trust where the yield curve is going to go, you go to something that is a non-fiat currency, as you alluded to. But also the other thing is, another bigger thing has happened post the Russia-Ukraine war, when a lot of Russia's reserves were frozen, and central bank has gone in to diversify away from the classic, dollar, euro, yen assets as its reserve. So the gold demand has picked up. In fact, from our estimates, roughly central bank buying of gold has gone up by 50 to 100 tons a year, more than what it was before 2022. So that kind of demand has obviously exacerbated the move of gold. The gold is a zero coupon asset. It, in fact, is a negative coupon. It costs to hold gold. So the only way gold can continue to go up is if there is doubt in the investor community that fiscal prudence is not going to come very quickly amongst the larger governments in the developed world.
Okay. Chandresh, this may be an unfair question since you are an FX and rate strategist, but is there a BNP Paribas view on gold? Is there an expectation that this will continue to climb because France and UK and Japan are in political turmoil, nor is the US showing signs of controlling the fisc?
No, you're right. I mean, our view is that gold will continue to head higher. In fact, we're calling for closer to 4,000 levels on gold next year. I think there are various reasons to it. One, like our friend mentioned about fiscal unsustainability, but there are other things as well. So, for example, people are looking for diversification. People don't want to have everything in dollars, don't want to have everything in euro. So gold becomes a third choice or second choice for a lot of investors who wants to diversify from US assets. Then you also have this question mark on Fed independence right now. So there's a loss of trust in central bank, in the governments, how they manage their fiscal situation. And that's why gold act as a hedge for a lot of these investors as well. And then the last point I would say, people used to buy US treasuries as a safe haven asset. Now, as we see yields are going higher, especially in the long end, gold is acting as a safe haven. So there are multiple reasons why we think will continue and will drive gold higher towards 4,000 level.
Okay. Ronnie, what about dollar itself? The dollar index has fallen 10% this year from 106 to around 97 levels. Do you expect it could plumb lower?
Yeah, it's a great question. So if you look at the US versus the rest of the world, US has been buying goods and services from the rest of the world. And one of the grounds of the current administration is, how come the currencies of the rest of the world were weaker in that environment where there's a huge trade imbalance between the US and the rest of the world. So theoretically, the countries that sell more goods and services to the US should have been stronger, but that's not been the case. So I think part of this 9 to 10% move that we've seen is a reversal of that. The second part of the act, which is probably going to continue, is on account of the fact that the US actually doesn't mind a weaker currency. And in fact, if manufacturing is what they want to get back to home, like we've seen in the Eastern Asian economies, by keeping the currency a little bit weak, it brings back manufacturing home. And that could potentially be the next leg of the US. And the third leg, of course, is the fact that fiscal deficits in the US, after having gone a lot higher during COVID, hasn't come down appreciably. In fact, the current fiscal deficit in the US with 6+% is the kind of fiscal deficits a large economy holds only during times of crisis or war times. And we are in neither of those circumstances.
Ronnie,
the stock
we are running
high.
We are running out of time, Ronnie. I want to know, what is your level for dollar?
I think another 10% is possible from here. I mean, if you go back to history, you would see the dollar index has gone to somewhere in the 80 to 90 zone, and we are at 97.
Chandresh?
I would say another 2 to 3% move easily on the dollar itself.
Okay.
I think bulk of the move has already happened, but little more left.
Okay, so then that brings me immediately to the rupee. Positive news on the tariff obviously allows us to recover a bit. But do you think the rupee has seen its worst? All the bad news is priced in. What's your rupee range, Chandresh?
I would say, I think we are still in a difficult time because economic growth, although the real GDP was a good number, but nominal GDP was not that strong, which means that equity markets might not get inflow from the foreigners. And then at the same time, this AI evolution might actually start hurting some of the IT companies of India. So I'm less positive on rupee right now. So I think with the broad dollar complex coming lower, it will help dollar INR, but INR will still underperform and will probably range towards 87 to 89 bracket.
Okay. Well, just a quick yes or no or single sentence question to both of you to wind up. Chandresh, do you think that this rise in bond yields is likely to create something like, a taper tantrum or Lehman kind of crisis anytime in the next couple of years? Or do you think it's not that bad?
It's bad, but I think central banks will try to bring QE very quickly.
Okay. And Ronnie?
Answer is no. We are nowhere close to taper tantrum scenario.
Okay.
At least India is in a much better shape.
Okay.
Just got upgraded, long overdue. Right. So I don't think so.
Okay. So bad behavior by governments, but hopefully people will see the light of day before it gets worse. Thank you very much, Chandresh and Ronnie, for joining me in this conversation. Well, that's it on this edition of It's the Economy. Thanks for watching. After the break, short posters.
The Indian market sees a strong start on optimism over trade deal between India and the United States. Nifty scales past 25,000, led by IT and financials. The broader market slightly outperforms.
Shares of Welspun Living, Gokuldas Exports, among other textile stocks, rally driven by optimism over a potential trade deal between India and the United States.
Shares of Indian seafood exporters, which include the likes of Avanti Feeds, Waterbase and Apex Frozen, all of them rally as the European Union has approved 102 new Indian fishery establishments for exports.
Kotak Mahindra Bank trades higher after a 1.5% equity worth around 6,200 crore rupees changed hands in a block deal. Sources say Sumitomo Mitsui Bank Corporation was the likely seller.
And shares of Vikram Solar rise over 12% after reporting a strong set of first quarter numbers. The company's profit jumps multifold to 133 crores, while margins expand to 21%. The management guides for strong growth in FY26 and aims to quadruple capacity.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and this economy is all set to revive, and also the stock market's definitely on the uptrend. The positive sentiment coming post those comments that came in from President Trump as well as our Prime Minister Narendra Modi. Good times, Mangalam.
Good times, Nigel. And we've been talking about how the star batters of the indices aren't performing, and today we have both of them doing well. You just look at, firing from both ends. You have the Nifty Bank, which has done well. It's crossed past the 20-day moving average, important technical level out there as well. And we have the IT index, which did extremely well yesterday. And there is follow-up buying in the IT index today as well. So both those star batters doing extremely well, both the engines firing. Let's see whether now the third fuel that comes in, which is the FII shorts, they, lead to some covering and we see a further pop. But as of now, where things are all pointed, it looks like it's in a good direction.
We should get actually the Nifty Bank with the 20-day MA up for our viewers on the screen, because, we're only around 100 points away or 50 points away. So the Nifty Bank and the 20-day MA comes in at, and that will be the crucial technical level as well for an index that's actually underperformed. The Nifty Bank with the 20-day MA, I think my director is just trying to pull that up. So I think that should
It's crossed past that actually, the 20-day moving average.
Very, very close. Extremely close out there. It's around, I think, 100 points or 80 points away from those levels. So that's the important mark that we're looking at. But let's turn our attention to the first corporate conversation. We're joined by the management of Good Luck India to discuss three focal points: assessing the export dynamics, also what's the exposure to the United States, mapping the big defense opportunity that the street seems to be excited about. We had a couple of large funds as well that did buy a stake in the company earlier this week. And what's the roadmap for FY26? To discuss this and more, we're joined by Mr. Garg, the CMD of Good Luck India. Hi, Mr. Garg. It's been a long time since we spoke. Good to have you on the show. A couple of quick questions, sir. If you could help us out with the export opportunity, and out of the 25% exports that you have, how much of it goes to the United States?
Probably around 50% of it.
So 12.5% of your, of the total mix will be to the United States. Because of
total export to the United States is around 250 crore.
All right. All right. Got that, sir. So 250 crores out of, you're going at a run rate of close to around, 3.5 to around 4,000 crores. Is that correct? So it will be roughly around 8%, 8% of your total revenue mix. Got that. Now, because of these tariffs that are coming there, has it caused a bit of an issue for your business? Will it be subject to these, these tariffs? And also, your client base is willing to absorb it?
The product basket of export to USA is a niche market. The customers and users will find difficult to replace us.
Okay.
I am confident we will not have much impact.
All right, so you won't have much impact. So what does this mean for your overall business for FY26, sir? The first quarter you did almost 1,000 crores in terms of revenue. High single-digit growth is what you've reported. For this entire year, what is the likely revenue growth and what kind of margins are you working with?
Likely revenue growth, you are expecting 20%. With geopolitical tensions, tariff problem, we might end up with around 12%.
12%. Okay.
And margins?
Margin will be better than last year.
By how much? Will it be 9%? Will it be 10%?
It is difficult to put a figure because it is transitory in nature.
Okay, all right. So, it seems, we had a couple of large funds that bought in, fund action, that's what we saw. And the defense opportunity is something that the street is quite excited about. I think defense of the last reported number is only 2% of the mix. So as a percentage of your total revenue, how much do you see defense contributing? And also, if you could tell us, I think you were working on the bullet shell project. Tell us more about that.
The bullet shell project plan is almost ready, waiting for the receipt of industrial license, which can come anytime. This is what we are expecting, and we are very much upbeat about it. It will be a game changer to the company.
Okay, what kind of an opportunity, sir, is it? Bullet shell project, you're saying you're waiting the industrial license. By when do we get it? And in turn, what could be the opportunity?
Opportunity, there is a huge demand of bullet shells all over.
Can you...
As well as abroad.
Right, sir. Can you put a...
Ready. Only thing, we are expecting a license to be received by us. As soon as it comes, we will resume production.
All right. No, I just wanted to understand what kind of revenue can you get from this bullet
for the whole
shell?
Year.
Yes.
In the present status, almost 6 months are gone. So we expect revenue of almost 150 to 170 crore.
In this year. And annually, do you think this will be a 400, 500 crore sort of opportunity once the full plant is operational for the full year?
And the plant, we are going to double the capacity in the next year. But with the existing capacity which we have put up, the total capacity expansion will be almost 300 to 350 crore.
Got it. So 300, this is, you're talking about the defense revenues. Is that correct, sir?
Yes.
So defense as a percentage of the total mix, for this year itself, it will be in the vicinity from around 2% last year. It moves to around 5-6% of the mix for this year.
It will be more than this.
How much, sir?
Around 4,300 crore, 350. Maybe around 4-5%. 4-5%, right here.
4-5%. Got it. All right. 4-5% this year, and the total capacity is around the revenue potential from defense is 300 to 350 crores, and you're looking at even scaling that even higher. Is that correct?
Yes.
So defense, fair to say, in the next 3 years could be a 700 crore opportunity?
Yes, definitely.
Okay. The other point we're looking at is railways. You were supplying, I think, some of your supplies were to, I think, some of the metro projects. Could you tell us?
The project which we got 2 years back from L&T is 80% complete, and we are awaiting receipt of new orders.
So what is the, if you could tell us as a percentage of the mix, how much is it? Railways.
I'm just telling you, 3 to 4%. 4 to 5%.
Okay. All right, 4 to 5% is railways. If you could talk a little about your balance sheet, sir. You pay an interest cost of almost 80 crores every year. What is the current debt on your book? How much of that is working capital? And what's your repayment plan? Because you have lined up capex, like you said, you are looking to double your bullet shell capacity, etc.
We are a growing company. Every year we are growing at 10 to 15%.
Yes.
Per year. So naturally working capital goes up.
Right, but what is your debt repayment plan and how do you fund the next leg of capex?
The repayment plan is as per schedule. We are already paying.
What is the net debt, sir? Net debt is 800 crores. Is that correct?
Yes, right here.
800 crores. And you're comfortable at these levels?
Yes, we are very comfortable.
What is the peak debt that you're looking?
Because major part of it is the working capital.
Okay. All right. So term debt is smaller, but the total debt is 800 crores. Bulk of it you're saying is working capital. At peak level, what kind of debt number you're comfortable with? What is the peak net debt, sir, you're comfortable with?
Pardon me?
The peak net debt level that you will be comfortable with.
Maximum 1,000 crores. Maximum 1,000 crores in terms of our turnover of 500. It's 20% of the turnover.
Got that. So it's roughly 1,000 crores is where your debt peaks. That's what we gathered from the conversation around you, sir. Thank you so much for joining in. Wish you good luck for the expansion plans and wish you good luck for FY26 as well. Please go ahead. You're saying something.
Let me clarify one thing. We don't intend to increase our debt level.
Okay. Got it. Just one thing, sir, since the defense opportunity is so good, I'm just doing a back of an envelope calculation. Currently, your EBITDA per ton will be in the vicinity of around 8,000 rupees per ton, very roughly. Could you tell us for defense, what is the EBITDA per ton?
We will let you know as the plant starts.
Once the plant is commissioned, then only we can give you the figure.
Got that. We look forward for that.
We'll re-invite you, sir, at that time. We appreciate you joining in. Looking forward to speaking to you more often. And all the best with that plant because, it'll be a very, very strategic importance, both for your company, for the stock market, as well as for the nation on the whole.
You are welcome.
Thanks a lot.
You question us often. It enlightens us. It keeps us on the track. Thank you.
Absolutely. That's our duty, sir. We will keep asking questions on behalf of the shareholders. That keeps you on track and keeps your shareholders in check as well, Nigel.
Good, na, Mangalam, to get a management who's appreciating some questions as well. Sometimes
Absolutely,
they say, you guys are too harsh.
If you have nothing to hide, obviously, you don't have anything to worry as well. And we will keep asking
We are doing
questions.
our duty.
We are doing our duty and to the best of our abilities. With that, we'll take a short break, come back, get you more on the markets and stock-specific action. Stay with us here on Chartbusters. Well, while all engines are firing for the frontline indices, we have the Nifty Bank and the IT index doing well. The one that is paused for breath is the auto pack. After running very hard over the last 7-8 trading sessions, pre-GST announcements, post-GST announcements, etc. as well, now the auto pack has perhaps paused for a bit of breath. Also, from a fundamental standpoint, the next 15 days, we have the Shraddh period, so sales would be lean, but thereafter, we will most definitely keep an eye out on how sales for autos pick up. But as of now, as we speak, we are seeing some traction in the market, flitting just around that 25,000 mark for the frontline index. Trent is one of those stocks which was lower in yesterday's session, and the first half of trade so far has been trading at lower levels as well at the low point of trade. A lot of shorts built up on that counter. But speaking about stocks and markets, let's welcome Chandan Taparia of Motilal Oswal Financial Services. Chandan, do you think after today's move and the move that we saw yesterday, we can say that maybe we've broken out, or do you still think we're in a range?
Yeah, good morning, Mangalam and Nigel. Thanks for having me. So I believe the momentum is shifting upwards. We have noticed that sustained supply is clearly visible near 25,000. But the good part is every meaningful decline is being bought. If I look at the price behavior of last 9 trading sessions, the market has rallied well from 24,400 to all the way to 25,000. So levels are shifting higher. And if I look at the data setup, yesterday FIs bought in future segment after a long time. Put call ratio is holding well near 1. India VIX is below 11 marks. Selective heavyweights counters are doing well. So I believe slow and steady market has potential to inch higher. So as of now, till Nifty holds above 24,750, it has potential to rally towards 25,150 to 25,500. And if market holds about 25,000 by today, then I believe FI's long short ratio will get a recovery, which is now below 2 digit of 8 to 9%. So I believe today is very important day for market to get the follow-up action, and one can hold the long position to see the next leg of rally in the market towards 25,150, 25,500.
Okay, all right. It's been a stock-specific market. Markets are steady. Then better news for stocks. What are your individual trading ideas?
Yeah, Nigel. So first focus will be on the Nifty IT segment because this sector is bottoming out after a long time. In fact, on the daily chart or the weekly chart, Nifty IT formed the double bottom and now surpassing its 50-day exponential moving average. So most of the IT counter, which earlier witnessed selling pressure or remain underperformer, have seen a short covering trigger. So emphasis will be on my radar. And I believe most of the IT counter could see momentum for next couple of days. So we are recommending to go long on emphasis. The stock has bottomed out with the bottom formation on the entire sector. And technically it formed a cup and handle pattern on the weekly chart, which has bullish implication. Already we have seen momentum in last 2 days with support of its trend line and the 50-day exponential moving average. So this counter can head towards 3,050. One can buy with support of 29.25. Second trading idea, that is buy on Indian Bank. So selective banking counter are doing well, and Indian Bank is one of the strongest name. Technically, the stock has formed and given a breakout from a bullish pole and flag pattern with a decisive hold and breakout above 680. So expecting further rally in the counter, one can buy with support of 675, and Indian Bank can head towards 720. Last trading idea, that is buy on CZ Power, and this is the strongest name in last almost 2 weeks. And before that, it was going sideways. So in this month, we witnessed breakout. Before that, it was range bound, and now even a fresh bullish pole and flag pattern breakout is visible with build up of long position. So CZ Power can see the next leg of rally towards 795. One can buy with support of 745.
All right, we take that point, Chandan. Thank you so much for that. Meanwhile, a couple of stocks hitting lower levels of today's trading session. We have Brainbees Solutions, which did see a bit of a rally in the earlier part of the month, currently at the low point of trade. KRBL is the other one, which is down around 4.5%. And Cartrade Tech, that's the one the ticker team is also alerting, down almost 18% right now. Opened lower and has been trading lower levels on that stock too. We'll take a short break, come back, get you more on the markets and a lot of stock-specific action. Stay with us.
Welcome back. Well, let's focus on a couple of stocks that are buzzing around. Vivek joins us to tell us about Vikram Solar, that is. Vivek, tell us more.
Well, that's right. It's a recent listing. Remember, this company listed in the last week of August. Saw good listing. Now, in line with companies from the solar cell module manufacturing space, it's been a very strong quarter for all of them. Remember, names like Wari Premier did very well. Vikram Solar, no different. A very good set of results. Revenues high by almost 80% off a lower base, coming in at a little over 1,130 crore mark. EBITDA more than doubling on a year-on-year basis, over the 240 crore mark. EBITDA margins expanding almost 350 basis points, while profitability has jumped up almost 6x after when you're looking at it on a profitability after tax basis. Order book too, accretion has been quite steady. Close to 11 gigawatt is what the company enjoys in terms of the order book. And in Q2 itself, the company has received 3 orders, one 250 megawatt solar module supply order, one from GIPCL, which is a 326 megawatt order, and another order that the company had declared to the exchanges day for yesterday, which is an order from L&T for 336 megawatts. So again, strong order book, a very good set of numbers, and along with that, order book accretion too has been seen in the quarter gone by.
Take that point, Vivek. Thanks a lot for that. 8.5% higher on Vikram Solar. Meanwhile, just keep an eye out on HAL. The ticker team told us that they've signed an agreement with ISRO and a couple of other space agencies as well for the small satellite launch vehicle SSLVs. So that should be a positive in terms of business development for them. The stocks reflecting that, up around 1.5% at the high point. And also giving it company at the day's high is BEL. So a lot of these defense names coming back. Yesterday it was the railway pack which did well. So does defense follow today or not? Because twain move together. We have both defense and railways which keep moving in tandem. So just watch out for these two counters. With that, we'll wrap up on this edition of Chartbusters with the news that the Nifty is just above that 25,000 mark. Take a short break, come back on the other side. The team of Trading Guard comes up next.
Good morning. Welcome to Trading Hour live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Hormis Fatakia and Reema Tendulkar. Hey guys, good morning. What a different mood in the markets today, right? And it's always we wake up wondering what Donald Trump would tweet or post on Truth Social. And today it's been positive for the markets, and there has been a response from our Prime Minister Narendra Modi as well. So the markets of course, the trade talks are still pending. There is an expectation there could be some positive outcome, and that's exactly what the markets are factoring in today as well. A 150-point uptick on the Nifty. Mid-caps are outperforming across the board. Most of the sectoral indices are doing well. Nifty Auto is lower, but it has seen that stellar rally. So has the consumption index. So these are some profit booking candidates that we are seeing today. But other than that, we do have every index doing really well. IT is building onto the gains that it saw yesterday. We have PSU Banking Index, which is up 2.1%. The small cap index is doing well as well. So 1% higher there. Of course, a lot needs to be seen of what happens next. But for now, export-facing stocks, even domestic names, doing really well.
Indeed, and markets are now higher for the 6th day in a row. But today there is a spring in the step, and the Nifty's conquered levels of 25,000 with the up move today. But as Sonal said, there is optimism in the air. There is hope that there is a bit of a trade thought. You know, Trump has called Narendra Modi his dear friend, very good friend once again. Trade talks are set to resume. And as she pointed out, IT stocks have extended the cheer yet again. So the top gainers list includes Wipro, HCL Tech, TCS, Tech Mahindra, Infosys. If you look at the top 6 gainers, 5 of them are from the IT pack. Autos is the sole laggard today, so there is profit booking visible in Hero MotoCorp, M&M, Eicher Motors, Maruti. But other than that, actually a lot of the other sectors are doing well, whether it's defense, you've got green on the screen when it comes to the Nifty Bank. The Nifty Bank is moving in step with the frontline indices. Autos are higher in trade. You've got gains in defense names like a BEL. That's also got a gain of more than about 2%. But that's a large cap screen. Let's find out what the mid and small cap screen is telling you. Hormis has moved over to the big wall, and he's putting the spotlight on the top movers at this hour at 11.
Oh, well, shrimp and textiles, of course, the buzzwords of today's trading session. So it can start off with one such name. It's called Phase 3 Exports, and that has a very similar line of business to Wellspun Living in terms of beds, bed sheets and rugs and so on. It's the biggest single day gain on record for the stock, a 20% upper circuit here. Third straight day of gains, up 32% now in the last 3 trading sessions. Now already had 6.7 lakh shares trade hands in that 20% upper circuit now, compared to a 20-day average of 53,000. Mind you, of course, the stock does not have any institutional holding, but Ashish Kacholia has a 5.5% stake in the company at the end of the June quarter. And as a result of this move, the stock has now extended its gains for the year. It's up 25% now on a year-to-date basis. The other one is Himadri Specialty Chemicals, and today has snapped a 4-day losing streak, 5.5% higher on this stock today, and on significantly high volumes as well. More than 33 lakh shares traded already in the first couple of hours, compared to a 20-day average of just over 3 lakh shares. And with this one move, the stock is back above all of its key moving averages, be it the 50, 100 or the 200-day moving average, but is an underperformer this year, is down 17% still. But over the last 3 years, the stock has seen a 10x plus jump in terms of returns. Oracle Financial Services is the one. Of course, Reema spoke about IT, and of course this has its own reasons as well, considering the very strong results that its parent company reported. The biggest single day gain since May, now 8% higher on the stock, and the volumes already are set to cross the highest they had since the month of June. We had close to 7 lakh shares now that have already traded, compared to a 20-day average of just 31,500 shares. It's broken above its 50 and 100-day moving average today, and the next important level to watch on the upside is the 200-day moving average, which comes around levels of 90 to 70, yet down 13% from its record high levels of well over 13,000 rupees. And the last one on the list is Car Trade Technologies. It's on the downside. The stock is now down 15%. It's the biggest single day fall that the stock has seen on record. Snapped a 3-day gaining streak. 8.5 lakh shares have already been traded, compared to a 20-day average of just 1.5 lakh. And before today's trading session, the stock was up almost 75% in the last 3 months. And from the March 2023 low to the highs that the stock saw yesterday, the stock was up 8x in value, and then seeing some profit booking today after the downgrade that has come in from JM Financial. So Car Trade Tech on the downside, most of the other names too moving higher in today's session.
All right, Hormuz, thank you so much for joining us with that list. But we have a lot to track. So let's kickstart trading hour with the big story of the day. India's seafood exports is in focus after EU or European Union is slated to open its market further to boost potential for India's seafood exports. Abhimanyu is here with all the details of this story. Abhimanyu.
India had exported marine products worth $1.1 billion to the European Union in FY 23-24, and now with the imposition of US tariffs on several labor-intensive exports, the exports of marine products have also been impacted. Now, it needs to be reminded at this time that the largest export of marine products to a country or a geography was to the United States, closely followed by the European Union. Now, with the approval of the 102 new establishments as far as exports of marine products from India to the EU is concerned, the government expects a 20% jump in overall exports of marine products from India. Now, that's an immediate jump which is expected. Of course, FTA talks between India and the EU are already underway in New Delhi, and the Commerce Ministry expects that this move is going to boost bilateral trade between India and the European Union. Also, India is trying to increase its exports of labor-intensive products to several other geographies, and with this development, of course, there would be an immediate relief for Indian exporters of marine products. Several fishermen and people who are part of the cold chain stand to benefit immediately from this move. It remains to be seen which other moves are going to be undertaken by India in the coming days to cushion its labor-intensive exporters from the impact of US tariffs.
All right, that's a big story. In fact, to take the discussion further and to understand what the impact on individual stocks and the overall industry would be, Divya Kumar Gulati, who is the chairman at CLFMA India, and Nitin Awasthi, who is a research analyst at Incred Capital, join us now. Gentlemen, good morning. Thank you so much for joining in. Well, Mr. Gulati, before I start with you, I wanted to understand stock-specific impacts. So let me go to Nitin. Then, which are the stocks which tend to benefit from here? Also, after the 50% US tariffs, do you think a lot of it will move towards European Union as a market overall?
I'll answer the second part first, and that is no. We remain the top exporters to the US. Recent data suggests that we have only gotten stronger, and we are only taking more market share in the US. So our exports in the US have not gone anywhere for it to move to EU. EU, on the other hand, has been a very big problem spot for India. For various reasons, there are a lot of trade barriers which have come, which is not only in form of tariff, which are not only commercially punitive, if I could use that word, but also in other manners, just to block these goods from entering Europe, which has made it very hectic, and many of the exporters from India have actually backed out of this market. Now that market is opening up. That is the big positive here. We are not going to move away from the US. Our share in the US remains where it is, and that's actually gotten stronger every month of this calendar year.
And which stocks tend to benefit from this move?
Immediately, there will be the processing companies, because processing companies will be the one selling their processed shrimp to the European market. But actually, if you look at it one level down, the whole segment is going to benefit, right? If you are selling more shrimp as a country, that means you have to produce more shrimp as a country. That means everything from the hatchery to the feed, to the farm, to the farmer, to the cold storage, everything has to expand.
Nitin, so which would be the processing company? And the risk reward, which one would your preferred pick be? Just to complete this point about stocks.
I would not go to the risk reward chain as of now. I'll just stick to the priorities that I mentioned, which is processing companies, immediate benefit, ancillary companies. Ancillary companies will be the secondary benefit. Processing companies, as of today, the large processing companies in India, you have Apex Frozen, you have Avanti's subsidiary, which is Avanti Frozen Foods, and you have a company called Coastal Corporation also doing quite well. The three companies that we have looked at the past also, and that we tend to cover also on a normal basis. So these companies, we have studied them, of course, we know them, of course, and this is the way the processing business is for them. Avanti Feeds, apart from this, is the largest feed manufacturer in India.
Mr. Gulati, or to you, sir, thank you for sparing time and joining us. Does this move now open up a newer avenue for India? Of course, India is an exporter to the European Union, but does that, of course, now open up newer markets as well for shrimp exports, especially considering the uncertainties that surround the US markets, even though the exports over there have remained largely stable, if not better?
Yes, thank you for having me. Of course, having EU approve more than 100 units is going to actually benefit, especially since we've been facing the tariffs, the US tariffs. But there's also a positive that I think President Trump has announced that the negotiations will continue. So we hope that if things stand as it is when it was in April, and the 90 days moratorium was given for the exports to continue. If the negotiations are in line, so we have a growth in the market, in fact, with the EU coming. And also at the same time, India is looking at developing its domestic market. Once that happens, this shrimp sector would grow phenomenally. And this would eventually benefit the farmers, which is our main concern, the farmers of the country. So yes, EU market will definitely will be cherry on the cake for the shrimp sector.
Got it. So, Mr. Gulati, if you can give us some numbers, what has been the exports to the US so far? Has it been impacted because of that 50% tariff that kicked in from 27th of August? And how big of a market opportunity are we looking at in terms of EU markets? I know there's no specific number, but a ballpark figure if you can give us.
See, the total shrimp exports market is around more than $5 billion, which is being exported from India. And more than 40%, more than $2 billion is only to the US. The second country which is being importing a lot of shrimps from India is China and Vietnam. So China uses it for its self-consumption, and Vietnam is actually value-adding on the shrimps imported from India and re-exporting it. EU, however, being a very quality-sensitive and food safety is extremely important for them. That is why these 100 units have been given permission, because we've been able to comply. As of now, there is no figure in terms of the shrimp export. It's very minimal. But especially with these new units being approved, we hope that the figures could reach approximately $1 billion, if not less, in the EU market alone.
And do you expect this $1 billion to happen how soon?
Well, this will take a period of time, because the units have just been approved. There are earlier units which have been approved. Once it's a long term in terms of, the culture happens. It takes 90 days, and then we harvest, and then till the first lot goes, the products are tested, the quality assurance, the quality sensitivity. So I think it will take at least a year's time, if not more, to actually get to those figures. And that is if we fast track everything.
Nitin, so taking that point from Mr. Gulati forward into company-specific trends. Now, since he mentioned that if things are fast-tracked, this would take at least 12 months for it to fructify. How does that show up on the numbers of these companies? Do you see an earnings improvement in FY27, if not for this year? And if so, what does that do to the prospects of these companies? And let's stick to the ones that you mentioned, be the Avantis, the Apex Frozens and the likes.
So here, let me take Mr. Gulati's point forward. He mentioned that Vietnam is a very big market for us. But why are they importing so much from us? They're actually importing all these for pushing it to Europe. Almost all of our exports to Vietnam is pushed forward to Europe. Yes, primarily the reason was value add. But over a period of time, there has been absolute value addition has gone off the table. We do and produce high value products in India itself. We send it to Vietnam. Vietnam puts its stickers on it, and it goes to EU because our products cannot go to EU. And that is a sad part of it. So basically, all that export, if directly done, is a very, very big margin gain, right? And that is what we are looking at, like you rightly pointed out, in 27.
Got that. Is it possible to just break down what is India's total manufacturing capacity? How much of that is, being exported? He spoke about $5 billion of overall exports. How much is that? I mean, are we looking at a complete shift in terms of domestic consumption versus exports? And can we get into the value-added services which can provide a margin boost? What's the big picture here now for shrimp manufacturers in India? Nitin, if you would like to go first.
Okay, so 750,000 metric tons approximately the calendar year exports that we are expecting this year. And this has been a rising trend. It had dipped for about 3 years and again started to rise. And this year, again, we are looking at that figure, 750,000 metric ton. 40% of this is directly to the US. Second largest market for us is China. Then is Japan. Then everybody else, including European Union, comes in. European Union has been importing more shrimp this year. If you look at half-year data, which is out, calendar year, I mean, from Jan to June. Our exports there are up by 25%. However, the number itself is minuscule. The highest number that we have achieved is still not 10,000 metric tons a month. And this includes UK also.
Okay. All right, Nitin and Mr. Gulati, thank you so much for joining us and giving us a perspective of the overall market and individual names as well, which tend to benefit from this update that has come by. That's all about the shrimp space. We'll sip into a short break. When we come back, we'll put focus on the crypto market with Manisha Gupta. Stay tuned.
Welcome back. Midcaps are outperforming today. Industars is also in focus. This is on the back of a Kotak upgrade. They have upgraded, that's Kotak Institutional Equities, has upgraded Industars to a buy from a sell. So that's a double upgrade. The target price stands at 400, but many of their peers like Citi, CLSA, the target price was a lot higher. Again, they believe after the recent correction, the risk reward has turned attractive. Remember, the stock with the Upmove, recent Upmove has turned year-to-date positive, but it's still down about 17% from in the last 1 year and about 20% from its 52-week high. And this entire move towards Africa, expansion into Africa, they say will be gradual, measured, and unlikely to impact dividend payout. So that's the thesis, and there is an upgrade coming through. But as promised, let's turn our attention to the crypto space. Manisha is now joining in. Manisha.
Well, thank you for that. I'm talking about decentralized finance on Crypto Corner today because we are looking at strong gains coming in for this. The numbers are looking quite on the stronger side. And this is clearly an alternate when you look at the centralized finance here. So this is actually contrary to what centralized finance does. And we've seen decentralized finance really pick up quite strongly. So this is done to aim reduce reliance on centralized institutions. And this is also to promote the peer-to-peer transactions using the blockchain technology. There is also an increased demand when you look at the international markets for transparency, more accuracy, speed, efficiency, lower cost, and decentralized finance kind of fits into that requirement there. Also, it does use blockchain as a technology to create a borderless, open financial environment where no banks or middlemen are required. So we are looking at a surge of that, and in various countries is what it is picking up right now. When you look at the overall numbers as well, in 2024, the overall market was seen at around $21 billion. In 2025, the estimates are quite higher than that, at around $32.3 billion. And various reports do suggest that by the time we are in 2034, you could be looking at a $1,500 billion of a decentralized finance market there. It is on a high, and major regions that you have seen decentralized finance actually gain up has been North America. But the fastest growing market in sense of numbers continues to be Asia Pacific there. So when you look at the overall numbers there, for 2024, we've seen North America grow at around 37% in sense of contribution. And then you had Europe at number 2 with 29% of contribution. Asia Pacific, the fastest growing market right now, last year had 23% of contribution there. And then you have Latin America, and then Africa, West Asia, etc., which added 3% to that as well. Well, when you look at the overall markets, it is clearly driven by the tech-savvy younger generation, the growing desire also for financial inclusion, especially in countries where banking isn't so prevalent yet. And then it also is about mobile-first financial institution. Startups also are launching user-friendly apps at this point in time to ensure that it is included in. And the DeFi platforms are aimed at retail customers at this point in time. We also are looking at high speed of developer training, community building, and crypto education, all of that being pushed as well.
Okay, all right. Thank you so much, Manisha, for getting us a sense of what's happening in the crypto market. But the other big story, of course, has to be the India-US trade talks being back on track. Let's go across to Parikshit Luthra for the latest. Parikshit, what are you picking up?
Well, both leaders, Prime Minister Modi, President Trump, have indicated a positive intention to continue trade talks. Prime Minister even went on to say that there will be an effort to conclude these talks at the earliest. Now, sources are telling us, and these are highly informed sources, they tell us that these positive statements indicate that India-US trade talks are now back on track. There will be an effort to fast-track trade negotiations in the next couple of weeks. Officials on both sides will make an effort to find common ground and a breakthrough. We still have a 50% tariff, which includes 25% additional tariff or 25% reciprocal tariff. Both need to be addressed, and India would want the tariffs to come down much lower than 15%. So that will be the focus to find a common ground. At the same time, we can expect both sides to hold early meetings in the next few weeks to resolve all kinds of trade issues related to the Russia-Ukraine war, Russian oil purchases and market access, and reach some sort of trade agreement. We're also learning from our sources that India-US officials and delegations are likely to have an exchange very soon, which means that either a US team could come to India for negotiations or an Indian team could go to the US for negotiations very soon.
Indeed, Parikshit, thank you for that very important update. By the way, there is a slight cool-off on the Nifty now, back below the mark of 25,000. Still 100 points higher, though, on the index. And most of the high flyers from earlier this week are witnessing some profit booking in today's session. Precision Camshafts is one of them, 6.5% lower there. JTE KT India is down 6, Taj GVK2 down 6. Both of them had, all three of them actually had seen some very strong moves over Monday and on Tuesday's trading session as well. Take a short break here. More on the markets on the other side. Stay tuned. We'll be right back. Welcome back. Looking to claw back towards that 25,000 mark are the bulls. So 993 is where the index currently stands, 120 points higher on the index. We'll take a look at some of the gainers as well. Of course, most of them are dominated by the shrimp names and the textile names. Indo count is now up 18%. And some of the other names like Pearl Global, Wellspun Living, all of them seeing gains of anywhere between 9 to 10%. Bajaj Electricals has made a move on the higher side now, 8.5% higher on that stock as well. That was sprung up among the list of gainers. There you can see a very sharp move in the last few minutes for Bajaj Electricals. But good time to get in the latest trends from the FNO space. Mangalam is at the FNO desk to tell us what the data is currently indicating. Mangalam.
Well, it's a good day of trade so far. You know, we have the Nifty and the Nifty Bank doing extremely well. All the engines of the frontline index are actually firing. We have the Nifty Bank and the Nifty IT index, which have been doing well. And not only that, you know, they're at important technical levels as well. The Nifty has crossed past this 50-day moving average, something that was elusive for a while, so 24,932. The Nifty Bank is just below its 20-day moving average, so 54,733 is an important mark that we need to keep an eye out on. And the Nifty IT index too, after 2 days of a rally, has crossed past its 50-day moving average at 36,215. Whether it sustains and builds on that is something that we will be tracking. Even the broader markets, your portfolio would be feeling a lot better in today's trading session. Nearly 2,000 stocks in the green for about 900 stocks in the red. So those crisscross lines, not crissing or crossing, but wide apart from each other, with the green line firmly above the red one as well. And when this happens and the FII shorts, which are close to around 91, 92% of the overall system, we see some short covering as well. Have we started to see that in the index futures? Not yet, but importantly, we're seeing signs of that in calls. So 24,850 call, the 24,800 call, and the 24,900 call, all of them are seeing some short covering. So that's a positive factor that's taking the market higher. The second factor is that put writers have gotten very active as well. So the 25,000 mark, which is psychologically important, has seen put writers be very active. So 24,900 to 24,950 is where the support has moved higher. What was earlier a resistance has now become a support. And importantly, we still haven't seen some selling from the 25,000 call writers. The 25,000 call writers have a premium of almost 150 rupees on that strike. So that tells you that the important level for the Nifty to track on the way up above 25,000 is 25,154. Why is that? Not only because the 25,000 call premium is 150 rupees, but also it is corresponding to the August 21 high post Prime Minister Modi's Independence Day speech, the rally that we saw all the way up to 25,154. So crossing that would be extremely crucial. But a lot of long positions added in a lot of these mid-cap IT names. So you have OFSS, Emphasis, Scient, all of them fairly well bid in today's trading session. And we've seen a lot of shorts being caught on the wrong side in the IT space as well. So a lot of short covering is what we are seeing on names like Tata Elxsi, Persistent Systems, and KPIT. Mid-cap IT doing a lot better than large-cap IT, which was doing well in yesterday's trading session, continues to hold on to those gains.
All right. Thank you so much, Mangalam, for giving us all those details. Let's take a short break now. Up next, we'll discuss the market fundamentals with Viraj Mehta from Enigma Investment Partners.
I'm sitting here in the heart of India's financial markets, the National Stock Exchange, a fortress of technology and trust, a place where billions of dollars of trading is executed across equities, derivatives, commodities in a microsecond. But beyond the tickers, the symbols, the charts, today we go behind the scenes. We look at surveillance rooms, IT infrastructure, cybersecurity, and of course, the National Operations Command Center. And we do all of this with NSE's current MD and CEO, who was also instrumental in setting up of the exchange, Ashish Kumar Chauhan.
Welcome back. You're still tuned into Trading Hour. Let's talk about some market fundamentals. Viraj Mehta from Enigma Investment Partners is joining us now to discuss his portfolio construct and some of the stocks in his portfolio as well. Viraj, good morning. Thank you so much for joining in. Some interesting names that I saw. You have around 18.5% allocation to iron and steel products, out of which you do have Surya Roshni there. I wanted to discuss that in particular. Why such a big proportion to just that one sector that you have, and specifically Surya Roshni?
So first of all, thank you so much for having me on your show, Sonal. Okay, so the whole construct we thought about when we look at a portfolio construction is not only to look at the valuation, but also to look at the earnings growth and how those earnings growth is going to come, whether from volume growth or margin improvement. And if you look at this industry, last year went through a lot of trouble because the prices of steel kept on declining, and all of these companies, right from Surya Roshni to the market leader like APL Apollo, a lot of these companies had significant inventory losses last year after having 2-3 tremendous years post-COVID where they had volume growth and margin improvement on a structural basis from 3,500 to almost 5,500 or 6,500 in APL Apollo's case as well. So after a brilliant 2-3 years, they had one really somber year where they had okayish volume growth plus inventory losses, which meant that some of the valuations of these companies came down significantly, which represented a lot of value to us. And within that construct, when we kind of tried to look deeper, we came across two companies which are two of our top holdings out of top three holdings in our portfolio, which is Surya Roshni and Shankara Buildpro that we own. Specifically coming to Surya, Sonal, they are India's second largest steel pipe manufacturers, ERW steel pipe manufacturers, and they almost did like 0.9 million tons last year, and they're growing at 12 to 14%. This year, I think they will grow 15 to 18 or even 20%. And they're doing margins in the range of 5,500 rupees EBITDA per ton. Now, if you think about, and they're building up the capacity to go to 2 million tons over next 3 years. So if you put all of that into the construct and you think about this company at 1.5 to 1.75 million tons, can it do 5,500, 6,000 rupees EBITDA per ton? You are looking at almost 1,000 crores EBITDA just from the pipe division. They actually also have an electrical division where they do around 2,000 crore of sales and do 170, 180 crores of EBITDA. If you compare it to similar players in that electrical segment itself, the whole 180 to 100 crore EBITDA business of electrical gets valued at 4,000-5,000 crores in something like a CG or a Crompton, if you look at it. And then put together, this whole business of Surya Roshni was available at 5,500 crores, where you can get 200 crores of or 180 crores of lighting EBITDA and 550, 600 crores of current EBITDA of steel, which can grow to 1,000 crores, which is represented significant valuation arbitrage in our mind, in our understanding. So which is why we love Surya Roshni, and it is one of our largest holdings.
One of your largest holdings indeed. It has a somber last 12 months as well for Surya Roshni too, down 8% in the last 12 months. But Viraj, the other name that springs up and that has done very well over the last 12 months is Shankara Building Products. That is also one of your largest holdings. And with the demerger now almost falling into place, other than the business, do you see this also now as a value unlocking opportunity as well?
Oh, absolutely. So what will happen is once the demerger goes through, today you have a business which is cumulatively doing an ROE in the range of 12 to 15%. But if you were to just put a pro rata balance sheet of these two businesses, one is manufacturing and another is distribution business, you will see one business which is growing at 20-25% and will do 35-40% ROC, ROE, and also generating reasonable cash flow, will and should be valued differently from the manufacturing business, will be available even today at in the range of close to 15 times EBITDA. So, which if you were to compare that kind of business model, that kind of return ratios, that kind of growth with any other segment in the market with similar business architecture, you will see significant valuation discount even after Shankara has gone up so much. So I think market has re-rated it slightly when this demerger has come to fruition. But once it gets demerger, some of those numbers will get reported over next 12 months. You will see, in our opinion, another leg of re-rating that will happen in Shankara Build Pro even from here.
Viraj, hi, morning. The other stock, Global Spirits, that's about a 10% weightage in your small cap fund. At what price did you enter? Right now it's about 1,050. And how much more upside do you see in it? And how does it compare with competitors? So why Globus over, say, a Radico Khaitan, Tilak Nagar in the alco beverage space? Or United Spirits?
So in the United Spirits is probably an out of syllabus question for somebody like me. I don't look at.
I agree. The size is very different.
Yeah. So again, let us go back to what happened in alco beverages. Alco beverages, apart from IMIL and IFML businesses that they do, a lot of these alcohol companies also have ethanol business, which is bulk ethanol, which did significantly well apart from FY25. So they had really good years till FY22, 23, a part of 24 as well. But because of government policies and the pricing at which they were getting broken rice from FCI, all of these went into technical shutdowns for a large portion, or they were really manufacturing at a lower utilization, and which is what changed post January. If you look at the new regulation that FCI has come up with, which is when we bought. So we haven't really bought much cheaper. We bought roughly 850, 900. So not really too much change from where we bought. How we think about this business is this year can do 170, 180 crores EBITDA in the bulk business, 170 to 180 crores EBITDA in the country liquor business, and their IMFL business will break even this year. So looking at an alcohol business which can probably do like a 330 crores EBITDA, which is available at around 3,000 crore market cap, which is less than 10 times EBITDA in Alcobev, which is kind of unheard of. What will also happen is over next 2-3 years, there is a reasonable possibility that the consumer business, which is IMIL and IMFL, will grow to a scale of 1,500 to 1,800 crores revenue, and which will probably get demerged from the bulk business, which should again lead to significant re-rating for the good part of the business.
Okay, Viraj, that was a comprehensive analysis of these three names. Very helpful. Thank you so much for joining in. Looking forward to more conversations on different aspects of your portfolio building and individual names as well. Thanks a lot for joining in today. With that, we'll slip into a short break. Management of Neogen Chemicals will join in next to discuss the business outlook and more. Stay tuned for that. Welcome back. Neogen Chemicals is the management on our radar right now. The 3 talking points that we'll be discussing with them is the outlook for their battery chemicals business, the supply chain issues, is there an impact on prices, and companies' capital expansion plans as well. Harin Kanani, the MD, Neogen Chemicals, is joining us now to discuss that and a lot more. Mr. Kanani, good morning. Thank you so much for joining in. Well, you know, you are aware of a recent report that had come by and they had spoken about how there could be some impact or because of oversupply that's happening in the industry on battery chemicals. First up, your thoughts on that, and what's the contribution coming in for you from the battery business currently? How will it scale in the next 2 to 3 years?
Hi. So, you know, battery business is basically driven by 2 major end users. One is the EVs, the 2-wheelers, the 3-wheelers, 4-wheelers, and we recently announced, we also saw buses being a policy, and now Ashok Leyland also announcing like they want to make even commercial vehicles using batteries, right? Electrical in a major foray into that. So this is one segment. And the second is the energy storage application, which is linked to the solar, and even discussions that even coal power plants also having some storage capacity. So when we have renewable energy, we can balance the supply significantly. I think both these are very critical, important demands, and we are seeing both of these growing continuously in India as well as worldwide. So if you look even at India, you know, the demand constantly keeps increasing. And because of that, there's a good demand for batteries. The only challenge has been that while the demand for the batteries is increasing, the consumption of batteries is increasing, the production of the cells, which is required for these batteries, is just starting. So it was expected to start by end of 2024, which was the PLI requirement. And like giving credit to some companies like Ola who started the first gigafactory around that time, it is now stabilizing. So if we look, there are 2 gigafactories which are coming online in 2024-25, and there are 4 gigafactories which are expected to come online in 2026. So if you look at 2027, you will have 6 gigafactories which will be running, stabilizing, ramping up. And the demand is already there. So it's just a question of getting the technology right, either with their own technology investment or partners. Once that is done, by 2027-28, we are going to see a huge increase in the demand of the battery chemicals in India.
So, Mr.
Sorry, yeah.
Yes, so that is what you are seeing, a huge demand. You are talking about constraints on production. But for Neogen itself, you have also invested a lot in this particular business. Can you give us a sense of how much has it contributed in FY25 or FY26 so far? How do you think this will scale over years? And in terms of capex as well, 1,500 crores is what you announced, only 500 crores is done so far. How will that scale up?
So if we look at, the revenues that we generated from batteries, so Neogen had the luxury that we've been working with lithium chemistry for last 40 years. And we started working on the battery chemicals also 6 or 7 years ago. So if you look 2 years ago, we were into like single digit, contribution from battery. Last year, we just moved into double digit. And this year we are targeting like a 3-digit kind of a battery. And let's say, depending on how it shapes up, by next financial year or the year after, we would be into 4 digits. So it's just little bit of a change, but overall, we are growing. If you say, we are almost crossing order of magnitude jumps, because that's what happens when an industry goes from 0 to 100, right? So we are part of that journey. One another thing which, sometimes we miss out is, it's when you're thinking of battery chemicals, it's not just linked only to India. The world also wants an alternate to China, and the world also wants the supply chain as badly. So, today the production of batteries outside China, be it India, be it US, be it Europe, Japan, while there are hiccups, the production is increasing, and there are clearly regulatory stages where, there are some battery raw materials where there's like 90-95% dependency on China with overcapacity, which is slowly getting reduced, but there was overcapacity in China. So there was a clear message that we need to have alternate sources, alternate geography as a geography de-risk. And India is the best bet outside China, which has the talent pool, which has the basic infra to handle the chemicals. So this is where we are going. As far as our capex is concerned, like you, we are on track to complete majority of the capex in the current year. Maybe a little bit will fall over, but the entire 1,200 crores would be done in the current financial year, or maybe a little bit left over in the early half of next year. But overall, we are committed, and the capex is going the way we had more or less planned.
Mr. Kanani, if you can quantify the 3 digits, because 3 digits go from 100 to 999. If you could share a number on that, that's part one. And if there are any other geographies that you are targeting for this business, if you could tell us that. And then I'll ask you about your organic growth business. And since you mentioned lithium as well, very briefly, if you could touch upon the fact that whether prices have stabilized in the second quarter as well.
Yeah, so, yes, it will be like I would say it will be not closer to 999. It will be like, more closer to hundreds, like closer to hundreds. But yeah, see, the point is, when you're starting from zero, right, it's still a significant jump. The only point I want to say was the demand is increasing, contribution is happening. In terms of the geographies question that you asked, yeah, so US is one where there are still restrictions, and even some of the battery materials was left out from the tariffs which were put on India. With the intention that they want to develop an alternate supply chain, and this is an area. So US remains one of the key areas, and the other area is Japan and Korea, where there is significant battery production happening. Technically, Europe also will have a demand, but there are already Chinese companies who have already set up plants in Europe, and there are very few policy measures to have incentive to have supply from a non-China or a geography diversification kind of a supply. So I think there we don't see very strong demand, but we see a lot of interest from Japan, Korea, as well as US markets, who basically want to have an alternate de-risking of geography.
All right, Mr. Kanani, we had a lot more questions, but there's so much happening with the tariff news and geopolitical update as well. So we'll keep that for some other time. Thank you so much for joining in and telling us your insights on the battery business overall for the company and the country as well. Time for a short break now. On the other side, we put spotlight on Salasar Techno Engineering in our segment Under the Lens.
Welcome back. Still below the mark of 25,000 is the Nifty after holding off for a brief period. The PSU banks are the ones that are continuing to move higher. Union Bank is up 4%, as is Indian Bank, as Bank of India, and of course Punjab and Sindh Bank. Of course, these low float PSU names, Punjab and Sindh, UCO Bank, Indian Overseas Bank, all of them, actually all constituents of the PSU Bank index are trading with gains currently. And so that's, of course, one pocket of the market that is doing well. Oracle Financial continues to move higher, 9% now on that stock. IGI, International Gemological Institute, 7.5% higher on that stock as well. And just pull up BSE before we call time on the show. That's seen a bit of a downturn in the last few minutes, 4% lower on that stock. There you can see a sharp slide from the highs of the day. It's almost 130 rupees, almost 100 rupees shaved off from the day's high. Now, quarter to 4% lower is BSE. We call time on this edition of Trading Hour. From Sonal, Reema and me, thank you for watching. Halftime report on the other side.
A Trump and Modi exchange on continuing US-India trade talks, and a conversation soon lifts sentiment. Stocks of exporters rally, IT and industrials too clock gains, while auto and consumer durables drag.
Urban Company launches its 1,900 crore rupees IPO, joining the list of marquee platforms coming to the public market. CEO Abhiraj Pal tells CNBC TV 18 that the company aims to continue growing at the same clip and its earning nearing break-even.
Talks of exporters of shrimps and other marine products rally after the Commerce Ministry says the EU will open up its market further to an immediate 20% increase in exports. The thaw in India-US relations also rubs off.
Vodafone Idea has knocked on the Supreme Court's door again, this time against an additional AGR demand raised by Department of Telecommunications. The telco is seeking quashing of the demand and a review of the AGR map. Hello and welcome to a halftime report live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batra and with me is Manglam Malu as well as Vinny Motiwala. Well, it's turning out to be a session where we are seeing some reprieve in the markets considering the positive commentary or the exchange of words which have taken place between the US and India when it comes to the tariffs. So we do have the Nifty, which is up around 0.4%. We have the Midcap index or the broader markets, which are outperforming at this point in time. Midcap index up 0.7%, advanced decline ratio in positive terrain at 2:1. So no complaints coming in, may it be exporters, may it be the shrimp stocks, all of them doing well in today's trade. Hi, guys.
Hi.
Hi, go ahead.
So it's a good day coming in, and IT, that's what I want to talk about as well, because second consecutive day of gains, finally it's making that comeback as well. So keep an eye out on the IT pack today. Also, Infosys is managing to hold on to gains. We have HCL Tech and obviously Oracle Financial Services. That's something that's buzzing in trade as well. Other than that, PSU banks, Mangalam, that's also something that's buzzing.
That's buzzing as well. And what's interesting is that we have some traction seen in a lot of these defense names. Yesterday it was the railway names, and today we have a bunch of them. HAL doing well, BEL is at the high point, and the mid-cap IT pack, like you guys pointed out, doing extremely well. Let's see where it goes. We're very close to important technical levels on all the frontline indices. But over the last 6 or 7 days, the story has been consumption, the story has been GST cuts, the story has been impact of GST cuts on a lot of the consumer sectors. We here on CNBC TV 18 have been speaking to consumption sector leaders across the board, be it biscuits, aerated beverages, dairy, and even namkeen and snacks. So let's start continuing our conversation around the consumption space itself. Rigan Retata, who is joining in from Gopal Snacks as the CFO, joins in, and our discussion obviously will be centered on the 3 important points. One, the impact of GST cuts on snacks, and more importantly, the challenges in passing them to the consumer, capacity expansion via third-party manufacturers and their own plants, and the outlook on raw material costs, as well as the current demand environment, as it were. Thanks a lot, Rigan, for joining in. The obvious question, we had the management of Bikaji join in earlier. They expect an incremental 3 to 5% volume growth on account of the rate cuts that have come by. I suppose yours would be somewhere similar as well. But the bigger challenge now is passing these cuts on, because for players like you, where nearly 80% of your revenue comes in from 5 to 10 rupee packs, you can't immediately increase your volumes. So can you tell us about the incremental volumes that you will see, and by when will new stocks hit the market earliest?
Yeah, so good afternoon, Manglam. So yes, we are also definitely, like our Bikaji said, we are also expecting the increase in the volume, and our 70% of the sales comes from around 5 rupees SKU. So over there, we would be targeting to probably increase in the grammage, and in the high rupees packet, we would be the mixture of both the things. It would be lower of the prices and also increase of the grammage.
Right. How much increase in volumes will you see? And by when will the newer packs come to the market? Because some believe that September 22nd is very small a window for all the companies to go ahead and bring out all those new stocks in the market.
Definitely, as far as volume is concerned, yes, we would be expecting somewhere around 5 to 6% of a volume growth. And 22nd of September, yes, it's a definitely very short window, because there would be some stocks lying at the dealers level. There would be some lying with the various MT and the quick commerce kind of a channels. So we would be coming out with the fresh packets probably once we have a clarity on the things like how much dealer stocks, whether we would require to do anything on that front, And probably we are targeting to somewhere by the end of this month, we should have proper clarity on that area.
Okay. All right. Just wanted to, get a sense in terms of the entire demand picture for the year. Q1 was weak. You have this GST consumption boost. Are you now assuming that maybe the remaining 3 quarters or the second half of the year is going to be much better than what was earlier anticipated? What is your overall guidance in terms of volume, revenue growth, profitability, margins? What can you guide us for in the remaining part of the fiscal?
Yeah, so definitely the GST rate cut is another legs up to this consumption story, along with whatever government has done in last few months, whether it is a tax rate reduction or the interest rate cut. So all this has definitely boosted up the more money available to the consumer, and also consumer space will have that additional volume growth coming in. So as a full year, as per our earlier guidance, we stick to that guidance currently. We are targeting 15 to 20% from the baseline of last year as a revenue growth, and we stick to that. Now we would be chasing on the higher end percentage rather than the lower end percentage of that thing. And as far as margin guidance is concerned, we would be targeting an EBITDA growth of in absolute value of around 20 to 25% kind of a thing.
Okay, 20 to 25% is the overall EBITDA growth in absolute terms that we're watching out for, and top line growth you're maintaining at 18 to 20% is what you're saying for FY26, right? And despite that boost and festive season coming in, you don't think this could lead to a better growth rate, given that, there is some fillip coming in, there's good monsoons as well for the consumption side, and this GST boost. You don't think that you could do slightly better than that?
No, so it would be better, but we would like to take this as and when it comes, because our Q1 numbers were slightly subdued on account of our internal supply chain issues. So on the full year basis, we maintain the guidance of 18 to 20%.
And do you think in terms of packs also which you are selling, so smaller SKUs, maybe that would see a more boost coming in, or what is the understanding right now you're picking up here?
See, in terms of packages, yes, smaller packages or the higher package, everywhere boost would come in, because the rural demand was obviously not much of an issue. There was a urban demand which was little bit on slowdown. So we expect much more demand coming in from the higher packs where the urban consumption story lies.
Okay, so you're seeing some kind of incremental move in terms of the urban demand. Just before that, you had come out with some news with regards to the distribution changes, your third-party agreements in Karnataka and Uttarakhand. Just give us a sense in terms of what that means for business for you.
Yeah, so we have entered into 2 long-term agreements. So one is based at Hiriyur location, that is part of Karnataka. And another one is at Kashipur, that is in Uttarakhand. So both these agreements are part of our long-term strategy to have a deeper penetration in southern India as well as deeper penetration in UP, where currently our sales mix is around 4%. So both the plants would definitely help us in terms of increasing our sales over there, and also the timing or the lead time to reduce the lead time by around 50% in both these areas.
Right. You said that you maintain your 18% revenue growth and 25% EBITDA growth guidance for the year, right?
Right.
But that means that for the next 3 quarters, you'll have to grow upwards of 25%. 9% was the decline that we saw in the first quarter, and EBITDA was all but negative. It was 63% lower, all 15 crores. So you think you will be able to do that, or would that fall short of expectations?
No. So, see, we had the major fire incident at our Rajkot factory in December. So, in June quarter, our numbers were subdued mainly on account of that supply chain issues that we were facing. And now, since we would be commissioning our Modasa facility by the end of this month, so we are expecting the supply chain issue to be resolving, and that should lead up to betterment of our revenue, and also now GST rate coming in. So this is an added advantage for us.
All right. And how much is the revenue potential of your Modasa facility and these third-party plants that you've tied up with? Together, what is the incremental revenue potential?
So there's incremental revenue potential for the Karnataka plant. It is roughly around 90 crores. And for the Uttarakhand, it is around 100 crore rupees.
And Modasa?
So Modasa is not an incremental. So it's...
Yeah, I mean, the plant by itself, how much can that contribute?
So see, it would be around 700 to 800 crores, but it is not incremental capacity. That is what I want to clarify. So it's an replacement of Rajkot, what was capacity. So 60% is at Modasa and balance 40% would be restored at Rajkot.
Okay, just quickly before we let you go, I know Q1 had some exceptionals, but what is a normalized margin state for you all for the remaining part of the fiscal?
See, gross margin that should be normalized for this year. That is, we are expecting somewhere around 25 to 26% as per current raw material prices.
All right. And volume growth for this year would be how much?
Volume growth should be around, we are expecting 4 to 5%.
Okay. All right. We're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Gopal Snacks. The stock is up around 1%. They're sticking to their revenue guidance of 18 to 20% in terms of revenue growth. For FY26, they do see the GST rationalization definitely coming in as a boost in terms of their sales. We'll take a short break, but up next, we'll get you more in the markets and we'll focus on our segment, movers and shakers, which will get you the top stocks which are moving at this time. Stay tuned.
Hyper-local a completely new meaning, isn't it?
There is one consumer base in the same geography that are looking for cheese. There is another consumer base that is looking for paneer. So the way our assortment comes in, it allows for that level of identification.
Is it still about the 10 minutes or has that changed significantly?
A consumer that depends on quick commerce, when they come up and fire search for the item that they look for, needs to be available in less than 10 minutes.
Welcome back to Halftime Report on CNBC TV 18. 24,990 around that mark is what the Nifty is trading at, up around 120 odd points in today's trading session. Apart from that, we have textile stocks that are buzzing in trade as well, whether Gokuldas Exports or Welspun Living. And obviously, this is because of the positive commentary exchange that we have coming in between Donald Trump and Prime Minister Narendra Modi in terms of tariffs, and the conversations going positive. But which are the other movers and shakers? And in that segment of us, we are going to track a whole host of these other stocks that are buzzing in trade today. First up, let's go across to Ria, who's going to talk to us about Indian seafood exporters. Ria.
Well, yes, the European Union has now approved 102 new fishery establishments for exports to the EU, and this move is expected to add around 16% additional export establishment in terms of trade volume. The Commerce Ministry also anticipates an immediate rise of over 20% in trade volume as a result of this move. Now, India's marine exports to the European Union were valued at around $1.1 billion in FY24, and the Commerce Ministry has also said that India had been engaging with its EU counterparts over the past 3 months to address sanitary and phytosanitary issues, and following some technical level meetings and negotiations, all the establishments that were earlier delisted due to these concerns, due to contamination concerns, have now been reinstated. So this is a big positive for the entire industry as a whole. Now, in addition to this, the Commerce Ministry has also said that this move is a positive sign for the 13th round of ongoing FTA negotiations between India and the EU, and the listing of these units by the European Union was a long pending demand by India. Now, in terms of the impact for most of these stocks, for Avanti Feeds, 17.4% of shrimp feed revenue in FY25 came from Europe, and they are already working on expanding their presence in non-US markets, including the European Union. For Apex Frozen Foods, around 39% of their overall revenue in FY25 came from EU, up from 26% in the previous financial year. And they've also said that they saw robust demand from the EU over the last 1 year, and they continue to strengthen their presence in the market. Some other listed players that also supply to the European Union include Coastal Corporation, Waterbase and IFB Agro. And on the back of this, all of these stocks have been trading higher in today's session. The top gainers include Apex Frozen Foods and Coastal Corp, 20% limit up for each of these. For Avanti Feeds and Waterbase, they are higher by around 13% to 11%. And IFB Agro also trading with gains of 2% today.
Okay, all right. Thanks very much for that. So definitely a lot of those stocks buzzing in trade today. But Vikram Solar is in focus on the back of its Q1 numbers. Vivek is here to tell us more. Vivek.
Well, that's right. So Vikram Solar, remember, this is the first quarter that the company is declaring results after its listing. The company listed in the last week of August. And when they listed, they had actually told us that this particular year they are expecting to see a top-line growth of close to 30 to 35%. But Q1 has been exceptionally strong. In line with what most of the company's peers have done. You remember Wari, Premier, all of these companies have come out with very strong set of results in the quarter gone by. So solar cell module manufacturer, revenues have almost 80% on a year-on-year basis. EBITDA more than doubling, 2.2 time growth. EBITDA margins up almost 350 basis points. Well, profitability is up almost 6x of a lower base. Order book very strong. There has been order book accretion since the IPO itself has come. So close to 10.96 gigawatt order book at the time of listing was close to 10.4 gigawatt. 3 key orders that the company has received, one from the Bondada Group in Maharashtra for close to 250 megawatt solar module supply, another one from GIPCL, close to 326 megawatt, and day first the company told the exchanges that they received close to 336 megawatt order for solar module supply from L&T. So order book accretion has been quite strong, and the order inflow too has been quite steady for Vikram Solar.
All right, take that point, Vivek. Thanks a lot for that, up 7% for that stock. But one stock which is lower in today's trading session, nearly 19%, is Car Trade. Sudarshan joins in. Sudarshan, what's spooking the stock?
So stock is under pressure, currently down around 8 to 9%. It has made a minor recovery from days low. At one point, the stock was down almost 18 to 9%. But the stock has recently outperformed. If you take a look of 2025 performance, stock is up almost 50%. And from 52-week low that stock had seen in October of 2024, from that level, stock is up almost 200%. So why is the stock under pressure today? So JM Finance brokerage firm has come out with a note, and it has downgraded the stock to sell from hold, and target price is rupees 2,350. So mainly valuation concern that JM Finance has talked about. It's saying that stock is currently trading at 43 times FY27 estimated EBITDA multiple, and it's too rich for a company that generates almost its entire revenue from B2B. And while
demand boost does not necessarily result in a increase of segmental revenue. Here, segmental revenue means the revenue for the auto segment. Also, it says that while OLX recovery sounds positive, it was as per expected, and recent surveys that JM Finance has done, it suggests that a significant rise in the use of generative AI tools versus Google search, and that JM Finance believes that it can be a risk going forward for the company.
Okay, Sudarshan, thank you so much for that. Car trade today down 9%. But let's move on to a stock that's been buzzing in trade today, Oracle Financial Services. Reema is joining us to give us the details on this one. Reema, afternoon.
Well, the key reason is its parent company, Oracle Corp, came out with numbers yesterday, and the street loved the guidance on AI and cloud. Oracle shares popped 28% in after-hours trade, and Oracle Corp is the parent company of Oracle Financial Services, OFSS, with about a 72.5% stake. Two quick reasons what the street liked in Oracle's numbers. One, the cloud orders, which went up 350% on a year-on-year basis, and two, the projections on cloud revenues. So this year, Oracle is saying that cloud revenues will go up 77% from almost $10 billion last year to $18 billion. And not just that, by 2013, 4-5 years, they're projecting this number to be $144 billion. Now, what is the read-through for the Indian subsidiary, Oracle Financial Services? The current quarter's numbers, take into account OFS's past quarter's numbers, June ending. So we already know those numbers. But generally, because it's a majority-owned subsidiary, its numbers would be consolidated. But what the street likes, it's the future outlook for Oracle Cloud. And even the OFSS, uses the cloud products of Oracle. It's just that they use it only for the banking platform, for the financial services verticals. So the street likes the forward guidance because this, in a way, includes what's happening here with India as well. But even for the IT services, there is a broad rub-off. The big narrative was that AI is negative for IT services companies. It's deflationary. It will eat into IT services companies. But what Oracle's numbers show is that for AI, you need cloud migration. And to help with cloud and to help with the implementation, you need IT services companies in the business that they do, which is why generally you're seeing this optimism in the IT services revenues. And not to forget that OFSS has also been an underperformer. The stock has fallen 30% on a year-to-date basis and much lower compared to its all-time high price of 13,220. Back to you.
Okay, all right, Reema. Thanks very much for that. So those are a lot of the stocks that we're covering in our M&S Movers and Shakers segment on Halftime Report. As you can see, all of these stocks are buzzing around today. But we're not done with all the stocks that you should be keeping on your radar. We now have Vivek here with us to take us through all the stocks which are moving around in our buzzing stock segment. Vivek, over to you.
Well, dominated by news flow, dominated by brokerage upgrades as well as downgrades, and a whole host of stocks, especially from the broad end of the markets that are seeing all of the strong moves. Ria did tell us about the shrimp stocks, all of them doing very well in the session. Avanti, Apex, Coastal Corp, all of these stocks some of them even at the upper circuit. The other set of stocks, on hopes of a trade truce, is the auto ancillary packs. All of the stocks that go ahead and export to the US market, Bharat Forge, Samvardhana Motherson, these stocks too are doing quite well in the session. The other set of stocks, after a while, that are seeing some buying interest emerge is actually the PSU banking space. So held and helped by SBI, up almost 1.5%. Some of the other names like Union Bank, Indian Bank, all of these stocks up over 3% today. And the mid-cap IT space, aided by the fact that globally Oracle Financial has upgraded the revenue growth guidance. Look at some of the moves over here. The Indian OFSS is up 9%, Persistence, Emphasis, Coforge, even a name like Tata Elxsi, all of these stocks up anywhere between 4 to 10%. The other set of stocks that are seeing some selling pressure emerge are stocks actually from the auto space. Actually seen a one-way rally for most of these names, but today seeing a bit of profit booking. TVS Motor, Apollo, Hero Motor, even a name like M&M, all of them have cooled off significantly from the day's highest point. And cement stocks, after a while, remember Q2 is expected to be quite muted for the entire cement space. All of these stocks are not falling too much, but a bit of profit booking from the higher level is what you're seeing in the cement space.
All right, we take that point. Thanks a lot for that, Vivek. All those stocks which are buzzing around in today's trading session. Take a short break, come back, focus on trading strategies. We have our technical experts joining in with us. Pritesh Mehta of Yes Securities has some trading strategies.
Welcome back to a halftime report on CNBC TV 18. Again, the Nifty is inched back near the 25,000 mark. And what we're seeing in terms of an outperformance is that's coming in from the Nifty IT side, mid and small cap. That's also managing to hold on to gains. In the last few odd 20, 30 odd minutes, we've seen Nugent Software. That's again buzzing in trade. We have Shoba as well as Alembic Pharma that have picked up some bit of a pace in the last 30 minutes. But it's time to bring on Pritesh Mehta of Yes Securities to talk to us about the technicals of the market. What are we keeping an eye out on? Pritesh, good afternoon. Thank you so much for joining us on the show. Let's talk about the levels that now we should be keeping an eye out on. Today, we did touch the 25,000 mark. But if we manage to close at those levels as well, what are we watching out for now?
Good afternoon. Now, see, it's good to see markets in green today, but we need to look at the broader perspective when we talk about Nifty. I think when we look at the EM's basket, money we can fairly say China is outperforming India now for last 1 year, and this trend is going to continue. So I think when we talk about index from a broader perspective, the range is still intact. What we have seen since the month of May, 24,200, 25,600. I think this is going to continue. From here on, we can see Upmove was 25,200, but the larger trend is going to be intact. So I think it is more about stock selection rather than index direction, because this theme is going to play out for at least next couple of months. Broader market has a different thing altogether. When you look at the breadth of the broader markets, it is improving. So I think rather focus on the index direction, there would be plenty of opportunities in stock selection.
Okay, what would your stocks be, Pritesh?
So from the broader markets, we like something like Electra. Now stock went through a big corrective move since March 2024, and now we can see base building ankle column follow through on the point of figure chart. So as per my projection, the stock can move towards 2000 levels. The stock would be around 1520. The second one which we like is BEL. Now see, this defense index is doing well, our customer defense index. Now BEL has formed a good basing pattern, now trying to surpass the downward sloping trend line. So here on we can see a move towards 425, 430. The stock would be around 365.
Okay. Pritesh, what's your thought also coming in for IT, right? Nifty IT, because that's seen a bit of a revival in the last couple of days, and it does merit it because the fall that we've seen before that is sharper. So Nifty IT, anything that one should watch out for on the technical fronts?
Yes, I think we have been keeping a close eye on the ratio of IT versus Bank Nifty. Bank Nifty last 1 month or so, it has been a big underperformer, and IT is now showing signs of bottoming out on the ratio at least. So we can see some follow through coming in. Last 2 days, we have seen IT stocks doing well. I think there is still more steam left, and we can see, Midcap is one space which we like. Something like, of course, Tata Elxsi, it will do well. From the large cap side, HCL Tech and Wipro would be our top bets.
Okay, definitely a relief rally coming in for the IT index today. Thanks, Pritesh, for joining in and taking us through all the stocks that you're tracking. Well, those are a couple of technical calls to keep on your radar, but let's go across to Manglam. He's here at our CNBC TV 18 F&O desk to tell us what he's tracking in the F&O space. Manglam, over to you.
Well, it's good going for the market so far. We have two of the more powerful engines of the index firing up ahead today, and this after a spate of underperformance. We have the Nifty Bank, which is doing well, and alongside that, we have the IT pack as well, which has been gaining over the last 2 trading sessions, continues to do well. And in doing so, they've also crossed past important technical levels or are nearing important technical levels. So if you look at it, the Nifty is above that 50-day moving average, a level that it hasn't crossed in a very long time. The Nifty Bank as well is very close to its 20-day moving average. So crossing and staying above that would be extremely crucial. And for the IT index, after 2 days of rally, it's crossed past its 50-day moving average, so hovering just above that. And all of this comes at a time when the India VIX is moderate. So that's positive news for the bulls. It's holding around that 10.68 mark, so that's contained. And we've seen some short covering in calls. So the 24,900 call comes up for you. The open interest out there is down. The premium is up. That's telling you that the shorts on those calls have been caught on the wrong side. The 25,000 put writers are fairly active in today's trading session. That tells you that maybe the street believes that the support for the market has moved higher, closer to 24,900 to 24,950, which was an earlier resistance mark. But still, we have seen writers at the 25,000 call fairly active, and that's largely because of a couple of factors. One, because of the rally that we've seen in the last 3-4 trading sessions, the put-call ratio has moved to 1.26, which is the higher end of the range. So maybe we might have come to the near-term, end of the higher end of this range. So that's something we'll watch out for. And the second part is 25,154. That is an important mark because the Nifty, touched that mark on August 21st when the Prime Minister made their speech after on the Independence Day, and thereafter we saw that rally. So from there we saw a big decline closer to that 24,500 mark. So this is an important mark to watch out for. A lot of stocks on our radar, IT stocks, everyone's been talking about that. Look at the long positions added on OFSS, Emphasis or Cyient, and the shorts who were caught on the wrong side in stocks like Tata Elxsi, Persistent Systems and KPIT, all of them covering their positions. So these stocks are higher on account of that.
Okay, Mangalam, thank you so much for that. So that's the update coming in the world of F&O. But on that note, we're going to slip into a very short break. And on the other side, we'll talk about commodities. Manisha Gupta will join in with us. And with her will be Sachin Jain of World Gold Council. Stay tuned.
Welcome back, and joining us on the show is Sachin Jain. He's MD, World Gold Council India, and joins us on the show. Sachin, hi, thank you so much for joining in. Before I go to anything else, it is have to be about the gold prices at all-time highs. What is your sense? I mean, I remember we spoke earlier and you had unofficially told me that, yes, you are bullish on gold and the prices could be much higher. With almost 40% done in this year, how are you looking at it?
Manisha, first and foremost, my big thanks for having me on your platform. And I always truly appreciate the transparency that you bring out to the audience. Now, to the price of gold, absolutely the center of the conversation. And if you go back a month, Manisha, not too long back, our indication was that the price of gold might get to between 5 to 10% by end of the year, higher than what it was at that level. And at that level of IIJS, which is beginning of August, we'd seen a bit of stability over the last 3-4 weeks. Now, what's transpired right now is that those levels have already been crossed, but we foresee that, will it go with the same rapid speed for the continue to the next month? We think it'll be a little doubtful. I think what it should sort of settle at this level, and some stability can be seen.
Sachin, where the gold prices are right now, and because we're getting into the Indian festival and wedding season demand, I did see the World Gold Council's campaign about the movement is gold, quite freshly done, nicely done, and done with the younger generation. We all do understand that India has bought gold for many years, but how have you seen the 20s and 30s now react to gold at these current levels?
Well, actually, Manisha, we've seen a lot of buoyancy in the gold in general, but if you see mid to long term, the success of our industry will only lie if we can have a strong relationship with the younger millennial. The reality is that on the 31st of December 2024, 72% of India is millennial or younger. And as an industry, we need to get ready. And hence, this campaign is focused on building the relationship of gold with the younger audience, not necessarily with only new trinket and light products. And we think there's a lot of scope in building relationship with a bit of traditional jewelry, a bit of more meaningfulness, a bit of new ways of wearing. And I think this campaign that you've just seen launch is just the beginning of about 8 different areas of life, and that will help connect the new age consumer in the way of wearability, a relationship with gold. As we move forward in the campaign, we will also open this campaign up for industry participation, and the wide industry can get the benefit. And make the concept is the moment is gold means essentially it's not just only the big occasions, but just the lighter moments of everyday happiness that can be celebrated by gold, and that's what we're trying to reflect on.
I know it still is early days, and the campaign is just very timely right now. But at these higher levels, would you say the budget buying that India does in sense of gold during this period of time perhaps could hit the volumes overall?
Well, I certainly think that we will see a drop in volume overall for sure. Now, would it be a very sort of significant number? I can't say right now, but certainly there'll be a drop. Having said that, the interest of let's say a value pair buyer that you mentioned, if the budget was 100 for investment in gold or buying gold, that has certainly gone up. The consumer is buying more and perhaps cutting on other areas because it's really at the center spot and center stage right now. The prices, the excitement, the confidence, and with this increase that we see now, and we really hope that price gets more stable. And I'm pretty buoyant that this coming season perhaps will be one of the strongest seasons that India has ever seen.
Sachin, what's your sense on the gold imports in this year? We've done almost, let's say, 75% of the year.
I think certainly there'll be a drop, Manisha, and a lot of increase that we've seen is on the recycling, not gold moving out of the gold, but gold getting converted into gold. And I think the numbers certainly will be down. To what percentage? I'll be able to comment on that in the coming couple of months.
Sachin, one quick final one. And what really is your sense on the kind of caratages and lightweights that we seem to be looking at right now? You think that would work more this season?
Well, I think there's been a more conversation, Manisha, that we should jump on 9 carat, 14 carat and all of that. However, when we talk to the consumers, and that's based on the consumer research, the movement of gold is based on the value that gold ascertains, and hence also the purity of gold. And I think it's always good to have the options more on lighter weight and all of that. But I think the fundamental of why gold is at the center stage is for the value perception, and hence the usage continues to be on the 22 carat, 18 carat, and also we've seen some introductions that have come out in the market of a pure 24 carat gold jewelry, which what we picked up from the consumers should be a great area of investment, because the consumer who's buying pure bullion will love to convert or get pure gold in the form of jewelry.
Okay, all right, Manisha, glittering gold and
all
shining
that glitters is gold.
And no Midas touch here. All right, thanks Manisha for that. So that's on gold and silver prices, which just continue to rocket. We need to take a short break on that note, but we'll get you more on the markets. We'll in fact connect with Naveen Jindal, chairman at Jindal Steel, once we're back. Stay tuned.
Welcome back. Let's talk about, the metal space now. Naveen Jindal, who's the chairman at Jindal Steel, says India should aim to produce nearly 500 million tons of steel by 2047 when it becomes a developed country. He tells Abhimanyu that there's nothing to worry even if the US tariffs on steel come by. Let's hear out that conversation.
We have to take our capacity to 500 million tons by 2047. So when India becomes a developed country, the per capita steel consumption is going to be around 300 kgs. So we will need more steel to be able to provide a better quality of life to the people. Better infrastructure, houses, cars. So all these things cannot be done without steel. So steel has a great future in India, and that's why steel industry is very, very enthused, and we are contributing our best to the making India of our dreams.
So speaking of overall greening in the steel sector, of course, there are initiatives which are already underway. But on the other hand, we are also looking at the possibility of carbon tax and EUDR, several legislations which are coming up in the Western world. We are also facing the prospect of tariffs in the developed world. What kind of concerns arise and what kind of opportunities exist according to you? And what kind of action can be initiated by the Indian government to help the steel industry tide over such concerns?
Okay, so you have raised a lot of important points. All the points that you raised are very, very important. So as far as tariffs are concerned, say if USA slapped 50% tariff on Indian steel, anyway we weren't exporting much steel to USA. Okay, we can export to the rest of the world, and we ourselves, we are a 1.4 billion strong population, right? So, and there are a lot of possibilities of increasing the steel consumption within the country. Then he spoke about decarbonizing. So decarbonizing, Government of India also is encouraging the steel industry to decarbonize, to reduce it, its carbon footprint. So it's a journey that we all have to go through. We cannot do it overnight, and not only India, all over the world, the steel companies are making efforts to achieve it. It's not something very easy, but in the times to come, as technologies develop, we will also achieve that. And as far as opportunities in steel industry, I think steel is very, very, steel has a very bright future in India. And amongst all the large economies, or all the large steel producing countries, say China has a negative growth rate, and India is growing at in double digits. So India is the only bright place for steel, I would say, in the world, and we are confident in the next 2 decades also it will continue to be so.
So my final question to you, the minister spoke about new opportunities in sectors like shipbuilding. What kind of domestic value addition and capacity addition is being looked at to ensure that the steel industry can thrive and possibly ensure that a higher capacity leads to more output and not idle capacity?
No, of course, there are lots of opportunities, like the Honorable Minister spoke about shipbuilding, that India must, there is a worldwide, there is a shortage of ships, there is huge demand for ships, and shipbuilding is very labor intensive also. So there's a lot of potential for making more ships in India, and that way we because we already do make high quality steel that is required for shipbuilding. So that is one area, and there can be many other areas also, like in buildings also. He spoke a lot about that if we have more and more prefabricated, we'll be able to do the construction, whether it's of homes, high-rise buildings, office buildings, etc., much faster and in a much more environment-friendly manner.
Welcome back to Halftime Report. Now, moving on to an exclusive behind the scenes at the National Stock Exchange. In conversation with CNBC TV 18, NSE's Ashish Kumar Chauhan looks back at how in 2014 India had just 1.67 crore investors. Fast forward to today, that number is nearly 11.8 crores, with a quarter of them that are women. Market cap is up 7 times in that period, and here's a slice of a conversation that he's had with CNBC TV 18.
When Mr. Modi took over in 2014, because that's the time I still remember some numbers, India had 1.67 crore investors.
Wow.
Today, India has 11.8 crore investors, unique.
Right.
Both.
Right.
Because those are the NSE numbers, right?
Right.
11.8 crore investors, 25% women.
Right.
That's 8.5 crore or 9 crore households.
Right.
And that's almost 25% of India's households now.
Right.
Right. And that time India's market capitalization when he took over was, I think, 67 lakh crore.
Right.
Today is 450 lakh crore, right?
Right.
So both have gone up 7 times.
Correct.
Right. And that tells you how much of India has become middle class.
Right.
Because you come to the markets to invest,
Yeah.
and there is a perception that has been created that India, most Indians overtrade.
Right.
That is not true, because 11.8 crore investors, once you have invested even in one share,
Right.
you don't trade every day. You can trade
Right.
once
Right.
in 10 years and still you are
Right.
an investor.
Right.
But out of that, around 25 lakh, maximum 30 lakh people trade in derivatives.
Right. Right.
And so literally 2% people trade in derivatives.
Right.
And out of them also, most of the people, almost 85, 90% people,
Also trade in
they trade in
equities as well,
and
cash as well.
Yeah, so
Yeah.
it's like they're buying insurance, right? And so for me, lots and lots of misperceptions get created.
Okay, and NSE's Ashish Kumar Chauhan also takes our colleague Prashant Nair through NSE's National Operations Center. Take a look.
This place is what we call business knock,
Right.
where all the companies that get listed or IPOs that happen or daily price bands of companies, the new derivatives, contracts getting introduced in equities or currencies or commodities or in bonds, all that thing starts being set up. Even sometimes we have to set up a new broker or sometimes we have to actually stop a broker from functioning because of the SEBI regulations or orders, or sometimes even specific investors are not allowed to trade by some of the court orders or otherwise. So everything happens here. But during the market hours, especially between 9:15 and 3:30, this people who are working here have to do nothing actually. They have to just monitor, and it's like an autopilot. If they are doing something, then there's something has gone wrong, right? So that is where physical manual sort of override is required. Otherwise, their work happens 24/7 by 365 days.
Right.
During the day, they are not supposed to do anything, but end of the day, they have to create files, download to all brokers, then they have to prepare for the next day all the new contracts coming in, the price bands, other things, 2%, 5%, ASM, GSM.
The much awaited Bhav copy comes from here? Or?
Absolutely.
Right, you can catch excerpts of this conversation through the course of the day and the entire conversation at 5:30 p.m. And all green screen at the top of your heads. You can have the Nifty Bank, Midcap, Sensex, all of them doing well, just below that 25,000 mark for the frontline index. We leave you on a happy note at 1 on Halftime Report. The team of Business Lunch takes the markets forward after this short break.
A Trump-Modi exchange on continuing US-India trade talks and a conversation soon lifts sentiments. Stocks of exporters rally, IT and industrials also clock gains, while auto and consumer durables see some profit booking.
Urban Company's 1900 crore rupees IPO gets fully subscribed on day one. CEO Abhiraj Bhal says, tells CNBC TV18 the company aims to continue growing at the same clip and it is nearing break-even.
Stocks of exporters and shrimps and other marine products rally after the Commerce Ministry says that the European Union will open up its markets further, leading to an immediate 20% increase in exports. The thaw in India-US relations also rubs off on sentiments.
Vodafone Idea has knocked on the Supreme Court's door again, this time against an additional AGR demand raised by Department of Telecommunications. The telco is seeking quashing of the demand and a review of the AGR math.
Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormus Fatakia. With me as always is Vamakshi Dhoria. Vamakshi, good afternoon. It's a Super 6 today for the Bulls. It's a 6th day of gains, of course, but well, 25,000 still proving to be a bit of a barrier. The Bulls would definitely be hoping that the final couple of hours we do manage to go past it. We did so intraday, but we couldn't sustain above that.
Absolutely, Hormaz. And you know that 25,000 mark has been a very, it's been a psychological barrier. You know, so far we've seen the index trying to cross that mark on multiple occasions, but you know, failing to sustain on that. But no doubt today is a good day. It's a century as far as the Nifty is concerned, and we've got all batsmen on the front foot. You know, take a look at some of the stocks that are moving around in trade. There's a lot actually. Take a look at some of the stocks that are in focus on the back of some news flow. Take a look at Coastal Corp. That stock is up almost 20%. Apex Frozen is one such other counter that is flying high in trade. Avanti Feeds also. All of these shrimp stocks in focus. Ria will tell us why shortly. But apart from that, a lot of these textile names are also jumping around in trade. Indo Count is up almost 20%. So is Wellspun Living, which is up almost 8%. So you know, it's a good-looking screen for now, Hormaz.
Shrimps and textiles, the two buzzwords of the day, but the other one, of course, is Oracle Financial. The stock is up 9%, and that is after its parent company reported results, and it was a very strong commentary as well coming in from the management. In fact, the parent company shares were up 28% in extended trading, that of Oracle Corp. So if those gains sustain in today's regular trading session when the markets open later this evening, it will be the biggest single day gain for Oracle Corporation since 1999. So that has had a rub off on Oracle Financial. Of course, some of the other movers on the downside are some of these names that have surged over Monday and Tuesday and are witnessing some profit booking today. Good Luck India is one of them. That's down 10%. Salazar Techno is down 7%. Precision Camsafts is down 7%. JTKT India 2 is down 7% in today's session. And just before we move on, pull up Car Trade Technologies and you see the recovery that the stock has seen intraday. After that downgrade that came in from JM Financial, the stock was down as much as 17%, the biggest intraday fall on record for the stock. But since then, it's Car Trade Technologies that I was talking about. The stock has recovered almost 10% from the lows of the day and is now currently trading lower by just around 7% is a Car Trade Technology. So almost a 300 rupee recovery from the day's low, which is in fact below JM Financial's price target. But the big story of the morning, US President Donald Trump wrote on his Truth Social that India and US are continuing negotiations to address the trade barriers between the two countries, marking the second such remark he has made over the last few days with regards to his ties with India. He also added that he looks forward to speaking to his good friend, Prime Minister Narendra Modi, in the upcoming weeks, and that there will be no difficulty in arriving at a successful conclusion for both nations. PM Modi reciprocated warmly, saying that India and the US are close and natural partners and close friends as well.
Well, almost absolutely. So, you know, some bit of at least thawing of relations out there. But, you know, let's go across to Parikshit, who is here for the latest developments on this front. Parikshit?
Well, very important developments taking place between India and the United States. Donald Trump has said that He is looking forward to speaking to Prime Minister Modi in the next couple of weeks, and the trade negotiations between the two countries are continuing. The Prime Minister once again reciprocating that sentiment and said that he hopes that the trade negotiations between the two countries will be concluded soon. Now, we've been told by highly informed sources that this is a clear indicator to officials on both sides to fast-track trade negotiations, and essentially the way to sum up this is that the trade negotiations are back on track and they have a positive trajectory. Officials from both sides will now make an effort to hold early meetings and conclude this deal as early as possible. We've been told that talks are on to have delegations of the two countries meet at a very early date in the next few weeks, and this could be an Indian team going to the US or a US team coming to India. So those details are being worked out, but all effort will be made to resolve the differences and bring the tariffs to a level that are acceptable to both countries.
Parikshit, thank you for that very important update there. Now, on the flip side, CNBC International has confirmed that US President Donald Trump told European officials he's willing to impose sweeping new tariffs on India and China, and asked the EU to hit both these countries with tariffs of up to 100% to push Russian President Vladimir Putin to the negotiating table with regards to the war in Ukraine. But only if, and he's promised to do that only if the European nations do so. Other potential measures to bring Vladimir Putin back to the negotiating table include further sanctions on Russia's shadow fleet of oil tankers, as well as restrictions on its banks, financial sectors and major oil companies.
Well, absolutely. We'll continue to track those developments, Hormaz. But, take a quick look at the markets. Nifty IT index is managing to hold up in the green. It's up for the second consecutive day. Yesterday, of course, it was Infosys that was leading the gains. But today we do have OFSS, which is leading the pack, up almost 2.6%. The PSU banks, which had not been participating at all so far, are also, rising in trade. And, of course, we have a lot of export-facing stocks in focus today, with, of course, India and US trade talks back on track. There are some stocks, and we have Sudarshan joining in to tell us more on this. Sudarshan?
So on the back of positive comment coming in from both US President Donald Trump and Prime Minister Modi, we are seeing a big move in export-facing names. So I'll start with the companies from the auto sector. First name is Bharat Forge. So day before yesterday, stock was up sharply around 6 to 7%, but yesterday it was down 2%. Again today, at one point it was up almost 4 to 5%. Currently also it's trading with a gain of 2%, and there is a reason of it, because in 2025 the stock has underperformed its peers. In 2025 it's down 6%, and today stock has crossed 100 moving average, so keep an eye on that. Second one is Samvardhana Motherson. So stock is near 52-week high. It's also one of the export-facing auto stocks, and recently over the weekend company had unveiled 5-year plan, so this also will be on track. From IT Pack, so in the morning I had talked about Emphasis and KPI Technologies. So now LTI-Mindtree. So today's stock has crossed 200-day moving average and currently up almost 3 to 4%. And next one is Cyan. So in 2025, it's also one of the major underperformers from the IT pack, and today it has crossed 50-day moving average. And in 2025, the stock is down 30%, the most amongst all the mid-cap IT names. From Pharma pack, two stocks that I have taken have huge exposure to US segment. So first one is Dr. Reddy's, which is down 6% in 2025, and US contributes more than 50% to its total revenue. So if any positive commentary that comes from US might be positive for Dr. Reddy's, and it's the same for Aurobindo, which is down 20% in 2025, and from US its contribution is around 49% to total revenue. So keep an eye on all these names. These stocks might be in focus going forward as well if we hear any positive commentary coming from the US.
Oh, absolutely. A lot of such names on our radar. Sudarshan, thank you for that update. And at the All India Management Association's 52nd National Convention, Chief Economic Advisor V. Anantha Nageshwaran delivered his keynote address during the plenary session. Listen to what he had to say.
When we talk of reforms, it is changes that are required both on the part of the government and changes that are required on the part of the private sector as well. And both sets of reforms will be essential to drive growth forward. So, first of all, we know that the situation that we face in the world today, and not just particularly with relevance to India, but generally, uncertainty is the only at the moment, whether it is geopolitics or geoeconomics, trade, or any other matter that you touch, or for that matter, internal to many countries, their respective fiscal situations, and so on. Having said that, this morning, I'm sure we all have woken up to seeing some very hopeful, comments made by the American president and a positive response from the Honorable Prime Minister as well. So in this uncertainty, we have quite a few silver linings. Normally, all countries first calculate economic activity in nominal terms and then deflate it to get the real number. In India, for quarterly GDP estimates, at least 55% of the GDP estimate components are estimated first in real terms. The deflator is then superimposed on that to get the nominal values. So it's the other way around for at least 55%. So it is not as if nominal number of 8.8 is calculated, and because the deflator is 1% instead of 2 or 3%, we got an exaggerated 7.8%. That is not true. So there is real activity, economic activity, that is driving this momentum, and not just the price levels being on the lower side.
Well, all right. On that note, let's slip into a very short break. More news and updates follow on the other side, so don't go anywhere. Welcome back. You're watching Business Lunch on CNBC TV 18. Well, Indian seafood exporters are surging in trade, as I was highlighting earlier, after the European Union approved 102 companies for exports. Ria is here with more details on this. Ria, tell us why all of these counters are surging in trade.
Well, yes, the European Union has approved 102 new fishery establishments for exports to the European Union, and this move is expected to add 16% additional Indian export establishments in terms of trade volume. The Commerce Ministry has also anticipated an immediate rise of over 20% in trade volumes. And remember, India's marine exports to the European Union back in FY24 stood at around $1.1 billion. Now, the Commerce Ministry has also highlighted that India had been engaging with its EU counterparts over the past 3 months to address sanitary and phytosanitary issues, and following some technical level meetings and negotiations, all the establishments that were previously delisted due to contamination concerns have now been reinstated. So this is a big positive for the entire industry as a whole. Now, the Commerce Ministry has also highlighted that this move is a positive signal for the 13th round of ongoing FTA negotiations between the India and the European Union, and the listing of these units by the EU was a long pending demand by India. Marine products have also recently been impacted by the 50% tariff rate imposed by the US on India. And remember, US is the largest export market for marine products from India, followed by the European Union. Now, in terms of exposure to the European Union for listed Indian players, the first one is Avanti Feeds. 17.4% of their shrimp feed revenue in FY25 came from Europe, and the company has said that they are already working on expanding their presence in non-US markets, including the European Union. For Apex Frozen Foods, around 39% of the total revenue of the company in FY25 came from the European Union. This is up from 26% in the previous financial year, and they've also seen robust demand from the European Union in FY25, and they continue to strengthen their presence in the markets. Some other listed players that also supply to the European Union include Coastal Corporation, Waterbase, as well as IFB Agro, and on the back of this, all of these stocks are performing well in today's trading session.
Indeed, double-digit gains for most of these names. Coastal Corp up 20, Avanti Feeds up 13, Apex Frozen up 20. Doing very well for themselves are these seafood exporters. Now, domestic services provider Urban Company's IPO opened for subscription today, and in only a few hours since the issue opened, it is already fully subscribed. The management joined us earlier today, and this is what they had to say.
We have improved our revenue from operations, which was about 437.5 crores in FY22 to about 1144.5 crores in FY25. And if you look at that 707 crores of incremental revenue that we have added to the top line, we've seen a translation of about 385 crores of that moving to the adjusted EBITDA. Broadly speaking, the company has turned a corner and is sort of at a break-even stage. It is very much our ambition to continue to grow at the same clip that we have been growing for the last few years. I would say it's very important for us to continue to grow well and make sure that that growth happens at the back of profitability. We have to continue to grow it with further profitability, whether we enter into newer cities or newer categories. That margin expansion has to play out there.
Well, meanwhile, the family feud at the Sona Comstar Group following Sanjay Kapoor's demise has only gotten murkier. Ashmit here has the latest in this development. What is happening with the inheritance saga, which involves Sanjay Kapoor's assets worth almost 30,000 crores? Ashmit?
Well, just to set the context, it was Karisma Kapoor's children with Sanjay Kapoor that had filed this petition before the Delhi High Court. In that petition, Priya Kapoor, the widow of Sanjay Kapoor, as well as Rani Kapoor, the mother of Sanjay Kapoor, were also named as parties. And before the Delhi High Court today, it became a three-way contest. Competing claims being made by Karisma Kapoor's children, disputed by Priya Kapoor, being disputed in turn by Rani Kapoor, the mother. I'll take you through them one by one. As far as Karisma Kapoor's children are concerned, they're claiming their status as Class 1 as. They're claiming, each of them is claiming 1/5 of the entire assets of Sanjay Kapoor. Their claim essentially is that the will that is being forwarded, that is being claimed by Priya Kapoor, has been forged, has been fabricated, and that it denies them any stake to the assets, any entitlement to the assets of Sanjay Kapoor. So to that end, they are seeking some form of interim protection that the assets of Sanjay Kapoor are not frittered away. That's as far as Karisma Kapoor's children are concerned. Priya Kapoor, the widow of Sanjay Kapoor, has clarified her position that there is a very neat trail of word-stamped word files, emails, WhatsApp messages that clearly indicate that there is in fact a genuine authenticity as far as this will is concerned. And then going on to say that it's not like Karisma Kapoor's children are being left on the road. In fact, submitting before the Delhi High Court that just 5 days prior to the Delhi High Court suit being filed, just 5 days prior to that, assets worth 1,900 crore rupees were transferred in favor of the children on account of the family trust. Now, in the middle of all of this, Rani Kapoor was also present through her counsel. Her counsel argued that this is an extremely unfortunate position as far as the mother is concerned. She's claiming entitlement to assets worth 10,000 crore rupees. She's saying the will is excluding her, the family trust is excluding her, that she's not been given any stake as far as the assets of her very own son is concerned, that this is her family's legacy and that she's being denied her legacy, she's being denied her fair share of the assets. So an ugly dispute this before the Delhi High Court. The High Court for now has not passed any interim directions. This matter has now been posted to October 9th, and that's when the High Court will look to pass, if at all, any directions on whether or not any interim protection is required, any interim assets orders are required for securing assets of Sanjay Kapoor. Back to you.
Interesting developments there, Ashmit. Thank you for joining in. Just before we take that break, the 120, 130 point gains on the index are now down to just 80 points. So slightly off the highs of the day is where the Nifty stands. HDFC Bank is now at the lowest point of the day, as is RBL Bank. So two of those names there. HDFC Bank now has slipped into the red. RBL Bank has extended its losses at the lowest point of the day, 3.25% lower on that stock as well. Take a short break. Back with more on the other side. Welcome back. Now, Nepal's parliament building, Supreme Court and residences of several senior leaders were set ablaze on Tuesday as anti-government protests spiraled out of control. CNN News 18's Anand Tiwari is at the Supreme Court in Kathmandu with an update of the situation as of today.
पूरा काठमांडू इस वक्त आरबी के हवाले है और न्यूज़ 18 इंडिया की टीम पर भी हमला हुआ, हमारा आई कार्ड छीन लिया गया, लेकिन उसके बाद अब हम मोबाइल से ये कवरेज आपको दिखा रहे हैं। हमारा कैमरा अभी काम नहीं कर रहा है। इस वक्त हम सुप्रीम कोर्ट पर हैं और ये सुप्रीम कोर्ट की तस्वीरें हैं, आप देख सकते हैं सुप्रीम कोर्ट में यहाँ पर देख सकते हैं ये पूरा सुप्रीम कोर्ट है जो इस पर यहाँ पे प्रदर्शनकारी पहुँच गए थे और यहाँ पर पूरा सुप्रीम कोर्ट को आग के हवाले कर दिया गया। यहाँ पे आप देख सकते हैं यहाँ पे सैकड़ों बाइकें थी जो पूरी तरह से जल चुकी हैं। ये देखिए ये बाइकें जो है वो जली हुई आपको यहाँ पे नज़र आ रही हैं। ये पूरा देखिए यहाँ पर पूरा धुएं का गुबार आपको नज़र आ रहा है। ये सुप्रीम कोर्ट है नेपाल का जो पूरी तरह से जल गया है, जिस तरह से लोग काफ़ी नाराज़ थे यहाँ की सरकार थे और उन्होंने सुप्रीम कोर्ट को भी निशाना बनाए। देखिए यहाँ पर अभी दमकल विभाग की टीमें पहुँची हुई हैं, जितनी भी गाड़ियाँ थी उन सबको आग के हवाले कर दिया गया है। और देखिए ये पूरा सुप्रीम कोर्ट का प्रीमाइसेस है और ये देखिए पूरे शीशे तोड़ दिए गए हैं। ऊपर सर्वोच्च न्यायालय लिखा हुआ है, देखिए आप देख सकते हैं सर्वोच्च न्यायालय सुप्रीम कोर्ट। देखिए ये यहाँ पर नेपाल के पुलिस के जवान भी यहाँ पर मौजूद हैं। आप देखिए फायर ब्रिगेड की गाड़ियाँ, देखिए कितनी गाड़ियाँ जो है यहाँ पर, लोग भी जो है यहाँ के सारी लोग जो है वो यहाँ पर मदद आगे कर रहे हैं। और देखिए ये पूरा जितनी बाइक में वाहन थे इन सबको जो है वो आपके हवाले कर दिया गया।
Thank you so much for bringing us the latest developments that are happening in Nepal. But, back home, the Nifty is back. There's still some momentum going on, 90-point uptick for the Nifty. The Midcap index also doing quite well. It's in fact managing to outperform what the Nifty is doing. So all's well here. Don't go anywhere. That's a wrap on this edition of Business Lunch because Midcap Radar will come up next.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Eicher. Where we started above the 25,000 mark. We continued on those levels as well, but now slightly off from the highs of the day. We are at the 24,966 mark. But yes, nothing to complain so much because there has been some development as far as US-India tariff talks are concerned. We'll see which way things go. But for now, in the green, but off the highs.
In the green of the highs. So the trade truce is something that the street is looking forward to, and that's clearly keeping the markets quite buoyant, and the broader end of the market is doing much better compared to the benchmark indices. Well, a lot lined up on the show, some important corporate conversations as well. Let's start off with the top headlines. A Trump and Modi exchange on continuing US-India trade talks lift market sentiment. IT and PSU banks clock gains, while auto and consumer durables track. Midcaps gain.
As India-US trade talks get back on track, export-facing stocks like Bharat Forge and Vardhana Motherson sign surge. Stocks gain between 2 to 4%.
Stocks of exporters of shrimps and other marine products rally after the Commerce Ministry says EU will open up its market further, leading to an immediate 20% increase in exports. CLFMA India tells CNBC TV 18 that if exports open up to EU, there is an opportunity of $1 billion.
Urban Company's 1,900 crore rupee IPO gets fully subscribed on day one. CEO Abhiraj Bhal tells CNBC TV 18 the company aims to continue growing at the same clip and it is nearing break-even.
Good luck India tanks in trade after it cuts its FY26 guidance. The management tells CNBC TV 18 that they earlier expected 20% top-line growth, but now see only 12% amid uncertainties. Well, like we just mentioned, a couple of stocks that are making all of the moves. Look at some of the auto ancillary names. Bharat Forge, Motherson Sumi, some of the stocks that are doing very well in the session. Even a name like Vikram Solar came out with a strong set of numbers. That particular stock too doing quite well. And the entire mid-cap IT space. So what actually transpired overnight was that Oracle Financial, the US-listed entity, actually went ahead and gave a very strong guidance as far as the rest of the year is concerned. The Indian-listed entity, which is OFSS, that has surged in trade, taking along with it some of the other names, some of the mid-cap IT names, and clearly the sector today and the number of stocks from the mid-cap IT space are doing very well. But Sonal has hopped across to the wall. This is our special segment, Mid-Cap Movers. Sonal is by the wall to take us through the mid-caps that are moving around in the session.
Oh yes, so I thought let me talk about some stocks which are bucking the trend in terms of movers, and let me start with Indocount. Of course, we've been speaking about the textile stocks being in focus. This stock is up around 20% as we speak. MIC Electronics, this particular one has been buzzing off late, and that continues to be the case today as well, 7.5% higher there. Himadri Chemicals, NMDC Steel and Enviro Infra, an interesting uptick there that has come by, so that stock is up around 4.5%. On the losing side, though, we do have some names which had been buzzing off late, so they are seeing some profit booking and on the back of some news updates as well. So you have Precision Camshafts. Now remember that stock had been buzzing on large volumes in last couple of trading sessions, so there is some profit booking that has come by there. Lakshmi Organic is the other one which is down 2.5%. Swiggy too not doing so well, so 3% gone there. So I thought we'll talk about some stocks which have not been spoken about since morning, and these are some of them on my radar today.
Well, thank you so much for joining us and telling us about some of the stocks that are seeing some negative developments as well, and also some selling pressure emerge. We'll now slip into a short break. We'll get you more on the market, stock-specific action, and important corporate conversations on the other side. Stay tuned.
At this point in time, it seems to have emerged as a three-horse race.
Every one of us probably has grown up on a Parle or a Cadbury or a Surf, right? And then you realize that you are one amongst them.
You're the Parle and Cadbury
of
this, of this
just
generation.
Swiggy is a verb in many parlances.
What is the dream 5-10 years out for Swiggy and for Instamart?
100 million people coming to our platform and transacting 15 times.
Now, what would you consider as the big pain points?
There are a lot of flirters in our quick commerce business.
What are they flirting with you for?
They come for Rakhi, right? I think compared
and
to
then forget about you.
Not forget. They still come back, but they have not transferred all of their buying onto Instamart.
Welcome back to Midcap Radar. Well, without wasting any time, Inox Wind is the first management on our radar. We've identified 3 key talking points with the management. First up, we want to understand what will be the impact of the GST reduction of solar value chain. Secondly, the company has had the confidence to go ahead and upgrade its EBITDA margin guidance for FY26. And we also want to understand the impact of the conclusion of the rights issue on the company's balance sheet. Devan Jain, who's the Executive Director at the Inox GFL Group, joins us now to discuss more. First up, Devansh, thank you so much for joining us. It's been a while. Q1 concluded a while ago, but we believe you were in the silent period due to the ongoing rights issue. Well, first up, before we get to that, we want to understand from you FY27 execution target, FY26 execution target, and what made you upgrade the EBITDA margin guidance? Devansh, I believe you're on mute.
Hi, Vivek. Can you hear me?
Yes, we can.
Good to see you. It's been a while. Was prevented by the bankers from getting on television, given our ongoing rights issue. But coming to your point, I think our guidances have been fairly clear. We've guided for about 1,200 megawatts in FY26 and 2 gigawatt plus for FY27. For 26, that's a 70% growth year on year. And for 27, that's a 67% growth on year. As you know, we've ramped up operations tremendously over the past 2 years since the turnaround of the entire sector. And I think we sit on a very, very solid order book of about 3.2 gigawatts at this point in time, which gave us the confidence to further upgrade our EBITDA margin guidances. We had achieved for the full year last year about 21%. We had guided for about 17 to 18%. And what we've done now recently, we've upgraded guidances to 18 to 19% for the full financial year FY26. We've taken a couple of actions over the course of this year. We've operationalized a new nacelle plant in Gujarat. We've started our own crane operations, and we've also started our own transformer manufacturing operations. Things put together give us the confidence to guidances which we're setting out.
All right. So Devansh, you have things in place or processes in place to achieve the guidance that you've upgraded already. The new kicker that has come in has been in terms of GST cut that we've seen in the renewable space. Can you explain to us what the impact could be on the entire supply chain, and if that in turn benefits your group overall as well?
I'm very thankful to Modi ji and Nirmala ji. I think it's a game-changing move, which has been done ahead of schedule. Having said that, what that does is basically reduces the cost of energy. So power was not part of GST, and effectively we had no pass-through mechanism. Effectively, by reducing GST from 12% to 5% on the goods being supplied, we've cut down cost of renewable energy by broadly 5 to 6%. And I think everybody's capital costs are going to reduce to that extent. Obviously, for a company like Inox Wind or Inox Solar, we don't increase profitability, but it enhances execution, enhances faster or larger supplies of capital goods in the market. From a group perspective, given we're setting up a very, very large renewable energy IPP arm, it reduces capital costs for us drastically, and which we'll pass on in terms of reduced cost of energy or faster and larger execution targets.
Right. Devansh, you spoke about capital costs. First thing what we want to understand is how has debt moved post conclusion of the rights issue? What is the total quantum of the rights issue? We understand that there was a certain proportion of debt that was owed to the promoter entity that had infused capital earlier. So has that been extinguished? And we also believe there have been a couple of rating upgrades. So what will be the cost of capital for you going forward?
Look, so first and foremost, with respect to the rating upgrade, we've just been upgraded to AA- for our long-term banking facilities. Our short-term facilities are A1, which are the highest short-term ratings. And I think AA- reflects very, very strong financial profile, which will enable us to further reduce our financing costs, BC charges, LC charges, BG charges. Obviously enhances confidence across investors, across asset owners, investors, bankers, and so on and so forth. I think what we had done is in our rights issue, which was 1,250 crores, about 560 crores was used to redeem the non-convertible redeemable preference shares of the promoters. But the promoters participated 100% in the rights issue. So the 560 went to the promoters, but the promoters reinvested that 560 in the rights issue. So it was kind of cancelled out each other's, but it strengthened the balance sheet of Inox Wind tremendously, because earlier that was debt which goes out, and that 560 has now become equity on the books of our balance sheet. Plus we got an incremental 650 odd crores across various other investors. So our liquidity at Inox Wind has become very, very strong. We're obviously a very large net cash company at this point in time. And I mean, I think we have the confidence, the mind and the financial wherewithals now to not just scale up manifold, which we've guided for, but also look at other opportunities.
Oh, interesting. A lot of transactions there to get to that net cash levels that the group has reached. Devansh, I wanted to understand how are demand trends panning out now in wind power? How's the bidding? What would the IPP demand trends be? And the outlook here as well.
Look, so maybe on the outlook side, we would expect, the Indian market to be about 5 to 6 gigawatts this year, moving to about 7 to 8 gigawatts next year, and then possibly stabilizing at about.
Devansh, I think we've lost connection.
Yes, it looks like we are not able to hear Devansh currently. We'll try to patch that connection back, but for now we'll do one thing. We'll slip into a short break, and when we come back, we will talk about more in terms of markets and stock-specific action as well. So stay tuned for that. Welcome back. You're still tuned into Midcap Radar. Let's talk about the real estate sector now. There's an interesting report which has come by from Knight Frank. Redevelopment projects are on the rise in Mumbai, and in their latest report, they indicate that these projects could unlock nearly 326.8 acres of potential land area in the city. To discuss more, Ghulam Zia from Knight Frank is joining us now. Ghulam, good afternoon. Thank you so much for joining in. Well, we know now Mumbai cannot expand horizontally. It has to be developed vertically, and the only way to do that is redevelop the entire city now. I wanted to understand, we've been seeing this from 2020, the big surge in redevelopment. Which phase of that cycle are we in? Do you think we've peaked out? Because there have been some conversations that indicated that maybe there have been some issues that builders are facing in terms of bidding very aggressively, and that is something which could impact the market overall in terms of growth. What's your take?
Well, absolutely bang on. The point that you made is exactly what we are trying to convey through this report to the masses, that the situation is a little scary. We are reaching a position where the promises made by developers to the existing society tenements have reached a certain situation where, if at all, market has to turn, because we're talking real estate is a cyclical scenario. So we already had 3 to 4 odd years of an up cycle already behind us. So I don't know where will we hit that peak point, after which there would be a slippery wicket. And if at all in next times to come, a year or two, please understand, once you sign a DA, you take at least 4 years to 4.5 years to finish the project. So if at all there is any change in the cycle, then the feasibility of the whole project can go for a toss, and we are reaching that scary situation. That's what we are trying to convey through our report today.
Right. Ghulam, so you're giving, moderating expectations as far as both buyers as well as developers are concerned. We want to understand, developers, number one, they give increased carpet area. Number two, they actually pay for rent, especially when it comes to redevelopment. So overall, P&L, what is it that they can actually expect to make from the projects? They do increase the number of flats, but what kind of margins are they working with?
See, first of all, to put it across, it's, the biggest aspect that they're giving. The big cost is to take care of the tenements, to give them the additional area that you spoke about. They also give a very large corpus that is even bigger than the rents that you're talking about. So there's a corpus for these guys to maintain their societies in future. So extra area, corpus, rent, these are all costs that go towards the existing tenements. And of course, creating the supply, overall cost of construction, approvals, and this and that. So net, on an average, we are looking at about 20% as the return for the developer in this whole game.
Okay, so, from the P&L understanding, of course, costs are higher. But at the end of the day, is it capital efficient generally, Ghulam? Because when we had conversations, a lot of listed builders are actually looking at redevelopment as a big opportunity. What do you have to say about that? Is this something that the stock market should be worried about that as well if they expand that portfolio?
Well, first of all, look at it this way. The big players or the developers that we're talking about have a bottom line, a benchmark below which they don't touch. So typically they're talking about projects which are giving them minimum 1,000 crore of a top line is what they enter into. But then otherwise, overall, it's such a large market. There are a few players who are catering only to this segment. Now, your problem, like if I talk about a problem from the tenement perspective, it's not really that huge a cost that you require to spend over here compared to a greenfield project. For buying a land, you're paying huge amount of money upfront. But in case of a society, because you're giving them right now only the corpus you are setting aside and rents is what you're giving them. So you actually have much easier cash flow to start with, because your initial cash flows are much lesser compared to buying a land and developing it. So net, this is a great avenue. This is a good way for any developer to participate into. And obviously with the listed players also coming in, we do see a good a P&L or a new business emerging. However, as I said, the challenge is it's become so competitive that if you're promising moon to the developers, the chances that you will fall flat on your face is higher. So right now, the need of the hour is to leave something on the table, leave some cushion. If at all market turns, you are well taken care of.
So is it, from a consumer viewpoint, if somebody is looking at their building getting redeveloped, so they should be cautious as well, according to you?
Indeed. Look at it this way. Today, the moment you are giving your keys to the developer and developer has demolished your building, you are at his whims and fancies, at his completely going by what he's doing. So tomorrow, if at all markets turn and he has promised you a very huge promises are made, the developer may run away. And in that case, you'll be left high and dry because all you know, the next year's rental may not come. They normally give you every year's rental en bulk. So the next year's rental may not come and your house is gone. So extremely scary situation for the tenement owners who are giving their keys to the developers to be very sure that it's a very, very credible developer they are tying up with. Otherwise, it's a very scary situation.
Understood that. Ghulam, would you agree? There's a lot of noise, especially when it comes to social media, about select markets of the country, especially when you look at the NCR region. Prices are moderating. Most of the flats have been bought by people not really looking to live, but rather, investors. And also South Indian market. Do you think there we've reached an oversupply situation?
Well, first of all, let's talk. We are sitting in Mumbai. Let me talk about Mumbai. At least Mumbai is not showing any such sign. Month on month, we've been watching, and even the August data is barely a percentage or two less than YOY last year's August. July was the same. June was better. And YTD in Mumbai, at least, we are still 11% over the last year's numbers. So net, Mumbai is defying all those talks that you're talking about. But Delhi is definitely gone slower, and Bengaluru. Hyderabad and Chennai are doing better. In fact, Pune is doing exceptionally well. So Mumbai and Pune are the two markets which are actually defying those the points that you're raising. Otherwise, yes, Delhi is a market to be worried about, and so is Bengaluru.
Ghulam, just to follow up on that, because I was having conversations with some other analysts as well, the indication was because of the fear around IT sector, there's some pressure coming in Hyderabad and Bengaluru both, but you are suggesting otherwise. Is that pressure coming only in the unlisted space and the bigger players are able to continue their business as is, especially in Hyderabad and Bengaluru?
Well, as I said, Bengaluru is facing the heat right now. Bengaluru is going through some slowdown. Hyderabad is not yet. Maybe in times to come, the situation may change in Hyderabad. Chennai was always a smaller market, so it continued to perform the way it was, in fact, doing better than what it was doing earlier. Pune is, of course, another IT market, but Pune is not entirely depending on IT. It is also largely manufacturing, automobile and pharma, etc. So Pune is a different market, but only IT-dependent markets. You're talking about Bangalore is showing signs of cracks already. Hyderabad has been doing well, but we need to wait and watch.
Okay, thank you so much, Ghulam, for joining us, giving us a sense of how exactly the redevelopment market in Mumbai is going and giving us a slightly cautious view, especially when it comes to consumers in terms of giving up their buildings in hopes of a bigger space. Well, coming back to the markets, have a look at the Midcap index, continues to move quite high, 0.8% higher. A couple of stocks on the radar. Have a look at credit card player, SBI Cards. That particular stock has moved near the day's highest point, doing quite well throughout the trading session. That's doing quite well. The other one on the radar is Fortis, especially in the last half hour. That particular stock has moved quite high. And the entire insurance pack, after a couple of sessions of significant weakness today, has seen a bit of an up move. Names like HDFC Life, SBI Life, those stocks are doing quite well in the session today. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
Hello, good afternoon and welcome to your stocks on CNBC TV 18, coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. And markets as of now off the day's highest point. We're seeing around a level coming in for the Nifty is 24,950 approximately. So 70 points off the day's highest point is what we're seeing for the Nifty 50. But still holding on to gains today. 0.3 to 0.4% of gain is what the Nifty is managing to hold on to. Let's also look at the Nifty Bank. That's supporting a bit of up move today coming in for the Nifty as well. So Nifty Bank, that's up 0.6% as well. That's doing well. Apart from that, Nifty IT, second consecutive day of gains coming in for Nifty IT and 2.5% gain. Obviously, the top sectoral gainer, that is Nifty IT. Other than that, let's pull up the advance decline ratio. Today, that's clearly in the favor of advances versus declines that we were seeing. So, advances are at around 1,700 odd stocks are advancing, while declines coming in is at 1,056 stocks, which are on the decline side. So, clearly, outperformance that we're seeing today is going to be from the broader end of the market, right? So, Nifty mid-cap and small-cap, that's where the outperformance is coming in. But this is a show where we solve all your stock-related queries, and to do just that, we have Asta Jain, research analyst at Hem Securities, as well as Saumil Mehta, head of alternate research capital market strategy at Parai Asset Share Khan. Saumil as well as Asta, good afternoon and thank you so much. Okay, it's not Asta Jain, I beg your pardon. We have Shaina who is joining in with us today. So Shaina, Shaina, good afternoon and thank you so much for joining in with us as well. But Shaina, let's start with the first query for today. We have this coming in from Raman Kumar, who's writing to us from Pune. He's holding 50 shares of Dalmia Bharat and this is at a price of rupees 1,740 rupees per share. He's making a profit on this one. Now, wants to know the long-term story for this. Should he hold or should he just add more shares? Is that a possibility right now?
Hi, good afternoon, Vinny. And yeah, see, actually, I don't blame you for mistaking. This was a last-minute step-in, so I replay.
I'm used to seeing you on Fridays and having you party with me on Fridays, right? We talk about Fridays, so I'm used to seeing Shaina on Fridays for me.
Absolutely. So it's okay. As far as Dalmia Bharat goes, I would believe that, the investor should continue to hold because the valuation is at about $101, per ton. EV by ton is not expensive. EV by EBITDA is not expensive at 12 times also. And, they have their plants in East and, they have got their raw material, which is actually giving them the benefit for lower raw material costs, so better returns on their capital invested. So I would say continue to hold.
Continue to hold, not add, right? They want to add some more, but does it make sense adding right now or just hold?
I would say you can add also.
You can add also. Saumil, what's your view coming in for Dalmia Bharat on the technical front as well? Last 6 months is already up 44-45%, right? So should they maybe, continue to hold or even right now this is a good level to add some more to that portfolio?
I think Dalmia Bharat definitely great run up in the last a few months and trading about all the averages. There was a small consolidation 6 months back, and that consolidation has broken on the upside, which is great. In the medium term outlook, definitely positive. In the very short term, we may see a small correction till 2,300, 2,250 levels. So that's the level to watch out for. That's a take on Dalmia Bharat, and I'm positive on this. I think it would go above 2,700, 2,800. But if I have to add more in the cement pack, I would add more in Ultratech cement. That looks great to me in the medium term outlook and even in the long term outlook.
Okay, thanks so much for that view coming in there. Add more. There are a couple of names that Saumil has given over there. Let's move on to the next query for today. We have Archana Kapoor who's writing to us from Bangalore. And this one is on Coforge. She's holding 150 shares of Coforge. And this is at her price of 1,000 rupees per share. She's making a profit on this one and wants to know the future prospects of her investments. Shaina, IT, last couple of days, you've seen that bit of an up move coming in. Yesterday was that Infosys buyback announcement, which led to that up move. Today we have, the US company Oracle, which came out with some positive commentary, which is leading and helping that continue in terms of the up move for the IT pack. Now for Coforge, what is the story that we are watching out for?
Yeah, absolutely. And the sentiment for IT has improved overall. In terms of Coforge, I would say it's a good buy, but I would prefer if you want to, I hold it and add at lower levels because valuations are a bit expensive compared to even the large cap IT companies. So if you look at, on a EV by EBITDA basis, about 28 times. 1 year forward P is also about 35 times. So it is not cheap versus the large IT. But at the same time, numbers are quite healthy. We saw good growth in the first quarter and likely to continue on into the rest of the year. Also, management is very confident of getting a good new deal. The deal wins were pretty strong in the first quarter, likely to continue for the rest of the year. So I would say hold, add at dips.
Okay, hold and add at dips. That's the word coming in from China on the fundamentals. On the technicals, what's the word for Coforge?
Absolutely positive. Coforge, LTIM, and TCS. These are my picks on IT sector. Coforge, the levels would be around 1640 would be very crucial to watch out for as a support, and my targets would be around 1950 for Coforge in the short to medium term outlook. It has just broken out of a small inverted head and shoulder pattern, and I'm extremely positive on Coforge.
Okay, extremely positive on Coforge. It's a positive view on the technical and fundamental front. Let's move on to the next query where Rahul Mishra, who's writing to us from Assam, he's holding 100 shares of PNB Bank at a price of 70 rupees per share, is asking whether to continue to hold or sell at current levels. Shaina, for PNB Bank, what should they do?
I would say continue to hold. Valuations are quite attractive. Price to book is just about 0.9 times. Also, if you look at their net NPAs, they've come down substantially. It's just now 0.4%. And balance sheet quality has improved considerably if you see it compared to the last couple of years. Their PCV provision coverage ratio is almost 90%. Having said that, the Q1 numbers were impacted to some extent because of the tax, but I believe overall, it looks like a good bank to hold for the medium to longer term. So continue to hold.
Continue to hold. That's the word on the fundamentals. On the technicals, Saumil, last 6 months, 20% return. Last 1 year, not done anything in terms of a move. But last 6 months is where we've seen that bit of an up move. What should one do with PNB Bank now?
PNB Bank, I'm positive. Definitely Bank of India, PNB, Canara Bank, all of these are looking good. And they've just broken out of 200 daily moving average and a small triangle pattern specifically to PNB. The correction which we have seen in the last couple of weeks, I think that is over and we have again resumed the uptrend. So my targets on the upside would be 120, 125 for PNB.
Okay, keep an eye on those levels over there for PNB. The next query for today is an investment query coming from Sharat Saxena, who's writing to us and he's saying that he wants to invest in the pharma space for the long term. Is asking which company can he look to invest in? Shaina.
Pharma is always better to have a portfolio of a couple of stocks, because US FDA, they keep, doing the inspections and you have observations and then you see the corrections. Having said that, if I was to add a portfolio, I would say add stocks like Aurobindo Pharma, where I'm buying it as a value pick. They are expanding in the US through acquisitions, which are there on the cards in the medium term, and their balance sheet is strong. Valuations, as I mentioned, on a PE basis, very attractive. Also on a turnover to their EV to turnover also is pretty attractive, just 2 times. You have Biocon, which I believe has a very strong product portfolio in the peptides, in some of their new launches in insulin that they are planned in the US and other markets also. So Biocon, while slightly more expensive than Aurobindo, also Biocon in this year, first quarter numbers were also very disappointing, likely to continue on for the rest of the year because they have a number of issues in terms of the write-offs for Veritas, which they're taking. Also, you have certain costs that they are incurring for setting up their new capacities. So to that extent, don't expect too much in this year, but repayment of debt, clean up of balance sheet, everything should happen. And the FY27 should be a good year for both these stocks. You can also add some of the hospital stocks, like you have Apollo Hospitals, Fortis. So make a portfolio.
Make a portfolio for the pharma pack, combine pharma and healthcare, and China has given some of the names over there. Somil, your suggestions, anything for the pharma sector?
Biocon and Apollo Hospital definitely there in my list too. So I agree on that. The two other stocks which I wanted to mention is Zydus Life and Dr. Reddy. I'm positive on these stocks. Zydus Life has just broken out of a huge head and shoulder pattern, so it's just resumed a medium-term outlook trend. My targets on Zydus Life would be above 1150 and 1200. For Dr. Reddy, my targets would be probably new high, but at this point of time, 1350, 1375.
Okay, keeping an eye out on those names over there. Biocon is making the list for both of them as well as Apollo Hospital. So keep an eye out on that. You can look to invest there as well as the other names that our experts have mentioned. But on that note, we're going to sip into a very short break. Don't go anywhere, because after the break, we'll still be answering all your stock-related queries. Welcome back to your stocks on CNBC TV 18. As of now, the Nifty is managing to hold at 24,950. About that mark is what the Nifty is trading at. But let's keep it going with all your stock-related queries. And the next query for today is coming in from Sujit Benhur, who's writing to us from Bangalore. He's holding 100 shares of J&K Bank. This is at a price of 15 rupees per share. Okay, so they're making good amount of profit on this one. Wants to know if he can buy more of this, or should they look to book some profits? I'm just asking this on my own because they're making a good amount of profit. Shaina, your view, J&K Bank?
Yeah, he's made very good amount of money. And while it doesn't look very bad even at current levels, because numbers have, valuation is actually quite good, 0.8 times. And numbers have actually improved. Balance sheet has improved if you see in the last couple of years, 2 odd years. But it is not something I would take part, as you mentioned, take some profit off the table. And you could look at some of the other banks, even the PSU also, as we discussed. You have opportunities, PNB, BOB, SBI, private sector, ICICI Bank. HDFC. So you've got a variety of banks where you can invest in, so diversify.
Okay. Can book part profit and diversify and look at some other names of the banks as well. Saumil, your view on the technicals, what should they do for J&K Bank now?
A bank in the very short term has been trending down. It's been making low top, low bottom below 200 daily moving average. I'm not very positive on this stock in the short term. In the medium term outlook, it has made a very, very crucial support around 88 levels. So I will not expect this stock to go below that, but not very positive on the stock. You can see something like Bank of India, Bank of Baroda, PNB, Canara Bank. All of these stocks are looking great. Bank of India would be my preferred pick.
Okay, Bank of India would be your preferred pick versus a J&K Bank. That's the word on the technicals. Let's move on to the next query. We have Venugopal Raman, who's writing to us from Chennai. He's holding 111 shares of Finolex Cables. Cost price is 904 rupees. They're making a loss on this one. The stock is currently at 943. Now, he's a long-term investor and wants to know what is the outlook in terms of the stock moving higher from here on, and how long should he continue to hold the stock? Shaina.
I am not too positive on the stock for the medium to longer term. There are certain positives. One is that the balance sheet is strong. It's a small cap, but the negatives I think far outweigh. Like for example, if you see the quarter growth was about 13% in overall revenue, which is lower than the other larger companies in cables, and competition is increasing even more with more companies coming into the sector. Also, in terms of their raw material costs, they were impacted a big way, which affected their profits. So I think overall, it is better to switch from Finolex cables to some other sector.
Okay, so move out of the cables and wire side, and you would prefer looking at some other sectors, and instead of Finolex cable, look at some of the other stocks. Saumil, your view for Finolex cables, is it a different story that we could watch out for on the technical front? And could the viewer at least manage to come up to their cost price of 904 rupees?
I think in the short term, yes, I can see there could be a bounce till 925 levels, but that will be a opportunity to just exit, because in the medium term outlook, I can see that it's making a huge head and shoulder pattern, and the targets on the downside would be way below 750, 700 levels. So negative in the medium term outlook, but in the short term, there could be a bounce, and that will be an exit opportunity.
Okay, so there will be a bounce in the short term. Maybe they could watch out for the levels as well, is what Saumil has said. So keep an eye on those levels and exit after the short term, because on the technical and the fundamental front, the view is not positive as of now for the medium to long term. Let's move on to the next query then. This is an investment query again. We have Muthu Lakshmi, who's writing to us from Bangalore. She wants to invest 2 lakh rupees in banking sector, and she is asking if she can invest in ICICI Bank. Shaina, your view coming in. I do believe that you did mention ICICI Bank as well just a short while ago, right?
Yeah, so I think it's a good stock to invest in, good bank to hold for the longer term also. Valuations at about 3 times book. I'm not saying it's cheap or anything, but in terms of all other parameters, it's doing pretty well. Loan growth around 11%. Their balance sheet is strong. They're doing pretty well across the board. So I would say, yeah, you can invest in ICICI.
Okay, can invest in ICICI. And Saumil, your view, ICICI Bank, should they look to invest, or are there other banks maybe that you could look at, or private banks that you would suggest?
I think I could make a basket for the bank side. ICICI Bank, HDFC Bank, Bank of India, PNB, Canara Bank. These are some of the stocks which I really like. The small finance bank, AU Small Finance Bank, also looks great. But those stocks, the mid-cap stocks, should be small in size in your basket. But ICICI Bank, HDFC Bank looks good. Majority of your basket should be ICICI Bank and HDFC. Support is around 1363 for ICICI Bank, and I think should take support around those levels, and that will be a good buying opportunity.
Okay. A basket of maybe the banking side is what you could look to invest in, and Saumil has given you some of the names as well. Next query for today is coming from N. Gopalakrishnan, who's writing to us from Kerala. He's holding 3,000 shares of Gujarat State Petronet at a price of 340 rupees per share. Wants to know if he should remain invested or book out his profits. Shaina?
I would say, look for any bounce to switch from GSPL. It's been a non-performer in terms of financials. If you see last 4 years, almost on the top line, it's been flat. Profitability has been flat, in fact, lower in FY25. The first quarter of this year, FY26, was a bit better, both in terms of average realizations were slightly higher. Transmission volumes also were slightly higher. But and valuations actually is reflecting low valuations. It's reflecting the poor performance over the longer term. So as of now, since valuations are low, I wouldn't say just outright sell, but it's a switch. I would look for some other stock.
Okay, you would look for some other stock right now and maybe look to switch from the losses that are making, can book some bit of that as well. On the technical front, Saumil, what should they do, right? 340 is their buy price and 298 is what the stock is at. Does it merit to hold on for some bit of a time? Maybe, is it going to move a bit higher in the shorter term?
Maybe in the very short term there could be a bounce, but in the medium term outlook, I don't prefer to stay for a very long time, because this stock has been in a downtrend for a very long time now, since September, October 2024, and it's just struggling to go about 200 daily moving average. So probably get on to some other stocks, other sectors, maybe banking sector or defense sector is looking good right now. Pharma is also looking good, but I would not prefer to stay on the stock.
Okay, both our experts do not prefer staying with this stock right now. So yes, move to other sectors like they mentioned as well. Next query for today, K. Padma is writing to us from Andhra Pradesh. She's holding 409 shares of Infibeam Avenue at a price of 30 rupees per share. Wants to know if she should hold or sell this one. Shaina, your view?
I would say continue to hold because, performance is improving. If you see the first quarter numbers were pretty good in terms of their profits, and even revenues were up substantially, actually 75% higher on a YOY basis. And they are a small cap on the payments platform. They've got some good products in payments, as well as they've got e-com on their platform. So I would say you can continue to hold. Valuations are not expensive.
Okay, valuations are not expensive. Continue to hold as of now. Seeing some improvement in terms of numbers is what Shaina is highlighting. Next query, actually, I'll come to you, Saumil. Infibeam Avenues on the technical front, what are we watching out for? Similarly, could we expect and continue to hold this?
Negative on the stock, actually. Trading below averages, struggling to go above the previous swing highs. Not very positive on the stock. I'll be expecting lower levels till 13 or 12 levels. So I would suggest to exit the stock.
Okay, that's a view coming in on the technical front. But that was the last query. So Saumil as well as Shaina, thank you so much for joining in with us. And Shaina, thank you so much for coming in on a Wednesday instead of a Friday. But hope you're back on Friday as well. To see you soon. Thank you so much for that. But with that, we'll wrap up this edition of Your Stocks. Thank you so much for tuning in. But remember to tune in to the all-new CNBC TV 18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV 18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV 18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good afternoon. Welcome to Closing Bell. We are here to take you through the last hour, and it's turned out to be a pretty decent day of trade so far. So the market hasn't had a galloping move on the upside, but every day that the gains are at least retained, we'll take it. Though there is a bit of a downward drift. Now the bulls will hope that they can retain the bulk of this. Remember that the all-important mutual fund inflow data for the month of August is due any minute now. Remember, July was a record month with domestic investors like you and me piling in over 42,000 crores. So let's see, those numbers are expected to be fairly healthy this time around as well. We'll take you through the latest on that. Nigel's here, Rima's joining in just the next couple of minutes. Nigel, not too bad a day. I mean, banks, IT, a little bit of contribution from most parts.
Well, that's right. The start was very, very good, Surbhi, but the point is where we're going to end, and you'll want the Nifty to end around at least these levels or at least build onto that. The good news is the IT index seems to be getting its way back. It's been a big, big underperformer. And two levels that I'm looking at. On the Nifty, the 25,000, the bears are coming in to defend that mark, 25,000, 25,050. And on the Nifty Bank, actually, if we pull up the 20 DMA with the Nifty Bank, you'll get the perfect picture because earlier today, the Nifty Bank threatened to get to around the 20 DMA, but that level has got rejected. So I think we're at around 220 points away from current levels. The Nifty Bank needs to get past that 54,750 odd mark. That's going to be the important mark. The Nifty is holding about there. That's the Nifty Bank trying to get closer to that mark. But let's get straight to what's on the show.
Absolutely. Lots lined up, and welcoming Rima as well. Take us through the next 1 hour or so. So on the show today, we have to see if the opening gains will sustain or not. So we're, of course, looking at the market very, very closely. We'll get you lots of technical advice on this as always. IT stocks are in sharp focus. There are again big gainers today. And of course, there was good news coming in overnight from Oracle, which has helped that stock. So we'll talk about this as we go along. Shares of Wellspun Living, Gokuldas Exports, and several other textile exporters have been surging on hopes of a de-escalation between India and the US and the possibility of a trade deal coming through soon enough. Then you have the shrimp exporters, shrimp feed exporters, that is. Look at the gains. Apex Frozen now 17 to 18% higher on prospects of more exports to the EU. So we'll talk about this as well as we go ahead. Plenty lined up over the next 60 minutes.
And let's kick started with how you should position yourself in the last hour of trade. Mitesh Thakkar from Bonanza Portfolio is now joining in with his closing strategies. Mitesh, first the index and then the calls for the last hour.
Yeah. Good afternoon. So I think on the index, I talked about the fact that 25,000 could be a very strong level to get past, an important level. There's a lot of open interest on the call side, which means that the call writers will come and try and protect that. But the structure is still positive. So I think maybe after a dip, the index might attempt 25,000 again. And if it manages to get past 25,150 and then possibly 25,250 are the two near-term or short-term targets on the upside. So trade with long bias. On the stock side, I have a buy on Axis Bank. It's done a very good base building around these levels of 1,040, 50, trying to reverse from there. So would recommend a long with a stop below 1,059 and a first target of around 1,100, 1,105 can be looked at on the upside. And the other one which I like is 361. That's at the day's high, good price and volume action here. So buy with a stop at about 1,054 and a target of around 1,120 can be looked at.
Okay, thank you very much for that. By the way, quite a few mid-caps are moving around. Tollens Tires, not a stock that we often talk about, but large volumes. On the NSE, I think it's close to about 30 lakh shares traded hands now. The stock has gained close to about 15% at the day's high. Wockhardt, Morpin Laboratories, SMS Pharmaceutical, these are on the winning side today. Wockhardt is gain of about 5%. Mamta Machinery, again, large volumes compared to what it typically does. Strong price action, 18% up on Mamta Engineering. And then you've got even RateGain. I think there's some news on RateGain, but RateGain is also seeing quite a powerful up move today. We should pull up this stock. This month, RateGain is up close to about 25%, though it's still down about 11% from the start of the year. But the big story and the big moves are in many of the seafood exporters, the shrimp exporters, and they continue to surge in trade, holding on to all their double-digit gains. This is after the European Union approved 102 companies for exports. Ria now joins in with the numbers, the details, and more about this story. Ria.
Well, yes, the European Union has approved 102 new fishery establishments for exports to the European Union. Now, this move is expected to add around 16% additional Indian export establishments in terms of trade volumes, and the Commerce Ministry also anticipates an immediate rise of over 20% in trade volumes. Now, India's marine exports to the European Union were valued at about $1.1 billion in FY24, and apart from this, the Commerce Ministry has also said that India had been engaging with their EU counterparts over the past 3 months to address sanitary and phytosanitary issues, and following some technical level meetings and negotiations, all of these establishments that were previously delisted due to contamination concerns have now been reinstated. So this is a big positive for the industry as a whole. Now, the Commerce Ministry has also highlighted that this move is a positive signal for the 13th round of ongoing FTA negotiations between India and the EU, and the listing of these units by the European Union was a long pending demand of India. Now, in terms of the geographical exposure, marine products have recently been impacted by the 50% tariff rate imposed by the US on India, and the US is the top marine export destination for India, followed by the European Union. Now, and also in terms of exposure to the European Union for listed players, for Avanti Feeds, 17.4% of their shrimp feed revenues for FY25 comes from Europe, and they're already working on expanding their presence in non-US markets, which includes the European Union. For Apex Frozen Foods, around 39% of the total revenue in FY25 was contributed from the European Union, up from 26% in the previous financial year. And they've also seen robust demand from this area in the last year, and they continue to work on strengthening their presence in the market. Some other listed players that also supply to the European Union include Coastal Corporation, Waterbase, as well as IFB Agro, and all of these stocks are performing well in today's trading session on the back of this.
Okay, all right, Ria, indeed they are. Thank you very much. Very smart gains coming in for several of these names. Of course, still beaten down from their all-time high levels. These stocks are down anywhere between 10% to as much as 35% or more. This was after the disappointment with the US tariffs. The question is, I mean, is there a more sort of a sustainable uptrend over here, or is this just a flash in the pan move? Well, let's welcome in Gurmeet Chadha, Managing Partner and CIO at Complete Circle Consultants. Gurmeet, thanks so much for joining in. So much to talk to you about. There's, all these export stocks are so excited today because we've got good news from US and EU. So these, shrimp feed companies first, any interest here? Have you had a look at any of them?
So, Avanti Feeds is something which has been in our universe for a long time, and should be between, let's say, if I were to compare gems and jewelry and textile and shrimp feeds and shrimp processing, in terms of fungibility, it's relatively higher for them. You can, if FTAs are done with EU is currently about 17% for them. US obviously is the largest. Then you have Japan, China. Where you can, over a period of time, decrease the dependence on US. And then obviously today's news of a potential trade deal, obviously impacting the price action. Same, it was quite negative a few days back when these tariffs had come. So some part of the portfolio, a smaller part, you can have a bit of a contra play, which can have. So we have, for example, Gokuldas Exports in our portfolio, small weightage, about 2.5%. They have also done a few acquisitions in Africa and Middle East, through which they can go to EU and other markets. And it's a very large dependency on US with brands like Superdry, H&M, etc., which Gokuldas does. We are looking at Avanti as well as the other company in this space. And we are also looking tactically at some of the IT companies, because especially companies with high dividend yield and 5-6 times free cash flows. I think especially when, and maybe once we have more clarity, especially once the implementation comes of the AI, I think a lot of our companies, especially some of the mid-tier IT companies, could be back in focus.
Do you want to tell us, in the IT companies, which ones do you like? The ones you're looking at tactically?
So, for example, KPIT, we believe if auto in general recovers globally, that could be, and it's again a proprietary IP-driven play. So that's something we've been holding for very long. We are looking at Persistent and Coforge as well. Amongst large cap IT, we have some exposure to HCL Tech as the software business is extremely profitable. The market doesn't give it too much valuation right now. But that's like a 25-30% margin business, and it's a mix of services, ERD and software. And I think over a period of time, valuations are pretty reasonable. So these are some of the names we have in IT. But as I said, I'm not like neutral or overweight. We are 10-15% of our portfolio. You have to be in this kind where if things reverse, because the broader call is that in a couple of weeks or a couple of months, the tariffs are not going to stay at 50%. Now, once that happens and the news comes, you will get very little time to react.
And then there's that expected Fed rate cut also, which is positive for valuations. And one big positive which came out from the Oracle numbers is the cloud revenues, right? What they're projecting. $10 billion of cloud revenues last year. This year, $18 billion. So you're talking about a 70-80% jump this year. And then they're saying 4 to 5 years later, this is projected to rise to $144 billion. So that's a staggering growth. Now, for cloud, you need IT services companies because you need it for cloud migration, for implementation of cloud. So if Oracle's cloud revenues are surging, and as the guidance is, it's also an indirect positive read-through for the entire IT sector because AI requires cloud, and cloud requires Indian IT services companies for migration and implementation. So that's lifting the entire tech sector today. But let's talk about the textile sector. That's also in focus. Vinny joins in with the news first and the analysis. Vinny.
Hi, Rima. So maybe the news is, given that there are so many twists and turns that come in from Trump in terms of tariffs, we see those twists and turns coming in for the textile sector as well. So now let's just look at what's happened in the last 1 month specifically for the textile sector in terms of news flow. On 18th of August, the government had removed import duty on cotton from August 19, and this was mainly addressing the industry's demand, given that there was a 25% tariff that was implemented by the US on India. Now, on 27th of August, what happened is the US administration further imposed an additional tariff of 25%, right? The penalty. So that overall came to a 50% tariff. Now, that becomes tough for the textile industry. And that time we saw that those textile stocks had seen a fall coming in. Now, talking about 3rd of September, the GST boost that came in for the consumption sector from the Indian government, changing the slab rates, most of those, textile components or even raw materials moved to the 5% slab. So that was a benefit that came in for the textile sector, and that was a positive news that came in here. Now, this is going to be applicable from 22nd of September. Now, 10th of September, that is just today. We had those morning announcements that came in. India-US trade talks have again started, positive terms and news flow that is expected there as well. So that is what everyone is watching out for. And on the back of that sentiment, we saw a bit of a run-up coming in for these textile stocks today. Now, going forward, what will be the triggers? One, domestic demand. Everyone's focusing on that as well. That will get a boost given the GST rate rationalization and the government support that is coming in to improve consumption. India-UK FTA, that is positive for textile players. So that will also help them expand their market share in the UK region. And India-EU FTA, that's also seeing positive talks coming in, hoping for the deal to be signed soon in 2025, at least by the end of calendar year, is what some of the analysts are highlighting. Overall, industry players have always highlighted, that when this additional 25% tariff was implemented, that would be a big concern, right? So whether it was Gokuldas Exports, Pearl Global, even APEC, India Rating, analysts, all of them said that handling that additional 25% would be an issue. So now if trade talks between India and US start going the way we expect it to, and on a positive note, then that becomes a positive for the textile industry. And obviously, given that these companies have a good exposure to US, whether you look at Gokuldas, Welspun, Indocount, Pearl Global, Arvind, KPR Mill, that's why this positive sentiment news flow that's coming in between India and US today is leading to that up move for the stocks.
Okay, all right. Thanks a lot for that, Vinny. Well, let's go back to Gurmeet then. Gurmeet, you just mentioned, I think Gokuldas is something that you'll continue to hold on to. So we'll keep an eye out on that. The other stock that's been buzzing in the last few days is Stovecraft. If I'm not mistaken, I think earlier had some holding out there. Is that intact? I mean, what's the view on Stovecraft? Because that's done very well, actually.
So, Nigel, obviously, it's part of the kitchen appliance segment, which we are constructive on. Plus, they got approved with Walmart as well, which eventually will come up for a period of time. And I think couple of quarters, the stock had disappointed in terms of volume growth coming through. So that's something that the exposure we have obviously trimmed a little bit, but we still continue to hold Shopcraft. And in general, I think tactically speaking, you will see a lot of, with festive season around the corner, you could see a bit of a jump in mostly all appliance makers. We've also have, not exactly Polycab is comparable, it's more FMEG there, which is 20% of the book. And we are looking at some of the other names like Trent. We are adding, something like DOMS, which is into children's stationery, and now they are expanding into pens from pencils. They have acquired a company in Eastern India, and they are also getting into child and baby hygiene in form of diapers, etc. New plant coming in. So that's another one we are having. So we are playing a consumption basket through a broader scheme of things. Anything saved eventually will probably move more towards discretionary. And a part of that would probably be, the appliances, the travel, the hospitality, etc. The overall, household budget.
Okay. All right, got that point. Let's take a look at the large cap screen. 60 points on the Nifty now. So, yeah, there is a bit of a struggle to retain the gains. And a lot of the auto stocks are seeing a cool off after their big run up. So, M&M would be 3% lower. Maruti, Hero, Bajaj, Tata Motors, all of them actually. All five are right at the bottom of the Nifty heap this afternoon. Gurmeet, should one be, because these stocks have run up a lot, I mean, between 10%, 20, 25% in the last few weeks, should one be buying the dip on some of these large cap OEMs? Or do you think the bulk of the excitement has already played out?
No, Surbi, I think you will see a very strong season ahead. Once let the Navratra begins and you get, I think once the update comes in October of September numbers, I think you'll be positively surprised. I met some senior officials from Maruti yesterday evening, and they said that after 2-3 years of -6% growth in small car, they are now targeting about a 10% growth, and they say even that can positively surprise. Now, that's the reason even Maruti has moved up. So it might look that it's moved up to 15, but mind you, this was 10,000 rupees in 2017-18. They hasn't done anything in last 7-8 years, right? So it's just that the recent move can cloud it. See, barring M&M and TVS, which have been star performers in two-wheelers and OEMs, passenger OEMs. Others have not done very well. Look at Tata Motors. Obviously, that there is a different side to Tata Motors. So I think the feedback we are getting from dealers, and I have a couple of clients who are large dealers, is that this is probably one of the strongest auto season ahead. So I would actually be very constructive there, because there is genuine 10-15% savings happening across the board, starting with, let's say, 10-15,000 rupees on motorcycles, going up to 3-4 lakh rupees on cars up to 50 lakhs. So that's a substantial saving. And there's a big surge in booking in terms of delivery for Navratras. I'm sure the numbers will follow.
Gurmeet, this Vikram Solar, one of the new listings, makes solar modules. Very strong numbers in Q1. Company's top line went up by nearly 80%. And generally, even the others in this space, like Vari, etc., had a very strong quarter. Do you like any in this sector?
See, we missed out on Vari, to be really honest, and I think right now it's becoming a little commoditized. So my sense is the margins may come under pressure, may not be able to sustain valuations. So we are focused more on the power systems and equipment, which we think is more secular. So something, for example, like in rectifier, which probably caters to 90-95% locomotives and railways. You have something like CG Power, where you get both power systems and now the OS80 play on semiconductors. The stock was up today, and obviously the typical transformers, rectifiers, insulators place. I think that's where the return ratios are better, cash flow are better, working capital requirement won't be under stress, and less cushion. Some cushion from the tariff and dumping related plays.
Okay, all right. Good to have you on the show, Gurmeet. Thanks a lot for joining in and giving us your quick take on all of those stocks. By the way, keep an eye out on the Nifty. We've slipped a little bit more, and this would go down as a bit of a disappointing session, actually, because we started with solid gains, but now we're struggling to hold on to those gains. You don't want us to fall too much from these highs. I'll tell you what, we'll slip into a short break. We'll be back. Varun Goel of Mirai Asset Management will be joining in. Stay with us.
Welcome back. Off highs, but still holding on to gains of about 1/3 of a percentage point on the benchmark indices. Midcaps up 450 points. It's time now to talk about the big movers. Put the spotlight on the top movers at this hour. Hormus is at the big wall.
Yet another session that is turning out to be what could have been instead of what has transpired. But before we get to the broader market movers, the two major themes dominating today, of course, are exporters, be it the shrimp feeds or the textile names. And take a look at the volumes at which these stocks are surging at. Avanti Feeds having the highest volume since December of last year. Apex Frozen since July of last year. Indocount, of course, since June of this year. Moving on strong volumes. And now look at the volumes in comparison to their averages. Avanti Feeds has had more than 1.2 crore shares that have been traded already. There are a 20-day volume of just 3 lakh shares. Apex Frozen has had 80 lakh shares traded, 2 lakh shares as a 20-day average, and Indocount has 45 lakh shares traded, and again a 2 lakh average for Indocount as well for the last 20 trading sessions. So moving fast on very strong volumes are these exporters. The other stock that has done well today is Pokarna, and this 8.5% surge is the biggest single day gain on the highest volume since April of this year. And the last 3 sessions the stock has moved 15%, and before this 3-day gaining streak the stock fell for 8 days in a row and now is recovering some of those losses over the last 8 sessions. And today we have had 10 lakh shares that have changed hands compared to a 20-day average of just around 75,000 shares. Now the still remains below all of its key moving averages. The first important level on the upside is still some distance away, the 50-day moving average that comes in at 952. And despite this move, the stock is still down 25% this year, but had more than doubled last year with returns of almost 2.5x. Cartrade Tech, of course, at one point was down 17%. It was the biggest intraday fall on record for the stock. Saw some recovery from the intraday lows. That recovery has also been sold into, and we've already had 27 lakh shares that have been traded today compared to a 20-day average of just close to 3 lakh shares. But in the 3 months prior to today's trading session, the stock was up 75%. And from the lows of March of 2023 till the highs of yesterday's trading session, the stock was up 8x. So from levels of around 300, 350, the stock was well over 2600 as of yesterday. And the last one on the list is Mamta Machinery, a recent listing, listed in December of last year. This 18% move is the 3rd biggest single day gain since it listed. And today's volumes, of course, are the highest since July. We had more than 1.5 crore shares that have been traded today compared to a 20-day average of just 3 lakh. And this level of 486 is exactly double of its IPO price, which is 243. The IPO was subscribed almost 200 times. Of course, the issue size was smaller, so we have to adjust for that proportion, but still down around 23% from its post-listing high. 18% higher today is Mamta Machinery.
Okay, all right. Lots and lots of movers and shakers as always. Hormas, thanks very much for that. Plenty of interesting names on that list. Well, let's go on then and welcome our next guest on the show. Varun Goyal of Mirae Asset Investment Managers is with us. Varun, thanks so much for joining in. It's consumer, right? Last couple of weeks, it's been building actually since the RBI rate cuts, the income tax cuts, and now the GST cuts. You tell us, any changes in the portfolio? Have you been loading up on consumer, changing anything, or you don't think that this requires too much of a tactical change?
Afternoon, Subi. Thank you so much for having me on the show. I think, for the year as a whole, our sense is this is the year for domestic cyclical recovery in India, and we've been betting on earnings revival from 3% last year to more like 10-12% this year. So we continue to be constructive on domestic cyclical sectors like banks, NBFCs, auto, consumers, select capital good names, real estate, and that continues to be the theme. Of course, I think the GST cuts that have been announced are very strong, will strongly influence the earnings of the auto, consumer durable companies, cement companies going forward. And as such, we have marginally increased weights in some of these spaces, but we continue to believe that anyways, India is in the midst of a strong cyclical recovery. And hopefully, with the trade-related issues also expected to get settled in the next few months, we should see a good year as far as earnings are concerned.
So on consumer, since you mentioned, Varun, that you already have had exposure among a lot of the other segments, can you just narrow this down a little bit? Because auto stocks have done very, very well. Hotel stocks anyway were, they've been better performers, say, than staples. So again, what part of it do you think, there are gains beyond even maybe the immediate festive season pop?
Yeah, I think auto, two-wheelers, four-wheeler, tractor space continue to do quite well. Our sense is the monsoons have been good. We expect a strong revival in agricultural income, so we continue to be very constructive on the farm equipment and the agricultural space. I think two-wheelers again is after. I think there is a big price increase which happened post the change from BS4 to BS6, and now I think we are seeing a very big price cut, and that should go a long way in reviving two-wheeler demand. So I think definitely it's a big positive for auto space. I think even consumer durables, it's something that will benefit out of this. I think discretionary consumption in terms of services like hotels, hospitality, that's a sector which will continue to benefit, and as such we remain positive. As far as the more stable space is concerned, our sense is food and beverages being more discretionary in nature is something which will benefit more than the more stable categories.
Varun, just hold on for a second. We're getting the monthly inflow data. That's about 5,000 crores coming in small cap funds. So basically, it's slightly sobering compared to the massive pop that we saw in July. The net equity inflow number is 33,417. So that is obviously a drop, a significant enough drop from the 42,600 odd crores that we had in July. And the simple reason behind that, from the first glance, first cut, what I can see is that we don't have the kind of NFO party that happened in July. July saw, huge amount of NFOs on all sides, on equity, on fixed income, on hybrids. And NFOs alone had pulled in 30,000 crores in July. But that's not the case this time around. If I take a look at the total, new fund offerings, then the number is a paltry 2,859. So not much NFO action, which is okay. I mean, you can't expect, the same kind of NFO momentum month after month. You have a couple of patchy months and you pick up again. So that's what we have as of now. The interesting facet is that even now, mid-cap and small-cap funds, they are attracting a bulk of the flow. So let's take a look at category by category and what's happening. On the large cap side, we've seen an inflow of about 2,834. But you look at the mid-cap side, the mid-cap fund category has really pulled in the money, 5,300 odd crores. So that's the first bar. That's what we need to look at. That yes, there is a deceleration, but it's not a dramatic drop or anything. I mean, last month's number was bumped up because of NFOs, and this month we don't have so many big NFOs pulling in a lot of money. That's what's really happened. The small cap and the mid cap category, they continue to get in the lion's shares of the flows. 5,330 crores in mid cap funds, almost 5,000 crores in small cap funds, and large cap funds have pulled in about 2,830 crores. So that's the next important trend to keep in mind. Now let's look at what's happened with the hybrid side, because we know that as investors have been looking to diversify, a lot of the hybrid funds, which could be balanced advantage funds or multi-asset funds, these funds have been pulling in a lot of money, and that trend is intact even this time around. So the hybrid category as a whole has pulled in about 15,300 odd crores. So that's what we have from the hybrids. And if I talk about hybrids last time around, it was an exceptional month for hybrids, because last month in July, hybrids as a category pulled in almost 29,000 crores. Again, thanks to a lot of NFOs that came through. This time it's a little on the lower side, you'd have to say. Then let's look at what's happened on the passive side, index funds, gold ETFs, etc. Gold ETFs have pulled in about 2,200 crores. So despite the fact that gold prices continue to be at all-time high levels and they continue to surge, there's still money coming into those funds. There are other ETFs which would also include the silver ETF category. Remember, silver has been drawing a lot of investment as well. So that's pulled in 7,250 crores almost, the other ETFs category. And index funds have done pretty well as well. So the passive inflow is continuing. Doesn't seem to be any problem there. We'll have to wait by and see what happens on the SIP number, because that's been the strongest story for the Indian equity market. In July, that SIP number had crossed 28,000 crores. So let's see if it's intact. I mean, it's been nicely, solidly trending. 26,000, then we crossed a 27,000 crores milestone. This is on a monthly basis. And last time in July, we had crossed a 28,000 crore milestone. So we'll have to see if that stands through as well. I think let's see if we have Mr. DP Singh joining in for a quick reaction here. I think we have Mr. Singh with us, Deputy Managing Director and Joint CEO at SBI Mutual Fund. Mr. Singh, thanks so much for being with us. So yeah, we don't have a huge number like 43,000 crores. It's a little over 33,000. But how would you describe it? Lesser NFOs, so slightly lower action?
Yeah, lesser NFOs, and there was some withdrawal of money from arbitrage category, as you rightly said. In the hybrid category last month, it was huge money, and this year, this month, it is less. This is basically because of the arbitrage flows. Arbitrage flows much lesser in this month. But overall, two reasons. Yes, one, what you rightly talked about the NFOs not being there, and second, some withdrawals from the arbitrage funds.
Okay, I'm just okay, withdrawal from the arbitrage fund category as well. Dynamic asset allocation funds have pulled in 2,316 crores, which is pretty similar to what we've had. And hybrids, as Mr. Singh is pointing out, hybrids this time around, or arbitrage funds specifically this time around, have pulled in 6666. That's a lot of sixes. So basically 6,666 crores. That's what's coming into the arbitrage category. So that explains it. But okay, Mr. Singh, just hold on. We also have Akhil Chaturvedi, Chief Business Officer at Motilal AMC, joining in. Akhil, you tell us, we're awaiting the SIP number. But aside of that, how do you describe the new product launch category in the market? It is these NFOs, and they've been happening across the board, right? On the passive side, on the active side. Every time we have big NFOs, we see a bigger number. So what is the NFO pipeline looking like for the next couple of months?
So if you see, currently the pipeline is slower than what we have seen in the last fiscal. That's obviously because of the volatility in the market. But as the AMCs, various AMCs, they see selective ideas on NFOs, they are launching it. And in the last month, obviously last month, we did see some good momentum. Last month was slightly silent, but it's very product specific. And let's say there's a particular theme where there is an interest from the investors or the distributors. Suddenly, the bump up in the flows is there. So the trend line is slower than last year, I would say. And so yeah, I think it's going to be very product specific, and when these products get launched at various points of time.
Well, in terms of NFOs, I mean, just for viewers' context, in the month gone by, we had the Bank of India Midcap Fund. Then we had some sectoral and thematic funds. Kotak had come out with an active momentum fund. Motilal itself had a special opportunities fund, and that was it. I mean, we didn't have too many pure play equity offerings going forward. Mr. Singh, sir, what about SIPs? I think we'll get the numbers soon enough, but that's been the strongest story for the Indian retail investor. What's your sense? I mean, how strong will the number be this time? Mr. Singh, sir, if you could hear me, DP sir. Okay, I think we've just lost that line. We'll try and get him back. Akhil, that question to you. Just tell us what you were expecting on the SIP side.
No, so if I go by the past trends, I think I do expect 1.5% incremental flow. So maybe 1,000 to 1,500 crores of net incremental flows last month as well. See, in mutual funds, I think the most preferred way of entering into equities is SIPs. And with the way we are seeing influx of new investors coming in and retail investors investing through mutual funds, largely in such kind of a market, SIP is the most preferred way. So I would definitely be hoping for at least 1,000 to 1,500 crores net incremental higher numbers compared to previous month. Let's hope so.
Yeah, absolutely. Let's hope so. So that's, the way the picture is shaping up as of now. We've got Mr. Singh back. Sir, we were just discussing SIPs and really what can be expected ahead, because let's face it, that investors have kept the faith. The market has been testing everyone's patience for the last 1 year. Can you also tell us what's happening X of SIPs and X of the NFO, activity? How are redemptions? I mean, are there redemption at all, or is there more lump sum money coming in? What's happening with the rest of the flows, X SIP and X NFOs?
See, what happens, there has to be some natural redemptions. When there's generally a longevity of 3 to 4 years, and people need money, they will get money, new money will keep on coming. It's very, very difficult to point whether the redemptions are more or less. But we see the average redemptions are in the, there's no panic redemptions. That is number one. Because of the volatility, nobody is getting the money out. Whosoever is taking the money out is for the need based. And we are absolutely seeing then the small investors are keeping full faith in the market, retail investors, so on and so forth. Incremental money other than SIPs and NFOs, yes, it is muted. That is very understandable because of the volatility in the market and whatever is happening in the geopolitical side. But I think the days like today, we see a lot of flows coming in. Whenever there is a positive news, a lot of money which is lying on the sidelines do come in. So we expect the good times to come. We expect some FIA money to come back. So maybe there will be good times in the coming months.
So we don't know about FIIs, but if it wasn't for you, us, the whole retail ecosystem, this market would have been at a different level altogether, right? Quick last point to you, Mr. Singh, since you're saying that, yes, there will be some natural redemption. Again, so we're talking about the expansion of the market and the retail flows largely contingent on, of course, the SIP book, and that's strong. But the rest of it is contingent on product innovation. A lot of thematic funds have been launched. This time the thematic fund number is lower. But how do you see that as a trend? Because if thematic fund and NFOs, if the experience is not good, it could also be detrimental in some ways, right? It can backfire.
Asset allocation will be the key. A lot of asset allocation fund, like multi-asset allocation funds, or fund of the your hybrid funds, will do a very play a very big role in coming months. And second, we have to understand that these flows which we are looking in the gold ETFs and silver ETFs, so on and so forth, partly because of the money coming in those funds, and partly because the funds are investing in those ETFs. Like my multi-asset allocation fund will be investing in the gold ETF and silver ETF as well. So that's the way we have to see it. There is not only the retail which is coming, but retail money coming indirectly also is there in the ETFs. And I personally feel that the coming 3 to 6 months are there for the asset allocation funds.
Okay, and they have been doing well, absolutely.
Yeah.
Well diversified across asset classes. Those funds have been pulling in more money. Little lesser today on the multi-asset side this month, but generally they've been picking up. Thank you very much, gentlemen, for joining in and giving us perspective on the monthly mutual fund data. So the headline is the flows have fallen a little bit compared to July, but then July was a bumper month. This by itself, 33,400 odd crores, is not a bad number, guys. Okay.
All right, and that's courtesy lower NFOs this time.
Lower NFOs this side, lower money in arbitrage funds. But yeah, I mean, difficult to have huge NFOs month after month. It's a product launch activity. It can be slightly cyclical in nature.
All right, we'll slip into a break with the news that it's 24,970 on the Nifty, so still hovering between 24,950 to 25,000. Get into a break. On the other side, as always, we'll get you a check on what dealing rooms are saying, Indie Street chatter, and a few BTST calls. Welcome back. Good day so far. Let's find out what the chatter is in dealing rooms. Nimesh is now joining in as always. Nimesh, it's good to see the tech index still flying high. In 2 days, it's up nearly 5%.
Absolutely. For second day running, it's the IT which is helping the Nifty to be up almost 100 odd points. And as you rightly pointed out, it's a good day. And now we are seeing a bit of short-covering rally beyond IT stocks as well. What we saw in the last couple of days was covering in IT. Now, some of these auto sector, export-facing auto sectors, defense names, they all are seeing a bit of short-covering rally as well in today's market. From a flow perspective, again, a mixed day, but like what I mentioned yesterday as well, I understand even in today's market, there is a small MOC buy basket at a leading FID. So maybe some individual names will get reacted in the last 30 minutes of trade. But one sector which is seeing a bit of buying interest back is the PSU bank names. The index is up 2%. A lot of individual PSU banks are seeing a bit of bidding interest as well, is what I understand. So that's one space which is not seeing short covering, but a bit of buying as well from larger institutions. Technically, we are very close to that very important resistance of 24,950. But again, from a powerful short covering rally point of view, the feedback is that Nifty has to cross 25,200. If that gets taken out, you will see further short covering rally in the overall market. So that's the technical feedback. But broadly, from a flow perspective, a small MOC is again what I understand. But if it's for the second day running, it's IT on the back of short covering, which is helping the markets to sustain the morning gap up.
Lots of mid-caps flying in IT. Zensar, Persistent Technology, Atara LXC, Mastech, Coforge. These are all mid-cap IT stocks, 4 to 6%. But Nimesh, what do you have in terms of stock-specific action in your chatter?
Okay, so the first stock on my list is PNB Housing. That's been consolidating with a bit of a positive bias in the last couple of days. A couple of things. One, I understand the selling pressure from a leading sovereign fund is largely over. So that selling is done with is my sense is. And also for PNB Housing, the next big takeout will be the appointment of the new CEO. For that, I understand today is the last day for applications of the for the CEO's position. So that's something to track going forward in PNB Housing. So that's the first name. The second stock is Time Techno. Again, the stock has been consolidating of late. But even in Time Techno, I understand a leading domestic mutual fund has been an active buyer of late. So that's the buzz there. The third name is JSW Energy. The stock is up 3% in today's market. It's recovered from the recent lows. But even for JSW Energy, my sense is that there could be a QIP very soon. I understand the roadshows have started as far as the fundraising is concerned. So that's the third name. And the last one is Healthcare Global. The stock has recovered very sharply from the intraday lows on the back of that large block. In the afternoon block window, 5% equity got changed hands. And I understand the PE investor was a seller in today's block. So it's technically a clean out trade from the PE investor. They've completely sold out in today's block deal. So that's Healthcare Global recovering after a large block today.
Nimesh, Tega Industries, you were recently telling us about Tega. What's happening? I mean, any update?
Rima, I've been tracking that stock very closely. It's been part of my chatter list a couple of times in the last few weeks. But again, for Tega, I've been highlighting that it will be a large corporate development. My sense is there's going to be a large leverage buyout, and for that, maybe some private equity investors are likely to buy stake. Also, there's going to be a preferential issue to raise money in Tega Industries so that that can be funded for that large overseas acquisition. So something is around the corner. Announcement can come very soon, but that's a big development in Tega Industries, which is likely in the very near future.
Got that. Thank you very much for that. The stock is down 1.5% today, but in the last 6 months, it's seen a rally of close to about 55%, 6 months. But let's talk about the futures and options space. Nigel's moved over to tell us about the trends there.
Well, it was a good start to the trading session. I think the end is going to be a little bit disappointing because you would want us to end above the 25,000 mark, which appears unlikely. Now, you've got the direction right today, and that's why the 25,000 call, if you look at that, the premium is still up, but from the highs of the day, it's come back. So that's telling you there's a mix of activity at that particular strike. However, on the 25,000 put itself, there is clear signs of writing. The premium over there has crashed, and just take a look at it. It's down by close to around 45% in today's session. So the broad levels you're looking at in the near term, that 25,050, the bulls are making a bit of a meal of it and the bears are fighting out there. So 25,050 is important on the upside. The first reference point on the downside, going by the options data, going by what, technical levels, 24,750, that's the reference point you're looking at. The Nifty Bank, today as well, it showed signs that it wants to come back into its form. And remember, bulk of the shots are on the Nifty Bank. So it came closer to around the 20 DMA, but it couldn't conquer that mark. So for the Nifty Bank, that 54,750, 54,800 mark is extremely crucial because that's where the 20 DMA comes in at. The IT index, year to date actually that continues to underperform, but that's now seeing some good bit of buying, from the recent lows. In fact, in the last 1 month, the IT index has gained more than 5.5%, outperforming the Nifty as well. So that actually has found its way back. Let's see whether or not it's got enough in it to maybe take us to around the 38, 39,000 mark. Moving to stocks in focus today, tech. Some of those tech stocks are coming for short covering. Oracle, remember that one is seeing fresh buying. But if you look at Tata Elxsi, the stock is up, open interest is down. If you look at the other one, which is KPIT Technologies as well, remember these stocks have seen a sharp correction from the top. But both of them have come in for a bit of a short covering bounce. On BSE, the street is sensing that there is some negative news in the offing. That's why the stock is down and the open interest build-up is massive. Keep in mind the shorts are heavily loaded in the system. If the worst case outcome doesn't play out, I'll keep an eye out on BSE actually, because at around that 2,000, 2,100 levels, we did see some buying interests out there. So we'll keep an eye out on that. And finally, RBL Bank. There is some unwinding of long positions is what we've seen. Some shedding even in the options data. But at the last time I checked, it's not done enough to come out of the F&O band. So this will, in all probability, continue to remain in the F&O band, though in fact we've seen that in today's trading session, there is some shedding. So cut to cut, but I think it still continues to remain in the F&O band. Back to you.
Thank you very much for that. Mitesh is now back with us. Mitesh, 15 minutes to go. Any more trades?
I think a lot of defense names have started turning up. So BDL is something which has come on the radar. BTST here with the stock at about 1487 and a target of 1520 can be possibly looked at on the upside. BEL similarly, I think also is interesting. BTST here with the stop at 386 for targets of 391.5.
Got that. Thank you very much for that. Amrish Baliga is now joining in. Amrish, Oracle Financial Services now 10% higher on the stock. There is the rub-off positive impact from the parent company, Oracle Corp, reporting good numbers, cloud surge, very strong guidance. And plus, Oracle has underperformed. Its all-time high levels was more than 13,000. And now the stock today is closer to 9,200. So there is that gap compared to the levels that it was perhaps about a year back. Explain to us, is there a direct connection? Should the street be this excited about OFSS?
See, it is sentimentally positive, the performance which has come of the parent. So I think it can bounce back, but don't really expect it to go back to those levels of 13,000. Possibly it can go back to levels of about 10,000, 10,500. But beyond that, I think it'll be a bit difficult unless we see a major uptick in the performance here.
Okay, all right. But Amrish, you normally join in and you give us that one stock that's on your radar. Which one is that today?
Nigel, the stock is Sheela Foam. It's more than a 50-year-old company, a leading manufacturer of mattresses, well-known flagship brand, which is Sleepwell. PU Foam, which is a key raw material for them, is manufactured in Australia through their wholly owned subsidiary. And even in Australia, they have a very decent market share of about 40%. Kurla was acquired about 2 years back, and the integration is more or less done. But then because of this takeover, the margins had suffered to a certain extent. But then now, the margins have seen a decent uptick in Q1. And the India market share is about 30% for the company. And the products are sold through about 6,000 exclusive brand outlets, 16,000 multi-brand outlets. They have in fact added 400 outlets in the last quarter. In fact, the management is now quite confident of a 15% CAGR as far as the top line is concerned over the next 3 years. And premiumization surely will ensure better margins even going ahead. Railways is another big opportunity for them. And they're in fact supplying mattresses for Vande Bharat sleeper. So expected EPS for FY27 is about 18. And my target price here would be 920.
Okay, that's Sheela Foams for you. Any amongst these shrimp exporters, like an Avanti Foods, Apex, Have you analyzed the fundamentals?
See, I mean, the fundamentals don't make much of a sense now because in case, this tariff continues, then I think all of them would be affected, to a decent extent. But now the expectation is that there could be a U-turn looking at the latest comments from President Trump. So based on that, we have seen this bounce back. So unless, of course, there is a clear U-turn, you don't expect a long-term sort of a move on this. But from a short-term perspective, yes, I think sentiment-wise, it can bounce a bit more. Maybe, something like a Avanti feed, maybe to levels of about 825, 850. But for it to have a sustained up move, I think clearly there has to be a U-turn on the tariffs.
Okay, all right. Stay on, Amrish. We'll have more questions for you in just a bit. PSU bank stocks have been buzzing around in trade, and Gaurav has been looking at a couple of potential reasons why. Gaurav, what comes to mind?
Well, as PSU bank stocks are in focus. In fact, if you look at the PSU index itself, the PSU banks index is up more than 1.5%, and all the constituents are in green. And the reason being that PSB Manthan, which is going to happen on 12th of September, this will be a two-day event where Finance Minister is likely to meet the top management of most of the public sector banks. And with this, the optimism is rising across two segments. First is privatization and second is divestment. In fact, in an exclusive interview with CNBC TV18, Finance Minister also said that you will see action in privatization and divestments. And when we look at the divestment angle, we already have a couple of banks who are likely to raise around 45,000 crores via QIP. We already have a few banks who already have the approval from the board in the likes of SBI, Union Bank, Bank of Maharashtra, so Indian Bank. So this possibility is already there. Second is that as per our exclusive sources, it is also said that the government is likely to consider increasing the foreign direct investment limit for public sector banks. Remember, currently it is at 20%. So there is some speculation that this can also get increased because participants say that Indian banks need more capital, and at the same time, consolidation of PSU banks cannot be ruled out. So when we look at consolidation, this is not something new. In April 2020, we already saw this kind of exercise happening where 10 private sector banks consolidated into 4. And we got the major banks like Punjab National Bank, Canara Bank, Union Bank and Indian Bank actually increasing their book because of this consolidation. In fact, when we look at the entire PSU story, we are already seeing some kind of uptick in the fundamentals as well. If you look at the credit growth, in first quarter of FY26, we saw most of the PSU banks reporting double-digit credit growth. If you look at ROAs, now PSUs were known for not having ROAs more than 1%, but in first quarter, we saw the bank like Bank of Maharashtra reporting 1.8% ROA, which is even higher than most of the private sector banks. And again, we saw banks like Indian Bank, SBI, actually reporting ROAs of more than 1%. So definitely, there is fundamental shift for PSU banks where we are seeing strong loan growth, better asset quality and better returns. And at the same time, with this PSB Manthan, now there is speculation and optimism rising around. And as a result, we are seeing the same optimism in stock price as well.
Okay, all right. Got that, Gaurav. Thank you very much for the analysis there. We do have to take a very quick break on that note. Come back on the other side with the more market talk. Welcome back. 4 minutes to go. Just some important geopolitical, developments that we must keep in mind. Remember, the US president had tweeted saying that it was really up to EU. If the EU was willing to put secondary sanctions on Russia and its trading partners, then US would do the same. And now there is a statement that has come in from the EU leadership. In fact, the president of the European Commission, Ursula von der Leyen, has spoken on the ongoing Ukraine war. And she said that Europe will continue to support all efforts to bring peace in Ukraine. And there seems to be some reference on the potential sanctions as well. Take a look.
Because Ukraine's freedom is Europe's freedom. The images in Alaska were not easy to digest. But just a few days later, European leaders came to Washington to support President Zelensky and secure commitments. Real progress has been made since then. Just last week, 26 countries in the coalition of the willing said they were ready to be part of a reassurance force in Ukraine or participate financially in the context of a ceasefire. We will continue to support all diplomatic efforts to end this war. But we have all seen what Russia means by diplomacy.
Okay, that's the latest on the geopolitical front. By the way, Ola Electric, I think, is seeing a bit of an intraday spike. Just pull up that intraday chart of Ola Electric. The stock has been very, very volatile. It had a big up move about 45 days back. Since the last 1 month or so, over the last couple of days, it's been correcting. And now the stock, once again, is seeing some buying. It's crossed the 200-day moving average with the up move, and I think there is a block deal which is taking place in that. Other than that, in the last few minutes, you are seeing some spikes in EIL, Apollo Microsystems, which has seen a 145% jump this year. That's been higher. BSC is trying to recover some lost ground, but still likely to end with a cut of about 3.5%. Amrish, Urban Company, this consumer tech company, we've all used their services. That's opened up. Have you analyzed it?
Yeah, in fact, we are finding the valuations quite decent at which is being offered, and we are quite sure that it should get really oversubscribed quite heavily. So we've been advising our investors to subscribe to the issue.
I think it got subscribed completely in the first couple of hours of opening. And it's about 15,000 crore in terms of evaluation. So if you have to compare it with, say, another consumer tech company like a Zomato, Swiggy, of course, completely different ball game.
Yeah. But it's a similar class of companies, platform companies or consumer tech companies broadly. But the difference is an urban company, you would call them when you need a salon service once a month, deep cleaning during Diwali once a year, right? Zomato can be ordered every month. 5 times a day. Or, on the grocery front, every single day. If you want to order in, it could be once a week, once a month. So there's a big difference in frequency, right, between the two. So they're different, not exactly comparable, but you could say it falls in the same structure, but different models.
Also, the other difference between the two is Zomato, Swiggy are asset light. Right? All they have are delivery partners. But Urban Company invests in training their service professionals. So in that sense, it's asset heavy. So these are the two big differences that I see.
And they also have that brand native, right? Where they just started, with water purifiers and a couple of hard assets that they're...
Two products. Water purifiers and
locks.
Smart locks.
And locks, So let's see what they plan to do on that side. Fair enough. It's an IPO definitely that, that has the market's attention, and we'll see how it fares. Amrish, thanks very much. We're down to the last minute, so we'll quickly recap today's trading action. So it's been a day where the bulls have managed to retain a bulk of their charge, their gain, and that's good. 100 points on the Nifty, up and away. And both banks and IT to a large extent have helped. Look at Wipro, HCL Tech. Look at TCS, gains between 2 to 3% on these stocks. Even Infosys continuing its good form from yesterday, 2% higher. And then you have the financials that have contributed. So the twin engines for the market have fired, IT and financials. SBI, IndusInd Bank, look at SBI Life, Bajaj Finance, Axis Bank. So all kinds of lending and non-lending financials have done pretty well. Beyond this, some other key trends, gains for an NTPC, for an ONGC, for Tata Steel. But the flip side has been autos, actually. The profit taking was largely on autos today. Bajaj Auto, M&M, Maruti, Hero Moto, some of these names have lost between 1 to about 2.5% after the big run-up that they've seen.
The bulls were in control and markets have ended higher now for the 6th trading session We crossed 25,000 on the Nifty on an intraday basis. We're closing shy of that with a gain of 110 on the Nifty. Sensex up 330. And good to see the mid and small caps outperform with a gain of 1%. Good advanced decline ratio, 3 stocks up, 2 stocks declining. All this came on the hope and optimism of a trade thaw between US and India. That was the big driving force behind today's up move. We'll take a leave and closing bell. Thank you very much. Don't go anywhere. On the other side is Markets Forward.
Despite a range-bound session, Dalal Street gains for the 6th straight day. Gains come on the back of India and the US striking a conciliatory tone over trade talks. The Nifty, though, fails to hold the 25,000 mark. IT stocks gain the most.
Big auto ancillary names and textile stocks, those were the ones that rallied in today's trading session, driven by optimism over potential trade deal between India and the United States. Bharat Forge, Samvardhana Motherson, Wells Living, Gokuldas Exports jumped in trade on the back of this.
Urban Company's 1,900 crore rupee IPO gets fully subscribed on the first day. CEO Abhiraj Bhal tells CNBC TV 18 that the company aims to continue to grow at the same clip and that it is nearing a break-even point.
Hello and welcome to this edition of Markets Forward on CNBC TV 18, your go-to show where we aim to get you all the key data points to gear up for the next trading session. I'm Vinny Motiwala, with me is my colleague Hormaz Pataki as well. Hormaz, we started, at the 25,000 cheer. Everyone was happy. We managed to close slightly below that, but no complaining. At least broader end of the market, that was also outperforming. Banks, they were doing well as well.
The bulls will be slightly disappointed, right? Today had almost all the ingredients of a sustained move above 25,000, but then yet again, although it was the 6th day of gains for the benchmark indices, it could not translate into a close above that 25,000 mark, and yet again it was a close below that level for the index, but nonetheless a 6th day of gains for the markets. And tomorrow we go back with another day and another attempt at scaling that 25,000 mark, which will be the weekly expiry for the BSE contracts. And we've got you covered for the next 20 minutes with all the big news and the key developments on Dalal Street, top corporate voices and events to track for the day ahead. But of course, today's session being that IT was the top performer, but the sentiments though, Vinny, were mostly around the fact that the export related names, the textile names, the shrimp feed exporters, they were the ones that hogged the limelight today.
Absolutely, they were the ones that hogged the limelight. And obviously, I think, the support that comes in also is in terms of the GST announcement for the consumption play. So that also is still something that is supporting this consumption side of the story as well. So that is what will be interesting. But, do not forget IT, couple of days of positive, move that we've seen. And IT is continuing that up move today. Obviously, that Oracle news that came in, that was supporting it. But let's talk about the lineup that we have in store for you all today. We'll start the show with the top movers and shakers of the day, and that will be with Vivek, and also talk about some of these important stocks that are going to be on the radar, right? Export-facing stocks, whether you talk about Bharat Forge, Motherson, Gokuldas Exports, and stocks that were buzzing largely on the back of India-US resuming trade talks with those stocks. Now, let's also, we'll delve into which are the key market events to watch out for in tomorrow's trading session as well.
And to our first segment of the day, Vivek is across the wall and he joins in with the top movers and shakers of the day. Vivek.
Well, thank you so much for that. Like you mentioned, slightly disappointing in the fact that we didn't manage to hold on to the strong gains. But despite that, advance decline ratio, very strong, more gains than laggards in today's trading session. And like you mentioned, you cannot look past the entire IT pack. The entire IT pack, the large cap names, the mid cap names, as well as some of the small cap IT companies, all of these stocks continued to see very, very strong up move. So all of the names were doing quite well. The shrimp stocks, remember, those are the ones that were amongst the top gainers in the session today. Avanti Feeds, Apex Frozen, Coastal Corp, all of these stocks among the top gainers. The PSU Banking Index ahead of the mega meet that is scheduled on September 12th and 13th. That is something all of these stocks saw buying throughout the trading session. The guidance upgrade from Oracle is something that aided the entire IT pack up move, like I mentioned earlier. So names like Oracle Financial up over 10%, Persistent, Emphasis, Coforge, Tata Elxsi, all of them seeing gains anywhere in the range of 4 to 10%. Vikram Solar came out with its results. A very strong Q1 update, that stock high by almost 5%. And capital goods and defense stocks, especially defense names in the last hour, saw significant buying emerge. Apar Industries, BL, almost 5% higher for BL, MTAR Tech, CG Power, a lot of positive brokerage notes coming in as far as these names too were concerned. And HAL also rounded off this particular buying that was seeing across the defense names as well. On the other hand, a few laggards as well. Auto pack, remember, almost 12 to 13% up move the last month and a half. Today, a bit of profit booking across most of the names. In fact, most of the laggards on the Nifty 50 were the auto names today. Car Trade Tech, now this particular stock was clearly a casualty of selling pressure in today's trading session. A JM financial report indicating that the rise of AI is something that could lead to significant risk, almost 10% lower for this name. The capital marketplace, so names like BSE as well as Angel One, under significant pressure today. Worries in terms of curbing of options trading activity is something that weighed on these particular stocks. And Good Luck India, we had the management on the channel earlier today, and the management trimmed the revenue growth outlook for FY26 to stock ended lower by over 11% today.
Okay, Vivek, thank you so much for that, for rounding up those whole host of stocks that were in focus today. But let's bring on board our guests for today. We have Amrish Baliga, independent market expert, as well as Shrikant Chauhan of Kotak Securities. Amrish as well as Shrikant, thank you so much for joining us on the show. Amrish, let's talk about PSU Bank, Nifty PSU Bank. That was among the top sectoral gainer today. Now, given the meeting that is coming in on September 12th as well, what are your thoughts for the PSU banking side?
I think one of the major discussion points, I think, would be consolidation, a further consolidation of the PSU banks. I mean, about 4 or 5 years back, we had seen 27 PSU banks being reduced to 12 through consolidation. And now it's expected that finally we'll have possibly 6 or 7 banks. So the ones which would benefit would be the larger PSU banks other than SBI. I would say Bank of Baroda, PNB, Canara Bank, Union Bank. I think these are the ones which should get benefited because of the consolidation.
Let's also get in Shrikant. Shrikant, thank you for joining in. Yet again, 25,000 proving to be elusive for the Nifty. But do you see this as a matter of time now before the bulls manage to conquer that level? Or do you still expect further resistance at that 25,000 mark?
Yeah. Good evening, Harmas and everyone. See, the recovery in the second half was quite encouraging. And based on that, we are expecting market to surpass the level of 25,000 confidently. We may even see the levels of 25,200 in the near term. The reason is because Bank Nifty recovered very well in the second half and it closed almost around its opening levels. So today there was balance between bulls as well as bears, and Bank Nifty managed to close little bit on the higher side. So while looking at the entire setup of the Bank Nifty, I am of the view that Bank Nifty is now going to provide relevant support to the market, and based on that, the market may try to cross the level of 25,200. So ideally, the strategy should be to look for adding long position if there is any correction in the market, but major focus should be more on the bank stocks and Bank Nifty.
Okay, Shrikant, thanks for your view coming in for the Nifty as well as the Bank Nifty. That's the one everyone's keeping an eye out on now. Let's move on and talk about the IT pack, right? We had Oracle Financial Services that soared as much as almost 10% in today's trading session. And, what was the reason for this? Its parent firm, Oracle, they came out with some commentary there. Now, let's go across to Rima, who's here to give us more details on this front.
So the reason for the rise in Oracle Financial Services, OFSS, is twofold. One, it's a sentiment rub-off impact from the parent company, Oracle Corp, which reported the numbers, gave a very strong guidance on AI and cloud, and shares of Oracle Corp went up 28% in after-hours trade. So there was a rub-off impact because this company, Oracle Corp, is the promoter of OFSS with about a 72.5% holding. And the second reason is that OFSS has been an underperformer. The stock is down 30% on a year-to-date basis. It's much lower compared to its all-time high level of 13,220. So when there is that good news, there is that catch-up taking place. But Oracle's numbers, what is it that the street like, the parent company, the global giant? Well, it's projections on cloud. For one, they're talking about cloud revenues surging from 10 billion last year to 18 billion this year to 144 billion in 4 to 5 years. That's a solid growth path. And these projections would also include the projections or some guidance or outlook from the Indian subsidiary, OFSS. So while there is no direct run through, we don't know how much India contributes to the overall revenues, there would be that rub-off impact. But generally, if cloud is doing well, it's positive for Indian IT services companies because Indian IT services companies help with cloud implementation. So twofold reason. One, because it's been an underperformer, it's been a bit of a drag. So that's reversing on the back of positive commentary from its parent company.
Okay, so keeping an eye out on Oracle, but the IT pack as well, that was buzzing in trade. But apart from IT, we had all those textile stocks, right, that were buzzing in trade, Urmas, and that is obviously, given that Trump's commentary makes a very big difference in terms of tariff, the twists and turns over there are leading to the twists and turns and ups and downs for the textile sector as well. Today, we saw the textile sector that was buzzing because commentary that came in the morning. Now, apart from that, let's look at the last 1 month. Interesting things that have happened over there, right? 18th August, the government first said that they'll, remove that import duty on cotton from 19th of August. That was around 11% that would be removed to address the demand concerns that were coming in because there was already a 25% tariff that was implemented by the US. To support the Indian industry and textile industry, this was the move that came in. 27th of August, the US administration applied that additional 25% tariff. So now India would be paying total 50% tariff. That time all these textile stocks saw a fall coming in. 3rd of September, GST rate rationalization, the restructuring, 2 slab rates at 5 and 18%. And for most of the textile and apparel players, they have moved more towards that 5% slab rate. Just a few of them are moving towards the 18% rate. So most of them, even in terms of value chain, the raw material side, that also has moved towards 5%. And that is why textiles, that was a positive that came in there. Now today, obviously, in terms of commentary between India and US, Prime Minister Narendra Modi as well as President Trump. Seems like, trade talks are resuming. They're going on that positive note. That is something that kept the stocks abuzz. Now, going forward, we'll watch out for domestic demand for textile players, government support. If anything further comes in, what's going to be happening between the tariff fronts? India-UK FTA, that's a big positive for them because Indian textile players will look to gain more market share in the UK market. EU and India FTA, that's a big one as well. Those talks are on, positive signs that are coming in there. And analysts are highlighting that could see some maybe, final decision coming in on those trade deals for India and EU by the end of this year. So that will again be a positive. So that is something that we're keeping an eye on and the main reason today that we are seeing all these stocks positive trade.
The twists and turns continue for a lot of these textile names. Amrish, with Donald Trump, it's never over until it's over. So the sentiment impact aside, do you really believe that with these latest overtures that you have seen over the last 2 to 3 days, would that result in something meaningful? And now with these textile stocks already having been beaten down 15-20%, you can try taking that risk with that hope that things would eventually settle down over a period of time?
I think the worst possible scenario is already factored in, and we have seen a very decent correction in most of these textile stocks in the last couple of weeks. And now with the GST rationalization, the trade deals which India is striking, even the export-oriented ones will surely find new markets where they can increase their exports too. And in case there's a U-turn by Trump, which is again expected now after the latest social media comments, I think in case that happens, that'll be a big bonus for the textile space. So, what I would say is from here, possibly the downside is quite limited, whereas there can be a decent upside if everything falls in place.
Decent upside if everything falls in place, and everyone's hoping for that, right, Amrish? But Shrikant, anything that you would highlight in the textile space that one could look at right now? Gokuldas, Vardhaman, KPR Mills, anything that on the technical front?
Yeah, I think so. In that space, Gokuldas recovered very well from lows. The stock has formed double bottom sort of formation, and after crossing the level of 770, 775, we saw there was good amount of jump in the volume. So while looking at its formation, yes, we can expect some upward activity, but I think we need some more support from buyers, because it's a very initial conversation, or maybe talk, or we can say it's a very initial way of taking any view on the particular sector. It is better to focus more on other stocks. I think PSU banks looks really good. There, I think we can expect further more activity in the near term.
Better to focus on other stocks other than textiles. So let's do that and talk about some other export-oriented names. And with these latest gestures that have taken place, a lot of these export names like Bharat Forge, Samvardhana Motherson, Cyient, all of them were in focus today. Sudarshan is here with why all of these stocks did what they did in today's session. Sudarshan.
So today early in the morning, we saw positive comment coming in from both US President Donald Trump and Indian Prime Minister Modi, and that led to an interest in all the export-facing names which were under pressure so far in 2025. So we'll start with Bharat Forge, which was down 6% in 2025 and has underperformed peers. And now today in the trade, so day before yesterday it was up 6%, yesterday it was down, but again today it was up and it has crossed 100-day moving average. Another stock from the auto pack which was in focus is Samvardhana Motherson. It has been near 52-week high, and also over the weekend company had unveiled five-year plan that also boosted the sentiment. Coming to IT stocks, over the last few days we have been seeing buying in IT names, and today also some of the mid-cap names saw sharp short covering, and some of them are first one LTI Mindtree, which was up nearly 4%, and also today it has crossed 200-day moving average. Another name that was in focus was Cyient, because it has underperformed peers. It was down almost 33% in 2025, but managed to recover some of the losses, and also it has crossed 50-day moving average in the trade today. Lastly, from the pharma pack, two stocks that have been in focus and also underperformed the peers and has a huge contribution from the US. First one is Dr. Reddy's, for which contribution from US is around 53% and is down 6% in 2025. And another name is Aurobindo Pharma, which gets a contribution of around 50% from US, and that has also underperformed the peers and down 20% in 2025.
But we'll have to keep seeing that if these names follow buying or short covering, and there is a possibility that it might happen if there is any positive news flow.
Thanks so much for that, Sud. But let's move on to some of these, shrimp stocks or seafood exporters that were also in focus today. And Ria is joining in with us to give us that update and why these stocks were buzzing. Ria.
Well, yes, the European Union has approved 102 new fishery establishments for exports to the EU, and this move is expected to add around 16% more Indian export establishments in terms of trade volume. Now, the Commerce Ministry has also said that they are anticipating an immediate rise of around 20% of trade volumes, and India's marine exports, remember, to the European Union were valued at around $1.1 billion in FY24. These marine products exports have also recently been heavily impacted by the 50% tariff rate that was imposed by the US on India, and the US remains the largest export market for marine products, followed by the European Union. Now, in terms of exposure to the European Union for some of these listed players, Avanti feeds around 17.4% of their shrimp feed revenues in FY25 came from Europe, and the company is already working on expanding its presence in non-US markets, which includes the European Union. For Apex Frozen Foods, around 39% of the total revenue of the company in FY25 came from the European Union, up from around 26% in the previous financial year. And they've also seen robust demand coming in from this geography in FY25, and they continue to strengthen their presence in the market. Some other listed players that also supply to the European Union include Coastal Corporation, Waterbase, as well as IFP Agro, and all of these seafood exporters have posted very strong gains in today's trading session.
Ria, thank you for that update. And just before we get to Ambrish on these seafood names, let's round off the stocks loop with Car Trade Technologies. That 17% intraday drop that the stock saw was the biggest on record. Saw some recovery over the course of the day, but then towards the close, that recovery was also sold into, eventually ending 10% lower after the downgrade from JM Financial. Sudarshan is still with us, and he'll tell us what led to that downgrade from JM Financial. Sudarshan.
So as you said, Car Trade at one point in the today's trading session was down 17%. It did make a recovery, and at the close it was down 10%. But remember, the stock has outperformed all the peers, and in 2025 it was up 55%. And if you take a look, the outperformance, and from 52-week low the stock had seen October of 2024, from that level stock is up almost 200%. And reason of underperformance in today's trade, because JM Finance has come out with a note, it has downgraded the stock to hold sell from whole, and target price it has increased from earlier target of rupees 1900 to rupees 2350 per share. And the main reason it has given off this downgrade is because of valuations. It's saying that company is currently trading at 43 times FY27 estimated EBITDA multiple. And this is too rich for a company that generates almost entire revenue from B2B segment. Also, demand boost does not necessarily mean that it's a linear rise that company is going to see in the revenue front. And also, JM Finance has recently done a survey which suggests a significant rise in the use of generative AI tools versus Google search. That JM Fin believes that it can be a risk for the company going forward.
Interesting analysis there from JM Financial. Sudarshan, thank you for that. And Ambrish, we are on that topic of the shrimp exporters, the Avanti Feeds and the Apex Frozen Foods. Has opened up a new avenue, this action from the European Union. Is there a stock that you find value among these names?
No, I mean, see, after a major correction, what we saw because of the tariffs, I think all these stocks can get back to where they were only if there's a clear U-turn by President Trump as far as the tariffs are concerned. EU, surely this news is positive, no doubt, but then I don't think the demand would be enough to take it to levels where we had seen them even about 4 or 5 months back. So I think one has to wait and see as to whether US changes its mind.
Mm-hmm. And Shrikant, any thoughts in terms of car trade as well? Obviously, today we're seeing a bit of a fall coming in on the back of that brokerage note, but overall, what should we keep an eye out on here?
Yeah, while looking at its fall, it is very clear that it is into the bull market correction. And whenever the stock is falling in such a way, we have to see that whether it is breaking the important level or not. And today, luckily, it survived above the level of 2200. So till the stock is not breaking the level of 2200, we can see consolidation sort of activity for next few days. But again, 2750 will be definitely a very big hurdle for the stock to cross. Ideal strategy should be to look for reducing position if there is any pullback towards 2500, 2600 sort of levels. And in case if it breaks the level of 2200, then we can expect further more worries for the stock. Otherwise, I'm expecting further more consolidation.
You wouldn't mind some consolidation, right? From the March 23 lows until yesterday's high, the stock was up 8x is Car Trade Technologies. But Ambrish, Srikanth, thank you for spending time and joining us to discuss all the stocks that were in the news in today's trading session. Take a short break. On the other side, we return to tell you what are some of the key events to watch out for going into tomorrow's trading session, and of course the top corporate voices that we spoke to over the course of the day. Stay tuned. Still with us here on Markets Forward, on to some top corporate voices. Then Gopal Snacks is first up, with the stock gained after the company inked an agreement for third-party manufacturing facilities, and the management stated that it is upbeat about the increase in volumes on the back of these GST cuts. However, the company added that the 22nd of September is too short a notice to replenish all the stocks in the market, but is optimistic that it will be able to release products with increased grammage and lower prices packed in the market by the end of September. Despite the increase in volumes, the company has not revised its guidance for the full year, maintaining its revenue growth outlook of 18 to 20%.
From FMCG to cement, we spoke to the management of JK Lakshmi Cement, and he said the GST rate rationalization is positive for the industry. They expect the industry to grow at 7%, and they expect the company to outgrow the industry with high single digits growth that is expected there. Further, the demand has been subdued due to the rains, but believes improvement in consumer affordability could lift the premium cement volumes. It targets 30 million tons capacity by 2030 and is focusing on organic growth.
We also had the management of KEI Industries, and they mentioned that the GST rate rationalization will boost the housing wire market as there will be higher savings. He also said that the higher cash availability is will further boost demand in the range of 5 to 10%. However, they do not see any impact on the cables and wires market, adding that the demand trends continue to remain strong in the second quarter and are likely to remain so going forward as well. The company has maintained its FY26 guidance of 18 to 20% revenue growth and 10 to 11% EBITDA margins.
And for the last segment of the show, we have Ria joining in with us to tell us which are the important events that you should be keeping an eye out on tomorrow. Ria.
Well, yes, let's take a look at the key events to watch out for tomorrow. First up, in terms of key economic data, from Europe, we have the ECB interest rate decision coming out, followed by the press conference. In the US, watch out for the core CPI print, as well as the data for initial jobless claims and the OPEC monthly report as well. Back home in India, Infosys holds a board meeting to consider buyback of equity shares. Apart from this, Edelweiss Financial Services as well as Ircon International will be trading ex-dividend tomorrow. Three other events to watch out for. Prime Minister Narendra Modi will visit Uttar Pradesh and Uttarakhand tomorrow. The Finance Ministry is also going to convene a crucial meeting with the heads of major financial institutions, including large public and private sector banks tomorrow. And the last thing that we're watching out for, Nirmala Sitharaman has a keynote address at the GCC Business Summit at Visakhapatnam.
Ria, thank you for that update. With that, we call time on this edition of Markets Forward. From Vinny and me, thank you for watching. More news and updates continue on the other side.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. US President Trump and Prime Minister Modi exchange conciliatory messages once again. Trump says trade negotiations will continue and he looks forward to speaking with Modi in the coming weeks. Prime Minister Modi calls US a natural partner and expresses confidence over a trade deal. US President Trump presses European Union to impose 100% tariffs on India and China to pressure Putin to end the Ukraine war. CNBC reports Trump made the demand during a meeting with the EU and Ukrainian officials. Washington is also ready to mirror any tariffs imposed by the EU. Sensex and Nifty gain for the sixth straight day. President Trump and Prime Minister Modi exchanging messages boost sentiment. Equity mutual fund inflows dropped 21% in August. Total assets under management also declined. Uneasy calm on the streets of Nepal as the army imposes nationwide curfew. Dozens detained on charges of arson, vandalism and individual attacks after lawmakers get roughed up on the streets. Kathmandu airport remains closed for the second day. Poland says a huge number of Russian drones entered its airspace during Moscow's attack on Ukraine. Adds 3 or 4 were shot down. Calls it an act of aggression. Summons the Russian envoy. EU and NATO condemn the attack. Call it intentional. Kremlin is yet to respond to the charges. Israel draws global condemnation after bombing Qatar's capital Doha, targeting Hamas leadership. The UK, France, Saudi Arabia denounced the strikes. Qatar claims there was no warning from the US about the strikes, which killed 5 Hamas members and a Qatari security officer. Urban Company's 1900 crore IPO fully subscribed on day one. The firm raises over 850 crores from anchor investors ahead of the public issue, 80% of which is an offer for sale. The price band has been set between 98 and 103 rupees a share. Three-way battle for late industrialist Sanjay Kapoor's inheritance. Sanjay's widow Priya claims that his children with ex-wife Karishma have not been left on the road. Says she facilitated transfer of 1900 crores in assets to the children 5 days before the suit. Mother Rani Kapoor tells the court that there's nothing for her in Sanjay's will. Court directs Priya Kapoor to disclose all known assets of Sanjay Kapoor within 3 weeks. Apple unveils iPhone 17 lineup for India with a starting price of nearly 83,000 rupees. The top-end version will cost nearly 2.3 lakh rupees. And the top story this evening, US President Donald Trump and Prime Minister Modi exchanged conciliatory messages once again amidst the tariff standoff. In a social media post, Trump said that both sides are continuing negotiations to address the trade barriers, and he's looking forward to speaking with Prime Minister Modi in the upcoming weeks. Trump wrote, and I quote, "I feel certain that there will be no difficulty in coming to a successful conclusion for both of our great countries." End quote. Prime Minister Modi echoed the sentiment, calling India and the US close friends and natural partners. The Prime Minister said both teams are working to conclude talks at the earliest. He added, and I quote, "Our trade negotiations will pave the way for unlocking the limitless potential of the India-US partnership." End quote. The leaders shared conciliatory messages even as the 50% tariff on India remains in place. We learned from sources that officials from India and the US are likely to have an exchange of trade delegations soon in a bid to find common ground. Parikshit Luthra is here with more on this. Parikshit.
Well, very important developments taking place between India and the United States. Donald Trump has said that he is looking forward to speaking to Prime Minister Modi in the next couple of weeks, and the trade negotiations between the two countries are continuing. The Prime Minister once again reciprocating that sentiment and said that he hopes that the trade negotiations between the two countries will be concluded soon. Now, we've been told by highly informed sources that this is a clear indicator to officials on both sides to fast-track trade negotiations, and essentially the way to sum up this is that the trade negotiations are back on track and they have a positive trajectory. Officials from both sides will now make an effort to hold early meetings and conclude this deal as early as possible. We've been told that talks are on to have delegations of the two countries meet at a very early date in the next few weeks. And this could be an Indian team going to the US or a US team coming to India. So those details are being worked out. But all effort will be made to resolve the differences and bring the tariffs to a level that are acceptable to both countries.
Thank you, Parikshit, for that. Now, US President Donald Trump has reportedly pressed the European Union to impose tariffs of up to 100% on China and India over their Russian oil purchases. Now, CNBC reported that President Trump made the request yesterday during a meeting with EU and Ukrainian officials. Trump also indicated that Washington is ready to mirror any tariffs imposed by the EU on the two countries. Now, this comes at a time when free trade agreement talks between India and the EU have seen tremendous progress, with Commerce Minister Piyush Goyal saying about 65% of chapters have been finalized. And speaking of the EU, the bloc has cleared 102 more Indian fisheries units for exports to the region. This comes as a major relief for the marine product sector that has been hit by 50% tariffs by the US. Commerce Ministry expects EU's move to boost trade volumes by 20%. It also said the move adds 16% more Indian export establishments in terms of trade volume. India's marine exports to its second largest market were worth $1.1 billion in FY24. Indian shrimp stocks rose sharply in today's trade post the news. The US Supreme Court has agreed to hear arguments on whether the Trump administration's global tariffs are legal. The court is expediting the review and will start hearing the case in the first week of November. A lower court had earlier ruled that Trump overstepped his authority by using a 1977 emergency law to impose tariffs. The Trump administration has so far pushed back, calling this decision a judicial overreach. All right, now let's put the spotlight on the stock market action. Sensex and Nifty gained for the sixth straight day. The exchange of conciliatory messages between President Trump and Prime Minister Modi boosted sentiment. Nifty is now within touching distance of 25,000 mark. Sensex gained over 300 points. Midcaps outperformed the blue chips. Equity mutual funds locked their 54th straight month of growth, but the inflows were down 21% in August compared to July. Surbhi Upadhyay joins us with the mutual funds report card.
Well, mutual fund numbers for the month of August are out, and it's not looking like a bad set of data points at all. Yes, it's not as, fantastic as July, because July we had all-time flows going well above, 42,000 crores. This time around, the overall number is slightly more modest, you'd have to say, at about 33,400 crores. Now, why is there this month-on-month dip? Largely because of NFOs or new fund offerings. In July, we had a whole bunch of NFOs on the debt side and also on the equity side, which bumped up the number. In fact, NFOs had pulled in over 30,000 crores in July, and that number has come down rather substantially. If I look at the NFO contribution, it's under 3,000 crores this time around. But maybe you can't fault the industry. I mean, NFOs, every month to expect a bumper NFO would be maybe a stretch. Let's look at the granular details. And here, everything seems to be, on course or on track. Once again, it's small cap and mid cap funds which are finding greater traction when it comes to investors. So if we look at the SMID category, as it's called, mid cap funds have pulled in 5,330 odd crores. The small cap category has pulled in just under 5,000 crores, which is a little lower than last month, but the trend is intact. Large cap funds in comparison have pulled in about 2,800 crores. So more money going in SMIDs, that's the other category. Another factor to keep in mind this time around is that hybrids is a category which has been gaining traction. Your multi-asset funds, your balanced advantage funds. There, the inflow is a little lower as well. Hybrids last time around in July pulled in almost 29,000 crores. This time, that number is a lot lesser than that at a little over 15,000 crores. And both of these categories, multi-asset, they're still finding takers. There's a lot of traction, but it has come down a little bit. But the best silver lining from this data, again, is the SIP book, which is very, very steady. It hasn't increased too much, but at 28,000 crores plus, roughly 28,250 thereabouts, it's still a solid number. So retail investors have kept the faith, and they continue to patiently wait for this market to turn around and start rewarding them in a better way.
Right, thank you, Surbhi, for that. Crude oil prices surged after Israel attacked Hamas leadership by bombing Doha, and President Trump reportedly asked the European Union to impose tariffs on Russian oil buyers. Meanwhile, gold prices edged higher, hovering above the $3,600 per ounce mark. The yellow metals prices have been buoyed by expectations of a U.S. interest rate cut this month. Investors are also keeping an eye on the U.S. inflation data due this week. Fitch Ratings has raised India's FY26 growth outlook to 6.9% from 6.5% earlier. The rating agency cited robust domestic demand and supportive financial conditions. The upgrade follows stronger than expected first quarter data, with GDP rising 7.8% year-on-year. Fitch expects US tariffs on India to be negotiated down eventually. However, it warned that uncertainty could weigh on investor sentiment. Urban Company's 1,900 crore rupee initial public offering was fully subscribed within hours of opening on the first day. As of 4 p.m., the total subscription stands at 2.7 times. Retail investors led the demand, followed by employees and non-institutional investors. At the upper end of the price band, the company would be valued at 14,790 crore rupees. The government is likely to consider further consolidation of PSU banks. Top officials will meet PSU bank chiefs at an upcoming brainstorming session on the 12th and 13th of September. The meeting will have wide-ranging agenda, including governance, artificial intelligence, asset quality, among others. A team from McKinsey and RBI Deputy Governor Swaminathan are also expected to attend this meeting. All right, on to a CNBC TV 18 exclusive. The Revenue Department is deploying field officers to ensure GST rate cut benefits are passed on to consumers from 22nd September. Sources tell CNBC TV 18 that the officers have been instructed to monitor prices of goods across categories to prevent profiteering. Timsy Jaipuria joins us now. Timsy, how will the government ensure enforcement?
With GST cuts to kick in from 22nd of September, Revenue Department is likely to monitor prices of goods across categories to ensure that GST cuts are passed on from 22nd. CBIC has been asked to deploy field formations on ground to ensure that GST rate cuts are passed on. The Central Board of Indirect Taxes and Customs field formations will keep a close watch on rates of all items, both pre and post GST cuts. Sources further say that CBIC has told field formations to ensure that no industry revises MRP to absorb the GST cut benefits instead of passing it through to the consumers. Also, a direction to field officers is to keep a ready list of rate cuts to ensure transition happens pan-India in the correct rates. Also, field officers have been directed to ensure that no profiteering takes place after September 22nd. So, all in, the government is keeping all its machinery ready on ground to ensure that GST rate cuts are passed on. Just to remind our viewers that government announced GST rate rationalization on 3rd of September. The new rates will kick in from 22nd of September, and all daily essential items have been brought down from current 12% and 18% to 5% or nil. Aspirational goods have been brought down from 28% to 18%. Cess on cars and aerated beverages is also likely to end from 22nd of September. So as of now, the entire machinery will be on ground to ensure that GST cuts are passed on to the consumers.
Thank you, Timsy, for that. During the day, the Central Board of Indirect Taxes and Customs held a meeting with industry bodies, asking them to work with the government to ensure a smooth transition. The CBIC clarified to the industry that the amounts pending in cess account will not be adjusted against any other payments. It also addressed concerns from the insurance and auto sector. The government assured companies that procedural flexibility would be provided as long as consumer interests were safeguarded. The three-way inheritance battle for late Sanjay Kapoor's personal assets played out in the Delhi High Court today. Now, Sanjay's widow, Priya, claims that his children with ex-wife Karishma have not been left on the road. Says she facilitated transfer of 1,900 crores in assets to the children 5 days before the suit. Ashmit Kumar gets us the latest on the bitter Sona Comstar first family battle.
Well, just to set the context, it was Karisma Kapoor's children with Sanjay Kapoor that had filed this petition before the Delhi High Court. In that petition, Priya Kapoor, the widow of Sanjay Kapoor, as well as Rani Kapoor, the mother of Sanjay Kapoor, were also named as parties. And before the Delhi High Court today, it became a three-way contest. Competing claims being made by Karisma Kapoor's children, disputed by Priya Kapoor, being disputed in turn by Rani Kapoor, the mother. I'll take you through them one by one. As far as Karisma Kapoor's children are concerned, they're claiming their status as Class 1 as. They're claiming, each of them is claiming 1/5 of the entire assets of Sanjay Kapoor. Their claim essentially is that the will that is being forwarded, that is being claimed by Priya Kapoor, has been forged, has been fabricated, and that it denies them any stake to the assets, any entitlement to the assets of Sanjay Kapoor. So to that end, they are seeking some form of interim protection that the assets of Sanjay Kapoor are not frittered away. That's as far as Karisma Kapoor's children are concerned. Priya Kapoor, the widow of Sanjay Kapoor, has clarified her position that there is a very neat trail of word-stamped word files, emails, WhatsApp messages that clearly indicate that there is in fact a genuine authenticity as far as this will is concerned. And then going on to say that it's not like Karisma Kapoor's children are being left on the road. In fact, submitting before the Delhi High Court that just 5 days prior to the Delhi High Court suit being filed, just 5 days prior to that, assets worth 1,900 crore rupees were transferred in favor of the children on account of the family trust. Now, in the middle of all of this, Rani Kapoor was also present through her counsel. Her counsel argued that this is an extremely unfortunate position as far as the mother is concerned. She's claiming entitlement to assets worth 10,000 crore rupees. She's saying the will is excluding her, the family trust is excluding her, that she's not been given any stake as far as the assets of her very own son is concerned, that this is her family's legacy and that she's being denied her legacy, she's being denied her fair share of the assets. So an ugly dispute this before the Delhi High Court. The High Court for now has not passed any interim directions. This matter has now been posted to October 9th, and that's when the High Court will look to pass, if at all, any directions on whether or not any interim protection is required, any interim assets orders are required for securing assets of Sanjay Kapoor. Back to you.
Right. Thank you, Ashmit, for that. A federal judge has temporarily blocked President Donald Trump from firing U.S. Fed Governor Lisa Cook. She is part of the board that sets interest rates. Now, the court ruled that Cook's removal likely violated the Fed's for cause provision, which does not allow the removal of an individual for conduct that occurred before they began office. Now, Trump last month announced that he was firing Cook, citing mortgage fraud allegations, charges that Cook has denied. The president has long been critical of the Fed and its chair, Jerome Powell, for resisting his pressure to cut rates. Weight loss drug maker Novo Nordisk announced its plans to slash 9,000 jobs as it seeks to revive growth and fend off mounting competition from Eli Lilly and other competitor drugs. The drug major plans to cut 5,000 jobs in Denmark. The restructuring plans is expected to save $1.25 billion annually. Chipmaker Qualcomm is making a big move into automobile technology. It has launched a new driver assist system with BMW called Snapdragon Ride Pilot. It allows hand-free driving and lane changes and is scheduled to roll out in 100 countries by 2026. Auto is now one of Qualcomm's fastest growing segments. The company plans to move beyond chips into full vehicle tech ecosystems. Tech giant Apple unveiled the latest iPhones, AirPods and Apple Watch at its annual launch event. The starting price of the iPhone 17 in India is nearly 83,000 rupees. Rashna Dhanrajani has more on the new launch and Apple's India bet.
Right, Apple has unveiled its iPhone 17 lineup in India with prices starting from 82,900 for the 256GB iPhone 17 to close to 2,30,000 rupees for the 2TB iPhone 17 Pro Max. The iPhone 17 Air is Apple's thinnest iPhone at 5.6 mm and starts at about 1,19,900 rupees, slotting into the aspirational mid-tier prices. Now, the prices have climbed up compared to last year's iPhone 16, which started at 79,000 9,900 rupees. But that was for the 128 GB variant, and this was also at a time when, if you look at the rupee to dollar exchange rate, was about 83 rupees, while now, as we know it, it's about 88 rupees. Now there's also 1,84,900 rupees for the 1 TB Pro Max in the iPhone 17. That was in the iPhone 16 Pro Max range. But the iPhone 17 is 256 GB, which is the base model. So that is 3,000 rupees costlier than last year's base model, but also the storage has doubled up. While the Pro Max and the Pro Max's new introduction is of a 2 TB tier, that clearly pushes the ceiling by 45,000 rupees, signaling Apple's bold premium push. Yet India remains a growth juggernaut for Apple, with $9 billion in 2024-25 sales and iPhone revenues projected at $12.1 billion in 2025. Now, shipments have jumped 35% in 2024, securing an 11% market share in the phone category, but it is dominant in the premium category at about 64%. Local manufacturing has driven this surge. All iPhone 17 models are now made in India, cutting import duties by 20 to 22%, lowering average selling prices by $1,000 in 2023 to $958 in 2024. India now produces 1 in 5 iPhones. Globally, with exports already reaching international markets and US shipments on the horizon, Apple's retail footprint is also expanding, with flagship stores in Mumbai, Delhi, Bengaluru and Pune, and new outlets planned in Noida and Mumbai by 2026. Financing options, trade-ins, festive promotions are fueling further demand, especially in Tier 2 cities where iPhones pretty much remain a status symbol. But speaking of beyond just iPhones, there's also MacBooks and iPads that are surging, with iPads now commanding a 30% tablet market share. Services and enterprise sales further embed Apple in India's ecosystem. Now, analysts forecast that India is Apple's third largest market by 2026, overtaking Japan and the UK. With local production, strategic pricing and unmatched brand allure, Apple's India story is about scale and ambition, transforming the country into a global manufacturing and export hub. Back to you.
Right, thank you, Rachna, for that comprehensive update. On that note, we'll slip into a short break. Coming up next, uneasy calm on the streets of Nepal as the army imposes nationwide curfew. Dozens detained on charges of vandalism, arson and individual attacks. More details when we return.
I'm sitting here in the heart of India's financial markets, the National Stock Exchange, a fortress of technology and trust, a place where billions of dollars of trading is executed across equities, derivatives, commodities in a microsecond. But beyond the tickers, the symbols, the charts, today we go behind the scenes. We look at surveillance rooms, IT infrastructure, cybersecurity, and of course, the National Operations Command Center. And we do all of this with NSE's current MD and CEO, who was also instrumental in setting up of the exchange, Ashish Kumar Chauhan.
Welcome back. The big global story that we're tracking: an uneasy calm prevails in Nepal 24 hours after a violent anti-corruption stir led by Gen Z stormed the corridors of power. Prime Minister Oli resigned yesterday as protesters went on a rampage. Nepal's army has imposed a nationwide curfew. Yesterday, protesters stormed and set fire to several key government buildings, including International Convention Centre, which housed the federal parliament. Thick plumes of smoke could be seen from the India side of the Nepal border. Politicians did not escape the protesters' wrath either. Nepal's finance minister was chased and assaulted on the streets of Kathmandu. At least 23 people have been killed so far. Our team of reporters from Network 18 report on the carnage.
जिस तरह से ओली सरकार से नेपाल की जनता नाराज थी और उसके बाद सड़कों पे प्रदर्शन हुआ, बहुत सारे छात्रों की मौत हुई, उसके बाद आज सुबह जो है न्यूज़ 18 इंडिया उसी संसद भवन के पास मौजूद है जो कल पूरी तरह से आग की लपटों में झुलस रहा था। देखिए ये बिल्कुल संसद भवन के पास एक गाड़ी है, पहले मेरे कैमरा पर्सन इसकी तस्वीरें दिखाएंगे, ये किस तरह से पूरी जल के राख हो चुकी है और इस गाड़ी को पूरी तरह से जो प्रदर्शनकारी थे उन्होंने आग के हवाले कर दिया। आप देख सकते हैं गाड़ी में कुछ नहीं बचा, पूरी गाड़ी जो है वो पूरी तरह से जल के राख हो गई। और देखिए अब ये तस्वीर मैं आपको दिखाता हूँ बिल्कुल यहाँ पे क्लोज में, ये देखिए ये संसद भवन है और इसकी ये बैरिकेटिंग थी, ये पूरा जो है इसका जो प्रीमाइसेस था उसको पूरी तरह से प्रदर्शनकारियों ने तोड़ दिया। आप देख सकते हैं यहाँ पर ये पूरी दीवार थी जो पूरी टूट चुकी है।
नेपालगंज के अंदर ट्रैफिक पुलिस का जो पोस्ट है उसमें आगजनी की गई, तोड़फोड़ की गई, प्रदर्शनकारियों ने किया। अब हम आपको दिखाते हैं तस्वीर अंदर की। अब हम एंटर कर रहे हैं, ये देखिए ट्रैफिक प्रहरी पोस्ट नेपालगंज, ऊपर देखिए जरा बोर्ड की तरफ। उसके बाद यहाँ देखिए ये जो बाइक थी अंदर जिनका चालान हुआ था या फिर जो चालान का पैसा नहीं दे पाए उनकी ये बाइक है जिसमें आगजनी यहाँ पर की गई। मैं अपने वीडियो जर्नलिस्ट से कहूंगा कि जरा अंदर की तस्वीरें दिखाएं। यहाँ पर देखिए जो बाइक हर तरफ यहाँ पर है, इस बाइक को सड़क पर खींचा गया, जो उसको खींच नहीं पाए उसे अंदर ही आग के हवाले किया गया। इसके अलावा देखिए यहाँ पर जो ये फूल के गमले हैं, ये जो सजावट यहाँ पर की गई थी उसे भी यहाँ पर तोड़फोड़ किया गया। ये सारा यहाँ पर कुछ देख पा रहे हैं, ये फूल के गमले हैं, जरा ये देखिए ये फूल के सारे गमले हैं, ये तमाम डॉक्यूमेंट्स हैं यहाँ पर, देखिए ये तमाम चीजें जिनको आग के हवाले किया गया है।
Right, tense situation there. With that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV 18.
Let's talk money.
welcome to another new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Now, over the last couple of months, the stock market narrative has shifted in favor of consumption stocks. It all started with the income tax cut, which came earlier in the year, and that cut promises to leave more money in the hands of people. Then came the RBI's rate cuts, and now we have the GST bonanza to add to the cheer. The question that we need to ask as investors is that a recent run-up that is, in consumer-related stocks, is this just a passing quote-unquote fad? Or is it a durable trend in the making that can help us build more wealth and better wealth? So today on the show, we're going to do a deep dive on a lot of the consumer funds or consumption-related funds that are out there in the market and see if they're indeed worth your while. Should you think of adding them to your portfolio at all? Our guest on the show today is Mohit Gang of Moneyfront. Mohit, thank you so much for joining in. So we put Mohit to the task straight away because all these consumer stocks are flying high. And Mohit, it's interesting, right? After many, many months of talking about capex and industrial and defense stocks, now last 3-4 months, and GST is the latest.
Absolutely.
So much consumer talk. What have you made of it?
Absolutely. So Surabhi, I think it's homecoming for India. After a long while, in a country like India, where demographics is the main key component globally spoken about, we are talking about consumption. This story should have long come to our homeland, but better late than never, right? So I think, honestly, consumption as a theme has started picking up some momentum since the start of this year. And it all started with the great budget, which came in this year's start, where you had a direct tax cut, and which was a dramatic direct tax cut, right? So people up to 12 lakhs of income, perhaps going up to 12.75 lakhs of income, could now take everything tax-free at home. Coupled with that, you had the greatest indirect tax reform, right? So direct tax coupled with indirect tax in form of GST reductions, and the slabs across the board have got reduced on consumer items, life care products, consumer discretionary products, and so on and so forth. And this also is a massive rate cut from that perspective. Then you add on to certain factors, which is obviously the Indian demographics, a good monsoon season, the festive season coming around, right? So which is always the period, the September to December period always has been a consumer bonanza period in India. And last but not the least, I think we are all kind of not talking about the impact of ban on gaming companies, Surabhi. And this is all indirectly linked, but that savings which a normal auto rickshaw guy or a normal local consumer will save by not spending on these gaming apps could tune to almost like 40-50,000 crore a year, and which that extra amount of money will, perhaps a large chunk of that will go in household consumption or maybe some bit of savings, this thing, right? So all of this added together is kind of propelling the consumption boost in the economy, and that's why all these consumption funds of late have found immense amount of flavor in the market.
No, absolutely. And, there's so much that's happened. Yeah. The GST cuts that we're talking about, they're on daily, essential items. They're on automotive, autos, basically, both cars and on motorcycles. They are on so many different things. In fact, we just put up some data from CRISIL. So we looked at some reports, lots of reports on what this could mean for individual sectors and companies. CRISIL is saying that overall India Inc.'s revenue is going to grow 6 to 7% this year, which is 25 to 50 basis points, almost half a percentage point higher than what CRISIL was earlier envisaging. So that could be the degree of, the added growth boost that we'll get. And they're saying that price reductions are expected in FMCG, consumer durables, autos. We've already seen many auto companies, for instance, announce those price cuts. So the question here is also, Mohit, that consumption is a very large basket. Yeah. And the thing is, you're also getting into the sectoral category, which you and I have discussed on the show earlier, that you have to be very careful if you will start going and, going down and playing these niche sectors. Is it worth it? Is it worth to at least debate it? Or do you think they'll just stay away, be in a diversified fund?
Look, I think it will all vary, Surabhi, as we've always spoken of, from profile to profile, right? Yeah. So if you're an individual investor who is willing to take that extra call in terms of placing a thematic bet or taking a sectoral call, you are in the highest risk bracket, you perhaps have no liabilities and you can tolerate higher volatility in your portfolio with a longer time frame, right? Then I think there is all merit in kind of considering this theme as part of your overall tactical portfolio. I'll still stay away from this theme in my strategic portfolio, which is my long-term retirement portfolio. But from a tactical perspective, if I have to play 10-15% of my allocation tactically in any theme, then I think this perhaps, yes, is the right time to play this theme.
Okay, got that. So first, that's rule number one. Mohit's given out the first rule. Do not go beyond 15% of your portfolio if you're looking to get into a theme, even if it is a consumer theme. Now let's look at some of the fund names. And there are actually plenty out there. So many funds. Let's get the graphics up on our screen. So I'm just listing off. Axis Consumption Fund. And these are some of the funds with a larger AUM, bigger size fund. They're not very small funds. This is on the active management style. So there's Axis Consumer Fund. Bajaj Finserv has a fund, Baroda BNP Paribas, there's HSBC, they have their own fund, Edelweiss, you can see the names on your screen, and these are all actively managed. So basically there is a physical fund manager present deciding what to buy and what to sell. But there are also passive funds, right, on the consumer side. So let's start right there. That's the first point of distinction. If I have to do consumption, then should I be in an active fund or a passive fund?
It's a very, very difficult debate. Look, I think out here, for a change, I would go more towards the active guys. Look, when you're taking a sector or a theme, the passive index by default is an index of around 10 to 15 odd stocks, not beyond that, right? So typically any index on a sector side, if you pick, it will be 10 to 15 odd stocks, and that's about it. And it will always be inclined more towards the heavyweight names out there or the larger names out there. But the larger growth, perhaps, or the unknown, uncovered stories are found in the smaller and the mid-cap names out there, which my sense is an active guy can better pick. And he has a better maneuverability in terms of moving in and moving out of these names. An index might not change very often. It'll perhaps take 6 months to rebalance or maybe a year to adjust the constituents. So from that perspective, I think whenever you're taking a sectoral bet, I would rather lean towards an active call.
An actively managed fund. Okay, so let's go back to the active tally. It's on our screen. One of the larger funds, there is a quant fund there where the assets under management is over 7,000 crores. So now, Mohit, the next step. Okay, so we've decided not more than 15% of portfolio. Mohit says probably better to be in an actively managed fund when you're trying to play consumption. Then the question is understanding what does a consumption fund actually have? Is it only FMCG? Is it, what kind of stocks? Is it ACs and durables? But when you have, I think you've gone through that whole universe of funds. So, hota kya hai inme? What kind of stocks do they hold?
So look, there are many offshoots of consumption fund which have come out now, and one has to be very, very discerning in terms of what he really wants to pick, which sector or which particular area does one want to play, right? So you have a normal consumption fund which will take care of the old age style consumption, which is more like FMCG, durables, staples, discretionary, so on and so forth. Then you have your new age consumption themes, which is more like your Eternal, Swiggy, and those kind of things, because extra disposable income means you'll order more from
Swiggy and Zomato.
Swiggy and Zomato, right? And you obviously have autos and auto ancillaries and those kind of names, maybe healthcare, diagnostics, and these are all sectors which have got impacted because of lower GST rate cuts.
And the current crop of funds, they're as diversified as this? They have representation from so many different sectors?
Yes, you will have to, again, it varies from fund to fund. But if I were to really pick the top 5 sectors across all these funds, it will be consumer discretionary, consumer staples, it'll be telecom, it'll be healthcare, these are, and maybe automotive. To some extent. So these are the top 5 sectors, and then from fund to fund, it will vary from which, you will sometimes find energy, you will find some renewables, you will find some component makers and other things, right? So all those things will be a part of active funds, but these 5 uniformly across all the funds you will find.
So then we come to the next question, and that is how to pick the right active fund. What is the right active fund? And here, Mohit, you have to strike a balance. An investor will not want an over-diversified fund, which has the ICICI Bank, HDFC Bank, and Reliance, because then there's no point. You might as well have a Nifty fund, right?
Absolutely.
At the same time, you don't want to be overly concentrated because you don't want to make it too risky.
Right.
So you give us some names, give us some choices, and why you like the funds.
Look, again, as you said, there are plethora of choices available. You have to just pick out which matches your theme of consumption, right? So let's say an excess consumption fund. I think the foremost criteria being the vintage of the fund is decent. So none of the funds, as you rightly said, are more than like 3-5 years old. They're all within that bracket of 2 to 4 years, kind of. The AUM of the fund is reasonable. So I think they manage roughly around 4,500 odd crore. You also have a Nippon consumption. You also have a Mirai consumption. So these are also reasonably sized funds with decent track record and everything. Last 6 months performance has been good. In terms of sectoral composition, if you see all the 3 of these will have your ITC, Bharti Airtel, these kind of names, right? In your top 5 picks, you will have Trent, you will have all these maybe DMart and all these kind of names in top 5 picks. But overall, the composition amongst the top 10 stocks kind of mirrors the consumption index. But when you go beyond the top 10, that's where the real diversification comes into play, and all these funds are vastly different from what a normal consumption index looks like, right? So that's where my comfort lies more here, because the tail of all these funds have names which they can quickly move. The allocations are not very high, and those are very differentiating names in each portfolios. So, so let's say you will find some auto components name. Maybe you will find Uno Minda, or you will find a Sona BLW, or you will find those kind of names in few of these consumption funds, right? Because finally, if you buy more autos, these are the companies which will, as ancillaries, benefit from the overall sector. Right? So that's how the selection.
So those are some ideas. Axis, the Axis Consumer Fund, and
Nippon,
the Nippon.
Mirai.
And the Mirai.
Yeah.
Okay, so 3 AMCs and 3 consumer funds that Mohit is going with. Before we take a break, there are also specific funds dedicated to FMCG.
Yeah.
Just fast-moving consumer goods, the staples
absolutely.
as they're called. Are they worth a look or no? Or too concentrated?
I think there are 1 or 2 index funds, but look, FMCG is a sector, honestly, though if you see last 10 years of calendar year history, there's never been a calendar year where FMCG has given you negative returns.
Yeah.
So it's a very stable, but there's never been a calendar year where FMCG is like the topmost bumper returns or those kind of things. So if you want very steady, stable, dividend-paying stocks, good blue chip portfolios with names like Hindustan Liver and ITCs and Maricos of the world and Nestle's of the world, then you perhaps take that. But it's more a steady, stable portfolio. Having said which, I think anything which benefits from the rural economy, anything which benefits from mass consumption is also a great call right now. So it's not a bad call. If you're really only keen to take consumer staples and FMCG as your key component, then you might just go for an FMCG fund, which is much more narrower than an overall consumption basket. So it's a pretty narrow theme. You have to be really cognizant.
Very cautious and very mindful about what you're doing. Got that. Let's take a break. But let's remember that when you're talking about the consumer fillip or the GST bonanza, it's going to many other sectors, autos, hotels, travel and tourism. So how do we look at all of these possibilities as investors? We'll talk about more mutual funds on the other side.
Let's talk money. Let's talk money.
Welcome back. This week we're talking about consumption as an investing theme. Should we look at a more dedicated play towards consumption in our portfolios, given the big GST bonanza, the income tax cuts, and of course the RBI rate cuts? So, well, Mohit just told you about the slightly bigger, more diversified consumer funds. Now let's make it a little more narrow, because there are funds specifically dedicated to, say, the auto sector in the market. Now, Mohit, and auto stocks have done so well, right? Absolutely. In the last 2-3 weeks, they've been really revved up and all the price cuts are coming in. Absolutely. So do you think that this could be something longer term, more structural in the making? In which case, should I look at an auto fund or no? Because most auto stocks are anyway part of the Nifty, right?
Yeah, absolutely. So look, I think the auto story in India is a very structural story. Look, honestly, I think it's an aspirational story in a country like ours. So everyone wants to own a four-wheeler. So I think that story is pretty aspirational in nature. And by the nature of this, it's a pretty long-term story. But tactically, if you were to pay, because you are in a lower interest rate regime, coupled with your GST reductions on bikes lesser than 350cc and cars lesser than 1200cc, I think it just propels that aspirational aspect a little more and gives that immediate fillip to do a purchase in this segment, right? It also helps your home financing or the auto financing companies and so on and so forth. But let's keep that aside for the timing. If you were to just see the auto part, the story is again broken up into 2 or 3 segments, right? You have a pure play auto index. Then you have a EV and a new age automotive index or a new age auto kind of.
But they only have like 4-5 stocks like Ola or Eicher, or you don't have too many listed EV stocks.
Yeah, but the component makers for these are also a part of this thing, right? So there are these Sona BLWs and again Uno Mindas of the world, right? So they also become a part of this thing. And then you have a larger auto fund or an automotive opportunities fund, as you might just want to call it, which is any opportunity which is linked to this entire segment, right? So these are the 3 broad classifications out here. Again, it's a very simple filtration. Would you want to go with an index? The index is an index of 15 odd names. All the large names are there, starting from your Maruti to your Tata Motors to your Mahindra and Mahindra, which any which ways is a part of the larger consumption basket also. If you see Maruti and Mahindra, they are pretty much there in every flexi cap fund, in every large cap fund, in every consumption fund, and in every auto fund, right? And then you go down the chain and you figure out those other names also. But if you go to the automotive component, then you have maybe a player like an usme bhi actually the index has all these names, and then the last 5 odd names you will have that Ola Mobility or maybe an Eicher Energy or some of these component makers. So there isn't big difference between the new age EV index and the auto index per se when you go to the top 10 names. But when you go beyond that, then there is a difference in the composition. So I'll rather prefer a composite basket or a larger basket of an auto index. Now between the active and the passive, out here the passive choices are larger. There are multiple passive choices. Active mein there are pretty, I think SBI Automotive Opportunities to my mind is the only possible opportunity which is available, which is large enough. There is an HDFC Transport and Logistics Funds, but it's not so much fitting into the theme. It's a slightly more tangential theme. So I'll rather go with an SBI Automotive Opportunities Fund out here. The names are pretty different, barring the top 5 or 6, which always will remain uniform across any of the funds which you pick up. So bulk of your money will any which ways go to your Maruti and Mahindra and those kind of names. But the bottom half of your portfolio is then your Sona BLW Precision or Uno Minda or all those kind of KEI components and all those kind of names which are more component suppliers or ancillaries to the auto names, right? So again, it's a high risk call. I would rather prefer to play a larger consumption call, Surbhi.
So you won't go for a sectoral, very sort of narrow approach in terms of going in for an auto fund?
It's a pretty narrow approach, right? And it's a pretty fast moving approach also. So you have to just time in your entry and exit pretty quickly in this one. The larger consumption basket, my sense is you will keep seeing incremental reforms in the country which will trigger or propel some form of consumption in the rural economy, in the larger economy, right? So you will keep having those triggers on and off. But auto becomes a very niche play.
Becomes too narrow. Got it. I guess then you will definitely not look at very niche tourism funds, or I don't know if you have a hospitality fund or not. But oh, okay. So just at least give us the names and tell us yes, no, maybe.
So you have two tourism index funds, a Kotak and a Tata tourism index funds. The AUMs are pretty small. Tata still has around 325 odd crores. Kotak one is pretty small. So if you really want to play only tourism, which is your hotels, the primary names are all hotels, and then you will have some ancillary or service providers out there. But again, I think these are all part of the consumption basket also. So ITC remains a larger part of the consumption basket. Even ITC hotels is getting covered in few of the funds. And there are other hotel names or tourism names which gets covered in the larger consumption basket. So again, as I said, it becomes very, very niche play. These are not cheap stocks by any means. The valuations are pretty high, and given the way our earnings are going, I would still stay away from this complete basket. There might be few names which you can bottom pick, but I'll rather play that through the consumption fund.
Okay, so let's sum it all up now. You know, there is overall consumption, there is auto, there is FMCG, there is airlines, there is, you know, hotels, there is healthcare. So if I were to ask you, Mohit, you know, give me 3-4 fund names, you know, specific ideas by which I can build a very dedicated consumer side to my portfolio, what will those funds be?
Surbhi, I think given the kind of universe we are playing with, my first choice out here will be an excess consumption fund. Because it covers all. It covers the new age consumption through your Eternals and Swiggies of the world. It covers the FMCG world through your HULs and Maricos and Nestle's of the world. It covers your supportive industries like your airlines and Trends and DMarts of the world and few other names. Some form of discretionaries and
so it's pretty wide, covers the whole lot.
Covers the whole lot.
Okay.
If you want supplementary names out there, then it is Mirai and Nippon. So these three in the overall basket. If someone is really
and they're actively managed funds.
These are all actively managed
funds.
Got it. Okay. If someone is really willing to take a larger punt, right, and a more aggressive punt, then there is a Motilal Oswal mid and small consumption index fund. So those are all mid and small names in the consumption basket.
And it's a passive fund. It's an index fund.
It's a passive fund. It's an index fund, but these are very, very different names and a very different portfolio and a pretty aggressive portfolio. Right?
Like which ones?
You will have some component makers out there, some auto component makers. You will have smaller ancillaries out there. You will have some paint names out there. So those kind of, and some hotels which are smaller names. So those kind of names you will find in the portfolio.
And if you are choosing any of these funds, their allocation in the overall portfolio should be limited to what?
This is again a tactical opportunity. I'll repeat that again. It's not for everyone. It's only for the discerning investors. Otherwise, I think a flexi cap or a large and mid cap pretty much suffices for every investor and every risk profile and will cover all these themes. The fund managers are already covering all these themes. But yes, if you really are looking for that additional jump in your portfolio or a kicker through a tactical allocation, then yes, by all means, consumption is a theme to look out for.
Okay, all right. Very helpful, and lots of food for thought as well. Food, clothing, travel, all of that on whether the slightly more aggressive investor wants to give it a higher weightage in your overall portfolio. Now, speaking of consumption and the fact that the festive season is around the corner, let's recap the hygiene factors as well for all our viewers out there, because we're all probably raring to go out there, shop, probably have started doing that. So how to gear up for the shopping season and the festive season in a sustainable manner without breaking the bank and breaking our investments?
Look, I think I'll again go back to personal finance 101 out here. So you and I have done that multiple times over. So if you are getting an additional disposable income by virtue of direct tax cuts and by virtue of your GST cuts, so both combined impact could be pretty significant. I would still say that savings which you are doing additionally, 50% of that should immediately go into investments, which is your regular SIPs and your regular investment allocations. It could be anything. It could be small savings for all that matters. 30% of that goes into your consumption, which is your improved consumption, which is a better version of your shampoo or a better version of your toothpaste or something which is your increased consumption or more health food or more protein rich food or something like that. And then 20% of that goes into a discretionary allocation, which is buying that extra gadget for yourself or investing an extra amount of money for a better brand of refrigerator or an LCD or a plasma or whatever you prefer, right? Or an air conditioner.
So, what are you buying this festive season? The new iPhone, what is 70? I keep getting the numbers
for
also.
Entrepreneurs, there is no direct tax cut.
Okay, all right. Mohit, thank you very much. Very, very helpful conversation as always. Gives us some, a framework to think about consumption and consumption funds which are out there in the country. Well, with that, we come to the end of this edition of Let's Talk Money. Remember, keep sending us your feedback, comments, queries, and we'll see you with another theme. Same time, same place next week.
Let's talk money.
Hello and welcome. You're watching News Center. I'm Parikshit Luthra. After weeks of trade tensions with India, US President Donald Trump has signaled a potential thaw. In a social media post, Trump said that the two countries are continuing negotiations to address the trade barriers, and he's looking forward to speaking with Prime Minister Narendra Modi. Trump wrote, and I quote, "I feel certain that there will be no difficulty in coming to a successful conclusion for both of our great countries," end of quote. Prime Minister Modi echoed the sentiment, calling India and the US close friends and natural partners. The Prime Minister said both teams are working to conclude talks at the earliest. He added, and I quote, "Our trade negotiations will pave the way for unlocking the limitless potential of the India-US partnership," end of quote. Sources say that positive messages indicate trade talks are back on track, and sources also add that officials from India and US are likely to have an exchange of trade delegations soon in a bid to find common ground. Meanwhile, CNBC has reported that Trump has asked the European Union to hit China and India with tariffs of up to 100% over their Russia oil purchases. Trump reportedly indicated that Washington would mirror any such measures taken by the EU. This comes at a time when free trade agreement talks between India and the European Union are nearing completion. Commerce Minister Piyush Goyal has said that about 65% of chapters have been finalized. Goyal added that he's hopeful that an FTA will be concluded substantially by the time the EU Trade and Agricultural Commissioner visits India this week. Joining us now to discuss this further is Meera Shankar, former Indian ambassador to the United States, and Kanwal Sibal, former foreign secretary and also former ambassador to the US. Ambassador Sibal, if I can begin with you, this is a positive indication. Both leaders making this statement that they want to conclude talks at the earliest. Does this mean that some of the thorny points in the relationship have now been taken care of and negotiations could be concluded very soon?
I don't think so. I don't think that the thorny points have been taken care of. The thorniest point is the 25% penalty tariffs that Trump has imposed on India for buying Russian oil and Russian defense equipment. There is no indication that he's willing to lift those tariffs in order to create a more congenial atmosphere to have the next round of talks. Otherwise, it will be under the pressure of these 25% additional tariffs, which means 50% in all. And therefore, India would be expected to make some further concessions to satisfy Trump. Now, remember that as far as we know, the interim deal had been negotiated and satisfactorily negotiated insofar as the negotiators are concerned. And this was put on the table for approval of Trump, but he didn't approve of it because he wants a much bigger deal. In fact, he said that, he was quoted as saying by the USTR, Jamieson Greer, that he wants everything to be opened up or almost everything to be opened up. Now, therefore, he would be looking at some further concessions from us. Now, is it that we can go beyond the concessions that we have already made? I suppose there would be some room to do that, but not enough to be able to pander to Trump's demands and allow him then to say that he has extracted a one-sided deal from India and India has promised all kinds of things.
Right.
These are the kind of statements he has made after the agreement, framework agreement with the EU and the tariff agreement with Japan and South Korea. So the pressure is on us. At the same time, as you've just quoted, Trump saying that he wants Europe to impose 100% tariffs on India and China for buying Russian oil. So he's speaking as usual, in ways in which we can't really pin him down as to what exactly he expects, what he wants. He's very inconsistent and he doesn't mind being inconsistent.
So
he thinks that unpredictability is a tool he has in order to keep the other side under pressure, not knowing how he would react to any given situation. So this gives him a lot of leeway to keep making his demands, and he doesn't mind changing his position.
Absolutely. So let me just get in Ambassador Meera Shankar on that as well. Ambassador Meera Shankar, do you feel now this is a positive development that gives an opening to the sides to come to some sort of breakthrough and common ground?
Well, I would say that it's a positive opening in the sense that the rhetoric has been tamped down and there are more positive sounds coming out of President Trump, and the Trump administration overall has been silent with regard to its very macho statements that it was making vis-a-vis India. So that's the positive. It opens a door. India has also said it's willing to, Prime Minister Modi has said he's willing to re-engage in trade talks with the US. But as Ambassador Sybil said, this is not going to be easy, and India will have to continue to be hard-headed about the negotiations where our vital interests are concerned. Now, the point is that since no deal was agreed upon, whatever we put on the table can be taken away if you're beginning anew, so that you don't get pushed each time to a fresh goalpost. That's what I mean by being a bit hard-headed in the negotiations. The second thing is, I don't think it'll be possible for India to have a trade deal while special sanctions on Russian oil, or special tariffs, I would say, on Russian oil purchases continue. Because if you even look at US secondary sanctions in the past, they have basically targeted the companies involved. Even China, when it was helping Pakistan with its nuclear program, they would very selectively target 1 or 2, 3 or 4 Chinese companies, and then there would be a new company set up, and then they would start their cooperation again. Right. But here, it's across the board on all Indian exports, so it's pretty savage, and it's not something which has been sharply focused. Even though I would say that putting sanctions on other countries for buying oil from whichever source they find is the most reasonable is itself, something which exceeds US national law. I mean, It doesn't exceed their national law, but it exceeds the sovereignty of other countries. So I would say that it's going to be not an easy negotiation, but there are positive signals. And from India's side, it would be important that there is some way to address the special tariffs which have been put on.
Okay.
Otherwise,
Ambassador Meera Shankar, I'll return to you. Ambassador Sibal, what do you think has brought Donald Trump and India to this stage now, where they're at least making some positive signals to each other?
I think there has been work done behind the scenes, precisely with the idea of exchanging some positive messaging so that the downward slide in relationship is arrested, and especially the rhetoric from the American side is brought under control, because this is having a much larger effect in terms of the sentiments of the public in India. And also there have been consequences of this in this Hindu hate business that seems to be rising amongst the MAGA crowd, the racist part of the MAGA crowd. So to that extent, this is a good development. As I said, this has been structured deliberately behind the scenes to pan out this way. However, you can't control Trump. And we will see now whether his henchmen pipe down Besant and Lutnick and Navarro, and they keep quiet, because I'm sure they have been caught off guard also by Trump's sudden tweet, because decisions there are personalized. These are not process-driven decisions.
Right.
If that happens, if the rhetoric gets toned down, and until the next round of negotiation takes place, all is quiet on the Western Front, I think that will be a good thing. But the fundamental problem will remain, because Trump is quite unpredictable. He has linked these special tariffs to movement on the Ukraine peace front. And if that runs into trouble, then he'll have even less room to lift the sanctions, special sanctions on India, because then the question would be that why are you making this soft gesture towards Putin when Putin is not ready to negotiate peace in Ukraine? So he's not necessarily, as a foreign minister said, mix the trade issue with the non-trade issue and reduce the margin of maneuver.
Absolutely.
And with 50% tariffs, there's no way that we can have a stable economic relationship. He has to move away from that. And as I said earlier, we can't negotiate with this sort of democracies hanging on our head, that if the US side is not satisfied with the new offers that we may make, then these 50% tariffs would stay. I think there is work ahead, but let's remain a bit optimistic and see where it goes.
You know, Ambassador Meera Shankar, in June, we had already come to some sort of agreement. India had proposed a trade framework to the US whereby the tariffs were lower than 15%, at least. How do you think the negotiations will begin now? How will India approach fresh negotiations after recent rounds of trade tensions and very sharp rhetoric?
I'm sure that there will be efforts through back channels to try to lay out the contours of the negotiations and the contacts. But it's clear that both sides want to pick up the threads. And since there was speculation that part of the reason that President Trump was sending back the trade deals with India, even though negotiators felt it had virtually been concluded, was his personal peeve over some of the statements which had been made during the India-Pakistan conflict, that he had brought it to an end, which India had contradicted. Maybe by now, if cooler, saner advice is prevailing, then perhaps, what we would like to see is a more reasonable US position with regard to India's red lines. I think it's important that the US understands it. Now they've understood that we really can't be browbeaten into complying with what they would like. At the end of the day, a trade agreement has to be acceptable to both sides, particularly for a large developing country like India, which has constituencies politically important, economically sensitive and vulnerable constituencies, such as farmers, who could be very adversely impacted. And that could cause its own set of social and political turmoil in India. So it's not something which, any government is going to accept lightly.
Right.
So at some level, I think it would be important for the US to recognize this and to adopt a more reasonable posture in the negotiations.
Okay, Ambassador Sibbal, considering that the statements made by Donald Trump and Prime Minister Modi are quite similar, the tone is very similar, and then you had Donald Trump also retweeting or posting the Prime Minister's tweet on his Truth Social handle. Does this go to show that both sides and leaders, officials of both sides had clearly coordinated this exercise to show that India and United States remain united despite the kind of narratives that may have emerged from the SCO summit?
Well, you can't really pin down exactly what Trump's thinking is and what his next move would be, logically speaking. Now, as I said before, it's a good thing that both sides have felt that we must try and tone down the rhetoric that was developing and the negative atmosphere that was being created. And I think there are two things that have persuaded Trump to have a renewed look at his strategy towards India. One is that unlike the others, India stood firm. And certainly this has gone to the advantage of India and Modi and his leadership. We have not reacted with the polemics and rhetoric, but we have stood our position. And the second is the very nervous reaction in US think tanks and media and political circles of the photograph of three leaders, Xi Jinping, Putin, and Modi, hobnobbing, in Tianjin, and questions being asked in the United States about losing India, and that this has been one of the most serious blows to US foreign policy that Trump has inflicted. So maybe there is some rethinking that it is not wise to push more India into the wrong direction and alienate it, because it might affect the larger geopolitical interests of the United States. Now, this is rational thinking. Now, whether Trump is capable of internalizing this rational thinking and control his impulses, I don't know, because he's very, very unpredictable, and he has treated his allies so shoddily, allies who have served US interests far more than India has, but he has not had no compunction in doing so. So for us to assume that he'll have some special corner from India might be a mistake.
We have to be realistic about that, but we'll have to leave it there.
Yeah.
We'll have to leave it there, Ambassador. But thank you so much for joining us. I'm completely running out of time, but it's been a great discussion with you and Ambassador Meera Shankar, as always. We are going to take a short break, but don't go anywhere. Our discussion on India-US ties and this positive momentum continues. We will be joined by Mukesh Aghi, President, US-India Strategic Partnership Forum, on the other side. Welcome back. We have been discussing the expectations from the India-US trade talks after President Trump and Prime Minister Modi signaled optimism in social media posts. Joining us now on the program is Mukesh Aghi, President of the US-India Strategic Partnership Forum. Mr. Aghi, thank you very much for being with us. How optimistic are you about a positive tone to the negotiations, a positive conclusion possibly to the negotiations?
Well, Parashit, you have to understand, before we conclude any trade agreement, we needed to bring the temperature down between the two countries. And I think the communication via Truth Social and tweet does help to bring the temperature down. And more important is build a positive sentiment between the two countries. You have to understand that while you have two leaders talking about building a strong partnership, why it is important to have this trade agreement, you have forces within the U.S. who are not keen to have that agreement. You have basically individuals within the White House talking about putting punitive tariffs beyond 50% in India. There are discussions going on with the EU to have 100% tariff on countries which are doing trade with Russia. So I think we are not out of the woods, but at least we have a sentiment which is moving in the right direction.
Right. Do you expect now, because every few days we are seeing some improvement in ties, does this indicate to you that we could possibly see a pause on the 25% additional tariff?
So what we have requested and written to the president, that the secondary tariff of 25% is unjust, and for the trade and negotiation to move forward, I think it's important we basically take that out. What we have to do is look at some kind of an off-ramp for the president so he can move in that direction. What is that off-ramp? It could be multiple ways. That needs to be managed from the India side. It is important that India has restrained making any comments on the secondary tariff, with the exception of saying they're not, they're unjust itself. So I think both sides have to find ways to move forward, and I think the social media communication between the Prime Minister and the President basically moves it in the right direction.
How soon do you expect formal in-person negotiations to begin?
I believe that it should start moving very, very fast, because I am aware that USTR team is in the neighborhood talking to other countries, and it'll be critical that they come into Delhi and start talking to our negotiators in India itself, because what's happening is every day that goes by, the people who are working in the garment industry, people who are working in the jewel industry, people who are working in the low end of the exports are suffering. And it's important that we basically take this 25% tariff away, so at least the orders, the execution of the job continues without major interruption itself.
Right. When it comes to the off-ramp, what do you think could be an offer that India could make which would suit the president?
Well, I think it's not just about India making that offer. I think U.S. has to provide some kind of alternative to India on the energy purchase, because India has a requirement, and if it's able to find cheaper oil, it is India's interest. So I think from that perspective, if U.S. can provide more energy, or other partners of the U.S. can provide that, I think that could be a way for India to basically wean away slowly from Russian oil and explore other alternatives itself. So, but I think it is also important to understand that you cannot dictate penalty on a nation because it is buying energy for its needs, for its people, India is a sovereign nation, it's a proud nation. And so I think there has to be a give and take on both sides to find an exit ramp so you're able to move things forward.
Right. We've also been noticing how both leaders, their responses on social media have been coordinated. So clearly there's been a lot of work happening behind the scenes to put things on track. What's been your recommendation and recommendation from industry chambers as to what is at stake? And if this relationship had gone down, how would this damage the two countries?
Well, there has been a lot of effort. You have to understand, the CEOs have met with the president. We have reached out to the Congress leadership in the U.S. itself to basically impress on the president. We have reached out to the family members. So there has been a lot of energy put in to bring the relationship back on track. You also have to understand there are vested interests which would like to see this relationship get off the track. There are neighbors who are keen to ensure that India's partnership with the U.S. does not continue in the same trajectory. So we have to deal with those interests which are against a strong U.S.-India partnership. But you have to understand that you have geopolitically, the two countries are aligned in every aspect. From an economic perspective, countries are aligned. We are looking at large investments of U.S. companies who are not only manufacturing in India for de-risking their supply chain from China, but more important is they're also looking at growing Indian market itself. So in every aspect, the interest of U.S. continues to be India, and so on that basis, you saw a lot of effort being put in by people, by corporates, by interest groups to ensure that the relationship comes back to the track.
Okay, my final question, sir, very briefly. What do you think will be a good tariff line or an average tariff at which the trade deal should be agreed upon by both sides?
Well, we have always emphasized that a tariff between the U.S. and India should not be more than 10%. And the reason we said that is because you have a large chunk of exports from India, which are basically lower priced goods coming in. But at the same time, if our ambition is to take this relationship to a $500 billion trade agreement between two countries, a 10% tariff is a fair tariff. But at the same time, keeping the interest of India, which on the ag side and also on the dairy, which is red line, but we'll find a solution on that also. Because I think the objective is to find common grounds, find a win-win value proposition. And I strongly believe that we will find a solution so both countries can move forward in driving the objective of $500 billion trade by 2030 itself.
All right, Mr. Aghi, thank you so much for joining us and sharing your views on what has been the effort made behind the scenes to put the relationship back on track and how these positive messages at least give a room and opening to the negotiators to begin sitting on the table and starting talks afresh. Thank you once again for being with us. With that, it's a wrap on this edition of News Center. More news and updates continue right here.
I'm sitting here in the heart of India's financial markets, the National Stock Exchange, a fortress of technology and trust, a place where billions of dollars of trading is executed across equities, derivatives, commodities in a microsecond. At its peak, NSE executed 2.2 crore trades in a single day and $23 billion in turnover in a single session. It is the world's largest derivative exchange for 6 years in a row, home to 12 crore unique investors. But beyond the tickers, the symbols, the charts, today we go behind the scenes. We look at surveillance rooms, IT infrastructure, cybersecurity, and of course, the National Operations Command Center. And we do all of this with NSE's current MD and CEO, who was also instrumental in setting up of the exchange, Ashish Kumar Chauhan. Hi Ashish bhai. Hi. How are you?
Good to see you.
Good to see you. And I think we were meeting here in your cabin for the first time. Yes. We see you at the atrium, at the opening bell. We see you in our studios. But I think this is your den.
Thank you. Thank you for coming.
It's a lovely office, by the way. I want to start by asking you, Ashish bhai, what does a day look like for you at the NSE?
In a way, our days are 24/7 by 365 because markets run only for a sort of shorter period.
Right.
But we have to prepare and ensure that the markets continue to run, prepare them for the next day. Even the weekends we have to work. So in a way, the life is kind of continually rolling.
Right.
And then, of course, you have a time of the day where you go to sleep. But broadly, you are available on your screen, on your mobile continuously.
Machines have not taken over yet completely, or have they?
No, broadly.
But they need supervision.
Yeah, they need supervision. And of course, there are changes that happen. So we need to plan for that. The regulations have to be...
So hour by hour, not hour by hour, but maybe 2 hour, 3 hour blocks. When do you get to office and how does it flow?
No, I come, if it's a listing, I come a little early, like 9.
Right.
Otherwise, I come...
Which is pretty much every day nowadays.
Yeah, nowadays. Otherwise, I have a little more flexibility. Sometimes I have to go out to sort of attend events. But broadly, I try to be in office at the exact time so that I'm aware of what's happening. And normally, I try to be available at 9:15, at least on phone, even if I'm traveling. 9:15 a.m. is like the starting time of the market, and you want to be there in case something goes wrong. If it goes right, so there is no issue, but you have to be available. So that's how the life works. And then once you come, lots and lots of meetings happen. You need to read a lot, and then you need to go out for meetings and committees and all. And then at some point in time, you will go out to attend some events in the evenings. Usually evenings, there are a lot of events. And then go home at whatever time you're allowed to.
I mean, activity has just exploded, right? Both on the cash front, derivatives front, etc.
If you recall, when Mr. Modi took over in 2014, because that's the time I still remember some numbers, India had 1.67 crore investors.
Wow.
Today, India has 11.8 crore investors, unique. Both. Because those are the NSE numbers, right? 11.8 crore investors, 25% women. That's 8.5 crore or 9 crore households. And that's almost 25% of India's households now. And that time, India's market capitalization, when he took over, was I think 67 lakh crore. Today is 450 lakh crore, So both have gone up 7 times. Right? And that tells you how much of India has become middle class. Because you come to the markets to invest, and there is a perception that has been created that India, most Indians overtrade. That is not true, because 11.8 crore investors, once you have invested even in one share, you don't trade every day. You can trade once in 10 years and still you are an investor. But out of that, around 25 lakh, maximum 30 lakh people trade in derivatives. And so literally 2% people trade in derivatives.
Right.
And out of them also, most of the people, I mean, almost 85-90% people
also trade in
they trade in
equities as well,
and
cash as well.
Yeah, so it's like they're buying insurance, right? And so for me, lots and lots of misperceptions get created.
Right.
But overall, the amount of wealth
right.
that this organization has generated when it started in 94,
right.
on November 3, 94 equities market,
right.
it was the total market cap of India was 3.7 lakh crore.
Right.
Today, it's 450 lakh crore.
Right.
It is, of course, the transaction processing, reaching out to people across India. Now, 11.8 crore investors are in 99.85% of all PIN codes. India has more than 19,300 PIN codes.
Correct.
Out of which only 28 PIN codes don't have an NSE investor. I have investor in Ladakh, remotest corner, means 6,000 meters in the hills, to Andaman Nicobar, which is near Indonesia.
Right.
I have people in Arunachal Pradesh. I have people in Dwarka. I have people in Kanyakumari. Every nook and corner of India today.
Except 28
PIN codes, and out of that, probably 25 are airports where you can't stay full time, so I can't do KYC, right? You can't say that that's your house.
Right.
So broadly, the middle class sization of India is what is basically creating a framework where India's savings, India saves 30% in that range, 28-30%. Out of $4.2 trillion economy, now we are saving above
Correct.
$1.2 trillion.
Correct.
Most of it earlier used to go into gold and
fixed
real
deposits
estates
at banks.
And today, some portion has started coming up in what I call risk asset.
Risk
right?
assets.
Equity is a risk capital.
Yeah.
And they have got some brilliant returns. I mean, Nifty is going to celebrate 30 years in terms of the base date. It started with 1,000 in 1995, November 3, 95 base date. Today, it's close to 25,000. If you take the dividends, it would be probably 30,000 in that range, right? So 1,000 rupees invested has given you 30,000 rupees, right? 13% plus
kind of compounded returns.
Compounded 13.6. And even in dollar terms,
it's about 12, I think about 25 years, 12% odd. I mean, so which is...
But if you take total returns, because you take only the absolute returns. But if you take
dividends included, I think it'll be,
of course, that 13.5 or something. And in dollar returns also, it's competing with S&P 500. So effectively, India has done well. And it's not true that all countries where the country has done well, investors have done well. Like China, 30 years back, whatever their index was, today also is very similar.
Correct.
People, I mean, the industrialists have made money, not the investors.
Small
investors.
investors.
In India, because of the corporate governance framework, which SEBI and NSE have been together able to provide for. And that's why, for me, the capital formation, $5 trillion, one-third of India's wealth, is now wealth of trust at NSE. Right?
You know, you said that activity has grown, what you said, over the last, since NSE was founded, how many times?
I mean, in terms of the number of trades, the BSE in those days, the best days, they couldn't do more than 10,000 trades. Today, I get 2,000 crore orders in 6 hours, right?
So has the infrastructure to do all this also expanded at the same pace? Let's find out. Let's, I think, go to, what is it called? The National Operations Center, right? It's called the NOC.
Yes.
Let's go there and find out how it all works.
Absolutely.
Well, as promised, we are showing you a rare behind-the-scenes sort of, footage or visuals of the National Stock Exchange, the largest exchange of the country by far. And of course, we have help in the form of the MD and CEO of NSE, Ashish Kumar Chauhan. Ashish bhai, so this is the National Operations Center, right?
Yes.
NOC. It's got a military-sounding terminology to it because it requires precision, it requires discipline, and I think this is where it's all sort of controlled from.
Absolutely.
Tell us a little bit about what we're seeing, and I mean,
this is an entire floor, but floor is divided into different rooms. Each team has their own work.
Correct.
And there is a full backup, even in terms of the number of people, number of computers, number of screens in Chennai.
Right.
So anyone doing anything here as a checker in Chennai, and anyone doing something in Chennai has a sort of checker.
But that is only for
it's for disaster
recovery.
But when disaster happens, when you try to recover, it doesn't work. You have to make them on. So whatever things happen
so
here,
it's fully operational.
It's fully operational, and actually we do mock trading from Chennai every month, at least once. And twice a year, at least for 2 days consecutively, we run the live operations from Chennai. So it's a fully functional thing, but how do you continue to make it run in a heightened sense is by involving them on your day-to-day activities as if they are next to the computers, and which is now allowed by the communication systems. So that's where the team here and team there are like working as one. And in case this place by chance goes down for whatever reason, that team should be able to
seamlessly pick
up and run without anyone.
So as an investor, as a trader, I should not feel the difference. I mean, basically.
You probably will get logged out, and then you will your broker will log in, and it'll be business as usual probably in few seconds.
Right. So what happens from here? I mean, what kind of activity?
This place is what we call business knock,
right?
Where all the companies that get listed or IPOs that happen or daily price bands of companies, the new derivatives contracts getting introduced in equities or currencies or commodities or in bonds, all that thing starts being set up. Even sometimes we have to set up a new broker or sometimes we have to actually stop a broker from functioning because of the SEBI regulations or orders, or sometimes even specific investors are not allowed to trade by some of the court orders or otherwise. So everything happens here. But during the market hours, especially between 9:15 and 3:30, this people who are working here have to do nothing actually. They have to just monitor, and it's like an autopilot. If they are doing something, then there's something has gone wrong, right? So that is where physical manual sort of override is required. Otherwise, their work happens 24/7 by 365 days.
Right.
During the day, they are not supposed to do anything, but end of the day, they have to create files, download to all brokers. Then they have to prepare for the next day all the new contracts coming in, the price bands, other things, 2%, 5%, ASM, GSM.
The much awaited bhav copy comes from here? Or?
Absolutely. So everything which has to do with business comes. Similarly, there is another room for cyber security where we get a lot of.
And we're going to go there in a bit. So.
And then we also have hardware operation center, which is basically where we have several sort of machines which we need to ensure that there are no queues. And this was the first public digital infrastructure of India.
Yeah.
This is the first fintech of India. It's still the largest fintech of India. And it allowed India to create capital formation on a scale where no similar sized or similar per capita income having country. I mean, today, after so many years, our per capita income is only $3,000. Although we have become $4.2 trillion economy, but we are still per capita is still no country has with $6,000 also have that kind of market. $12,000 also no market. $24,000 there is one market larger than us called China. But when the prices go down, the government has to go and buy the shares. In India, government is actually hands off, right? So there is no similar market. And if you look at it in a poor country, per capita income country, people investing in other people's businesses is not unheard of. There are books written in economics which says that poor per capita income countries cannot, or societies cannot have well-functioning capital markets because they cannot save. And if they save, they don't trust their brothers also. In India, this has happened where 20% of India is now households.
And we spoke about the long track record of returns, which has been spectacular, matched only by, I think, the US, right? As a market over a long period of time.
That's why I call this trust markets. Because trust has developed.
You know, I want to show our viewers the cyber sort of control center as well. So let's go there, and why don't you tell us about that? Okay, we are in another room now, and this is, of course, also an important place. This is the Hardware National Operations Center, the Hardware NOC. And you can see the screens behind me. This is where they monitor, Ashish bhai, the hardware and
yeah, there are thousands of servers which NSE manages, and each server has different work and different softwares, and so all of them have to work well. And that's where basically each person has his own job, but there are what we call dashboards which are giving you aggregate numbers. So in case again they are not supposed to do anything real life except they do their normal office work. But if something goes wrong, that is the time they need to intervene. Otherwise, during the day, it's on autopilot, and there are softwares which are self-healing and things like that. So overall, it's basically on a good day as like we get 2,000 crore orders, 30 crore trades in kind of different markets. So all the hardware, literally whatever people do here is sent to a nearby site called NearDR, and a Chennai site, literally gigabits of
information
bytes, is transferring.
Okay.
And we have like petabytes of data stored. Some people access from there, some people access from here, and so it's like a very large setup which needs to be monitored on a.
So there's we were in the business NOC, there's the hardware NOC, and
then we have a security NOC, which is
the cyber security and security NOC. So let's go there and check it out as well. So that is the hardware NOC, and what we're going to do now is show you the cyber NOC, Ashish bhai. And I think viewers can see what is inside the room. So tell us a little bit about what happens here.
No, in a way, we use many softwares and tools and hardware to ensure that the working of the exchange continues without
disruption,
any disruption, even from the hacking and other activities. So that's where, again, we have a Chennai site that's connected here, and naturally, some of the government agencies also are able to look into what we do. But there are like lots and lots of softwares, tools, and we use, and each person working has a specific job. But again, we have dashboards which tell on an aggregate level what has been there today, how many attacks are coming, if we are running in a red zone or a amber zone or a green zone, and so those are the things.
You were telling me earlier during on the day of Operation Sindoor, I mean, there were the attacks kind of peaked at.
Yeah, like in 20 minutes we got 40 crore attacks, right? So these are some of the most attacked entities in the world today.
Okay. So this is a significant area of focus in terms of upgradation, keeping.
The costs are also humongous, but without that, you cannot operate, right? So you need to be like any country. If you don't have a defense, whatever you do in the business has no relevance because somebody will come and subjugate you. Similarly, whatever business you do, if you don't have a good information security in today's world.
So strong physical security, as I noticed at the gate, but strong digital security.
It has to be.
I mean, there is digital public infrastructure in that sense, so it has to be on without disruption.
Absolutely. And especially outsiders or insiders, knowingly and unknowingly, doing wrong things cannot be.
Has to be monitored, has to be checked and tracked. Well, from the National Operations Center, and we showed you quite a bit, as much as we could, upstairs. We are here now to take a walk down the memory lane with Ashish bhai. This is, of course, the wall with lots of pictures, and I guess Ashish bhai, lots of memories as well, right?
Yes, of course.
Because I spotted that photograph, which is July 1994, when an NSE was inaugurated. And that is, I don't think you can see it, but that is a very young Ashish Kumar Chauhan explaining to then Finance Minister, Dr. Manmohan Singh. What is happening then in that picture?
And next is our chairman, Mr. Nadkarni, who became chairman of SEBI later on.
Right.
He was IDBI chairman beforehand.
Right.
And so, in a way, this project was like very ambitious.
Right.
And everyone was clear this is not going to work.
Right.
Even when it was thought through, because bankers were trying to implement a stock exchange which they have never run before. And in an IT, pure IT exchange, which was not the case anywhere in the world before. So it was all sorts of complexities, and we were trying to use satellite telecom and also a lot of things which could have gone wrong.
The idea germinated in 92.
Yes.
And
post Arshad Mehta scam,
right.
The government wanted to create a framework which is not owned by brokers, operated by brokers.
Right.
And that's why they wanted to create an independent exchange owned by investors,
right.
But run by professionals.
Right.
And completely automated so that it will have transparency, fairness, efficiency, and all that. Right.
Correct.
And so in that context, we made presentations to Finance Ministry in 92.
Correct.
Lots of to and fro during 92, 93, 94. So what happened is we first started with the wholesale debt market because Arshad Mehta scandal actually originated in the RBI Secretary General Ledger and all. So they wanted to first do wholesale debt market. And so we started operating without inauguration, like a beta test in those days. And I think Google had not come then. So beta was not so popular, but we started trading, real trade.
Right.
And then Dr. Manmohan Singh gave time to come and inaugurate in July. And on that day, he woke up early. He used to be a very diligent man, right? So he decided to visit NSE. The inauguration was in Nehru Center.
Right.
At Worli. And our office was at Mahindra Towers.
Right.
Again, Worli, but probably 1.5 kilometers away. And so I used to sleep in the office most days.
Okay.
And that was an important day, right? So when the dogs started coming to check around the dog squad, then I realized something is happening. I had to tell my bosses that he's coming to visit NSE, and then everyone sort of came hurriedly.
Right.
And so that time I was explaining to him how the IT system works.
Okay. And that is you were how old in that picture?
I was 26 years old then.
26-year-old. I mean, that is just I mean, 2 years into your work life, right?
Yeah,
2 or 3 years,
yes.
into your work life. Yes. Must have been a high.
No, it is. I mean, this, as I say, this has been, and setting up NSA has been the greatest privilege of my life.
Right.
And the amount of service it has given to India.
Absolutely.
It is way beyond what one had imagined or what one can even fathom.
And we're going to go now to the most used facility, the NSE, by the general public, by companies, by new corporates who want to list and ring the bell. So we're going to go to the bell there now and check it out as well. Well, I hope we've given you a 360 degree, if not a 360 degree, a 180 degree kind of view of how NSE as an organization runs. I mean, some of the stuff that we showed you, of course, behind the scenes, as I said, the National Operations Center. And of course, we jogged our sort of memories back to when the exchange was founded as well. This is also an iconic place. This is the, Ashish Bhai, the atrium, right?
Yes.
And I think corporates who may be watching this, for a lot of them who are recently listed or even listed for a while, I think they would remember this place. With the ringing of this bell,
absolutely,
the listed journey starts.
Yes.
And it's been such a vibrant place, right?
Yes.
Ashish Bhai, last couple of years especially.
Yeah, every day there are many listings. The largest company usually does bell ringing here. We have other places where there are bells, including in other cities also.
Yeah.
But this is the most coveted sort of listing place today in the
And
country.
you're here, as you told me, for the big ones at least, 9:15.
If I'm in Mumbai, I try to be there.
You try to be there.
For listing because, again, it's an important occasion for the company's life. And
right.
As what I call a head priest of this temple, it's my duty
You have to
be
be
there. Yeah.
present.
Yes.
When do we see NSE's bell going off in terms of listing?
Once the SEBI gives no objection certificate, that's the minimum we require as a regulated entity by SEBI.
Right.
After that, we'll prepare the DRHP and then submit to another department of SEBI, which will go through it. And broadly, it would take probably at least 4 months to prepare the DRHP.
Right.
4 months for them to do queries and ask us any issues,
questions, etc.
Clarification.
Right.
And then so.
But from the day that the NOC is received, whenever it is, we don't know when that is.
Probably 8-9 months is what looks like after that.
To the listing date, basically. So, I mean, the work in terms of having the background, etc., is work in progress.
In 2016, NSE had filed. That time I was not there in NSE. But 2016, NSE had filed the first DRHP. So since then, NSE has been in a way in a status of some readiness, not always because it's almost now 9 years.
Right.
But in a way, we are sort of prepared.
And in terms of the size of listings, you said big companies. I think this is going to be the biggest of all.
No, in a way,
terms of...
And we are also 100% public. See, unlike
right.
other companies, we are already 100% public. I have
Correct.
like 172,000 shareholders already.
Correct.
Right, and so 0% is with any promoter. I have no identifiable
And
promoter.
in terms of the shareholding, last 5 years is when the numbers have really exploded,
In
right?
fact, since March only, it has gone up from probably 30,000 to 172,000, right?
Last March?
That is 25 March.
Wow.
Right, so because earlier we used to approve each transaction with fit and proper, and then
Correct. It used to take time. There used to be 4, 5, 6 months.
and things like that. Now it's all automatic in the depository, so that's why many more people.
So transactions are taking place a lot more. And all those, what you said, 172,000 shareholders now. So, and they're all waiting and watching
Absolutely.
when this is going to happen. I mean, what, close to 5 lakh crores in market capitalization? At least in terms of, because transactions are taking place.
Transactions.
Right?
But again, when you go to do the IPO, that is the time you need to see.
Depends on
the situation, your profitability and other things.
Right. So, well, I hope that day is not very far. The
you.
NOC comes soon, and as you said, within the next 7 or 8 months after that, it is listing. So let's do some practice, Ashish bhai, in terms of the listing.
Yes, of course, it will not be done here. It will be another
Yeah,
exchange.
of course.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. US President Trump and Prime Minister Modi exchange conciliatory messages once again. Trump says trade negotiations will continue and he looks forward to speaking with Modi in the coming weeks. Prime Minister Modi calls US a natural partner and expresses confidence over a trade deal. US President Trump presses European Union to impose 100% tariffs on India and China to pressure Putin to end the Ukraine war. CNBC reports Trump made the demand during a meeting with the EU and Ukrainian officials. Washington is also ready to mirror any tariffs imposed by the EU. Sensex and Nifty gain for the 6th straight day. President Trump and Prime Minister Modi exchanging messages boost sentiment. Equity mutual fund inflows dropped 21% in August. Total assets under management also declined. Uneasy calm on the streets of Nepal as the army imposes nationwide curfew. Dozens detained on charges of arson, vandalism and individual attacks after lawmakers get roughed up on the streets. Kathmandu airport remains closed for the second day. Poland says a huge number of Russian drones entered its airspace during Moscow's attack on Ukraine. Adds 3 or 4 were shot down. Calls it an act of aggression. Summons the Russian envoy. EU and NATO condemn the attack. Call it intentional. Kremlin is yet to respond to the charges. Israel draws global condemnation after bombing Qatar's capital Doha, targeting Hamas leadership. The UK, France, Saudi Arabia denounced the strikes. Qatar claims there was no warning from the US about the strikes, which killed 5 Hamas members and a Qatari security officer. Urban Company's 1900 crore IPO fully subscribed on day one. The firm raises over 850 crores from anchor investors ahead of the public issue, 80% of which is an offer for sale. The price band has been set between 98 and 103 rupees a share. Three-way battle for late industrialist Sanjay Kapoor's inheritance. Sanjay's widow Priya claims that his children with ex-wife Karishma have not been left on the road. Says she facilitated transfer of 1900 crores in assets to the children 5 days before the suit. Mother Rani Kapoor tells the court that there's nothing for her in Sanjay's will. Court directs Priya Kapoor to disclose all known assets of Sanjay Kapoor within 3 weeks. Apple unveils iPhone 17 lineup for India with a starting price of nearly 83,000 rupees. The top-end version will cost nearly 2.3 lakh rupees. And the top story this evening, US President Donald Trump and Prime Minister Modi exchanged conciliatory messages once again amidst the tariff standoff. In a social media post, Trump said that both sides are continuing negotiations to address the trade barriers, and he's looking forward to speaking with Prime Minister Modi in the upcoming weeks. Trump wrote, and I quote, "I feel certain that there will be no difficulty in coming to a successful conclusion for both of our great countries." End quote. Prime Minister Modi echoed the sentiment, calling India and the US close friends and natural partners. The Prime Minister said both teams are working to conclude talks at the earliest. He added, and I quote, "Our trade negotiations will pave the way for unlocking the limitless potential of the India-US partnership." End quote. The leaders shared conciliatory messages even as the 50% tariff on India remains in place. We learned from sources that officials from India and the US are likely to have an exchange of trade delegations soon in a bid to find common ground. Parikshit Luthra is here with more on this. Parikshit.
Well, very important developments taking place between India and the United States. Donald Trump has said that he is looking forward to speaking to Prime Minister Modi in the next couple of weeks, and the trade negotiations between the two countries are continuing. The Prime Minister once again reciprocating that sentiment and said that he hopes that the trade negotiations between the two countries will be concluded soon. Now, we've been told by highly informed sources that this is a clear indicator to officials on both sides to fast-track trade negotiations, and essentially the way to sum up this is that the trade negotiations are back on track and they have a positive trajectory. Officials from both sides will now make an effort to hold early meetings and conclude this deal as early as possible. We've been told that talks are on to have delegations of the two countries meet at a very early date in the next few weeks, and this could be an Indian team going to the US or a US team coming to India. So those details are being worked out, but all effort will be made to resolve the differences and bring the tariffs to a level that are acceptable to both countries.
Thank you, Parikshit, for that. Now, US President Donald Trump has reportedly pressed the European Union to impose tariffs of up to 100% on China and India over their Russian oil purchases. Now, CNBC reported that President Trump made the request yesterday during a meeting with EU and Ukrainian officials. Trump also indicated that Washington is ready to mirror any tariffs imposed by the EU on the two countries. Now, this comes at a time when free trade agreement talks between India and the EU have seen tremendous progress, with Commerce Minister Piyush Goyal saying about 65% of chapters have been finalized. And speaking of the EU, the bloc has cleared 102 more Indian fisheries units for exports to the region. This comes as a major relief for the marine product sector that has been hit by 50% tariffs by the US. Commerce Ministry expects EU's move to boost trade volumes by 20%. It also said the move adds 16% more Indian export establishments in terms of trade volume. India's marine exports to its second largest market were worth $1.1 billion in FY24. Indian shrimp stocks rose sharply in today's trade post the news. The US Supreme Court has agreed to hear arguments on whether the Trump administration's global tariffs are legal. The court is expediting the review and will start hearing the case in the first week of November. A lower court had earlier ruled that Trump overstepped his authority by using a 1977 emergency law to impose tariffs. The Trump administration has so far pushed back, calling this decision a judicial overreach. All right, now let's put the spotlight on the stock market action. Sensex and Nifty gained for the sixth straight day. The exchange of conciliatory messages between President Trump and Prime Minister Modi boosted sentiment. Nifty is now within touching distance of 25,000 mark. Sensex gained over 300 points. Midcaps outperformed the blue chips. Equity mutual funds locked their 54th straight month of growth, but the inflows were down 21% in August compared to July. Subhi Upadhyay joins us with the mutual funds report card.
Well, mutual fund numbers for the month of August are out, and it's not looking like a bad set of data points at all. Yes, it's not as fantastic as July, because July we had all-time flows going well above 42,000 crores. This time around, the overall number is slightly more modest, you'd have to say, at about 33,400 crores. Now, why is there this month-on-month dip? Largely because of NFOs or new fund offerings. In July, we had a whole bunch of NFOs on the debt side and also on the equity side, which bumped up the number. In fact, NFOs had pulled in over 30,000 crores in July, and that number has come down rather substantially. If I look at the NFO contribution, it's under 3,000 crores this time around. But maybe you can't fault the industry. I mean, NFOs, every month to expect a bumper NFO would be maybe a stretch. Let's look at the granular details. And here, everything seems to be, on course or on track. Once again, it's small cap and mid cap funds which are finding greater traction when it comes to investors. So if we look at the SMID category, as it's called, mid cap funds have pulled in 5,330 odd crores. The small cap category has pulled in just under 5,000 crores, which is a little lower than last month, but the trend is intact. Large cap funds in comparison have pulled in about 2,800 crores. So more money going in SMIDs, that's the other category. Another factor to keep in mind this time around is that hybrids is a category which has been gaining traction. Your multi-asset funds, your balanced advantage funds. There, the inflow is a little lower as well. Hybrids last time around in July pulled in almost 29,000 crores. This time, that number is a lot lesser than that at a little over 15,000 crores. And both of these categories, multi-asset, they're still finding takers. There's a lot of traction, but it has come down a little bit. But the best silver lining from this data, again, is the SIP book, which is very, very steady. It hasn't increased too much, but at 28,000 crores plus, roughly 28,250 thereabouts, it's still a solid number. So retail investors have kept the faith, and they continue to patiently wait for this market to turn around and start rewarding them in a better way.
Right, thank you, Surbhi, for that. Crude oil prices surged after Israel attacked Hamas leadership by bombing Doha, and President Trump reportedly asked the European Union to impose tariffs on Russian oil buyers. Meanwhile, gold prices edged higher, hovering above the $3,600 per ounce mark. The yellow metals prices have been buoyed by expectations of a U.S. interest rate cut this month. Investors are also keeping an eye on the U.S. inflation data due this week. Fitch Ratings has raised India's FY26 growth outlook to 6.9% from 6.5% earlier. The rating agency cited robust domestic demand and supportive financial conditions. The upgrade follows stronger than expected first quarter data, with GDP rising 7.8% year-on-year. Fitch expects US tariffs on India to be negotiated down eventually. However, it warned that uncertainty could weigh on investor sentiment. Urban Company's 1,900 crore rupee initial public offering was fully subscribed within hours of opening on the first day. As of 4 p.m., the total subscription stands at 2.7 times. Retail investors led the demand, followed by employees and non-institutional investors. At the upper end of the price band, the company would be valued at 14,790 crore rupees. The government is likely to consider further consolidation of PSU banks. Top officials will meet PSU bank chiefs at an upcoming brainstorming session on the 12th and 13th of September. The meeting will have wide-ranging agenda, including governance, artificial intelligence, asset quality, among others. A team from McKinsey and RBI Deputy Governor Swaminathan are also expected to attend this meeting. All right, on to a CNBC TV 18 exclusive. The Revenue Department is deploying field officers to ensure GST rate cut benefits are passed on to consumers from 22nd September. Sources tell CNBC TV 18 that the officers have been instructed to monitor prices of goods across categories to prevent profiteering. Timsy Jaipuria joins us now. Timsy, how will the government ensure enforcement?
With GST cuts to kick in from 22nd of September, Revenue Department is likely to monitor prices of goods across categories to ensure that GST cuts are passed on from 22nd. CBIC has been asked to deploy field formations on ground to ensure that GST rate cuts are passed on. The Central Board of Indirect Taxes and Customs field formations will keep a close watch on rates of all items, both pre and post GST cuts. Sources further say that CBIC has told field formations to ensure that no industry revises MRP to absorb the GST cut benefits instead of passing it through to the consumers. Also, a direction to field officers is to keep a ready list of rate cuts to ensure transition happens pan-India in the correct rates. Also, field officers have been directed to ensure that no profiteering takes place after September 22nd. So, all in, the government is keeping all its machinery ready on ground to ensure that GST rate cuts are passed on. Just to remind our viewers that government announced GST rate rationalization on 3rd of September. The new rates will kick in from 22nd of September and all daily essential items have been brought down from current 12% and 18% to 5% or nil. Aspirational goods have been brought down from 28% to 18%. Cess on cars and aerated beverages is also likely to end from 22nd of September. So as of now, the entire machinery will be on ground to ensure that GST cuts are passed on to the consumers.
Thank you, Timsy, for that. During the day, the Central Board of Indirect Taxes and Customs held a meeting with industry bodies, asking them to work with the government to ensure a smooth transition. The CBIC clarified to the industry that the amounts pending in cess account will not be adjusted against any other payments. It also addressed concerns from the insurance and auto sector. The government assured companies that procedural flexibility would be provided as long as consumer interests were safeguarded. The three-way inheritance battle for late Sanjay Kapoor's personal assets played out in the Delhi High Court today. Now, Sanjay's widow, Priya, claims that his children with ex-wife Karishma have not been left on the road. Says she facilitated transfer of 1,900 crores in assets to the children 5 days before the suit. Ashmit Kumar gets us the latest on the bitter Sona Comstar first family battle.
Well, just to set the context, it was Karisma Kapoor's children with Sanjay Kapoor that had filed this petition before the Delhi High Court. In that petition, Priya Kapoor, the widow of Sanjay Kapoor, as well as Rani Kapoor, the mother of Sanjay Kapoor, were also named as parties. And before the Delhi High Court today, it became a three-way contest. Competing claims being made by Karisma Kapoor's children, disputed by Priya Kapoor, being disputed in turn by Rani Kapoor, the mother. I'll take you through them one by one. As far as Karisma Kapoor's children are concerned, they're claiming their status as class 1, as they're claiming each of them is claiming 1/5 of the entire assets of Sanjay Kapoor. Their claim essentially is that the will that is being forwarded, that is being claimed by Priya Kapoor, has been forged, has been fabricated, and that it denies them any stake to the assets, any entitlement to the assets of Sanjay Kapoor. So to that end, they are seeking some form of interim protection that the assets of Sanjay Kapoor are not frittered away. That's as far as Karisma Kapoor's children are concerned. Priya Kapoor, the widow of Sanjay Kapoor, has clarified her position that there is a very neat trail of word-stamped word files, emails, WhatsApp messages that clearly indicate that there is in fact a genuine authenticity as far as this will is concerned. And then going on to say that it's not like Karisma Kapoor's children are being left on the road. In fact, submitting before the Delhi High Court that just 5 days prior to the Delhi High Court suit being filed, just 5 days prior to that, assets worth 1,900 crore rupees were transferred in favor of the children on account of the family trust. Now, in the middle of all of this, Rani Kapoor was also present through her counsel. Her counsel argued that this is an extremely unfortunate position as far as the mother is concerned. She's claiming entitlement to assets worth 10,000 crore rupees. She's saying the will is excluding her, the family trust is excluding her, that she's not been given any stake as far as the assets of her very own son is concerned, that this is her family's legacy and that she's being denied her legacy, she's being denied her fair share of the assets. So an ugly dispute this before the Delhi High Court. The High Court for now has not passed any interim directions. This matter has now been posted to October 9th, and that's when the High Court will look to pass, if at all, any directions on whether or not any interim protection is required, any interim assets orders are required for securing assets of Sanjay Kapoor. Back to you.
Right. Thank you, Ashmit, for that. A federal judge has temporarily blocked President Donald Trump from firing U.S. Fed Governor Lisa Cook. She is part of the board that sets interest rates. Now, the court ruled that Cook's removal likely violated the Fed's for cause provision, which does not allow the removal of an individual for conduct that occurred before they began office. Now, Trump last month announced that he was firing Cook, citing mortgage fraud allegations, charges that Cook has denied. The president has long been critical of the Fed and its chair, Jerome Powell, for resisting his pressure to cut rates. Weight loss drug maker Novo Nordisk announced its plans to slash 9,000 jobs as it seeks to revive growth and fend off mounting competition from Eli Lilly and other competitor drugs. The drug major plans to cut 5,000 jobs in Denmark. The restructuring plans is expected to save $1.25 billion annually. Chipmaker Qualcomm is making a big move into automobile technology. It has launched a new driver assist system with BMW called Snapdragon Ride Pilot. It allows hand-free driving and lane changes and is scheduled to roll out in 100 countries by 2026. Auto is now one of Qualcomm's fastest growing segments. The company plans to move beyond chips into full vehicle tech ecosystems. Tech giant Apple unveiled the latest iPhones, AirPods and Apple Watch at its annual launch event. The starting price of the iPhone 17 in India is nearly 83,000 rupees. Rashnathan Rajani has more on the new launch and Apple's India bet.
Right, Apple has unveiled its iPhone 17 lineup in India with prices starting from 82,900 for the 256GB iPhone 17 to close to 2,30,000 rupees for the 2TB iPhone 17 Pro Max. The iPhone 17 Air is Apple's thinnest iPhone at 5.6 mm and starts at about 1,19,900 rupees, slotting into the aspirational mid-tier prices. Now, the prices have climbed up compared to last year's iPhone 16, which started at 79,900 rupees. But that was for the 128GB variant, and this was also at a time when, if you look at the rupee to dollar exchange rate, was about 83 rupees, wherein now, as we know it, it's about 88 rupees. Now, there's also 1,84,900 rupees for the 1TB Pro Max in the iPhone 17. That was in the iPhone 16 Pro Max range. But the iPhone 17's 256GB, which is the base model, so that is 3,000 rupees costlier than last year's base model, but also the storage has doubled up. While the Pro Max and the Pro Max's new introduction is of a 2TB tier, that clearly pushes the ceiling by 45,000 rupees, signaling Apple's bold premium push. Yet India remains a growth juggernaut for Apple, with $9 billion in 2024-25 sales and iPhone revenues projected at $12.1 billion in 2025. Now, shipments have jumped 35% in 2024, securing an 11% market share in the phone category, but it is dominant in the premium category at about 64%. Local manufacturing has driven this surge. all iPhone 17 models are now made in India, cutting import duties by 20 to 22%, lowering average selling prices by $1,000 in 2023 to $958 in 2024. India now produces 1 in 5 iPhones. Globally, with exports already reaching international markets and US shipments on the horizon, Apple's retail footprint is also expanding, with flagship stores in Mumbai, Delhi, Bengaluru and Pune, and new outlets planned in Noida and Mumbai by 2026. Financing options, trade-ins, festive promotions are fueling further demand, especially in Tier 2 cities where iPhones pretty much remain a status symbol. But speaking of beyond just iPhones, there's also MacBooks and iPads that are surging, with iPads now commanding a 30% tablet market share. Services and enterprise sales further embed Apple in India's ecosystem. Now, analysts forecast that India is Apple's third largest market by 2026, overtaking Japan and the UK. With local production, strategic pricing and unmatched brand allure, Apple's India story is about scale and ambition, transforming the country into a global manufacturing and export hub. Back to you.
Right, thank you, Rachna, for that comprehensive update. On that note, we'll slip into a short break. Coming up next, uneasy calm on the streets of Nepal as the army imposes nationwide curfew. Dozens detained on charges of vandalism, arson and individual attacks. More details when we return. Welcome back. The big global story that we're tracking: an uneasy calm prevails in Nepal 24 hours after a violent anti-corruption stir led by Gen Z stormed the corridors of power. Prime Minister Oli resigned yesterday as protesters went on a rampage. Nepal's army has imposed a nationwide curfew. Yesterday, protesters stormed and set fire to several key government buildings, including International Convention Centre, which housed the federal parliament. Thick plumes of smoke could be seen from the India side of the Nepal border. Politicians did not escape the protesters' wrath either. Nepal's finance minister was chased and assaulted on the streets of Kathmandu. At least 23 people have been killed so far. Our team of reporters from Network 18 report on the carnage.
जिस तरह से ओली सरकार से नेपाल की जनता नाराज थी और उसके बाद सड़कों पे प्रदर्शन हुआ, बहुत सारे छात्रों की मौत हुई, उसके बाद आज सुबह जो है न्यूज़ 18 इंडिया उसी संसद भवन के पास मौजूद है जो कल पूरी तरह से आग की लपटों में झुलस रहा था। देखिए ये बिल्कुल संसद भवन के पास एक गाड़ी है। पहले मेरे कैमरामैन इसकी तस्वीरें दिखाएंगे, ये किस तरह से पूरी जल के राख हो चुकी है और इस गाड़ी को पूरी तरह से जो प्रदर्शनकारी थे उन्होंने आग के हवाले कर दिया। आप देख सकते हैं गाड़ी में कुछ नहीं बचा, पूरी गाड़ी जो है वो पूरी तरह से जल के राख हो गई। और देखिए अब ये तस्वीर मैं आपको दिखाता हूँ बिल्कुल यहाँ पे क्लोज में, ये देखिए ये संसद भवन है और इसकी ये बैरिकेटिंग थी, ये पूरा जो है इसका जो प्रीमाइसेस था उसको पूरी तरह से प्रदर्शनकारियों ने तोड़ दिया। आप देख सकते हैं यहाँ पर ये पूरी दीवार थी जो पूरी टूट चुकी है।
नेपालगंज के अंदर ट्रैफिक पुलिस का जो पोस्ट है उसमें आगजनी की गई, तोड़फोड़ की गई, प्रदर्शनकारियों ने किया। अब हम आपको दिखाते हैं तस्वीर अंदर की। अब हम एंटर कर रहे हैं, ये देखिए ट्रैफिक प्रहरी पोस्ट नेपालगंज, ऊपर देखिए जरा बोर्ड की तरफ। उसके बाद यहाँ देखिए ये जो बाइक थी अंदर जिनका चालान हुआ था या फिर जो चालान का पैसा नहीं दे पाए उनकी ये बाइक है जिसमें आगजनी यहाँ पर की गई। मैं अपने वीडियो जर्नलिस्ट से कहूंगा कि जरा अंदर की तस्वीरें दिखाएं। यहाँ पर देखिए जो बाइक हर तरफ यहाँ पर है, इस बाइक को सड़क पर खींचा गया, जो उसको खींच नहीं पाए उसे अंदर ही आग के हवाले किया गया। इसके अलावा देखिए यहाँ पर जो ये फूल के गमले हैं, ये जो सजावट यहाँ पर की गई थी उसे भी यहाँ पर तोड़फोड़ किया गया। ये सारा यहाँ पर कुछ देख पा रहे हैं, ये फूल के गमले हैं, जरा ये देखिए ये फूल के सारे गमले हैं, ये तमाम डॉक्यूमेंट्स हैं यहाँ पर। देखिए ये तमाम चीजें जिनको आग के हवाले किया गया है।
Right, tense situation there. With that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV 18.
Hello and welcome to Startup Street. I'm Arundhati Ramnan and with me as always Shruti Mishra and Ritu Singh. These are the top headlines from the startup world. Urban Company's 1,900 crore rupee IPO fully subscribed on day one. The firm raises over 850 crore rupees from anchor investors ahead of the public issue, 80% of which is an offer for sale. The price band has been set at between 98 and 103 rupees per share.
Shares of Ola Electric Mobility skid even as the company issues a clarification stating that auditors' observations pertains to isolated case connected within its subsidiary Ola Electric Technologies. The company adds physical verification was not possible due to ongoing realignment.
Performance management platform Klar lands an investment worth $5 million in Series A round led by Prime Venture Partners. Alongside announces its US launch, the capital is set to fuel Klar's US go-to-market initiatives, new client onboarding, and the scaling engineering hub in India.
Skincare brand Eicher bags an investment worth 28 crore rupees in a pre-Series A round. The round was led by RPSG Capital, also witnessed participation from existing investors, OTP Ventures and Huddle Ventures, among others. Now, this fundraise is set to boost its plans to launch 6 new products in the next 1 year.
Aerial robotic solutions provider Endure Air secures 25 crore rupees in funding from IAN Alpha Fund. The startup plans to use the capital to strengthen its deep tech drone capabilities for defense ecosystem, expand into enterprise market and advancement of technologies.
Global technology and sports content company Minute Media acquires Binny Bansal-backed Videoverse for nearly $250 million, making it the largest acquisition till date for Minute Media, as per TechCrunch. The company believes Videoverse's technology will enable Minute Media to deliver real-time, compelling short-form video content and further strengthen its ecosystem.
Meta Platforms inks a multi-year deal with AI image startup Black Forest Labs. This $140 million worth deal will give Meta access to the startup's technology. As per Bloomberg, Meta will commit $35 million to the German-based startup in the first year and remaining the next year.
Well, those were the headlines we've been tracking for you this evening on What's Brewing Today. Bengaluru-based kids personal care brand Tuco Kids has raised $4 million in a Series A funding round led by RTP Global with participation from existing investors, Fireside Ventures, Whiteboard Capital and MG Investments. Founded in 2023, Tuco Kids caters to school-going children aged 3 to 13 with products ranging from soaps and sunscreens to deodorants and even kids' makeup. The company has grown 10x in a year, reaching over 2 lakh parents across India. To talk to us about the fundraise, the journey so far and what's next, I'm now joined by Aishwarya Murli, the co-founder of Tuco Kids. Aishwarya, welcome to Startup Street. You are building a new category in kids' personal care, catering to school-going children aged 3 to 13, like I mentioned earlier. Tell us, how big is this opportunity and what unique needs are you solving for this age group that neither baby products nor adult formulations address?
Thank you so much. Lovely to be here. Very exciting. I think the kids space is very exciting for me at both a personal level as well as a professional level. Personally, I have 2 kids and I have personally suffered myself once the kids outgrew the baby age to find products for them. And I'll explain why. And professionally also, I think this is a space where with today's India of nuclear families and so much of spending power that moms have and parents have, it's actually something where parents have realized that they need to sort of focus on their children, whether it's differential education, be it international boards, differential food, organic, etc., apparel, as well as now skincare as well.
Sure.
So I think that to answer your second question, so the opportunity itself in kids, as we are reliably told by investors itself, it is one of those key theses that it's going to grow in the next 10 years. And we want to be right there in the thick of that growth. From a personal standpoint, why kids' needs are different, I'm sure anyone who's a mom out here watching or a parent out here watching will know that the minute kids start going to daycare, things change. They're not babies anymore. They get dirty. They need sunscreen. They get dandruff. They get lice. And like you rightly mentioned, at age 7 or 8, they all want to emulate adults when it comes to wearing makeup, any of those things. So I think the thing is that we see a lot of their needs are very, very different from babies and adults.
I agree with you. I have two 7-year-olds, so I completely agree with you. But, Aishwarya, you've grown 10x in just a year with over 2 lakh parents choosing Tuco. What has been the biggest growth driver for you so far? And can you give us a sense of the sales traction so far?
So I think what we realized was that, this was actually an unmet need that a lot of parents didn't know existed. So when we tapped upon that message to say, don't use adult skincare on children, I think that it just worked wonders. Organically, I think a lot of parents came back to us. So 2 things worked. The fact that, adult skincare even today has a lot of chemicals in it which are not suited for children. Maybe they're okay for adults, but they have a lot of chemicals. This message resonates with a lot of parents today, and they're stuck because they don't have options. The second is actually our reason to believe. Like we don't use any fancy ingredients, to be honest. We use things like haldi, saffron, mint, ginger, besan, uptan, these things that, we used as children. We resonate to these ingredients. Our products are actually more modern formulations of exactly traditional ingredients. So I think these are 2 messages that deeply resonated with our customers. So it was very organic over the last year, if I would put it that way.
Absolutely.
That's growth.
Yes, and your portfolio spans everything, like we discussed, soaps to sunscreen, deodorants, and even kids' makeup developed in-house. So what's next in the pipeline, and where are you manufacturing currently? What kind of volumes are we talking about?
So we actually have manufacturers now. Over the last year, we only had 1 manufacturer last year when we raised our first round. Now we have about 5 manufacturers across India. So we have makeup with a separate person. We have sunscreen. Sunscreen is a huge category for us itself because we need to use safe UV filters, etc. We have that with a different person. Our personal care, our core personal care sits out of Kerala, and so on and so forth. We do diversify manufacturing, but all of our formulations, licenses, like you said, our innovations are held in-house. So when we want to formulate, we put the entire formulation together. We invite the formulation to sort of various folks to sort of do it for us, and we pick we think sort of meets the quality the best.
Okay.
So that's how sort of on manufacturing.
Aishwarya, sustainability is a big differentiator, and your formulations are packaged in 100% landfill and ocean reclaimed plastic. That's what you claim. How has that resonated with parents? And most importantly, what challenges does it create on the supply side?
So the thing is that it's almost 87 parents. We ran a survey. 87% of parents who bought from us know that we are 100% recycled, and they state that as a key reason for why they love the brand. Actually, what they're telling us is their children are coming back, because today's children are way more aware than our generation was in terms of all of this. So they are coming back and saying, you know what, this is a brand that gives you 100% recycled plastic. So they love it because of that, and a lot of awareness amongst existing customers about our sustainability mission. Supply chain wise, yes, it was difficult, and it is always going to be difficult, I think, because we almost took 10 months to develop the unbottled, because we were not ready to settle for 20%, 30%, 40% PCR. We did want 100% post-recycled plastic. So it did take us a journey, and contrary to belief, our bottles are actually more expensive than virgin. You believe that reclaimed plastic would be cheaper, but it's not. It's more expensive.
It's not. Absolutely. And one final question, Aishwarya, we are running out of time. Very quickly, looking ahead, where do you see Tuco Kids in the next 3 years? Any revenue targets and your offline expansion as well? And do you just see yourself as a kids' personal care brand, or is there a larger play in wellness and lifestyle?
So absolutely. I think over the next year, we are racing. We want to become a 100 crore brand, join the 100 crore club in the next year. And in the next 3 years, I do see us sort of hit the 300 to 400 crore mark for sure. That's really what our ambition is from a revenue standpoint. From a kid standpoint, I think we will focus in BPC till we reach about 100 crore. But then we want to be everything kids. I think we want to stay true to the DNA of serving today's Indian children. So even over the next couple of years, we will look at everything kids, whether it's nutraceuticals and other allied therapies that we could potentially go into.
All right. With that, it's time for me to wrap up our conversation. Many thanks, Aishwarya, for joining us, and wish you the very best with all your growth plans.
Thank you so much. Thanks.
On Investor Eye, Venture Catalyst has closed a fresh 150 crore rupee round to scale its multi-stage venture platform. The raise saw participation from an eclectic mix of investors, from public market veterans and corporates to Bollywood family offices, signaling how mainstream venture investing is becoming in India. Founded in 2016, the platform today manages over $500 million across funds and has backed more than 400 startups, including unicorns like BharatPe and Pixis. With the new capital, Venture Catalyst plans to strengthen leadership, roll out AI-driven tools, and expand deeper into India's startup hubs. Joining us now to talk strategy growth in India's venture landscape is Apurva Ranjan Sharma, the co-founder and MD of Venture Catalyst. Apurva, thank you so much for taking time out and being here with us on Startup Street. You know, Venture Catalyst, as I mentioned, has just raised 150 crore rupees. How will this sort of fresh capital reshape its position in India's venture ecosystem?
Today we get startups from close to 300 districts. And we know that there are about 600 districts in India which are creating startups. So we want to go deep into the pockets, and we want almost all the tier 2, tier 3 startups to get an opportunity to raise capital from us. And that is one major focus area. Then we also want to, acquire talents and, leadership team, strengthen that. And then some also on the other side, we want to also bring some standard practices from the global market to use AI tools to, bring strength to our selections and bring our processes, etc. So this is how we're going to utilize the capital.
All right. And, the round also saw participation from public market veterans, corporates, and even Bollywood family offices, right? So what does this sort of say about the growing mainstream appeal of venture investing in India?
Yeah, so this is like reaching to a acceptance level of this asset class, because you see the diversity of some of the biggest stock market or investors backing us, and listed companies investors, and also the Bollywood investors. I mean, these are people from, because media slowly is becoming very important. Today you just announced Videoverse, which is also one of my portfolio company. We gave them first check, which is a large acquisition by Minutes Media. So media is becoming a very important sector, media and entertainment in India. And that's why we have Shah Rukh, Aishwarya, and also Sakal Media backing in this round. So diversity in sectors and diversity, in type of investor is coming, and that shows the acceptance of this asset class is reaching to the next level.
Absolutely. Lots of diversity then. With over $500 million in AUMs and multiple AIFs under your belt, how does Venture Catalyst sort of differentiate itself from other multi-stage VC platforms? If you could sort of give us a sense of your AUM target for this year and how you plan to grow it even further?
See, our DNA at the core, I'll say, is developmental. We follow the incubation approach to develop the companies across stages, whether it is idea stage, seed stage, series A, wherever we are investing, or the growth stage also. So we do a lot of institutional way. We have institutional way of developing the companies. And that is one of the biggest differentiator what Venture Catalyst has today in the multi-stage VC market. Apart from that, as we said, there'll be more funds, more sector for more strategies of funds. Like today, we have idea stage covered by 100 unicorns, growth stage covered by Elevate. We have Beams and Aspire in the prop tech and fintech. There'll be more sector focus, more other stages of the funds will be coming in the future. Today, we do around $50 to $100 million investment almost every year. And this is going to grow from here.
And, if you could quickly tell us, you're earmarking funds for AI-driven diligence and LP reporting. What kind of role do you see technology playing in the next wave of venture investing?
I just want to share one data point with you that, out of close to 1,200 unicorns in the world, close to 400 of them are from deep tech, AI, and,
Right.
So we have to incorporate when we are investing, and we are seeing so much results by these AI startups. We have to incorporate the AI practices and deep tech practices to our business also. And that's what we are doing in sourcing, selection, and compliance, etc. And that brings that will help us to scale to the next level in an easy way. And that is the reason why our focus of these technology tools is coming from.
Sure, and the platform has backed 400 plus startups. You've got unicorns like BharatPe and Pixis. What's the hit rate and how do you sort of measure success beyond unicorn creation? Where do you think we'll see the next big startups come from?
So hit rate is actually very, very good because we follow the incubation approach. Almost every company which come to us in the idea of series stage get the opportunity to present to 2,000 plus VC through demo day, then through ProStar to private equity interactions. And then there are, regular mentoring sessions for these startups. So that's the reason why, our hit ratio is good. We have less than 20% mortality. And also around 40 to 50% company are, raised significant round. And around 12% companies have got the M&A offers. So that is how our performance in this portfolio, 400 plus companies.
All right, and where do you think the next big startups are coming from?
So next big startup, of course, is as I said, deep tech. We just announced India Deep Tech Alliance on Sept recently. Next big startups are going to come in deep tech. Deep tech is just not technology or software; it is complex engineering. And it is across sectors, number one. Number two, biotech. It's going to be a big revolution soon. Number three, you will see, this semiconductor and defense, and especially advanced manufacturing. We have startups like Ethereum Machine and Jetwork in our portfolio. They're doing amazing work. So that sector is going to grow a lot because India is targeting to have very strong manufacturing sector in India.
Absolutely. Thank you, Apurva, for outlining where you see the venture landscape going for the startup ecosystem. And we're completely out of time, but thank you so much for joining us on the show today.
Thank you very much for giving us time. Thank you.
Well, with that, it's time for us to head into a short break. Coming up next, Walmart recently unveiled its agentic framework and introduced YB, which is the fourth AI super agent. Hari Vasudev of Walmart US talks about the latest agent and how it will benefit retail sector. Stay tuned.
Well, Walmart Global Tech recently wrapped up its flagship event Converge in Bangalore, where it unveiled its agentic framework and introduced YB, which is the fourth super agent powering a new era of developer productivity. To discuss that and the broader future of AI in retail, we're delighted to have with us Hari Vasudev, the Executive Vice President and Chief Technology Officer of Walmart US, with us today, having built Walmart's India Tech Hub into a powerhouse and now leading AI transformation in the US. Hari brings a unique perspective on what's next for retail globally and in India. Hari, thank you so much for your time here on Startup Street today. You've just announced YB as Walmart's fourth super agent, an invocation layer rather than a dashboard. How will this fundamentally change the way technology is built and operated inside Walmart?
Yeah, so what YB will do is it'll allow developers to build agents faster, right? So as we move towards more of an agentic world, what we want to do is to make sure that AI is completely embedded into the fabric of Walmart. So whether it's our customers, our associates in the front line in the stores, whether it is our partners like our advertisers, our sellers, our suppliers, our content creators, or indeed our own developers, we want to be deploying agentic AI as a way to accelerate the productivity of our associates. And so YB is particularly oriented towards developers that will allow us to be able to not only develop agents in the way, to allow us to develop code faster, but also to build agents that will then essentially make the rest of the enterprise more productive as well.
Well, even with Element that you've announced, you're essentially creating a foundation for scalable agentic development. Do you see a future where this framework can extend beyond Walmart, perhaps to partners, startups, or even open source communities?
That is something that, we haven't really thought about yet, but that's certainly in the realm of possibility. For now, what we are doing is we are focused on deploying agentic AI overall across our enterprise. And the four super agents that we have announced, Sparky, the one for our associates, the one for our external community, Marty, as well as YB, are all going to be really focused on within our enterprise.
Well, let's talk about agentic AI then. From your vantage point, what are the most tangible use cases already impacting Walmart's business today? And what is the realistic roadmap to full-scale autonomous decision-making in retail?
Yeah. So I think, when the way we have approached AI is that we want to make sure that as we deploy these agents, to your point, that there is measurable impact. And it's really helping everyone, whether it's our associates, whether it's our customers, or our suppliers and our partners. So for example, with our customers, what we're doing is we're moving to more of a more natural interface, if you will, where customers can work with our systems.
In the current environment where tariff-related tensions are rising globally, supply chains, consumer behaviors, they're more volatile than ever. How is Walmart using technology, like AI-driven forecasting, supply chain optimization, etc., to cushion these shocks and also keep the cost predictable?
Yeah, so we have been using AI quite effectively for a while now, right? You talked about demand forecasting. So for example, we have machine learned algorithms that run forecasting models that do forecasting at the store item level. Another example is, as we look at our supply chain network, what we're doing is we are running algorithms that allow us to effectively place inventory at the right places within our network so that we can deliver to our customers with ever increasing speed. Likewise, we have built in extremely robust last mile delivery systems, all of which are leveraging AI very effectively to be able to deliver items from our stores to 95% plus of US households in under an hour. And we think that's going to dramatically improve the experience for our customers. And that in turn will create huge impact for the enterprise, but it will also allow us to serve our customers that much better.
Let's talk about India, which is exporting a lot of digital infrastructure to the world from UPI to ONDC. How do you see India's retail tech innovations influencing Walmart's global playbook today?
Yeah, so for us, we've been working with the teams in India, and our teams in India are an integrated part of our global technology teams. But we are also looking at, for example, our own entities in India like PhonePe, and we have looked at solutions that they have built and have effectively transplanted it to other markets like Mexico, for example, where our cashy product in Mexico is modeled after some of the products and technologies that have been deployed in India by PhonePe.
Well, finally, Hari, retail itself is undergoing a massive reset from Gen AI to immersive commerce and whatnot. From where you sit, what do you see as the three most significant shifts that are reshaping global retail today? And how is Walmart positioning itself amid this change?
Yeah. So one, I think it always begins with the customer, right? So making sure that we're able to serve our customers effectively and as fast as we can. So I talked about how the speed of delivery is becoming more and more critical, right? So for example, we're very, very focused on delivering to our customers from our stores as fast as we can. The second is really how do we improve the experiences our customers going through when they shop with us, whether that's in the store or whether that's online. How do you bring AI to bear so that we can effectively create more seamless shopping experiences for our customers with less friction than in the past? And then third, of course, is how do we use AI effectively for our own associates? And so how do we essentially use AI as a rising tide that lifts all boats across all of the stakeholders in our enterprise? Those are some of the big areas of focus for us.
Well, thanks, Hari, so much for your time and for bringing us that perspective. And on that note, we're going to wrap up this edition of Startup Street. Many thanks for watching, and it's a goodbye from all of us.
Nirmalaji, thank you so much for giving us this exclusive interview, one of your first to any media outlet. This is after this monumental, historic decision of GST rationalization. In many ways, GST2, the second coming, there has been a lot of talk in the past. Let me begin with a broader question. From the Prime Minister's vision of making life easy for the common man, of, reducing the burden on the common man. You did it in your budget last time by cutting the income tax rate, a bonanza for the middle class. What was the vision behind this? What did the Prime Minister tell you? How did it come about?
Thank you very much for giving me this opportunity to interact soon after this major reform measure has been approved by the Council. And I thank every one of the ministers who've attended the meeting, the states, the finance ministers, and supported it. Otherwise, it wouldn't have come to see the light of the day.
So now that you've done two monumental things, you've put more money into the hands of the consumer, you brought down for the middle classes the income tax cut, and now rationalization of GST. So will it now finally sort of move the needle on consumption?
100%. Because there's more money given already through the income tax cut. The rates are coming down. So the citizen now has a choice. To meet his aspirations and his expectations, he cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18.
That's right.
There's nothing beyond. So that 1% is what makes for the demerit goods, which popular parlance says sin goods.
Yeah.
So that is the extent to which we have cleansed the system of anomalies, doubts, duplications, and any interpretative issues.
So this will also lead to higher investments. It will fire up investments as well.
Obviously, with consumption going up, there's a potential for capacities to grow, investments to grow.
Now the combined tax revenue impact of this, earlier your income tax cuts, and this is about 1.2 lakh crore. Do you think that there will be a certain revenue buoyancy as well in the coming years to make up for this? And
every economic theory that one studies says that.
Yeah, have you seen that in the past?
Well, at least the moment the income tax reduction happened, you heard people very clearly coming out and say, I've met up with a lot of individuals coming from different strata of the society saying, I'll have more money to send my son to this particular college. My daughter is already doing engineering. I'll be able to fund her for her higher studies and things like that. And from ordinary citizens who are leading their lives either working in a small store or driving a car, taxi, and so on. So it has an immediate psychological effect that I can do this, which was beyond my affordability. And therefore, I think there will be a buoyancy in terms of revenue.
Any impact on capital spending or fiscal deficit?
I wouldn't think. At this moment, I can say with confidence, capital expenditure of the government will not come down. It will be completed as is stated in the budgetary planning time, the budget estimate time, and so with the fiscal deficit. And this is the last point of my gliding path. Right. I will adhere to it.
Will petroleum products and alcohol continue to be outside the ambit of GST?
Yes, the current proposal doesn't include it. Right. The states will have to.
And you don't see that happening in the near future?
Not in the immediate future.
Okay. Let's move to a few broader economic questions as well. With GST rationalization, inflation is likely to come down quite naturally. Does it make a case for further repo rate cuts in the future? I know it's not your, but generally, directionally speaking.
Not my domain. We'll have to see how the RBI assesses for itself.
September 22nd is a tight deadline. Are you confident you'll be able to roll this? Is the back end ready?
Yes, the back end was mentally prepared, and many structural things have already started getting corrected, reset, and so on. It is with the agreement of these GSTN related technology managing team related issues that we have had a discussion with them, and they have clearly given me the confidence that yes, they will be rolling it out on September 22nd.
So Rahul Gandhi, who earlier called it Gabbar Singh tax, now has been talking about one nation, one tax. On the other hand, former Finance Minister P. Chidambaram, he said that, it is 8 years too late. How do you react to all of this?
Well, being in the opposition, I think they have to say something. When the popular response has been so overwhelming, for an opposition to try to take some credit out of it, but yet with a hesitation that the credit should not be completely given to the government is quite understandable. But I would want them to ponder that neither could they bring it in because they couldn't win the confidence of the states, nor could they truly and literally understand how the mechanism works. After all, the GST Council has members from Congress party, finance ministers from Congress ruled states are there. But I have a feeling the Congress High Command, as they call it, doesn't do its homework to understand the way in which this wonderful organization works, the GST Council. And therefore, at one point in time, they call it Gabbar Singh tax, another point in time saying, oh, this is fine, but it should have come earlier. These are clearly statements coming from people who have not really spent time to understand how post-independence. That one institution which has been created, a constitutional body, if I'm right, this is the only one which has been created post-independence,
Yes.
is spent 8 years, but has delivered so much in terms of revenue, in terms of uniting this country, in terms of making ease of doing business a reality, and is now coming up quickly in succession within 8 years with the second generation reforms. To understand it and then to comment would help the government, not stray comments which doesn't get into the details.
So Q1 GDP numbers are heartening, 7.8%. At a time when President Trump said that, India is a dead economy. How do you react to something like that?
I may not be able to comment on, let's say, foreign head of the state commenting on it. But in India, one line which I keep repeating several times, probably even once when I met you once earlier when we chatted like this, it is the cynics within India who worry me. It is the naysayers within India who worry me. Assume somebody had said it, a head of state has said it. Building India together, and all of us together building India, are we going to carry those tales or stories or observations which somebody else says and then repeat that here, oh, so-and-so has said this, India's a dead economy, we knew it, this is happening, that's happening. India requires its citizens to be respected. They are toiling and struggling and working to build their families and their economies, their own personal family wealth and whatever. At this time when we are trying to create more opportunities, do we need the naysayers to even borrow such observations, be it as it may that it is coming from a head of state? Do we need our own people to use these expressions? It is undermining not the government, you're undermining our citizens' efforts. And a responsible opposition, I wished didn't repeat these lines, but I think it is, I would react only to what our people are saying rather than a head of state elsewhere.
No, five-quarter high number, I think it gives us a lot of confidence in the Indian economy.
And also inflation coming down.
Yes.
Drastically coming down.
Yes. But it brings us to a related point, which is on the point of tariffs. Now that tariffs with the US are at 50%, what is the likely impact on the GDP going forward? There are various estimates by various sort of consultancies, from 10 basis points all the way to 100 basis points, some have predicted. Where do you see the impact really of this?
But with the reform like this, many of that should be offset.
Yes.
So it is never a situation of one fixated point. It's a dynamic situation where you're moving from one to another with newer players coming in, newer factors coming into play in this scheme of things. This one, you have the GST reforms, which is going to make people understand that they can fetch more things with the same amount of money with which they bought some amount earlier. So it is very clear that industries have been speaking about the tariff and its impact. The government has designed something for itself. We will come out with something to handhold those who are hit by the 50% tariff from the US. This has been said earlier. I've met up with the delegations when I went to Chennai in recent past few days. I have said this there and I will repeat it. Government is working.
So will they be allowed to sell in India, or how do you plan to alleviate their concerns?
No, there is a package which consists of very many different ways in which we want to help them. So we'll wait for the cabinet to clear it, but there is something coming to help them so that this tirade of the tariff is something which they can face, and also suddenly having to look for newer markets is also a challenge. But we'll have to help them out on that.
So is there a sense in the government that this could be a slightly longer haul?
We hope not, but we really can't leave our exporters high and dry saying it's going to change sooner. We will work with them.
Nirmalaji, will we also continue to buy Russian oil?
Yes, that's been made very plain and simple. Whether it is Russian oil or anything else, it's our decision to buy from the place which suits our needs. whether in terms of rates, logistics, anything. So where we buy our oil from, especially being a big ticket foreign exchange related item, where we pay so much out of our pocket, highest in terms of import, we will have to take a call which suits us best. So we will undoubtedly be buying.
Another question about, the officials of the Trump administration have been using really hurtful language against India. Saying that we are Brahmins profiteering at the expense of, ordinary Indians, or, calling the Ukraine-Russia war Modi's war, or us as Kremlin's laundromat. How do you see all this? I mean, how do you react to something like this?
Very much the same principle as I said earlier. It is one thing, it can be hurtful. It is one thing for a foreign government, head of state or an official or anybody to say all that. And the global diplomatic world is astonished that that kind of an expression is being used against India. And that will have people in the diplomatic arena to respond or to deal with. But what hurts me more is when those very expressions are being justified in India. Oh, don't you all know, don't you, I mean, you know, dirty, unwashed Indians, you don't understand what this expression means? This is how, this is explained. Who wants these explanations from Indians? Who actually wants us to know better? And who are these people explaining to us, this expression is used in this context? Yes. I'm outraged by that. I don't want explanations to justify that. Whether I'm going to have to deal with them, stand up and challenge them or retort is a different story. Right. But Indians quoting those words and telling us, oh, you dirty Indians, you don't know this colonial justification of the language that is being used against Indians, against such countries which have come out of its colony and from its empire and stood up to build its own country with its own self-confidence. And even now when we are talking about Atmanirbhar, it's not just in terms of producing everything in your country. It's also about being
self-reliance.
There is no self-respect.
Self-respect.
As much as you want everything produced in India for Atmanirbharta, you should have something of a self-respect. If somebody is saying, all of us in one voice should respond to it, rather than have a few of us justify it by saying, don't you all understand it? Are you a part of the imperialists? I'm outraged more by that.
Yeah, the opposition picking up this and, making it their own narrative.
And saying...
Like dead economy was picked up by Congress, Rahul Gandhi to say.
And even for this, Brahmins are being, are the ones who are benefiting out of it. Oh, you Indians.
Us Boston Brahmins.
Yes, Boston Brahmins. Oh, you Indians, you don't understand this Russian oil purchase is to help Brahmins to benefit of it, and you are being fooled. Exactly the same divide and rule principle which the British used here, which the imperialists used here. And even today you have the friends of the imperialists telling us, no, the expression Boston Brahmin is this and not that. Who damn cares? I'm sorry. Yeah. Who damn cares? I want Indians to think for ourselves. I want those Indians who are now defending that language to get up and say, we are free from you all. Now for over 75, 80 years, we'll mind our business, we'll take care of ourselves, refrain from using these words. Should have been that voice. That not being the voice, and upar se to teach us saying, don't you know the meaning of this expression? Outrageous.
Today we've got to know Nirmala Sitharaman ko gussa kyun aata hai. No. Nirmala, India and China are now mending sort of fences. So, right now it is at the level of resuming the flights and giving visas to each other. But what could be the next steps? How could we make the Chinese markets more accessible to Indian, Indian companies? There is, of course, a huge deficit of $100 billion here. So how do we do that? I mean, what are the next steps?
There's just a lot of work to be done in that area. There's no hiding it. We need to have trade conversations, market access conversations, non-tariff barrier conversations with the Chinese. Unless we do that, and unless there is a true engagement and not a procrastinating engagement, you may talk as much as you want on these issues. I've done it myself. And to have a conclusion arrived at takes a lot of time with the Chinese. Sorry. Market access is something which has not been realized despite our almost a decade-long engagement with the Chinese. In between, everything had come to a halt. But on both these issues, there should be meaningful conversations. Otherwise, the very products that we want to export to China go through different destinations to China. But why can't it go directly?
Yeah. And will it also be reciprocal? I mean, Press Note 3 prevents investments from China to India. So would you look at, doing something about that as well?
As it is, I think in one or two cases, particular cases, we have relaxed some of them. And in those sectors where their technology has come in, and the technicians and also the experts had to come to actually see the projects through, we've not allowed these experts to come. That has now changed. In some sectors, people are coming in. The projects are already on the ground.
So India will be open to that idea?
Of course.
Nirmala ji, you've ushered in the boldest of reforms. I say this in every interview that we do because you corporate tax cut. I mean, that was a phenomenal sort of move. Then after that last budget, we have income tax rates going down. Now GST2, as I called it. So, one thing that we probably haven't seen enough is on private disinvestment. What would you say to that? You did sell Air India, but after that, things have been slow.
You'll see action in that also.
This year?
Yes.
Oh, that's great news. Any deadline for strategic stake sale in IDBI Bank?
No, I think the secretary has already, DIPAM secretary has already spoken about it. IDBI is moving quite fast.
Okay.
And I expect it to be concluded this
financial year? Okay, and any more banks which could then be looked at after this?
I wouldn't say any more banks. I'm not negating anything.
Right.
But yes, more disinvestments.
More disinvestments, okay. So we've seen that since June this year, the yield on 10-year bonds have risen 30 basis points since June, to more than 6.5%. Are you concerned about rising borrowing costs?
Yes. I wouldn't say I'm concerned, but I'm observing it. It is not affordable. And also at a time when interest rates are otherwise low,
yes,
bond yields becoming unsustainably high has a big bearing on the government. Not just our union government, states are also up against odds in getting affordable,
Also your fiscal math?
My fiscal math is as of now absolutely
of course,
fine.
Yeah. So, Nirmala ji, we are again, near an election. Bihar elections are coming up, and before every elections, we have seen all political parties dole out reveries, and we've discussed this in previous, encounters as well. Does this worry you? State after state, promising welfare schemes, doling out reveries, and how does it all really add up for a country like ours?
I think I'll speak for all finance ministers.
Yes.
It is a very, very difficult thing. To have a scheme approved and also budgeted for is not wrong. And I would approve of that, because that at least takes the view of the legislature and also makes it public about how they are financed, and therefore also brings in that responsibility to keep your revenue generation equally attended to. But what most often happens, not so much with Prime Minister Modi's leadership, but I can say what generally happens is you give away a promise. Once you have to come to fulfill it, you're searching and scrambling for resources. And if you're an opposition-ruled party, it is very quickly arsenal in your hand to say central government is not giving me money. That's the biggest unsustainable argument. I'm more tempted to say bogus argument. Because you give a promise, you win the election, you come to power, and then after that you're not able to fund it.
Yeah,
why would you want to?
A lot of cases.
Yes, why would you want to throw the blame at somebody else, particularly the union government?
Yes.
So these kind of sort of recklessness in dealing with public finance has got to be discouraged. There's no doubt on it.
Nirmalaji, India holds about $227 billion of US Treasury securities. It also holds a lot of gold in its reserves. Should we diversify away from US Treasuries for reserves?
To some extent, I think the Reserve Bank of India has already started doing it. I wouldn't want to divulge more by saying how are they doing it. But I think Reserve Bank has taken a very considered decision, and they've also done by purchasing gold. So I think the bank is competent and they're taking a fine call on it.
One more question was on the decision to ban online gaming, which came as a surprise to many, especially, after many years when people had poured in a lot of money in that business. What was the thinking behind this? How do you assure people of consistency in sort of decision making at a time like this?
No, what is the time? What is so special about the time like this?
No, what I meant was that, a lot of investments had come into that sector.
No doubt. Yeah. We have not banned games which are for recreational purpose.
Right.
We are still online games for these things are not banned. It is only when you start betting with money. And why is it? Not because we want to say we don't like it. It's a question of the number of people who came to say families are getting absolutely shaken up.
Yeah, that's true.
Their monthly bills are shooting up. And children cannot be controlled from the temptation. And many children, in fact, I wouldn't mind even saying this. There was a finance minister who once met me in a very different context.
Right.
And he narrated an incident of his own family, where his own grandson, who's a very good person, the child is a very good child, well groomed and well brought up,
right,
used his credit card for just one day for some other purpose of a family's genuine buying requirement. He helped them because children are very savvy. Post that one another day, he picked up the card and said, I want to just do something. They said, all right, please. Because they never suspected this child as, into games and into betting and things like that. So the boy used the card and played and gave back the card. Again, probably he did it 2 or 3 times more. Phenomenal increase in the bill that month. And that's when the grandfather sat up and said, what's going on? Let's check up. And this grandson told him right in front of him that it was all free. I didn't go into any money playing game.
He didn't know.
So the methodology is, say it's free, you get in, and for the duration of time that you've played, some kind of a charge is put, and again tempts you to go into another round and so on. So the adolescent child is under the impression that he's playing a free game.
Right.
But he ended up paying through his nose. So that's a classic example, but many people approached us, the PMO and so on, and said, this is ruining our country, ruining our youth, please do something. That's where this bill has come.
Okay. No, understood. The rupee is at an all-time low against the dollar. Does it concern you?
It is, I've said this and I'm going to have to repeat it, it is only against the dollar that the rupee is highly volatile. Whereas rupee is not affected similarly by other currencies. So, and there are countries in emerging markets and even in developed countries whose currencies against the dollar are weakening. So it is an issue on that aspect and at that level about the volatility as a result of the strengthening dollar. It's not rupee getting weakening. I know I've been trolled immensely for saying this, but this is the truth. So.
Okay, thank you. Nirmala ji, one last question. For a